the Indian market. Crude prices hold steady as investors await a key meeting between US President Donald Trump and Russian President Vladimir Putin. Meanwhile, gold prices pull back after record highs on the back of a firmer dollar. In one of the largest ever FDI in Indian financial service sector, UAE-based Emirates NBD Banks is set to acquire controlling stake of 60% in RBL Bank through primary capital infusion of 26,850 crore rupees. NBD will also make a mandatory open offer to acquire a further 26% stake. The bank also reported a mixed set of Q2 FY26 earnings. Reliance Industries delivers a robust second quarter performance aided by strong growth in its consumer business. Consolidated revenue rises 10%, net profits jump 10% from a year ago. Margins expand 110 basis points to 18%. A heavy weekend of bank earnings. HDFC Bank reports in-line set of numbers led by trading gains. ICICI Bank and Federal Bank also report good quarter, while IndusInd Bank reports a weak Q2 FY26. Hello, good morning. You've tuned into CNBC-TV18. You're watching Power Breakfast with me, Vinny Motiwala. Firstly, a very happy Diwali to all our viewers. Hope it is a one that creates more wealth for you all. Safe in terms of health as well. So thank you so much as always for joining us and happy Diwali to all of y'all. Let's look at what the Asian markets are doing this morning, and seems like a bit of a green start is what we're watching out for. The Hang Seng as well as the Taiwan index managing to hold on to very strong gains in today's trading session. Even Shanghai is holding on to 0.6% of gains. We have the ASX 200 that's a bit muted, so keep an eye out on that. Like you can see at the bottom of your screens, you have the indication coming in from our ticker team. GIFT Nifty is indicating a gap up start for the Indian markets. And do not forget that we've seen third straight week for the Indian markets managing to close in the green. This momentum seems like it's going to be continuing today as well. As of now, 0.8% of uptick is what the Nifty implied open is indicating. So that's something as a positive start that we're watching out for from the Indian markets as well. But we had a lot of overnight cues that came in, important earnings that came in over the weekends as well. So let's start with what is the cues in terms of the market that we're watching out for. We'll set you up for trade, stocks, as well as what's happening in the world of F&O. We have a team of research with us this morning. First up, let's go across to Vivek, who's joining us to tell us that important market cues that we should be keeping an eye out on. Good morning, Vivek, and happy Diwali to you as well.
Good morning, Vinny. Happy Diwali to you and all of our viewers. Well, we are starting this particular week on what is essentially a very strong note. It's a truncated week. Remember, we have 2 days where markets will be shut as well. Now, talking about the cues, overnight cues, US indices, all of the US indices on the back of positive commentary ended higher by 0.5%. And oil prices, despite the fact that they rose marginally on Friday, last week they ended with cuts of almost 2%. Brent now hovering near the $61.5 a barrel mark. Like you mentioned, Indian markets, last week ended the week with third straight week of gains, and the Nifty Bank, remember, that will remain in focus today. That continues to hover around record high levels. So what are the key cues to watch out for in today's trading session? Friday post-market hours, Reliance delivered a very strong set of results. So, watch out for that particular name. Ultratech, slightly muted set, but the company has gone ahead and given a very strong capex guidance for the coming few years. Along with that, the entire Nifty Bank will be in focus. So many results: HDFC Bank, ICICI Bank, IndusInd, PNB, Yes Bank, RBL, as well as Federal, remember, will be in focus on the back of fundraising announcements as well. And along with that, quite a few other results from other sectors as well. So JSW Energy, CSC, Dixon, all of these stocks, remember, are in the F&O and expected to react to results. Like you mentioned at the start of the show, Asian markets, GIFT Nifty, all indicating a gap-up start for our markets this Diwali morning.
Absolutely, Vivek. Thank you so much for that. But let's go across to Sudarshan, who's going to tell us what's happening in the world of F&O. What should we be keeping an eye out on? Sudarshan, 25,700 is here now. What are the levels that we're keeping an eye out on?
Good morning, Vinny. It's a Diwali cheer across the board after a happy Friday. Now there is no Monday blues. Whatever cues that you can talk about, all the cues are indicating a positive start and the move for Nifty towards 26,000 almost after a year and a half. FI short covering has continued, and today, after a heavy weekend earnings that we have seen from all the major banking heavyweights, HDFC Bank, ICICI Bank, IndusInd Bank, and majority of them have reported earnings either they were in line or slightly better than estimates. And now also the cues that we are getting from global markets are looking largely positive, and on the back of that, we are seeing a big move coming in the GIFT Nifty. That's indicating the start of the gain of more than 200 points for Nifty. If we manage to do that and move towards 26,000, then next target comes around the record high of around 26,178. Now coming to the FI flows, both in the cash market as well as in the derivative markets, they have been forced to buy at the higher levels, and we have continued seeing that DIs continue to have been buying, and now FIs also have turned buyers. On the Friday in the cash market, they bought more than rupees 300 crore. DIs continue to buy. They have bought more than rupees 1,500 crore. In the index futures too, FIs have bought almost rupees 4,000 crore. And the important part is now FI long exposure has increased to 17% from the 14% level that we had seen on Friday. And on Friday, they have reduced short positions of more than 16,000 contracts. And not only they have done that, they have also added long positions of more than 4,000 contracts. And interesting data from the options market, the major activities that we have been seeing that have happened above 25,700 on Nifty. So on the call side, the most active one was 26,000, where we have seen addition of open interest of almost 55 lakh shares, and next active one was 25,900. On the put side, 25,700 and 25,800 were very active ones. So support would be Friday's intraday low, that was 25,500. It's very unlikely that we'll go to that level. So support would be around 25,600 to 25,650. First resistance would be 25,900. And if we manage to beat that comfortably, next resistance comes around 26,135. As far as Nifty Bank is concerned, it's been hitting the record highs continuously. So support 57,200 and resistance would be 58,000. One stock that remains in the band is the Saman Capital, and RBL Bank has entered just ahead of the deal with Emirates NBD on Friday. It has entered into the band. Two stocks that I'll keep an eye on: Asian Paints, that crude has moved lower and has been seeing short covering. So keep an eye on that stock. And another stock from the pharma pack, we have been seeing buying across the pharma names. But one stock that I'll keep an eye on is Sun Pharma.
Okay, Sudarshan, thank you so much for that, and happy Diwali to you. Markets are surely, like you said, Diwali cheer is what we're expecting. So thanks for that roundup coming in the world of FNO, sir. But let's move on, and RBL Bank, that's the one Sud highlighted in the world of FNO. So let's keep an eye on that. Why Emirates NBD will acquire 60% stake in RBL Bank. For more details, let's go across to Gaurav. Gaurav, good morning and happy Diwali.
Well, yes. When we talk about RBL Bank, there are two news flows. First is that when we look at the second quarter's earning, it was a mixed bag. When we look at profit, that declined almost by 20% on a year-on-year basis because provisions were high. But apart from that, there is one thing which will keep the stock in buzz, is the Emirates NBD deal. Remember, Emirates NBD is going to invest 26,853 crores in the bank for 60% stake, and they will be buying this at a cost of 280 rupees per share. Now, board has approved already to issue and allot 96 crore shares for that. And remember, this will be the largest ever foreign direct investment made in the Indian financial services, and it is also the first of its acquisition of majority interest in a profitable Indian bank by a foreign bank. When we look at Emirates NBD deal, it will also trigger a mandatory open offer. The mandatory open offer will be for 26% stake, and this open offer will also be at a cost of 280 rupees per share. Now, with this, board of directors of Emirates NBD and RBL both have approved to amalgamate the branches of Emirates NBD and RBL together. Post completion, we will see Emirates NBD to be designated as a promoter of the bank, and at the same time, they will also have rights to nominate director on the board. What benefits they are expecting? Let's highlight a few. First is that this infusion will result into 3 times increase in net worth from around 15,000 odd crores to more than 42,000 odd crores. Apart from that, this will also mark as a beginning of the bank's next growth chapter, which will be stronger, more diversified and future ready. Now, what's the next date you should be watching out for? It's 12th November. EGM is going to happen where they will seek shareholders' approval from RBL Bank. And let's also not forget that management has also highlighted that Emirates NBD currently has around 19 to 20% ROE. So that is also something that we should keep in mind given this deal. So definitely a very positive deal. And let's not forget, this is also a CNBC TV18 story confirmed that 60% stake will be acquired by Emirates NBD in RBL Bank.
Okay, Gaurav, thank you so much for that. And viewers, do not forget, we'll be getting you our conversation with the management of RBL Bank on the deal at 9 a.m. today. Stay tuned in for that. Okay, let's move on now and talk about Reliance Industries. They also reported their numbers. How was the performance in Q2 this time? Let's go across to Reema for that. Good morning, Reema.
Hi, good morning. So Reliance Industries' performance was better than expected. The consolidated EBITDA went up by nearly 18%, ahead of estimates, driven by a beat on the retail segment, while the oil to chemical and the telecom business geo was in line with estimates. So here are the numbers. Consolidated revenue went to about 2.55 lakh. The EBITDA was nearly 56,000 crore, with an operating margin of 18% and a net profit of 18,165. As we said, the beat in the EBITDA was driven by retail. Reliance Retail's revenue growth was 18.6%, ahead of analyst estimates of 13 to 15%, and even the EBITDA growth for retail was at 16.3%, again higher than estimates. The oil to chemical EBITDA was up 20% and GO2 in line with estimates at about 15%. Now, JP Morgan believes that the earnings momentum will continue, and this will be driven A, by better refining margins, which seem sustainable. 2, a weaker rupee will help the oil to chemicals earnings. 3, retail will continue to do well. There is seasonal strength, Christmas, etc. And for telecom, the big trigger is that ahead of the IPO, will we see a tariff increase? Valuations, according to JP Morgan, seem comfortable relative to peers. Market overweight rating, their target price is at 16.95. Kotak has an ad rating. They are sanguine. They're quite positive about the consumer side of the business, retail and telecom. The earnings growth will continue. But on the oil to chemicals business, they do see some headwinds, especially if India reduces their purchases of Russia and starts purchasing the more expensive crude in the market. But they still have an ad rating on the stock, target price 1600. Motilal Oswal too bullish, and their target price is 1700. Back to you.
Okay, Reema, thank you so much for that. Important brokerage notes and updates coming in there as well for Reliance Industries. Thanks so much. But let's move on and talk about some of the banking results that were reported over the weekend as well. We have HDFC Bank, ICICI Bank, which were among the two big and larger banks. Let's go across to Gaurav for those details. Gaurav, back to you.
Well, yes, when we look at HDFC Bank, we could say a better than expected result in terms of profit, and I'll tell you why. Net interest income that increased by 5%, it was in line with the street's expectation. In fact, net interest margins, they declined almost by 8 basis points. But if you look at pre-provisional operating profit, that increased almost by 13%. It was higher than the street's expectation, and this was because of the higher trading gains in this quarter. Apart from that, this same beat actually flew through the PAT as well. There we saw around 11% growth on a year-on-year basis. When we look at asset quality, we did not see any kind of concerns. In fact, the credit cost that came down almost by 6 to 7 basis points. And when we look at the management commentary, that also remained positive. When it comes to ICICI Bank, we saw same kind of beat. In fact, ICICI Bank, a big positive thing was the net interest margins. They declined just by 4 basis points. When we look at the numbers, net interest income increased by 7% on a year-on-year basis. PPOP increased by 3%. But apart from that, the provisions that came down higher than what the street is expecting. And as a result, when we look at profit, that increased by 5%. It was above the street's expectation. Apart from that, when we look at gross NPAs, net NPAs, we saw the fall there as well. And when it comes to loan book growth, that was at around 10.3%. It was a bit lower than their own trajectory, but it was again in line with the street's expectation. Next, let's talk about IndusInd Bank. When we look at the numbers were not that great. In fact, bank actually reported losses of around 437 crores. So when we look at net interest income, that declined almost by 17% on a year-on-year basis. PPOP declined almost by 43% on a year-on-year basis. Now, both these numbers were in line, but what came in as a surprise is provisions. Provisions were higher, and as a result, we saw profit, actually company reporting losses of around 437 crores. Now, this was not anticipated by any of the brokerages. When we look at net interest margins, that declined almost by 14 basis points. It was in line with the street's expectation. But specifically for the slippages, what they're saying is that they have accelerated write-offs as well as they have increased the provisions, and that is the reason why we saw this sharp spike in the provisions, and that is the reason why they also reported losses. Lastly, let's also talk about Federal Bank. When we look at the numbers, a very strong set of number here. Net interest income increased almost by 5%, PPOP increased almost by 5%, and as a result, when we look at PAT, that declined almost by 10%, but it was again higher than the street's expectation. What came in as a surprise is net interest margins that increased almost by 12 basis points. Remember, street was not penciling in any kind of increase in net interest margins. In fact, they thought net interest margins would compress. And at the same time, asset quality, when we look at credit costs, that came in at 0.5% versus their own guidance of 0.55. So definitely on all the parameters, bank actually reported better than expected numbers. And another thing which we should keep an eye out on is 24th October, where bank will hold their meeting to discuss fundraising via equity. So definitely this bank is going to be in a buzz today.
Okay, thank you so much for that, Gaurav. But on that note, we're going to slip into a very short break. After the break, we'll get you updates from Wall Street. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18, and let's talk about the US markets because Wall Street ended higher on Friday as bank credit worries and China trade tensions started easing down. Let's go across to CNBC's Julia Boosteen, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were higher across the major indices Friday as bank credit concerns that sparked Thursday's regional bank sell-off cooled and tensions over a 100% additional tariff against China eased. The Dow climbing 238 points, the S&P 500 higher by 35, and the tech-heavy Nasdaq up 117 points. Apple and Formula One just announced a 5-year media rights deal that will bring all races to the Apple TV platform starting next year. The partnership will replace ESPN's current deal. Apple is paying about $140 million per year for the rights, according to people familiar with the matter. People familiar with the ESPN deal say the network had been paying $85 million a year on average. And Meta is adding more controls for parents over how much their kids are interacting with AI chatbots on Facebook and on Instagram. The tech giant said parents will be able to block private conversations with certain chatbots and get insight into the topics their children are discussing with the bots. Today's changes come after the Federal Trade Commission launched an investigation into tech companies, including Meta, over how AI chatbots could harm kids and teens. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But on that note, we're going to slip into a very short break. After the break, we'll get you what's happening in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV18. Now let's move on to some international update. After a long-drawn peace truce between Hamas and Israel, the Israel Defense Forces launched a new wave of strikes against Hamas militant targets in the southern Gaza Strip. The IDF's statement said that the strikes followed a ceasefire violation earlier in the day. An IDF spokesperson said that the attack struck dozens of Hamas facilities, including their weapons storage sites and military installations. U.S. President Donald Trump believes the leadership is not involved in these attacks and added that the situation will be handled properly. More international updates coming in. The Louvre Museum in the French capital has closed for a day after a group of intruders stole 8 pieces of priceless jewelry in a quick hit heist at the world's most visited museum. French government and museum officials said several intruders entered Apollo's gallery through a window shortly after the museum opened, relying on a lift used to hoist furniture into the buildings. Within just 4 minutes, the thieves stole away on motorcycles laden with 8 items dating back to the Napoleonic era. Now, a manhunt for these thieves was underway in Paris on Sunday as police cordoned off the museum, famously home for Leonardo da Vinci's painting Mona Lisa. Let's move on and get you what's happening in the world of commodities. And for that, we have Manisha Gupta joining in with us. Good morning, Manisha. It's Diwali cheer on D Street, but is that cheer continuing in gold, silver? What are we watching out in commodities?
Oh, well, yeah, thank you for that, Vinny. On Friday was a big profit taking, but Monday morning we're looking at some buying coming back. As you said, there is a ceasefire violation as we look at in the Middle East, and that seems to be letting some buying coming back in gold and silver. Well, on Friday, gold was down 2%. Silver at one point in time fell 6% as well, giving you a biggest intraday decline in 6 months. But having said that, silver still closed a 9th week on the higher side here. Silver has seen an all-time high of 54.5. The markets right now are looking at some profit taking with the kind of run-up that we have seen. Also, the risk appetite seems to be improving. Equities are doing well, so some money seems to be flowing back into that. The liquidity crunch in London silver market also seems to be easing. So there are some positives which are letting money out from the safe haven, which is silver and gold as well. What the markets will watch out for now is clearly going to be the U.S. and China trade talks, where the cues will come in from that. But in the meanwhile, you also are looking at a very sharp decline continuing in case of crude oil prices. That one is down at a 6-month lows as markets look at higher supplies from OPEC members, cooling tensions in Middle East, and of course, this market as well will watch out for the U.S. and China trade talks. That seems to be the one thing that the street will watch out for in this week in the international cues.
Absolutely, Manisha. Thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18, leaving the Nifty indicating a gap-up start for the Indian markets. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग. In association with LIC of India. हर पल आपके साथ. And Peps, India's favorite spring mattress. Have a happy Diwali.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. First up, I want to wish all our viewers a very, very happy Diwali to you, your loved ones, your workplace, and everyone around you. It's a time of festivity. So, from all of us here at CNBC TV18, wishing you health, prosperity, wealth, and of course clarity in this new Samvat 2082. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning and happy Diwali.
Happy Diwali, Prashant. Happy Diwali, Nigel. I was away for the last couple of days, but I'm so glad I could be back in time to celebrate the festival with Team CNBC TV18, because that's when you truly feel festive. And a big, happy Diwali, health, wealth, prosperity, peace of mind. Wishing all of that and more to our viewers as well. Good morning, Nigel.
Well, that's right. Good morning. Welcome back, Surbi, and happy Diwali, guys, to both of you, your families as well, and all our viewers out there. And luckily, we've had a good rally getting into this Diwali season. So it feels like Diwali, not not the year we had, but the run-up actually has been pretty good.
Absolutely. Actually, it didn't feel like Diwali till about 3 weeks back.
True.
Yeah. And then, the market started moving last 2 weeks or so, 2.5 weeks
really
or so.
Yeah.
So let's take it from there, right? As we
and
always
decent
do.
earnings, right? Decent earnings.
Yeah.
That huge deluge of FII outflows, that's reduced. We've got some positive days as well. Earnings are looking good. The index is climbing higher. Feeling good?
Feeling good. It's a feel-good day. So good to have you back.
Good to be back.
Tomorrow, of course, is Muhurat.
Yes.
So 1 hour in the afternoon, not evening
Not in the
like we
evening.
always do.
Yeah.
Prashant's got a plan tonight.
Actually, it's my wife's birthday today. So,
okay.
A very, very happy
birthday to
birthday to ma'am. And there's something special happening this evening. A gift. Let's get to it.
Anyway, let's just take it from the top in terms of what you need to know as we begin this new trading session. New trading week, it's a holiday shortened one. Today, of course, we trade for the full session. Tomorrow is 1 hour Muhurat session. And then, of course, Wednesday is a market holiday, Thursday, Friday. So in that sense, and many people, of course, will be for Diwali, etc., out with families. So perhaps participation, etc., a little lower than usual. But that shouldn't deter the market per se, which has been on a tear, right? And I think the graphics will come up. Last 2 weeks is basically where all of this has happened. So the Nifty is up about 1,200 points in the last 2 weeks. That's about 5% move. The Bank Nifty is up 3,600 points. That's about 7%. And the mid-cap index is up about 5.5%. That's about 3,100 points. So just 2 weeks. Of course, these levels are from the lows 2 weeks back to the highs that we saw last week, which is pretty much where all these indices left off on Friday. That is last Friday. Now, not very much has changed over the weekend as we come back into this new week. Some of the broader core themes remain the same. NASDAQ, after all said and done, and by the way, last week, there were these credit concerns which were flying off here and there. 2 banks had reported hits to that they were hit by frauds. And for a moment there, it looked like we perhaps will have a repeat of what Silicon Valley Bank, that entire episode. But, Friday session, again, lots of regional bank shares closed higher. For the week, NASDAQ was up 2.5%. S&P ended higher. So that piece remains quite okay. Gold continues to make new highs, so about $30 off the all-time highs. $4,250 an ounce is where gold prices finally ended. And so, these are themes. These are essentially debates which continue. It's not one way or the other. It's not the debate is around whether the gold has done too much, and that continues as we come into this week. The debate is whether this AI is especially the amount of capital which is going into AI stocks is a bubble. That continues as we come back into this week. But there's no real perceptible change in the direction of travel as far as some of these themes are concerned. Now, just in terms of news flow over the weekend, I'm not sure what to really make of it from an implication point of view, but mass demonstrations over the weekend, they're called No Kings protests held across the U.S. against the Trump administration. And of course, I mean, President Trump responding in a style that I guess only he could on Twitter, social media, etc. So lots of stuff around that, lots of coverage around that, really. Treasury Secretary Scott Bessent to meet Chinese officials, this week in a run-up to the president's meeting, which is supposed to be in early November. So there seems to be a little bit of a thaw. President Trump indicating that additional 100% tariffs on China perhaps are not sustainable in that sense. And just to sort of circle in the two sectors here, large cap IT, which has been such a large underperformer. Week before last was great for IT. Last week, once again, there was a bit of a drift off. But just look at the top 6 large cap IT companies which have reported earnings, and they're all largely in line or slightly ahead of expectations. But the bigger one, of course, is financials, right? I mean, the financials, the bank Nifty has been doing very well. Both on the fiscal and monetary side, it was all starting to build up. And of course, add and throw into to that entire mix the point that valuation seems to be a little comfortable. And I think you've got a kind of a good mix here. So banks, perhaps one area where there always has been consensus optimism, but I guess it didn't perform for a while. But I think it's coming back, and we'll talk more about this as we go on. I'll just tie in the levels here, and then we'll look at the F&O stuff. So Nifty's taken on most important resistance levels. So all-time high is 26,277, but before that, perhaps a stop at the psychological level of 26,000. So keep an eye. The trailing stop is basically the 40-hourly exponential average, which is 25,412, which has, of course, been dragged higher along with the market. Nifty Bank has made a new all-time high. It's taken out the prior high of 57,628. So you're basically in uncharted territory, and support here at 56,970, which is the 40-hourly for the Nifty Bank as well. GIFT Nifty will give you a quick sense of how we are starting, and then we'll, of course, look at the broader F&O setup. A lot of short covering, not a lot actually, but a fair bit of short covering, which, of course, has led to this massive move that we've seen, 5-7%, depending on what index you look at, over the last 2 weeks or so. So it's a pretty good start. 1% higher, 220, 230 odd points higher is what the indicative open on the GIFT Nifty is looking like. So you're going to be closer to 26,000 if you go by the rate on your screens. But Nigel, the F&O stats, that short covering continues.
Well, that's right. And it seems the FIs actually have pivoted over the last few days. Just going by the kind of action that we have seen, the FIs, they seem to be coming back. They're covering shots. They're showing in the money as well. And today, the session is going to be quite interesting because I'll tell you what, we have the weekly expiry as well that will be playing out this time around on a Monday, because tomorrow, obviously, we do have the motor trading session. But the FI flows, that's the one that I'm looking at. Last week, they gave you a bit of a heartbreak, and then they came back. So the last few trading sessions, the FI money has gradually started coming back. Remember, they have been underweight on the Indian markets if you compare to the MSCI Emerging Market Index, or you just look at the flows on the whole. So good to have them back. Hopefully they celebrate Diwali with us and even into Christmas with regard to those flows. Moving to, the short covering bounce that we are talking about. It seems the bulls went ahead and they squeezed those shorts with a big hug, because in Friday's trading session, just take a look at that. It was evident that there was a short covering bounce that was playing out. And the data points coming in from the FIs will perfectly tell you that. So the FI data point should come up for you on the screen. Just take a look at it. The short positioning down by close to around 50,000 contracts. And just take a look at the Nifty. Well, the Nifty has seen a good run in the last few trading sessions. So it's been a good move that you've seen on the Nifty itself. Moving to the October series. Now, we are making this point at the start of the series that the FIs, they are net short on the index. And at the start of the series, they were at 94%. Now, the short positioning has come down from around 94%. It's come down to around 83%. And we have got a good 1,000-point rally that we have seen. So that is the power of short covering on absolute display that we have seen. Moving to the options data, then the PCR, it had gone dancing away to around 1.45 odd. It's come back down. It's come down to around 1.21 or thereabouts. So that's a pretty okay level, because the put writers, they are back into play. So we saw aggressive writing, the 25,500, 25,600, 25,650, and the 25,700 put. Good amount of open interest build up. And today, as I said, is going to be the weekly expiry. So these put writers, they are counting in on the lower levels holding out. So just for the day, I know we're going to have a gap up, but going by the options data, you have this 25,600 odd as a support level. And the bulls, they have their eye on fresh all-time highs. And I think just going by the momentum, going by the flows and the news flow as well that we have, even the results that are coming in there, we could be at these all-time highs sooner rather than later. So that's the call out there. Just a couple of words of caution are there. In Friday's trading session, the Nifty moved up. We had the VIX as well moving up. That normally doesn't happen. So just keep an eye out. Anyways, the VIX is at bombed out levels. And one more point is the headline index felt very, very good. But many portfolios didn't feel that good because the broader markets actually underperformed in Friday's trading session. Nifty went dancing away. The breadth of the market didn't really keep up. So you would actually like the mid and the small caps as well to participate because that's what makes portfolios feel good. RBL Bank is the stock you're going to be looking at. The long-awaited deal has happened. The stock is in the FNO band, so that adds the element of excitement as well. Could be a big re-rating, though the stock is run up. When it's moved into the FNO band, I'll tell you what, the shorts, they'll be fretting in today's trading session. So keep an eye out on this one.
Okay. All right, Nigel, thanks very much for that. RBL Bank, indeed, the big news over the weekend. And of course, we'll tell you more about it and what it means and how this open offer is going to play out. Big, stake purchase coming in from Emirates NBD. But for the time being, just a quick glance across Asia, and many of the markets like Singapore actually are shut for Diwali holidays. The ones that are trading are seeing a fair bit of green. The Hong Kong Hang Seng, for instance, has managed about a 2% up move. There's a lot of data out of China this morning. GDP numbers for the third quarter, and it is a little subdued. Chinese GDP has fallen below the 5% growth handle, so there's a bit of a slowdown, particularly in the property sector. For 9 months, the property investment part of the GDP, it's slumping almost 14%. So watch out for some of these cues. But for the time being, of course, we are going to put the spotlight on the Indian market and what it means. Foreign investors, like we mentioned, have now reduced the kind of the selling that they've been doing in this market, at least in the last couple of sessions. Prashant Paroda, portfolio manager, emerging markets at All Springs Global, is with us. Prashant, great to have you join in. Thanks for being with us. Season's greetings, wish you all at home and your team a very happy Diwali, all those who are celebrating. So let's start right there. Thankfully, the market has given investors reason to feel a little more cheerful this Diwali because things have started looking up here, whether it's flows, whether it's earnings. Your first thoughts on India?
Yeah, and happy Diwali to all of you as well and your viewers as well. So I think India is positioned pretty well going into the end of this year. We possibly have President Trump and Prime Minister Modi meeting happening at the end of October. Hopefully, there'll be some clarity on where the trade deal and the 50% tariffs, how it will impact at least the Indian export sectors. But overall, the earnings season has started on a pretty good note. You heard you just talking, Reliance retail numbers were better than expected. HDFC Bank was also close to expectations. So given the underperformance of India over the last year, I think if earnings come through, the market is well positioned into the next year as well.
Prashant, hi, morning. Looking spiffy over there. Happy Diwali.
Happy Diwali to you.
So should we, we started this year with, it's just been a frenetic year so far, right? So much news flow and you don't know, and beyond a point, no one knows anything, what's going on. But the market's kind of been, in a way, immune. Tariffs, we began the year with tariffs as the big one, but it's kind of faded into the background. Even here in India, we've got these big tariffs which are on, but markets doing well. I mean, look at China. It's kind of, that noise has faded into the background, Prashant.
Yeah, the noise has faded because ultimately the market has understood that President Trump is looking to do deals. And the numbers, whether it's 50 or 100%, typically they do end up, if there's a deal, do end up coming down by a fair amount. So the market is kind of overlooking these kind of big announcements that come because essentially the market is understanding that this is just a way for President Trump to sit across the table and do a deal.
All right. Hi, Prashant. Good morning. Good to see you, Ben. What about Chinese market? In the last 1 year or so, we have seen a big outperformance coming in from there. Do you think bulk of that has played out? it's time for a bit of a catch-up trade from the India market perspective, because they're no longer at 10, 11 times odd. I think it's moved more like 15 times. Do you think India has a chance now to outperform after underperforming last 12, 15 months?
Sure. And I think one of the things is on a sustained 15 times earnings level, like the Chinese market hasn't held that for long periods of time. But what has helped China this year has been definitely the AI trade, and that has re-rated some of the big names such as Alibaba and Tencent. I think a lot of clarity will come from, again, President Trump and Xi meeting possibly at the end of October as well on whether the semiconductors from NVIDIA and others do end up going to China or not, and whether rare earth happens or not. But underlying the economy, you mentioned the property numbers. Not much is moving on the property front for China. So if the AI trade fizzles out sometime in the next year, I think that's a big risk to the Chinese market.
Okay, so we need to see what happens to that AI trade, because till now, Prashant, most of those dips have been bought into. But actually tell us that. I mean, that could be a big trigger. If the AI trade does fizzle out, then that's a massive move for fund flows around the world. What is the probability of that happening, you think? And what could the implications then be? I mean, should we get excited here in India if there is a fizzle out of that trade?
Yes, I think what investors and what your viewers should watch out for is that whenever there's a big capex announcement in US, the stocks move a lot. So Oracle and others. And, it reminds me of what happened in 2006, 2007 in India, where a lot of the infrastructure plays announced kind of capex, and, the stocks moved. But ultimately, it's the execution that matters. So I think at some point, these big moves will start fizzling out. And at that time, you have to worry a lot about, because it's unclear to me whether OpenAI has the capital for all their pronouncements. And maybe, there's still some time for the AI trade to fizzle out, but I think when OpenAI becomes public, that's when we'll realize, what is the real valuation. And that might still take a year or so for that to happen.
All right, Prashant, we'll leave it there for now. Thank you very much for joining us. Really appreciate your time. Wishing you and your family a very happy Diwali once again. What we'll do is take a quick commercial break here. We'll come back and get straight to earnings, because it's a financials heavy morning, Monday morning. Lots of numbers over the weekend. There is an RBL deal as well we want to address. So coming up in just a bit. Okay, so coming up in just a bit from now, just to give you a teaser what's coming up here over the next 2.5 hours, 8:30, we'll discuss the Reliance numbers. Gaurav Malhotra of Axis Capital and Prabal Sen of ICICI Securities join in to talk about the various aspects of the Reliance numbers. We'll have at 9 o'clock R. Subramanya Kumar, of Managing Director and CEO at RBL Bank, who will join in to talk about the big deal which has happened. 60% being picked up by Emirates NBD, $3 billion infusion into the bank. 9:20, we've got two special voices, N. Jayakumar of Prime Security, Sandeep Bhatia of Macquarie Capital. We'll talk market, stocks, and of course what to do in the new Samvat 2082. 9:30, Saurabh Gupta of Dixon joins us. So Dixon reported numbers, and we'll talk about what the numbers mean, and of course try and get a bit of guidance going forward for Dixon as well. Jayant Acharya of JSW Steel talks to us at 9:40 on the back of their earnings, which came through. So lots to talk about there. 9:50, we'll be joined by the IDFC First Bank Management, V. Vaidyanathan. Again, second quarter very much in focus. We'll also have the management of Federal Bank. So Venkatraman Venkateswaran is top boss at Federal Bank, and he'll talk to us about the business for the quarter and outlook forward. And Rajneesh Karnatak of Bank of India is our guest at 10:15, and it's focused on earnings once again. So sort of full run through of four financial companies coming up over the next 2.5 hours or so here on Bazaar. We take that break. We come back with our research team and get you the stocks to watch out for.
Well, we've got lots and lots of stocks to talk about because while it was a festive weekend, it was also a very hectic weekend because a whole host of earnings, including a huge amount of financial numbers have come through. So we've got our team standing by. I think Gaurav is hardly at a weekend. So Gaurav, salute to you first. Lots of numbers to go over. But first, let's start with the big news. RBL Bank is in focus for reasons beyond numbers. Tell us more.
Well, yes, when we look at RBL Bank, first let's talk about numbers. Numbers were a mixed bag because profit that declined almost by 20% because of the higher provisions. But in this quarter, specifically beyond numbers, there is a story which is playing out is that Emirates NBD is going to buy 60% stake in RBL Bank for a cost of around 26,853 crores. Now remember, this will be as the largest ever FDI investment made in the Indian financial service sector and also the first acquisition of the majority interest in profitable bank by a foreign bank. With this, Emirates NBD will also be rolling out the mandatory open offer for 26% stake, and this will be at a price of around 280 rupees per share. Now, what we are taking is that open offer will be done first because optically it can, the stake can go up to 86%. So on the back of that, we will be seeing how much stake they will acquire finally. With this, the board of directors of NBD and RBL will also amalgamate the branches. And what post-acquisition, what we can see is that the NBD will be marked as a designated promoter of the bank. The benefits, first is that the infusion will result in 3 times net worth increase from 15,000 odd crores to around more than 42,000 crores. And this will also mark as the beginning of the bank's next growth chapter, which will be stronger, more diversified and future ready. Now, what's the next date we should be watching out at is the 12th of November, where EGM will happen, where they will seek shareholders' approval. And lastly, during the management con call, they also highlighted that NBD currently runs at around 19 to 20% ROE, and they also aim to reach that level. Remember, the ROE currently is around 5 to 6%. So definitely a big positive for RBL Bank, and on the back of that, we will be watching out on this stock today.
Okay, all right, Gaurav, get some rest over, the next couple of days. You've had a nice, hard-working weekend. Cheers, mate. Well done. But the other guy who's in focus today is Mangalam. Mangalam, I hope you're concentrating on work today. We've still got an entire day's trading session to go through. So tell us about Reliance first up.
Yep, there would be a firecracker coming in from Reliance as well, Nigel, this time around, because the results came in late on Friday evening. It's a good set. It's a top-down beat led by the O2C business and retail as well as digital services. So if you just look at the EBITDA of the company, closer to 46,000 crores. This compares with 42,900 crores quarter on quarter, and year on year, this number joins in with 39,000 crores. So a big bump up is what we've seen out there. Net profit coming in at 18,165 crores. Quarter on quarter, this is a dip, largely because remember the last quarter, there was an exceptional gain on account of Asian Paints stake sale, but year on year, it is stronger than street expectations as well. What led the growth? Retail revenue. That grew 18.6%. The street was working with a number of 13 to 15%. Retail EBITDA as well grew much higher. In fact, Geo EBITDA too grew by about 17.5% as against street expectations, and we saw an expansion to the margins too. Brokerages, very happy. Nomura has said a buy. They have a target price of 1,700. Morgan Stanley has said this should get investor confidence back. In fact, re-rating is ahead as consumer retail is turning around and is beating expectations. And JP Morgan too has an overweight rating target near 1,700 rupees, telling you it's an operationally better quarter than expected, and they believe growth should sustain in the near term. That's about these reported numbers. Now the street will also be looking at what happens with the green energy business and strong plans that the company has for them.
Okay, all right, Mangalam, got it. Thanks very much. By the way, we will discuss Reliance full throttle, all the businesses, and of course the beat that has come through. We'll have our experts joining in, Gaurav Malhotra of Axis Capital, who will decode, of course, the telecom performance. Prabal Sen is going to be joining in to talk about the energy business as well. So more coming up on Reliance in just a bit. But for the time being, like we've been saying, it's Gaurav all the way. Gaurav, let's get to the big banks, ICICI Bank and HDFC Bank. I guess, pretty heartening to see both of them chugging along fairly okay.
Well, yes, when we look at both the banks, they actually reported a more than expected number in terms of profit, and I'll tell you why. First, let's talk about HDFC Bank. When we look at net interest income, that increased by 5% on a year-on-year basis. Now, when we come to PPOP, which is pre-provision operating profit, we saw a growth of around 13%, and this was because of the higher trading gains in this quarter. As a result, when it comes to profit, there also we saw a healthy growth of 11%, much higher than what the street was expecting. Now, the two positive points here is that first is that net interest margins that declined just by 8 basis points. This was in line with the street's expectation. And when it comes to the asset quality, now credit cost that remained contained. Now that came in at around 0.5%, again in line with the street's expectation. What is another positive is that we have already seen HDFC actually picking pace with the loan growth. And from here on, management again reiterated the fact that in FY27 they will outpace the industry. So that is something which is positive. When it comes to ICICI Bank, a strong beat here as well in terms of net interest margin specifically, because when we look at the numbers, net interest income increased by 7%, PPOP that increased almost by 3% on a year-on-year basis. But again, net interest margins that fell only by 4 basis points versus the street's expectation of around more than 10 basis point fall. Apart from that, asset quality that also remained very healthy, and as a result, when we look at profit that increased by 5%, it was higher than the street's expectation. When it comes to loan book growth, that was at around 10%. It was again below their own track record that we have seen. But again, it was already anticipated by the street, so nothing to worry about. And during the con call, what they're saying is that the margins will remain range bound. And at the same time, NIMs were actually aided by the deposit rate reduction. So that is not something which we saw as a one-off in this quarter. So definitely good set of numbers by both banks. And on the back of that, we already saw brokerages, some of the brokerages also increasing their target price on both of these banks today.
Okay, all right, Gaurav, thanks a lot for that. Well, I'm looking at Ultratech Cement, and there were two factors that played out over the weekend. One was their numbers. The second factor was the long-awaited capacity expansion is what they're speaking about. First up, let's focus on the numbers. The numbers, well, on the top line, it was relatively better than what the sheet was working with, because realizations were better and volume growth as well at around 22%. That looked quite good. The problem was on the EBITDA number, there was a bit of a miss out there, and that's when the margins as well, there was a bit of a miss. Why is that? Despite having better operating leverage that played out and better pricing, The problem was other expenditure moved up because they had a maintenance shutdown. The other factor was that the raw material cost spiked up a little bit. And there were some, annual increments that were given. Because of that, the margins came relatively lower than what the street was working with. However, out of the 200 rupees per ton hit that they saw in the past quarter, the management says close to around 100 rupees per ton will be made up in quarter 3. So the stock could open up in the red, but the outlook from here on is that some of that cost hit will get recovered in the coming quarter itself. Moving to the capacity expansion, massive expansion. The phase 4 has been announced, 10,000 crores. They're looking to expand capacity by around 22 million tons at just $52 on a per ton basis. The IRR are at around 20%, and also net debt to EBITDA, they'll maintain it at sub 1. So that's positive. It could put some pressure on players, particularly in North India, because this foray is particularly in North India. So stock opens up in the red, and I'll keep an eye out on some of those north-based companies, because suddenly UltraTech Cement is turning on the heat after focusing on south and west. They're looking at north as well as east. That said, back to Gaurav. IndusInd Bank as well as Federal Bank. Tell us, how are those numbers?
Well, yes, IndusInd Bank, the numbers were not as great. Remember, the street is expecting some turnaround, but it seems that the turnaround is not coming, at least in terms of numbers. Because when we look at net interest income, that declined almost by 17%. PPOP declined almost by 45% on a year-on-year basis. Now, this was again anticipated by the street to have the weaker numbers. But what came in as a surprise is that bank actually reported losses of around 437 crores versus the estimations of around profit of around 300 crores on a year-on-year basis. Now, what remained and what actually led to this losses is that bank accelerated the write-offs as well as they increased the provisions in MFI. Management says that this will strengthen the balance sheet, but at the same time, ROA has taken a hit, and that is the reason why that came in as a negative news. When it comes to credit costs, because of higher provisions, that increased almost by 100 basis point, and at the same time slippages also remain stable. Apart from that, when we look at the management commentary, they are saying that the credit cost is not likely to see any kind of ease off, like a sharp ease off, at least in the near future. But when it comes to Federal Bank, now on the flip side, Federal Bank came up with very good set of numbers. In fact, we saw beat across the parameters. Net interest income, PPOP, both increased almost by 5%. Although profit has declined, but it was again contained lower than the street's expectation. When we look at advances and deposits, advances grew almost by 6.2%. But a key thing to highlight is that despite having a slower growth, when it comes to net interest margins, they have expanded their net interest margins almost by 12 basis points. And in terms of credit cost also, they have reported credit cost of around 0.5% versus their own guidance of 0.55. So definitely good set of number actually given by the bank. During the con call, they also remain optimistic about the growth going ahead because the pockets of growth where they saw in this quarter were actually healthy. Second thing to watch out for is that 24th October is a date where board meeting will happen for Federal Bank, where they will consider fundraising via equity. Remember, the CET and CRAR ratio both are actually at a healthy level, and in fact during the con call, management neither denied nor confirmed if it is going to be an enabling provision. So that definitely that is something which will keep the stock in a buzz. But all in all, in terms of numbers also, very good set of numbers posted by Federal Bank in this quarter.
No, absolutely. And by the way, you'll hear from the Federal Bank management a little later here on the program. So keep an eye out on that one. We want to focus on two other numbers, right? Dixon, again, the management joins us later at 9:30, and Havells as well. Upasana is here with details on both. Upasana, morning.
Good morning. First up, let me start with Dixon Technologies. Well, the company has reported in-line set of numbers. Revenue, PAT, margin, all three are in line with our poll. Now, if we look at the Q2 sequential mobile volume growth, it stands at 13% versus guidance given by the company in Q1, which was 15%. So it is a miss on that front. Now, coming to the company's key segment, that is the mobile and EMS segment, it has reported a strong revenue growth of 41%, while other segments have declined due to the deferred demand on GST rate cuts. Now, reported PAT was boosted mainly because of the fair value gains is what the company has indicated. Coming to the numbers now, revenue has seen an uptick of 29% on year-on-year basis. EBITDA has seen a growth of 32%. EBITDA margin stands at 3.8% with an uptick of 100 basis points, largely in line. And adjusted PAT has seen a growth of nearly about 15% on year-on-year basis. Now, coming to Havells India, the Q2 performance was below the street estimates because of the weakness seen in Lloyd Consumer. Company has reported a top-line growth of 5% with the key segment cables and wires reporting a revenue growth of 12%, followed by lighting and fixtures at 8% and switchgears at 8% as well. Now, company's margin has come in lower this time around because of the Lloyd PBIT, which the loss in this has widened from 22 crore to as high as 99 crore on year-on-year basis. Company has also said that the cooling products saw sharp degrowth due to unseasonal rains, short summers and even high inventory. Coming to the numbers now, revenue has seen an uptick of 5%, EBITDA has seen an uptick of 16%, EBITDA margin stood at 9.2% versus the street estimates of 9.6%, and PAT has seen an uptick of 17% on year-on-year basis.
Okay, all right, Upasana, got that. Thank you very much. So we'll keep both Dixon and Havells on our radar as well. Let's round it up then with Vivek. He's watching out for numbers from JSW Energy. Vivek, how do they look?
Well, good morning. Largely inline set of results on the back of the fact that the company had acquired two large entities, both O2 Power as well as KSK Mahanadi. Revenue surged almost 60% on a year-on-year basis. EBITDA higher by 77%. EBITDA margin quite strong, over 50 basis point improvement. But profitability, however, was impacted by multiple one-off factors. So profitability actually fell 17% on a year-on-year basis. What impacted the profitability? Number one, lower operating profit in both Karcham as well as Baspa. Now, this was due to an adverse Supreme Court ruling as far as free power distribution was concerned. On the back of that, EBITDA took a hit. But you also saw a bit of a hit coming in from the fact that Utkal actually operated at lower PLF this time around. Profit, however, was aided by both O2 as well as KSK Mahanadi ramping up quicker than expected. We'll hear from the management later today. Expect a mild green on the stock once market opens.
All right, guys. Thanks a lot for joining in, giving us a quick take on all those stocks. Happy Diwali. We'll catch up post the show. Well, here's a quick recap of all the top stocks that we just covered. The ones with positive news flow: Reliance Industries, RBL Bank, ICICI Bank, Federal Bank, Dixon, as well as JSW Energy. On the flip side, the ones with negative news flow: HDFC Bank, Ultratech Cement, IndusInd Bank, as well as Havells. Well, that's about the equity markets. Manisha Gupta joins in to tell us what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, which are now trading at a 6-month lows. We've seen constant declines onto this one in the month of September. October seems to be going the same way. And when you look at this current year, we are down by 15% for the crude oil prices. Well, it has to do with rising supplies from OPEC members, cooling tensions at the Middle East. And the markets will watch out for the US and China trade talks this week. That is going to be the big cue for most asset classes. When it comes to precious metals, well, we have seen a bit of a pause come in here as well. After those all-time highs in gold and silver, Friday was a day that you saw gold prices decline 2%. Silver was down 6% as well. With the trade tensions easing, ceasefire more or less continuing in the Middle East, and then, of course, the profit taking after that very, very strong run-up is what the markets are dealing with. But after Friday, Monday morning, and China seems to be buying yet again, is the reason you're looking at 0.5% of gain coming back into these markets. So support for precious metals more or less continues.
Okay, all right, Manisha, got that. Thank you very much, and we'll touch base with you again very, very soon. Need to take a break right now. When we come back after the break, it's Reliance Full Throttle. As promised, we get you a full perspective on all the businesses, whether it's retail, whether it's telecom, and of course, the energy business as well, oil to chemicals as well, all of that coming up with a conversation with Gaurav Malhotra and Prabal Sen. Back with that in just a bit. Welcome back. So it's all eyes on Reliance Industries now. Numbers came in after market hours on Friday. And Reliance seems to be firing on all cylinders. The retail business continues to do well. Consumer-facing businesses are really leading the growth. But even the energy business, I mean, whether you're looking at oil to chemicals, there has been improvement. So let's discuss the individual verticals with the respective experts. We have Gaurav Malhotra joining in from Axis Capital to talk telecom and what Jio has done and what the expectations are for the rest of the year. And of course, we have Prabal Sen, who tracks the energy space at ICICI Securities. Gentlemen, thank you for joining in and wish you both a very, very happy Diwali, first of all. And looking at Reliance earnings, I think investors can also take some heart and it's in line with the festive spirit, perhaps. Prabal, let me open with you. What did you make of the energy business and the performance? Because the past 1-2 quarters, we were talking about the oil to chemicals business, facing some issues with cracks not, rising, etc. But some of that seems to be behind Reliance in the quarter gone by. Your thoughts?
Yeah, good morning and a very happy Diwali to everyone sitting there around your families. I think two things. One is that product spreads or diesel and ATF in particular and gasoline to a certain extent have definitely expanded well beyond what they have been in the previous few quarters. So that is certainly helping the OTC business. And I think the outlook for diesel spreads and ATF spreads continues to be strong. Gasoline, it's a little bit of a mixed bag, but at least as of now, the spreads are holding up. Even for petchem, domestic demand I think continues to remain strong, even though margins there are a little bit over the place, and that is where the integrated nature of operations of Reliance helps a bit. So on an overall basis, I think the demand supply balance seems to be getting a little bit better, particularly as far as refining is concerned. And in petchem also, I think after a very, very long period of sustained underperformance, at the margin, at least things seem to be stabilizing or at least improving on at least certain value chains. Polyester still remains weak, but polymer and plastics seem to be doing a little bit better. So on the whole, I think fairly encouraging set of numbers.
Yeah, so looking good. And talking about the second half, Prabal, on the energy side, what would your expectations be?
Honestly, given how volatile margins have been, it's a very, very, very difficult sort of task to sort of look at, what to project. But as I said, at the margin, I think things seem to be looking up. There seems to be more of an upside risk to spreads rather than downside at this point of time. So I would expect that the quarterly run rate of EBITDA would hopefully sustain at these 15 to 15,500 crore kind of a level. At least that is something that seems, is basically what our base case is at this point of time.
Okay, I'll come back to new energy in just a bit. Prabal, just stay with us. Let's also talk telecom, because there we've seen sustained improvement. The EBITDA is continuing to sort of notch higher and higher, and it's finally crossed 211. Not the EBITDA, beg your pardon, the ARPU that is. And even the EBITDA, there is expansion on the EBITDA and on the EBITDA margin front as well. So it's been good going for Jio. Gaurav, did it meet the mark for you?
Yeah, hi, good morning, everyone. Yeah, see, Jio was a decent set of results, right? The top line growth was both on the back of healthy subscriber additions, right? One of the highest in the last few quarters, and also the steady uptick in the ARPU, right? And that steady uptick in ARPU is basically happening because there is more data being consumed, there is some premiumization happening. So from a revenue top line from a revenue growth perspective, it was a good set. And from a margin perspective, given that 5G capex is almost behind us, right? The network utilization is increasing on a quarter-on-quarter basis. So there is benefit of operating leverage. So nothing to sort of complain. Overall, a good set of numbers.
Okay, nothing to complain, that's fine. But now, again, Gaurav, same question. It's all about the future, right? So the benefits of the tariff hike have flown through, and the data consumption continues to go higher. But would you expect anything, any new triggers from the telecom business going into the next couple of quarters?
See, in terms of the big trigger, obviously the big trigger continues to remain the tariff hike. It's there in analyst numbers, but obviously as and when it happens, that does create some sort of an excitement. The other trigger, which is a little bit smaller in the overall context of Jio, is the steady increase in broadband, right? That is something which the company is seeing a pretty healthy net adds. And these net adds are happening not just on fixed broadband, but also on FWA. So the investments which the company did in rolling out 5G on standalone, that seems to be bearing fruit. So it almost has like a 70-80% market share of the fixed wireless broadband additions, which is happening on a month-on-month basis. It's in the overall context of Jio, like I said, it's relatively small, but nonetheless, right, that is a decent growth. And obviously, the Jio platform business continues to do well. So the big trigger continues to remain tariff. Then obviously your steady uptick in broadbands and the steady increase in Jio platform growth profile.
Okay. Fair. On the tariff, do you have any timelines in mind and quantum? What do your estimates right now bake in, Gaurav?
See, the thing is, the way to think about is that there have been 3 major hikes in the past since 2019. The quantum of hike has steadily reduced, but the absorption of those tariff hikes in ARPU of operators has moved up substantially. So the way we are thinking about is that the next hike does not have to be very large. So we are looking at like a 10-12% tariff hike. And from a timeline perspective, we are thinking somewhere between December 25 to June 26.
Okay. So basically in 2026, we could see another leg up on those telecom tariffs. Got that point. Prabal, now talking new energy, and I think that the cell facility could be starting next month itself. Correct me if I'm wrong, but I think that's what we were working with. What was the additional read-through you got from all the commentary that Reliance gave out, and how are you, sort of valuing and assessing the new energy business?
Yeah, so I think the fact that the timelines continue to be sort of accelerated, and the fact that there's tangible progress in terms of plans, specifically on the solar module front and the cell manufacturing plants that they have, and as you mentioned, the commissioning deadlines are sort of within the next 12 months. There could be meaningful additions to some of those plans. So that obviously brings forward the monetization of the initial plans of 75,000 odd crore of capex. So obviously, I think one will have to sort of look at, given that the monetization plan involves essentially the captive use of the solar power that we produced in the phase 1 of the additions that is happening in terms of modules and on to generation. So I think that is something that will reflect in terms of OTC costs, seeing a meaningful, upside. And I think that is something that will be interesting to watch. At the moment, frankly, we don't model for the revenues from this segment separately. We model it at just about 1.5 times capital employed of the 75,000 initial plan. So as and when numbers start flowing in and we actually see the results on the ground of initial commissioning, we would obviously sort of look at it in a more detailed way. But it is very promising in terms of the way that the timelines are being met and exceeded, and internal targets are extremely aggressive in terms of commissioning of each of the 4 gigafactories that are actually planned over the next few years.
Absolutely. We're going to watch out for all of those timelines, and the commissioning. One of those facilities perhaps kickstarts next month itself. Very helpful conversation, gentlemen. Thank you so much for joining in and giving us a view on 2 of Reliance's key businesses, the energy business, of course, and telecom, and wish you a very happy festive season with your families and, of course, your team members. Thanks for joining in. But Prashant, speaking oil and gas, I mean, every time you hear the word oil in India, it leads you to the, to the non-stop back and forth that's happening. I think there was another statement, right, on board Air Force One, on whether we will buy Russian oil or not buy Russian oil.
It's only fourth and fourth. There's no back. It seems to be, right? So President Trump last week said that he's spoken to Prime Minister Modi, and that he's been promised that we will stop buying Russian oil. There was a Ministry of External Affairs
which was
statement.
a very clean, clinical statement. Didn't say too much.
He didn't say yes or no, but basically kind of sort of said that, well, it repeated that we'll take a call. Exactly. And now it looks like President Trump has made that claim again, that he's spoken to President Modi, and he said, well, they've promised not to do that Russian thing. So let's just actually listen into that soundbite, because I think, everything is being done. This is perhaps the last remaining bit, right, with regards to, from a financial market perspective as well, this trade issue with the US. So in that sense, this is important. So just want to play that soundbite out for you.
I spoke with Prime Minister Modi of India, and he said he's not going to be doing the Russian oil thing, so that's it.
But why would India say that they're not going to do?
I don't know, but if they want to say that, then they'll just continue to pay massive tariffs, and they don't want to do that.
Welcome back. Well, let's get in Mitesh Thakur of Bonanza Portfolio, who joins us on the show. Hi, Mitesh. Good morning. Happy Diwali to you, your family. Wish your son, especially for us. Had a good time with him on the floor in the past year on our newsroom. But tell us, what is your view on the index? We're going to be gapping up 200 points today. What would you say? Take money off the table or ride it?
Morning, Nigel. And before the market call, wishing you, the entire team of CNBC and your family a very, very happy and joyful Diwali. For today, I think, what will happen is that we have about 200 plus point kind of a gap up possibility according to the gift Nifty. And that would mean that we might be very close to about 26,000 levels. Now, 26,150 is a gap area, which happened, I think, on the 30th of September. And 26,230, I think, is the 220 is the highest closing which we got on the Nifty. So I think as we get closer to 26,000, let's not forget we're also getting slightly overbought. And my idea would be that as we get close to 26,000, at least start booking some profits on your long positions, especially if they are with a short-term trading view. And around 26,150, I would want to at least book more than 75 to 80% of the Nifty long as well as stock long positions. Wait for a decline. The directional bias is on the upside, but given the fact that we'll be very overbought, hitting some important supply pivots, I think between 26,000 and 26,150, I would be very keen to take profits off the table.
Okay, all right. So that's the trading strategy on the index. Mitesh, happy Diwali to you. Markets giving reason to investors to feel a little, joyful. Stocks for the day as well, please.
Extremely joyful. Good morning, Surabhi, and a very happy Diwali to you and your family.
Thank you.
On the stock side, I have more of buy calls, 3 buys to 1 sell. I have a sell despite the fact that, the gift Nifty is very positive, and that's on Infosys. It had a gap down on Friday, broke below a trend line level. There was jump in volumes. The setup is slightly negative. So if you get a 5-10 points kind of a bounce back on Infosys in the morning, sell between the range of 1445 to about 1450. Keep a stop at 1465 and look for a target of 1410. But the rest 3 calls are on the buying side. ITC, I think, gave a very strong reversal on Thursday and Friday. So buy with a stop at 407 for targets of 424. Also a buy on Max Health, which had a gap up and sustained. So that looks like a continuation gap, which should see more upside. So buy here with a stop at 1188 for targets of 1235. And finally, a buy on APL Apollo with a stop at about 1734. Look for targets of 1795.
Okay, got it. Mitesh, thanks very much. We'll come back to you a little closer to market opening. Right now, we do have to take a very quick break. We'll come back almost touching 9 a.m. So we'll have the pre-open rates. And also, that conversation with the management of RBL Bank, what a mega deal as Emirates NBD is checking in to buy a 60% stake. It is probably the largest FDI that we've seen in the Indian financial sector in a long time. We get you that conversation right after the break.
Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग. In association with
LIC of India, हर पल आपके साथ.
And
Peps, India's favorite spring mattress. Have a happy Diwali.
Co-presented by Bank of Maharashtra, एक परिवार एक बैंक. Co-powered by National Stock Exchange. सोचकर, समझकर, इन्वेस्ट कर.
Welcome back. We've got about 2 minutes to go before we start getting the pre-open rates. Will the Nifty extend its winning run as we get into the full throttle Diwali festive cheer? Sudarshan Sukhani is also joined in, so let's quickly get his trading setup. Sudarshan, happy Diwali to you, your team, and everybody at home. Tell us on the index, what's the call today?
Happy Diwali to you. We are celebrating Lakshmi Puja today, so good wishes to everyone. See, the Nifty has been on a roll, and I don't have to make a call to say how high it will go. The important point is that we should be long. This is a theme we have developed over the last 10 days, 15 days. Stay long in the Nifty, buy on dips, buy small consolidations. And even if we have a 2-day holiday, just keep long positions, use options instead. I also have a suggestion, a Diwali suggestion. The Diwali buy is to buy Nifty ETFs. This is the easiest way to enter the stock market without any tension and apprehension. And the one thing you should not do is to buy gold and silver. They are in bubble territory. Avoid that. Focus on the Nifty.
Okay, all right. And that's a nice tip to anyone who's new to the world of investing. Definitely get those Nifty ETFs. An interesting call on gold and silver. But let's talk stocks as well, Sudarshan. What's on your list for the day?
Well, Zydus Life is a buying opportunity with a stop under 970. Bharat Dynamics is a buy with a stop under 1510. Tata Consumer is a buying opportunity with a stop under 1145. And just to balance it a little, I have Manappuram, which is an intraday short, only intraday, with a stop above 290. But broadly in this market, we should try to be on the long side.
Okay, all right. Sudarshan, happy Diwali to you and your family. Thanks very much for joining us as always. Now to the big banking story, right? Diwali Dhamaka. UAE-based Emirates NBD Bank is set to acquire a controlling stake. It's the largest single-ticket FDI item in the Indian financial space. $3 billion infusion. That's about 27,000 crores into RBL Bank. And they end up with a 60% stake, maybe more, depending on how much shares come in that open offer. So I sat down with the top management at RBL Bank, the MD and CEO, R. Subramanya Kumar, to decode what this means for the bank going forward. Listen in to this conversation.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. Yes. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers. And it will be hovering around 60, plus the branch merger, whatever the percentage is going to come.
Okay. The brand remains RBL, or will they be? It's going to be a combination of their name, your name.
So the entire discussion went around the brand strength. Today, if you look at it, the RBL has created its own strength, and specific discussions have not taken place with regard to that. But left to my thinking, I feel that the greater part of the RBL will remain as it is. And it is not a part of our CP or conditions or anything. Otherwise, you would have seen it in our IA itself.
But it's possible that, they may be accommodated.
They may be, correct.
Down the line.
Not immediately. Immediately, it is going to be the RBL to start with. And we have to wait for the things to evolve, rather than taking a preemptive thought in that.
The RBI, of course, will take a look at the deal. There are all these other sort of regulatory aspects as well. But I assume there would be some amount of comfort you would have sort of gotten that this is kosher, fit, meets fit and proper. All of that, this is formality in that sense. Obviously, it's not formality, it is done. Formality. But I just wanted to get a sense.
Yeah, absolutely, Prashant. It can't be a formality. Sure. It is a very deep evaluation of it.
Sure.
Why we feel that the fit and proper may not be an issue is that they have already participated in elsewhere, and they have also been given an in-principle approval for the WAS.
Sure.
So the fit and proper may not be an issue. However, the regulator has its own deeper understanding and evaluation technique. We can't say beyond this.
Let's get to the size of what this enables you to do, right? I think the net worth goes up to about 42,000 crores. So from 15 it goes to 42. Your leverage right now is about 8, slightly over 8 times or so, right? Assets are about 1 lakh crore. What does this enable you to do in terms of growing that asset book, loan book?
This gives enormous opportunity. Just for understanding, today my capital adequacy is, my CRAR is around 15%.
15, 1.5. Right.
For the discussion purpose of understanding, let us hold it there.
Yeah.
Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital.
Sure.
So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us the 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story; it's a 3 to 5 year story. What we have been thinking among ourselves. However, the deeper calculations are required to be done, and will work much better. During this period, we will continue to make a profit, and I'm sure that the profit will also enable us to scale a little higher. The combination will make us to take it to the better league than where we are today.
So everything remaining same, which is you holding at the capital adequacy of current capital adequacy, not going up to 20%.
Yes.
From 1 lakh, you can go up to about 2.5 lakh crores over the next 3 years.
Exactly.
Or so, right?
That's opportunity available for us.
And would you hold at the current capital adequacy? Will you go to 20?
No, the most ideal situation will be to have around 17-18%. That is what we wanted to have it because of the environment in which we need to have a strong capitalized bank. We don't want to be in the 15 range. That is a natural thing. And as we move forward, we will evaluate a little deeper to see that should I hold it at 17-18% or go to 20%. The most ideal situation will be around 18% will be something which is going to help us out to sustain this.
NBD is AAA rated.
Yeah.
51% owned by the government. What does this give you a lift as well in terms of cost of borrowing, etc. for you?
I strongly believe this is going to get our credit rating revised. We are now AA minus. And naturally, this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things. And there will be positive rating upgrade for the bank is concerned. There is every possibility.
Could you talk to us a little bit about the cost of funds? I mean, what is it right now? What's the expectation over a period of time as this materializes?
See, today, if I look at it in my overall cost of funds in a savings fund, we are able to bring it down from around 6.54 to around 5.3. There is a big down. That is mainly because of we recalibrated the rate at which we are paying it to them. Peak was somewhere around 7.25, which we brought it down to 6.25. Similarly, in respect of the TD, we were at the peak of around 7.25, which brought it down to 6.75. These two things have already reduced my cost. And the FD, almost everything has been rewritten in the last 1 or 2 quarters. A little portion of it is getting rewritten. My residual maturity is somewhere around 11 to 12 months. So if I look at it, this is the natural corrections have happened because of the repo rate correction which has happened here. And 1%, we already reduced our savings rate by 125%. In respect of FD, we have reduced around almost around near 100. This particular deal will enable us to get much better with regard to that rating of the deposits. We are confident that our rate of deposit, the rate at which we are offering the FD as well as the savings will definitely substantially come down, which will reduce our cost of deposit. When our cost of deposit comes down, our ability, and because the re-rating of the bank and rating of the bank goes up, our ability to borrow at the cheaper rate is also going to come up.
Sure.
So the overall, if you look at it, my
could you
cost
put
of
some numbers to it roughly? I mean, I won't hold you to it, but broadly, how do you think about this?
See,
on a blended basis, what's the advantage?
I mean, in my rough mental calculation, I need to back check my numbers again. Maybe around 100 bips, 125 bips will be the reduction, what we'll be able to see that in respect of our cost of funds and cost of deposits over a period of 1 to 2 years from what it is at current level.
100 to 125 basis points reduction in cost of funds.
Cost of funds as well as the cost of deposits.
So what does that do to margins then?
See, today the margin we are holding it around 4.5 and we have a plan of action to take the margin to somewhere around 4.8 during this current year itself, which we thought that we'll be able to hold it. And we have around 40% of our total advances in the fixed rate, which will be continue to hold it that way only. And since we are able to get a lower cost of this thing, my ability to lend at AAA as well as the housing loan, which we are holding back today, will shoot up. Although it may not alter my margin in a big way, the reduction of the cost is going to help us out in reducing the margin. There will be upward trend from once it is consummated, the NIM will start moving up. In my rough calculation again, in a year's time, it may move up by around 10 bips and keep increasing by around 10-15 bips as the advances are increasing it and my interest income goes up. And
NIMs may improve by 10 basis points and then keep improving perhaps.
Keep improving it as my book grows and my NII increase it. Our intent is to grow the NII at least faster than that of our advances.
What does it do to return ratios? I mean, ROAs and then subsequently ROE?
See, today our ROA, we are intent to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. And with the higher margin we are thinking of and with the reduction of the OPEX, which is one of the big focus area for the bank. And my provision will also come down. The credit cost is going to come down. The trending well. The MFI is almost on near normal. I think credit card in another 1 or 2 quarters will become normal. With these things put together, it is going to kick up my ability to move up my ROA by another 0.1. See, our current business will facilitate us to improve the ROA around 10 to 15% year on year.
Sure.
This new addition will facilitate us to increase it by around 30-40%.
Okay.
So both put together, possibly in the first instant year, we will be able to grow by around 40 to 50%. Thereafter, it will be in the range of around 10 to 15% year on year.
There is though large expansion of equity. So in terms of return on equity, you think, I mean, at least for the next few years, you are...
Few years, yes. I fully agree with you. The base has increased multifold from that other 60 crores to 150 crores. So naturally it will have its impact on ROE. But in the next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years time.
But over the next couple of years should be 6-7% in that range?
See, next 2 years, maybe in the high teens. So maybe after 3-4 years, it will go back to its around maybe around 12-13%, and then it will start improving it thereafter in an accelerated way.
Well, that is the conversation with the RBL Bank MD and CEO. And look at the stock; it's opened up. It's actually the pre-open has come to an end, and the stock's kind of flattish, slightly higher, around the 300 rupee mark. I mean, you know, the management very candidly admitting that. The way this is structured is there is an open offer first, and then there is a pref issue, and there is a SEBI there's a SEBI rule which allows them to scale down open offer because, I mean, you know, foreign banks, foreign entities can't hold more than 74%. In any case, there is the minimum public float holding. So realistically, given the difference between the offer price and the current market price, I mean, not very many shares may come into in the open offer. So around 60%, slightly over 60% is a realistic expectation. But it's a $3 billion sort of infusion, 42,000 crores net worth, 8 times leverage, which basically means that from current 1 lakh crore in assets, loans, I mean, you know, they basically can go up to about 2.5 lakh crores over the next 3 years, 3 to 5 years, depending on how they want to scale it. So that's RBL for you. I already am seeing a few sort of upgrades from brokers, etc. was very well anticipated. We reported it, many others reported it as well over the last 2 or 3 weeks. But, I mean, the deal's finally in the bag, it's finally done. Just want to get 9-10 calls out of the way, and then we'll, of course, keep coming back to this big story and this big deal over the next few hours. Sudarshan and Mitesh are back with us. Sudarshan, your 9-10 call?
It's Bharat Dynamics, buy with a stop under 1510.
Okay, BDL. Mitesh, what about you?
I'll go with the buy on ITC for targets of 424.
Sorry, which one, Mitesh?
ITC.
ITC. Okay, BDL and ITC from Sudarshan and Mitesh. Gentlemen, thanks very much, both of you. Appreciate it. Let's just revisit the bank earnings, right? I mean, lots to tackle. Gaurav is standing by with the fine print. And of course, I mean, the punchiest here. Gaurav, over to you.
Well, yes, when we talk about the big banks, first let's talk about HDFC Bank. Inline set of number is what we saw. Profit increase almost by 11%, while we saw net interest margins declining just by 8 basis points, but it was in line with the street's expectation. What remained positive is that the commentary that FY27 will be higher than industry growth, and at the same time, the credit cost that actually also came as a surprise, because it is positive that bank is keeping the credit cost at a healthy level. When we talk about ICICI Bank, we saw profit actually was higher than estimated, and the reason being that provisions, those were lower than what the street is expecting. In fact, another big positive surprise here was that net interest margins, they declined just by 4 basis points versus the expectation of 12 basis point decline on a sequential basis. And during the con call as well, they said the margins are likely to remain range bound. Apart from that, let's talk about IndusInd Bank as well. When we look at the numbers, those were, the expectations were weak, but on the back of that also, bank actually reported losses of around 437 crores. Now, what impacted is that the provisions, those were high. Bank said that they took accelerated write-offs as well as increased provision on microfinance loans. Apart from that, during the con call, they also said that it is not going to be significantly decline in the credit cost in the next 2 quarters at least. So definitely on the back of these updates, we are going to watch out on all these big banks and how they trade today.
All right, Gaurav, and we'll come back to you for more. Thanks very much for joining us. That's essentially the initial first take as far as these numbers are concerned. What do we have? I think market open coming up in a few seconds from now. And we will take stock of the indices as we always do. And then we'll dive into individual stocks and sectors, etc. So the opening coming up on the big wall here. First rates on your screen, it's a 100-point uptick. 25,800 plus is where the Nifty is now opening at 850, by the way. Nifty Bank at 58,000. So ticking slightly above the 58,000 level. Mid-cap index is up 0.5%. The small-cap index is opening about 0.25% higher as well. So it's a pretty good week after what's been a pretty fantastic last 2 weeks, actually. So 0.75% now, closer to 25,900. So racing away to 25,900, right to the word go. Let's see if you're able to hold on to some of these gains through the course of the session. That is important. Tomorrow, it's a bit truncated in that sense. Tomorrow, of course, there's about an hour worth of trading. The Muhurat session, day after is a holiday. So there's that, but it's pretty good. 25,900 nearly. And look at the Nifty heat map as it comes up on your screen. You've got pretty much everything in the green, just 3 or 4 stocks which are down in the red at this point in time. A pretty green looking screen all told. Surbhi.
Oh, it's the banks all the way. Look at the bank Nifty. It continues its charge, 500 points up at the start. But before we talk about banks, and there's so many to go over, Reliance is, taking the market higher. It is the opening batsman in leadership position, almost 3% up after its earnings. So you've got Reliance firing. You've got, of course, the banks. Now, Kotak, Axis, these are the ones that are leading. Interestingly, there's some selling on ICICI Bank. The numbers are very, very decent. The NIM compression was far lower than what the street had feared. But for the time being, there's a bit of a sell on, or basically profit taking, sell on news playing out, 2% lower over there. Ultratech Cement is slightly lower after earnings 1% down. But other than that, the Nifty is a nice bright shade of green, 200 points up. So let's see what the other winners are looking like. Kotak Mahindra Bank, Axis Bank, Shriram Finance, Bajaj Finance, Bajaj Finserv. So it's financials all the way, banks as well as non-banks. And then you have some other names like Titan, Infosys. They're pitching in as well. HDFC Bank as well, also reacting to numbers. Steady quarter coming in for HDFC Bank, about 1% up. SBI as well, almost 1% higher. But the bigger bank reactions are actually in the broader market with the likes of DCB, etc., Nigel.
Well, DCB, that's the stock of the morning. That's up close to around 10%. It's firing away. The NIMs have expanded. Credit costs are around 0.3%. Guidance of very, very strong out here. And keep in mind, the bank trades at around 0.7 times price to book. That's on FY27 numbers. And the medium-term ROEs is in that vicinity of around 12 to around 13%. So some brokerages are pointing out that risk-reward actually is favorable. AU Small Finance Bank bursting away. NIMs have expanded by close to around 5 basis points. Quarter on quarter, the credit cost guidance at sub 1%. The street loves it. Just take a look at that. When you have big deals taking place with regard to Yes Bank, with regard to RBL Bank, well, the street now is a little bit more excited. Even if you look at Federal Bank, just pull up the stock out there. That's up close to around 7%. The numbers look pretty good. The NIMs have expanded by 12 basis points on a quarter-quarter basis. And also, they'll be meeting for a fundraise on October 24th. So the street likes that. That stock as well is bursting away. RBL Bank obviously is higher because of the big deal that's announced and post, the results as well. So all these banking names doing well from the broader market. JSW Nico, that's one stock that's up close to around 4% from the broader markets. It saw a correction of close to around 10%, but these numbers look good. EBITDA is now at around 300 crores on a quarterly run rate. The interest cost has come down substantially. So JSW Nico is a stock from the broader markets that's doing well. But really the big boy that's doing all the heavy lifting today is Reliance Industries. In fine form, taking out some of those technical indicators as well. And that's doing the heavy lifting. So Reliance Industries and the Nifty Bank, well, coming together, that's a good combination. Explains why Nifty on its way to fresh all-time highs.
Just want to add two names on the downside as well, though it's a bright green morning. Just result reactions to watch out for. Look at Tejas Networks. I mean, the stock's being slammed about 7% lower. Once again, it's reported losses. There are losses at the EBITDA level and at the PAT level as well, and the market is in no mood for any of that. And the other one is UTI AMC. In terms of all the weekend result reactions, UTI was also a bit of a disappointment, some loss of market share as well. So that stock's down about 6%. So just pointing these out, but otherwise, the result reactions have been largely really good.
Just one more point, Prashant, I want to make on Hindustan Zinc. The stock is down. I'll tell you what, everyone's talking about silver at $50 and whether it's good or not. I'll tell you what, Hindustan Zinc, they have hedged close to around 130 tons of silver at $37 per ton. So talking about timing the market, the largest producer, only listed player.
No, hedged doesn't. They've purchase prices.
They have hedged. Yeah, they're going to sell price. They'll be selling silver at $37 per ton. So that is at a sharp discount from $50 because they were expecting it to go to $41, $42, per ton. So even the best get it wrong. The largest producer has got it wrong. Close to around, that's close to 30% of their volumes hedged at a cost that's at a price that's much lower. But par for the course, they got it wrong. It's much higher than the $30, when they started the year at. But that's market view.
I wish I was the counterparty on the other side, on that hedge. On a lighter note, but yeah, that's quite something.
Right to be able to buy silver at 37.
At 37.
By the way, I want to just point out that silver Bs, and we have all these silver Bs, right? Silver Bs are down between 5 and 7%. So you look at, actually, I think this is the Nippon silver. No, this is the 6% lower, 152. If you can have actually all the silver ETFs essentially, and I think they're taking a bit of a setback this morning. Maybe just profit booking, right? These are financial instruments. Gold Bs, by the way, are down about 3% as well. There you go. Nippon ETF is down 6. Tata Silver ETF is down 5. HDFC Silver is down 6. And I think the Gold Bs is down a little bit as well, about 2.6 to 3%. Look at the volumes on some of this stuff. Huge, humongous. So that's something to note and keep an eye out on, apart from, of course, stocks, etc., which we are continuing to highlight. Surabhi mentioned Tejas Networks. It's on the downside, 7%. Whirlpool is down about 3%. Whirlpool had this massive move from about 1,100 all the way to about 1,250 in 2 days flat. That was Friday's high, 1,250. It's taking a bit of it's cooling off a little bit. Havells is down about 1%. Again, I mean, but volumes still very much on the upside. I mean, market breadth numerically more down than up, but volumes are with stocks which are higher. RBL Bank I saw with a 4% pop, and maybe we should just look at that as well. RBL Bank is up about 3%, 307, 308. So the price is running away after that $3 billion infusion, which has come. And the stock, by the way, has done well into this particular transaction. I have N. Jayakumar with us, Group CEO and Managing Director at Prime Securities. Jakes, good morning. Great to have you with us here on this happy occasion. First up, happy Diwali to you, your loved ones, your family, your team. Really appreciate your time here this morning. Just want to start with this RBL Bank bid, Jakes, if you have any thoughts. I mean, and it's not just RBL. Two or three have happened before RBL, and perhaps more on their way. What do you make of it?
Well, happy Diwali for starters, and wish everyone, the viewers, the very best, and including everyone at CNBC. As far as RBL is concerned, actually, more from a thesis perspective, in several of my interviews in the past, year or thereabouts, we have talked about how when the first sign of new FDI comes in, the first sector it will and should and has been seen empirically where it comes through is in the BFSI space. The financial services space, especially banking, if allowed to attract capital, can attract serious amounts of it. We saw the Yes Bank transaction, and then we've talked about the IDBI divestment. Clearly, RBL as a mid-sized private sector bank, small to mid-sized, was in a sense ripe for the taking as any external person would have looked at. So the opportunity has always been there. And from a bank perspective specifically, they've done a hell of a lot in terms of cleaning out the issues of the past. Legacy has been cleaned up. They have guided for improvements as their portfolio has changed. They've guided for an ROA of 1% at the end of the year. So they've done, in a sense, the corrective stuff. The stock has responded to that over the last 1 year. It's been one of the best performing stocks in that mid-cap space, or in fact in the banking space itself, especially from the lows. The transaction itself gives it the much needed league shift, if you will, from a small to mid-sized bank to be able to have 40 to 43,000 crores of capital means that you're now rubbing shoulders with, if not the top four, but the next of kin, which means if you leave out the big four private sector banks, the next of them will contain RBL as one bank, especially with the kind of net worth they will have post this transaction. So A, cost reduction, B, in terms of credit rating, C, in terms of pivoting business. I think commentary will now focus on how they pivot to be able to utilize this capital and grow their balance sheet from the current 1 lakh crores to maybe 2.5, 3 lakh crores over the next 3 to 4 years.
Yeah.
That is going to be the commentary people will watch out for. It's a landmark transaction, and it tells you clearly that there is capital waiting to come in, especially in the space that we talked about.
Yeah, no, absolutely. And large capital, right? And it's a controlled transaction. That's what's interesting. We've seen 10, 15% kind of, but this is 60%. So it becomes a subsidiary of Emirates NBD. And so in a way, a new chapter, new leaf, whatever you want to call it. Sandeep Bhatia is also with us, Managing Director and Head of Equity India at Macquarie. Sandeep, great to have you with us here. Thanks very much. Happy Diwali to you, your team, your family. Appreciate your time as always. RBL, if you have any specific thoughts, but the broader question is financials. Financials were top of the list in terms of what will do well if one asked that question a year and a half back. But then, of course, they didn't do very much. But looks like stars are aligning, stars are coming up in a row. All the measures on the tax front, easing front, and now, of course, some of these large deals coming into being as well. What do you make of it, Sandeep?
So, very happy Diwali and New Year for the entire CNBC team and everyone and loved ones of the viewers. I think the finance sector has always been cheap, so there's always a lot of interest because valuations compared to the rest of the market has been good. It's also a sector which is very liquid, has large exposure both from domestic institutions and foreign institutions. So it's mostly a default position. I think what happened in the current somewhat which just went by, we saw essentially the impact of low growth, no lending growth. With the GST rate cuts and with now, I think definitely more optimism in terms of consumer spend in the broader economy. I think volume growth, or which is for banks, loan growth will definitely come back. Margins and quality of book remains good. So all that means that some of the large private sector banks are in a good position. We have to be careful about transactions and deals. While this is definitely a welcome transaction, I think it essentially speaks about the opportunity in the sector rather than the quality of the specific bank. And that is something which we need to be aware of. I think also the fact that, a lot of Middle Eastern banks are not definitely the best managed. I think most Indian private sector banks over long periods of time have seen, at least top 3 banks have seen better management than most of the Middle East banking sector. So to that extent, I'll just say that this is a positive investment and also a strategic direction of the relationship that UAE and India have. So yeah, it's welcome, but there are better banks and cheaper banks over the longer term.
Sandeep, hi. Season's greetings to you. Wish you and, all your near and dear ones a very, very happy Diwali. And kudos because you had called out the financial space. I remember in an early September conversation, you said that banks do look interesting. And, they could perhaps start, performing well. And look at it, I mean, the numbers are really coming through. So the question is whether one should buy the whole basket. I mean, you can simply buy the Nifty financials, the Nifty bank. But what would be your pecking order between, say, large NBFCs, large banks, mid-sized banks, or an opportunity, I mean, some of the mid-sized ones, including RBL, the kind of transition that they're going through, or say IndusInd Bank, which some can argue can be a turnaround story. So what should the strategy on lenders be for an investor?
Very good question. So I think in terms of, let's say, IndusInd Bank, I heard the call, and I think we have a good management now in place, but it may take some time. So any buyer of IndusInd Bank should have at least a 2 to 3 year time frame. It will require the whole new team which is coming in to make significant changes. We'll have to see how that affects morale and organization, internal organization dynamics. Any big change is definitely painful for the employees. So we have to ensure that this management is able to take everyone along who's part of the bank. So that's a more long-term call, but definitely that's worth looking at. I think in terms of the basket of stocks, I would think if we see a broader push in the economy, the public sector banks and the top 3 private sector banks are beneficiary, and therefore these are the baskets of stocks that you should look at.
Okay, so look at a basket of financials, and very quickly, Sandeep. Again, last time we spoke, you said the market is still in a slow burn phase, quote unquote. So what's the phase? Has the burn gotten over? Is it now a brighter shade?
Definitely right now with Diwali and everything which has happened post GST, it's a brighter shade. I would say that this somewhat year should see better returns than last somewhat year, which has been flat to negative mostly, depending on your point of entry. But I would still be cautious to the extent that if we see a big run up, we have seen some froth come through in the IPO markets. So there's definitely significant flows which are coming into Indian equities from domestic savers and domestic institutions. So if there's froth and if we see the market run up 15 to 20% from here till Jan, then definitely again the market goes into the same slow burn phase that we discussed some time back. It's a 10 to 12% return market. It's not a 20% or 25% return market. We should be aware of that.
Okay, all right, I got that. Sandeep, Jakes, final word from you. Next 1 year, what do you think? We should be happy with high single-digit, low double-digit returns or a flattish year. We've gone through the grind. It's been a tricky wicket in the last 1 year or so, but we pull through, right? We're bracing for better times, and also private banks is what you like. What about metals?
I think metals would be beneficiaries because I think China has moved towards curbing production in several cases, number one. And number two, in general, if we have a weak dollar scenario, which may have periodic sort of reversions to mean kind of movements, but in general, if the movement is one of, I think what we've seen recently in terms of both currency movements and commodities, especially precious metals, may have been a bit of an excess. So there could be some reversion to mean. I think even the Indian rupee could be at these levels an attractive entry point. In fact, I think at about 88.5, 89, it may have peaked out in the short run. So keeping that in mind, and with oil being low, which is the big sort of tailwind for India, my assessment is we may be happy with 8-9% returns is one way to put it, but we could end up getting much more than that.
Okay, well, we hope for the best and hope the next 12 months are brighter and they glitter more than the patience that the last somewhat has demanded of investors. Thank you, gentlemen, very much for joining in, and once again wish you both a very, very happy Diwali. Well, that's the market conversation on the day of Diwali, and the market's actually in cruise control mode, almost 200 points higher up and chugging along. I'm looking at a couple of corporate reactions now, and let's pull up Dixon. Dixon is down just about a 0.25%. Numbers, of course, came in over the weekend. So let's go over some of the key questions that we have for the guests. We have Saurabh Gupta Director of Finance at Dixon, joining in for a conversation. And some of the key points that the market also, is putting the spotlight on. Number one, the outlook for the mobile segment, because there is an argument out there that, the growth is not as much as what the management was guiding or the market had in mind. Then, of course, we need to understand how the new JVs are shaping up, both Vivo and HKC. And, of course, new clients and new growth levers that the company is looking at for the rest of the year and, of course, going into the new year as well. Saurabh, thank you so much for joining in. Season's greetings to you. First of all, wish you, everybody at Dixon and, everyone at home a very, very happy Diwali. It's been a steady quarter. But allow me to ask you this, because, I mean, the guidance on the mobile, mobile phone volume side was about 15% growth. I think you've done about 13%. And in the market, the chatter has been all about Motorola, which is your big client, largest client, and the deceleration that's happening in the Motorola business. So just shed some light on it, and if you could assuage these concerns on the mobile phone volume.
Yeah, good morning and wishing all of you and the entire CNBC team a very happy Diwali. Yeah, so my sense is we had projected budgeted a volume of almost 40 million mobile phones for this year, smartphones for this year. I think so we are on track for that. And the first 6 months we have done broadly 20 odd million. Yeah, within the customers, so we pretty much work with all the customers on the Android ecosystem. Yeah, within the customers there can be some plus minuses, but broadly we are working towards achieving that 40 million number for this year and hopefully 65 million number for next financial year.
All right. Hi, Mr. Gupta. Good morning. Festive cheer to you as well as the family and all at Dixon. Give us a few more details. How much of volumes would Longcheer contribute in the coming year? And also, do you see a higher amount of volume shift into the JV from Longcheer?
Yeah, so Nigel, our JV should be operational by somewhere around April 26. We have taken a new facility in Noida, and we are expecting closer to 9 to 10 million volumes. There can be upside to those volumes, but yeah, the business plan is getting worked out. But yeah, 9 to 10 million is something that we are absolutely confident about for next financial year.
Got it. Focusing on volumes itself, so 40 million for this year, which goes to 60 million. Out of that, the Longcheer JV will contribute around 9 million. Exports will contribute how much?
Around 65 million is what we are looking at.
Next year, 65 million. How much will exports contribute both in this year as well as next?
So the first 3 months we did an export of 2.8 million this year. Last year we were at a very small number. So definitely the export numbers have grown. And hopefully in the next 6 months also the numbers should grow for exports. So my sense is out of that 65 million, broadly 8 to 10 million can come from exports, if not more.
Saurabh, hi, morning. Happy Diwali. And I think it's a happy Diwali, especially for you as well, right? Congratulations. I think you get onto the board of Dixon. Saurabh?
Right. Yeah, I just been appointed as a director on the board. Yeah, thank you so much, Prashant. Thank you.
Lovely, lovely. Onwards and upwards, as they say. What about margins, if you will, across businesses? I think you've seen some expansion. So mobile and EMS, consumer electronics, home appliances, all have seen anything between 10 to 40 basis point expansion in margins. Could you provide us with some amount of guidance, if you can? How will this trend from here?
Yeah, so Prashant, we are broadly at 3.7, 3.8% in the first 6 months. My sense is that should be the run rate for the going 6 months as well. So broadly, we should land up at a similar number for this financial year. But with more backward integration play, I think so the backward integration play should continue to add to our margins. Our expansion in the refrigerator portfolio should add to the margin profile and overall the operating leverage benefit. So my sense is next year, because of this largely on account of this backward integration play, we think we can expand the margins anywhere between 50 to 60 pips. And a large part of that margin expansion will happen in 27-28. Because by that time, a large part of a backward integration play, especially in mobiles and IT hardware, would have been completely ramped up and stabilized. So we are looking for a good margin expansion in 27-28.
So FY28, I mean, this backward integration we've spoken about earlier as well. So should be between, what could be the range? Could we by then see a 80 to 100 basis point bump to margins from where we are?
Yeah, so broadly, our numbers indicate that it can be 100 to 120 pips margin expansion in 27-28. And part of which, half of it should get reflected broadly in 26-27.
Saurabh, let's talk about the joint ventures as well, particularly the ones that you are getting into with Chinese entities. So the market's eagerly awaiting on the latest with HKC. You're making, I think, display modules with them. There's Vivo as well. Just update us. I mean, have all the permissions and approvals come through? When do these, go off the ground? And then I'll come to the, the other alliances that you're looking at. But just an update on Vivo and HKC in particular.
Yeah, so it's progressing very well. There has been a lot of back forth on answering the various queries of the various ministries. And we feel confident that the approval should come in the month of November, in the coming weeks. So we are absolutely geared up for that. And yeah, we plan to consolidate hopefully our numbers from Vivo, hopefully in Q4. And yeah, HKC, yeah, the construction is happening. The machines will be installed by end of December. The trials will happen in Q4 of this fiscal, and the mass production will happen in Q1. So we are absolutely on track. Our acquisition of QTech happened on 26th of September. So we started consolidating the financials. So that would already start to play out in Q3 and Q4. And we'll continue to deepen the level of manufacturing, expand our margin, expand the capacities, and also take advantage of the component PLI scheme.
Okay. All right. And just very quickly, 10 seconds, overall top line growth for this year, and just give us the revenue mix. What will it be? And whether there'll be any pickup in your consumer electronics business, which obviously has been sluggish.
So yeah, consumer electronics is sluggish because the TV demand was really muted in this quarter, mainly on account of this postponement of purchases on account of the GST announcements. Hopefully, we should be able to recoup some of that in Q3. Yeah, my sense is the overall revenue guidance, I would say, should be closer to 30-35% for this year. But definitely, we are looking for almost a large growth for next financial year. So between 24-25 and 26-27, we should be broadly able to double our revenues.
All right. And profitability, last year it was around 700 crores, which was double of the previous year. You're a 1 lakh crore market capitalization. Most on the street are anticipating by FY28, you'll do 2,200 crores of PAT. Is that possible? 700 crores last year goes to around 2,200 crores.
Yes, it should be in that range, Nigel, broadly, yes. Yeah.
All right, Mr. Gupta, thanks a lot for joining you. Have a good Diwali. For the timing, the stock looks expensive, but maybe on a forward basis, if you do that 2,200 crores, then it's at around that 45, 46 times out, which is relatively less expensive. Appreciate you joining in. That said, let's shift focus to JSW Steel then. Mr. Jayant Acharya, the Joint Managing Director and CEO of the company, joins us on the show. Hi, Mr. Acharya. Thanks a lot for joining in. And it appears your subsidiaries actually have done very, very well. So first, let's focus on demand. What are the trends you're seeing on the industry at current reckoning?
Demand has been, fairly strong. We saw an 8.9% growth in the quarter two. This is on the back of a larger base, let's say, over the last few years. So demand continues to be strong in spite of a seasonally, weaker quarter, let's say, and a prolonged monsoon. Second half, I would say the demand will be better. Post the implementation of the new GST rates, the sentiments have turned quite positive. We see economic activity and buying across multiple segments. So I think the consumption story will really pick up post this because we have interest lower, we have the benefit of lower inflation, we have the benefit of lower income tax, and on top of that, the GST. So all combined, I think, will spur consumption in a good way as we go forward.
All right. What about demand? Demand strong, right? As you're saying. But what about the scope of going ahead and increasing prices? There's a big gap, if I look at it, between domestic pricing and the landed cost of imports.
So, one is that it's a seasonally weaker quarter. Secondly, the fact that the supply which came in terms of the production was a little lumpy, let's say, from the domestic producers. So that production, I think, was a little bit more during these last few months. But by and large, now we see that absorbed. Pricing, we feel in the monsoon quarter has now more or less stabilized. Between November to December, we should see a price improvement on the back of a better demand, better consumption. And as you said very rightly, there is a discount to import prices. So all in all, a seasonally stronger H2 will see improved prices going forward.
Okay, all right. Coking coal cost will move up a little bit, if you look at it on a quarter-quarter basis. But directionally, since operating leverage, higher prices as well will play out, do you think the EBITDA number can actually improve?
So if you were to look at the outlook, so one, reiterating that the volumes will be better. We already had good volume numbers, as you saw in quarter two. Going into quarter three and quarter four, we are seeing that, Dolvi has, ramped up well. BPSL has ramped up well. And JVML now, I think, will be able to deliver, let's say, the full capacity now in the second half. So volumes will be better. Demand is likely to be better for the second half. Pricing, as I said, between November to December should improve. On the cost position side, we should be able to mitigate the impact of the coking coal cost through efficiencies. However, that said, also keep in mind that we have taken our blast furnace, one of our blast furnaces in Vijayanagar, for a shutdown for expansion of the capacity by 1.5 million tons. And that's for a period of about 150 days. So there'll be some shutdown-related impact cost which would come in. But other than that, on an operational parameter point of view, I think we'll be range-bound on cost. The benefit which could come is on the raw material side would be iron ore, because iron ore prices have been elevated in India. And internationally as well, we expect a reduction in the iron ore prices in the coming quarter, in the October-December quarter. So that should be positive.
Okay, what about international operations? How is the US as well as Europe shaping up? Europe, in fact, it looked pretty good for the last quarter.
Italy has done well last quarter. The rail shipments were better, the rail volumes were better. We expect Italy to be operating in a stable environment for the next half as well. As far as US operations are concerned, the volumes, the utilization of capacities were better. From a margin perspective, I think it has been similar, except for the fact that there was a pipe order which slipped into the next quarter, due to which you will see in print a lower EBITDA number. But otherwise, Baytown and Ohio put together, we have done about $12.2 million dollars of EBITDA in the last quarter. So overseas, if I look at Italy and US put together, I think our operations have done reasonably well, and we should be able to have similar kind of growth in the second half as well. Only one thing I would just like to highlight is that we have the expansions in Ohio kicking in during this second half. So there will be a shutdown for a period of time to implement that particular equipment, so that there will be some impact on the volume. Other than that, we'll be fine.
Very quickly, Mr. Acharya, before we let you go, China is talking about this anti-involution policy. Your reading of the same, and have you seen some evidence on ground? Chinese are reducing production?
Yeah, so China involution policy is a big positive. We are seeing moderation already, which has taken place in the first few months. We should see a 30 to 35 million ton reduction in the Chinese steel production in this calendar year. And going forward into the next year, you will see some moderation further as well. So that is good for the world at large. We are expecting that the exports from China next year hopefully should moderate. The domestic production, the domestic consumption has also softened. Although I think majorly the housing sector has been weak, but it's been made up to some extent by better manufacturing, better automotive, and some infrastructure investments which they have improved on. So I think the domestic consumption should improve with the Chinese economic push which is being given. Production is coming down, and that should reduce exports, which augurs well for the industry at large.
Thanks a lot, Mr. Acharya, for joining in and giving us an outlook with regard to the second half of the year. Chinese reducing production. That's going to be the greatest news, I think, both for their industry and the global steel industry as well. Thanks a lot. Well, we'll slip into a short break. On the other side, we'll connect with the management of IDFC Bank to detail their quarter 2 numbers. Stay with us.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange. Soch kar, samajh kar, invest kar. Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Welcome back. So we're staying with earnings, and there are so many of them that have come through the weekend. And the next, stock and the next bank on our radar is IDFC First Bank. So let's look at, some of the key indicators and, of course, the key questions that we have for the management. Mr. We have Mr. V. Vaidyanathan joining in right now. Some of the points that the street would want clarity on would include, of course, the net interest margin picture. Can there be an expectation of better NIMs in the second half of the year? That's point number one. The bank has reported a very robust loan growth, 20% robust loan growth. So is that likely to sustain? And of course, we want to understand their ROA targets as well going forward. Mr. Vaidyanathan, thanks for joining in. First of all, season's greetings to you. Wish you, the team at IDFC First, and everybody back at home as well, a very, very happy and joyful Diwali. So let's start with the first point that, of course, this quarter there's been a bit of a NIM compression, but in general, the sense is that as that CRR cut kicks in, as loan growth picks up, NIMs in the second half, the overall financial system are expected to increase. Is that the view that you have for IDFC First as well?
Yes, this quarter we passed on the full impact of the repo rate cut that RBI had done to our customers. So that brought down the NIM to 5.59%. It is down 12 basis points. Q3 and Q4, we expect the net interest margin to actually improve. That's because our cost of funds is coming down and we expect it to come down.
Can you elaborate on that, Mr. Vaidyanathan? I mean, what sort of an improvement and how is this cost of funds coming down? What's taking it lower? What's your mix looking like now?
Basically, we brought down the fixed deposit rate quite sharply by about 100 basis points. So, and the fixed deposit rate usually takes about 1 year to about 15 months to fully pass on because that's a typical tenor of fixed deposit. They come for repricing. Whenever they reprice them at a lower rate. So that is already brought down our cost of funds last quarter quite substantially. We expect it to further come down next quarter, further come down quarter after that. In fact, we are really thinking that for the first time in the bank's history, by Q4 of this year, our cost of funds will go to below 6%. We are very, very happy about that. And to mind you, we started at 7.8%. So that is already 160 basis points cut, another 20 basis point cut in the offing.
So by the time we end the fiscal, NIMs should go back up to sort of what sort of a zone? Closer back towards, go on.
Upwards of about, today it's like 5.59. Definitely should go to like 5.8% or so is the number we are broadly working towards.
Okay, all right. Hi, Mr. Vaidyanathan. Always good to have you on the show, sir. Nigel on this side, wishing you, your team, a very, very happy Diwali and all at home as well. I wanted two numbers from you, sir. One is on the credit cost guidance. You've been guiding for better times ahead. So tell us what's the outlook out there. How do you see this credit cost number coming down? And the ROAs as well. As the year progresses, you're saying that it gradually moves up. So give us the targeted number with the timelines.
So let's take one thing at a time. Let's focus on credit cost. So even now, if you take out, microfinance is an industry issue, it happened to everybody. So ex-MFI was still in the zone of like 2.05%. We are guiding for the end of the year. And by the way, just to mind you, it is of percentage of loans. If you take it as percentage of assets, it's like 1.4 something percent. So of assets, meaning the whole assets. So coming back to the point, so it's already come down. It's like in that zone for the full year, why it should come down to your question, because the impact of microfinance is like going away. Q3, Q4, we expect very low credit cost in microfinance. So that's the reason why credit cost in H2 should be better, like much better than what it was in H1. And therefore, the whole year should look good, and we'll have a strong closing to the year, I'd say.
All right, just come back to the ROA number. You had said, I think, that it heads towards the 1% mark, right? You're holding on to that.
The ROA front, yes, of course, our bank, why one? We should go past 1.5% also in due course, as the bank builds out. As of now, obviously when cost of funds comes down, net interest margin goes up. It should and credit cost also should come down. These are the numbers we're putting out. So naturally, we should see improvement in ROA, and we are more shooting towards 27. There we definitely feel that we will be in a very strong position. And between 2019 to 24, we saw a strong turnaround of the bank, and that profit really took off. We almost get the feeling, I hope we come right, but we almost get the feeling that between this year to the next 4-5 years, we do get that feel about the bank.
So 1% not by the end of this fiscal, is that correct? Now it'll be sometime in FY27.
27 certainly, but the end of the year we'll see where it goes. The direction should be definitely trending in the direction. Now, whether it exactly touches 110, 100 basis points, 1 or maybe 0.9 or 0.8. It's very hard to pick a number specifically on these things because there are so many moving parts. That's why I always focus on direction. I always focus on building the big blocks right: credit deposit ratio, borrowing, the capital. So we look at the big block items, and these things will fall in place. I can't pick a specific decimal, but direction is definitely good.
Mr. Vaidyanathan, let's talk about the loan growth as well. I mean, 20%. That's it's quite remarkable, right? So, is this the kind of number that you think you'll do for the full year? And also qualitatively, where's the confidence coming from, or the comfort coming from? Which are the segments where you're really seeing demand for credit pickup?
You can see now how the GST cut has really lifted off the game, and you've seen the numbers that have come from consumer durable companies, two-wheeler companies, car companies, consumption companies. So this is a big thing, and you see, if you notice, different players are placed in different parts of the ecosystem. Our bank is basically very indexed to the MSME growth. We are seeing good credit growth there. If you see, India's credit growth is only maybe 10 or 11, but if you see MSME credit growth is like 18-20%. So we are there in that space, which is growing. The consumption business, which is all the durables and laptops and washing machine and refrigerator, we have developed really good capability. We are in that space that should grow. So we happen to be in areas which are the growth markets. It's just the sectors itself we are present is growing more, and corporate segment we are less indexed to. So that should, the fact that corporate credit is not growing very much shouldn't bother us very much.
Right. Mr. Vaidyanathan, good morning. Consumer loans, MSME is one area. The other is consumer loans, where this GST cuts, etc., were supposed to show up in a big way. And we're getting some feedback that it is showing up. Could you give us some sense of how big a lift this segment is getting or is seeing in your bank, sir?
The numbers in the public domain, right? Where different research houses, including SBI, IDFC, everybody's put out that consumption growth in the country, because of GST factor alone, is expected to lift by about 2 lakh crores. And we happen to be in that space, like I said before. That's one reason. Of course, the interest rates that came down, income tax that came down, all that put cash in the pocket, we know all that. The thing, if you see, since you asked specifically for us, where is our growth coming from? We are growing the loan book by about, we call it about 50,000 crores a year, but or in that zone, maybe 45 to 50. And 90% of this growth is coming from 4 areas. One is mortgages. That's growing by about 7,500 crores. Second is vehicle financing. That's growing by about 6,500 crores. Third is consumer financing. We talked about all those products there earlier. So that is about 6,000 crores. And then business financing, which is a small business, large business, even corporate banking, that's about 20,000 crores. So if you add these 4 numbers put together, you'll find 90% of our growth is coming from these 4 lines of businesses.
That's very, very helpful, Mr. Vaidyanathan. We'll leave it there, and we'll do a status check maybe in a month's time when you have a sense of how the festive season, and of course this is one of the best periods for financial institutions, for consumer spending, etc. as well seasonally because of festivals. So we'll do that. Thank you very much for joining us once again. Season's greetings and happy Diwali to you from all of us.
From all of us as well to everybody and your viewers. And I must say that, last year and a half or so went away talking about microfinance, this, that, book coming down, yield coming down, all that. It's taken away about a year and a half of our income lines. And that's why you saw profits are muted. I can safely say that next quarter after that, in 27, 28, 29, we see almost the same zone of, growth coming back in profitability because the credit costs coming down and margins improving. So you should look forward for better days from IDFC.
Absolutely. And we certainly hope so. And we look forward to reporting on those better days and speaking to you as well. Thank you very much once again. Appreciate it. All right. Well, it's financials and banks in focus, one after the other. So let me now welcome in the management of Federal Bank, which has reported a pretty good set of results. Mr. Venkateswaran is Executive Director at Federal Bank. He's joining us now to talk about earnings. And we'll talk about a couple of things, right? So I just want to put out and tease out what we'll talk about. Loan growth pick up from here, margin expansion and whether it will sustain, credit costs, whether they will go down from here or not. Sir, good morning. Welcome to the program. Thank you very much for joining us. Prashant this side. First up is, it's season's greetings and happy Diwali to you, your team, your loved ones, from all of us here at CNBC-TV18.
Thank you. Good morning, Prashant, and happy Diwali to all the viewers.
Mr. Venkateswaran, if I may, and please, if you will allow me, actually, before we get to earnings and guidance there, so over the weekend, this big deal came in, right? Emirates NBD picking up 60, when the deal gets them to 60% in RBL Bank, $3 billion infusion. What we understand, what we pick up, and there's a fair bit of chatter around, is that there is a transaction brewing in Federal Bank as well. Can you confirm if something is imminent, sir?
Prashant, I read about the Emirates NBD deal as well when it came out in the public domain. And in our case, we have given a notice of our board meeting on Friday.
24th.
And we will update you once the board meeting is over.
Okay.
But sir, can you?
Can I just, if I can, without of course divulging details and not wanting you to say anything which is against regulations or anything, but is this a minority transaction? The name which is of course being talked about is Blackstone picking up a 10% kind of a stake in the bank. Would I be, without you going into specific, in the ballpark, be correct?
Prashant, as I said, the board will be meeting on Friday to consider this agenda item as we have put up in the exchange. And please let us time till Friday. And after the meeting, whatever is the outcome, we'll give you an update.
But sir, can you, we understand you can't take any specific names, but I believe the bank is already well capitalized. Can you just update us on the latest capital adequacy levels? And also, why are you looking to raise capital? Is this just an enabling resolution? Or are you looking to, maybe expand in certain businesses, wealth, etc.? I mean, why the need to look at capital at all right now?
Surabhi, good morning to you as well. And like I said, I'll just repeat, just bear with us till Friday. Once the board meeting is over, then we definitely come out and give you an update on the outcome of the meeting.
This is a minority transaction, right? That much you can tell us.
I don't even know what transaction you're referring to. All that I know, the board is meeting on Friday on the agenda, which we have put up a notice on. And we will, as I said, we will definitely come back and give an update on the outcome of the board meeting.
All right. So in the past, you have said that wealth management is something that you like to look at. Possibly that you're looking at some inorganic growth in this direction?
Nigel, good morning to you.
Morning, sir.
On wealth management, Nigel, as you know, we have recruited a head of wealth management who joined us earlier this financial year. And we are building out our platform for launch of the organic offering of wealth to our customers, which is on track. And in Q3, next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track. And we do, of course, want to grow as part of our strategic objective, which we had outlined in the analyst meet. Wealth is a focus area, and the organic rollout is on the cards.
And what about inorganic growth, sir?
Nothing on the table at this stage, Nigel.
So the money that you're raising could probably be used for some other inorganic growth?
I don't want to comment on this aspect. As I said, let's wait till Friday, and then we can talk more on.
But it's not just an enabling resolution. The intent is to go ahead and raise money, right?
The board will consider all options, and we'll have to respect the wisdom of the board.
Okay, let's focus on business then. We tried. I mean, went over the wicket, round the wicket, also bowled a couple of dusras. But we'll wait till Friday, as you told us. Let's focus on business. What's the loan growth outlook? What kind of NIMs are you looking at, in the coming year? Tell us how's the trajectory panning out.
On NIMs, Nigel, as you had seen, we had a very strong quarter in terms of NIM growth from 2.94 to 3.06. Completely driven by the fact that the cost of funds dropped by 22 bips and yield on advances dropped by 14 bips. So a large part, 8 bips came from there. Another 1 bip from CRR cut, and the balance was on balance sheet optimization. So completely no one-offs in that. Very strong growth. And I'll touch upon the advances in a minute. And what you also see is the fact that the NIMs was helped by actions which we took on both sides of the balance sheet, both liabilities and on the asset side. We do expect to see the NIM improvement trajectory to continue in the coming quarters as well. On the advances, whilst the overall advances may look like a high single digit, but one needs to go beyond what is there in terms of seeing we have grown very, very strongly on all the chosen segments which we had outlined earlier. The mid-yielding segment, where we have commercial banking grow 7% QOQ, CVC 4%, gold, whilst the headline says retail, overall gold grew 3%, retail gold actually grew 7% QOQ. And cards grew close to 4.5%. So very strong growth in all these areas. And to add to that, the two other medium-yielding segments, LAP and business banking, both which had shown a degrowth last quarter, has turned the corner, have grown, albeit 2% and 1.5%. But we expect to see those two segments also coming back very strongly. So overall, on the asset side growth, on the chosen segments, extremely strong growth. And we do expect to see that continue, the momentum continue.
But just a follow-up on the 2 points that Nigel raised, sir. Your largest segment, retail, that was up just, I think, 1.5%. Why such sluggishness there? I mean, are you expecting it to improve? So what would be the total loan growth for the year? And you said NIMs are expected to keep improving. If you could give us some range, I mean, what would the exit expectation be by the time the year ends?
Sure. See, I think, again, coming back to the overall growth number which you mentioned for retail, you should understand that in our balance sheet, nearly 50% of advances is in home loan and corporate. And these are the two segments which contribute the least at this stage to the margins. So even if they grow at a particular percentage lesser than the chosen segments, the overall numbers may look muted in terms of growth. But what you should look at is, it's about profitable growth. And are we getting the returns commensurate to the risk which we are taking? Are we growing in the chosen areas which we have chosen to grow? And to your question about how the NIMs will look going forward, I don't want to give a number in terms of guidance, but I can tell you that the growth trajectory on NIMs will continue to be strong. We obviously want to grow the NIMs from the current levels. And let's take it one quarter at a time, because there is also the news of or the expectation of a rate cut around the corner. So we'll have to see how that plays out as well.
All right. We'll leave it there, Mr. Venkateswaran. Appreciate you. A couple of more questions, but out of time. And we wish you all the best of luck. Thank you very much, and look forward to speaking to you post-Friday, in terms of what you announce. as far as that fundraise exercise is concerned, shape, form, etc. I hope we'll have the opportunity to be able to do that right out of that board meeting. Thank you very much.
Sure, Prashant. Thank you. Bye.
Thank you. What we'll do is take a quick commercial break here. Markets, of course, have come off. We were up about 200 points. We're up 100. So there is a bit of a drop-off which has happened. Across these precious metal ETFs, both silver and gold ETFs, there is a sharp drop-off between 6, 7, 8% drop-off coming through here. Market breadth is slightly negative, 1,100 higher, and about 1,700 stocks are lower. Lots of single stocks with huge volumes on the upside. We'll talk about some of them in a bit. Commodities in focus on the other side. Manisha will come on in just a bit. Stay tuned.
Welcome back. So there's still some green on the screen as far as the equity market is concerned. Let's find out if the commodity market continues to sparkle as it has. Let's take it across to Manisha for the latest. Manisha, happy Diwali. What's sparkling today?
Well, almost everything. You know, the way the year has been, we've seen very, very strong gains continuing in for gold and silver and for various other commodities as well. But I want to start with gold on how those prices have been on a Diwali to Diwali basis. So when you look at 2021, and that's where I'm taking this chart from, you saw the prices gain up by just about 3,000 in that year, and then 9,000 the next year, and then nearly 18,000 the next year. And now when you look at the prices, it's almost a 55,000 rupees of a gain. So every year we've seen those gains that continue to double from a Diwali to Diwali basis. Coming on with the silver prices in a similar way. So from 21 to 22, we actually saw the prices decline by nearly 6,000 rupees. But then after that, you've seen nearly a 13,000 of a jump up and a further, and 94,000 to 1,60,000 has been almost like a 75,000 rupees of a gain in the last 1 year that we've seen in case of the silver prices. So very, very happy, bright, shining Diwali is what you have when it comes to gold and silver. When it comes to other commodities, well, can't say the same because I want to start with energy here, and crude prices have declined by 18% in this year. Well, it's great news really for India, which is a major consuming and importing country. Coal prices have declined further by nearly 29% in last 1 year. Take a look at the metal prices now, and within this as well, it has been the best of gains that we have seen for palladium, 41% of gains. Platinum has gained up by nearly 60% in last 1 year. And then come to the base metal prices because copper is up by nearly 15% in last 1 year. Aluminum has gained up by 6%, and that's exactly where the gains kind of stop when it comes to metal prices. Because when you look at steel, iron ore, zinc, well, we are trading flat to slightly negative for many of those there. Agriculture commodities should be very interesting to take a look at as well, because when you look at coffee, and that is the major gainer in last 1 year, when you look at agriculture as a space, 55% of gains coming in there. Edible oil sector has seen 5% of a jump up, and that's where exactly the gains stop. Because when you look at essential commodities, remember, inflation has been quite kind there. You're looking at wheat prices down by 11%. Sugar is down a huge 30% in last 1 year. We're looking at excess supplies in major producing countries like Brazil, Indonesia, and Thailand, etc. And then you have rice, which is down by 29%, cacao down by 20% as well, and cotton, rubber, which are seen as industrial agriculture commodities, also have continued to decline anywhere between 11 to 14% there. So when it comes to agriculture commodities, well, we have seen kinder inflation. When it comes to safe haven metals, we are looking at gold and silver continuing to shine bright, with the expectation that next Diwali could be even higher prices from here on. Hey, guys.
Hey.
Well, we have the full splendor and the might and the glitter and the sparkle of Team CNBC TV18 right here with us. So, guys,
I think we should do a countdown, right? So all of us wishing Happy Diwali together. So 3, 2, 1, guys, go.
Happy Diwali!
That was good.
Yeah.
Welcome back. Well, we still have earnings to look at, despite the Diwali color that you saw on screen. The earnings continue with banks. Actually, Bank of India's second quarter numbers are in focus. Net interest margin is under pressure, like it is for all banks, but loan growth is excellent at 14%. Joining us now is Rajneesh Karnatak, the Managing Director and CEO at Bank of India. Good morning, Mr. Karnatak, and season's greetings. Happy Diwali to you and to everyone at Bank of India and your families. Well, let me start with the margins itself. Yes, 14 basis down. We are seeing that on an average it's been 12 to 14, though some banks have been able to beat it. Do you recover from this level in Q3 itself, or will it take one more quarter?
Yeah, good morning, Lataji. Thank you so much for having me here. A very happy Diwali to you, to entire CNBC TV18 team, and also to your viewers.
Thank you.
So as you rightly said that yes, NIMs are under pressure and our NIMs have dipped and we have closed the global NIM at 2.55%. However, if you see our domestic NIM, they are much better at somewhere around 2.86. As far as the going forward NIMs are concerned for Q3, we think that it should be improvement because whatever the repricing had to happen in the credit side has happened in the Q2 quarter because the last cut, as you remember, has happened in the month of June 25 and the entire cut has been taken up in the quarter of Q2. As regards the repricing on the liability side, some repricing is yet to take place and we feel that the entire repricing would happen in the Q3. So we should see a better uptick as far as the net interest income is concerned from the Q4 quarter.
Even if there is a rate cut in December, which some people are expecting because the October inflation is likely to be 0.5% or even lower. So, even the governor said that there is space to support growth. If there is a rate cut in December, will you still be able to post a slightly higher margin? Because your overall guidance is 2.6, right, for the full year?
Yes. So let me clarify that first of all, we would not speculate on the rate cut from the RBI side. Yeah. Considering the fact that the inflation is under control, retail inflation is on a lower side, there is an expectation for that. But if the rate cut does happen, definitely it will impact the net interest income for all the banks because obviously the 63% of our book for Bank of India is external benchmark, which is linked to the repo. So there will be some impact, definitely.
But are you confident of 2.6% for the full year margins? That's your guidance, right?
Yeah, that is our guidance at present, considering the fact that assuming that there is no further rate cut.
Okay. Oh, okay. So we will have to take it as it comes. Mr. Karnatak, what is your sense about asset quality? You have a decent 16% rise in margin in MSME loans. Your overall exposure to agriculture is 20% of your adjusted net bank credit, which is, the priority sector requires 18%, you have 20%. Are you worried about, any loan deterioration? How is your SMA1 and SMA2?
Yeah. So as far as the asset quality is concerned, if you see our results, Lataji, that we have a very good asset quality in the Q2 and our fresh slippage was only 895 crores. And if you see the slippage ratio also it is at 0.14 only. And we have improved our slippage ratio. Our gross NPA and net NPA has come down. Our gross NPA is now only 18,000 crores. Our net NPA is somewhere around 4,000 crores. And in percentage terms also our gross NPA is 0.65, 2.65. And the net NPA is also at 0.55. So we are improving as far as the asset quality is concerned. As regards our SMA numbers, there also if you see 5 crore and above that we have published. So there our figure was around 7,000 crore in Q2, which is now at around 6,000 crore in Q2, which was around 8,000 crores, which was there in Q1. So there also we have improved. And as far as the SMA above 5 CR is concerned, it is now below 1% of our global loan book, standard book. So there is an improvement in that, and SMA 1 and 2 is also not very high. As I said, the overall SMA number is within 1% of the standard book as on the Q2 of 25.
Got that. So no concerns at all. Your credit cost is really low at 0.28 and you think there is scope for it to go even lower, right? Okay, let me come to the loan growth once again.
Credit cost is low, Lataji, because of the fact that yeah, please go ahead.
Go ahead. No, go ahead, sir. Complete your credit cost argument.
Yeah, just wanted to give more clarity and color on this credit cost part. So credit cost is low, as you rightly said. That is also because of the fact that we have been able to contain our slippages in Q2. Since the slippages were below 900 crores, obviously the credit cost also has come down to 0.28%, which is lower than the 0.55, which was there in the Q1.
Okay. Loan growth, you have done 14%, but you're guiding only 12 to 13% for the full year. Will you surprise us on the upside? Are you guiding too conservatively?
Yeah. So loan growth has been 14%. You are right on a global side. On domestic side, in fact, it is much better. So if you see the domestic growth in the RAM segment, our agriculture has grown at 13%. Our MSME has grown at 16%. Our retail has grown at around 19%. And our RAM has grown at around 17% on a YOY basis. Even the corporate credit had grown in double digits in the domestic side at around 10%. So when we are saying the guidance of around 12 to 13%, yes, the guidance is conservative and we are fully confident that we'll be surpassing this guidance. Only thing is that because of some geopolitical issues which are there, the war issue and the tariff issue, we are just trying to give a guidance which is like a 12 to 13%.
Oh, right. Got that. Let me come to the ECL. You must have done some internal calculations about expected credit loss. How long will you take? What may be the impact on the balance sheet and P&L in the first year, FY27?
So in the first year, FY 25-26, see, as you know, the guideline, only the draft guidelines has come out. We are internally going through that. All banks are going through it. So what we know is that it is effective from 1st April 2027. There is a 5-year leeway which the RBI has given to all the banks. And there is a provision which is to be made for the stage 1, stage 2 and stage 3 assets. The ballpark calculation that we have done, that's a very preliminary estimate. In that, I can say that on the CRAR front, we see an impact of around 1% on the CRAR on an annualized basis. So 1% per annum, which means that around 5% in the 5 years. And as far as the clarity on the CRR is concerned, see, we have already done a net profit of around 4,800 crores in the half year. And this year, we are estimating in this financial year FY26 a net profit of around 10,000 crores. Given that fact, our CRAR will improve to that extent, and further 1 percentage point of our Bank of India CRAR equals to around 4,500 to 4,600 crores. So we will be having a 2% increase, 2.0% increase in the CRAR by FY26, and 1% shave off should come because of the ECL.
Have you also counted because of Basel III norms?
And I do not think much impact will happen on the CRAR or the profitability of the bank.
Fair enough. Okay, I'll discuss about the Basel III on another occasion since we're running out of time. I wanted to just get one point in. Did the government get in touch with you about consolidation at all? The buzz keeps coming every now and then. Can you enlighten us?
No, we have no idea about that. It's a government's prerogative and there is no consultation on that.
Okay, and you're not raising any capital?
No, not at present. In this financial year, let me clarify, from the board, we have taken approval for raising our CET1 and CET2 for around 5,000 crore in FY26. CET2, we may be coming, Tier 2, we will be coming in this quarter, in Q3 quarter. And as far as the equity is concerned, there is no plan as on date for raising any equity this financial year.
Okay, well, we are actually out of time. We will invite you yet again for a more detailed conversation. It's just such a bunch of earnings that came over the weekend that we have to keep things short. Thank you very much, Mr. Karnatak, for joining us. And once again, season's greetings to everyone at Bank of India.
Thank you, madam. Thank you, Lataji, and to the entire team of CNBC-TV18. Thank you.
Okay, thank you, sir. I just want to say that, you know, the market has ushered in Diwali Day with a lot of gusto. Just as we were, at 10 a.m., it looked like the market was giving away some of its gains. The gain on the Nifty dropped to about 100, 110 points, but it's charged up once again. And I am not surprised who is leading it. It is the banks. You know, almost every banking stock that has announced numbers has surprised on the upside in terms of margins, surprised on the upside in terms of credit growth, and the regulator has been, getting kinder and kinder to the banks. So my sense is that the Bank Nifty, which is already at an all-time high, is likely to push the Nifty to fresh all-time highs very soon. We wrap up on Bazaar on that cheerful note. Chartbusters coming up with another bunch of earnings interviews.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग. Co-powered by SBI, बेस्ट है सबको पता है, and बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam, and from the entire team of Chartbusters, we're wishing you and your families a very, very happy Diwali. But we've got earnings coming in, Mangalam, so let's get straight to the management of Havells.
Let's get straight to the management of Havells. Let's talk about their earnings now. 12% growth is what we saw in their cables and wiring business, but there was an impact of unseasonal rains and extended monsoons on some of their cooling products. So we do have with us Anil Rai Gupta, who's the chairman and managing director of the company, joining in. Thanks a lot, Mr. Gupta, for joining in. First up, to you, your team, all your employees, and all our viewers, a very, very happy Diwali and festive greetings as well. Now, if we look at your numbers, it was led largely by cables and wires, as against earlier, where it was the consumer durables business, the cooling products in particular, which would be growth drivers. This time around, obviously, on account of the unseasonal rains, the erratic summers that we had, that business saw a bit of an impact. So just wanted to understand on that business in particular, what's your outlook for the second half of this year? Because on the one hand, there is a fair amount of inventory which is there with the dealers as well. And on the other, there is that additional kicker that comes in from the lower GST too.
Absolutely. First of all, happy Diwali to all of you and to your viewers. I think you hit the nail on the head. There is, summer products, we are expecting a very big turnaround because it was a low first half for the year. Summer products, including air conditioners, air coolers, fans, we're expecting good turnaround in the second half. There are inventories which are piled up both at the manufacturer level and at the trade level. I think it should get normalized during the third quarter and maximum by the fourth quarter. There is another disruption which is also happening. The energy ratings transition is also happening by 31st of December, which would mean better rating products for the consumers in the fourth quarter. GST reduction is a big advantage for the consumers. So all in all, there are pluses and minuses, but I think by the fourth quarter things should get normalized fully for the summer products.
How would you define normalize and how would you define a turnaround in the third quarter, sir? Because the retail offtake could increase, but the dealers are still sitting with a fair amount of inventory. So if you could give us a sense on your reported numbers, what's the kind of growth that we can foresee in the third and the fourth quarter?
So I think last year, third quarter was suppressed. So we are expecting some growth over the third quarter itself, despite the fact that the dealers are also with inventories. So I think, I would say that, the worst is behind us as far as summer products are concerned. Third quarter should see some growth, but fourth quarter will be a real turnaround.
All right. Hi, Mr. Gupta. First of all, wishing you, the team and the entire family a very, very happy Diwali. And as you said, you're bracing for brighter times ahead. So that's good news. That said, the past quarter, the cables and wires business, if I look at the growth, well, it was a little lower than actually what most were estimating, though the margins were a pleasant surprise. How do you see things pan out from here on? That toss-up between volumes as well as profitability, how do you balance the two? And also in terms of volume growth, why was it a little lower last quarter?
So two aspects to cables and wires. Cables, we have underground cables, which is part of the business, which is industrial in nature, where we have added capacity during the last year, and that capex is continuing even this year. So we're getting an advantage of some enhanced capacity in cables, so which is showing a very decent growth. As far as wires are concerned, if you remember, first quarter was a very high quarter for wires because of high inventory pre-stocking by the dealers. That led to some normalized growth in the second quarter. I think overall, if you see, the first 6 months for domestic wires business has been very good. So I think sometimes quarter on quarter things can vary in terms of growth because of fluctuating raw material prices. But overall, the trends are very positive for cables and wires.
Right, the trends are very positive for cables and wires. Mr. Gupta, how would you view, the margins in both the cables and wires business, and as we move along the electric consumer durables business as well? Because for cables and wires, the street believes that maybe the raw materials are still on the rise from here on. Perhaps the lowest of raw material prices are behind.
Yeah, so I think lower raw material prices is good for us because one, not only from margin point of view but from demand point of view. So it is on the rise, and hence we do believe that the second quarter margins are a little bit of an aberration. We do expect 15 to 16% continued contribution margins in cables and wires business. But because of the enhanced capacity in cables, distribution reach for our domestic wires business, the brand orientedness, the innovation, I think we'll be able to maintain these margins in the coming quarters.
Okay, a quick word on Lloyds then. As you're saying that you expect things to gradually pick up in the second half of the year, put it into context, give us some numbers, sir. How do you see things recover from here on?
I think, as I said, third quarter was suppressed last year. Fourth quarter itself was suppressed because we had a bad March with the independent rain. So I think, if everything goes well, including despite the fact that inventory clearing would need some time, we do expect quite good growth in the Lloyds business.
And across your segments, have you lost market share anywhere? If you could give us a sense, where have you maintained, where have you gained, and where could you do better?
I would say that Havells' continuous focus is always on not only retaining market shares in very strong segment, but also improving market shares. Even in ECD, where we have seen flat growth, we have seen market shares improve. Our PLDC share of business has gone up to almost 40% of sales. Appliances business continues to grow. Water heaters business continues to grow. The only effect, I would say, has been because of lower summer, which I believe is industry-wide. And hence, I don't think we have lost market shares in any business.
All right, Mr. Gupta, thanks a lot for joining in and giving us all of those details. Good festive season for you, personally as well as professionally. And we'll track these numbers at the end of Q3 as well. Thanks a lot for joining in. We'll tell you what, slip into a short break, come back. We'll be joined by the management of Hindustan Zinc. Stay with us. Welcome back. You're tuned into Chartbusters here on CNBC TV18. Well, let's shift focus to another earnings conversation. We're now joined by Mr. Arun Mishra from the Sensex to break down the company's past quarter's numbers. Well, Mr. Mishra, thanks a lot for joining in and good to see you in festive spirit. Well, let's focus on silver prices. They have outdone what gold prices have done, zoomed past that $41, $42 announced that we were talking about earlier. Where's it headed according to you? And how do the demand-supply dynamics shape up?
Is still there is a demand supply gap, and that is reflecting in the prices. And I guess there are three factors which are pushing this way forward. One is, of course, more and more application of renewable power. CBAM is coming in 2026. There is a push for most of the exporters to Europe to source renewable power, and that is reflecting in more and more production of solar cells and other electronics, which is having the more silver consumption. At the same time, I guess people are also changing their instruments of investment, and to keep their investment safe, more and more precious metals they are buying, which is reflecting in the gold prices as well as silver prices as tag along. And I guess the push will continue. So I will correct my forecast. What I had predicted by January 40 to 46, I am correcting it to 50 to 55. I think this push will continue till Q1 of next year.
Okay, half a century on silver. Good news. But when expectations are so high, why did you hedge silver at around $37 an ounce? Hedging strategy, sir, seems to have boomerang this time around.
The hedging is always, it will give you pluses and minuses, but you have to see it hedging as over a longer term. So hedging is now not to be seen in every transaction. As a transaction, sometimes you may be into loss and you may be into gain. We could predict a price of $37 a ton because my guess, as I had told you, was $42, $44 or $46 in January. So, but it crossed much before that. But fine, so be it. We will also look at future options as it moves.
All right, fair point there. So be it. At times you lose, at times you win. That's the benefit of hedging and the risk of it. But when does this hedged capacity get fully exhausted?
I think open quantity is 131 tons this year. I think by next year it should get consumed.
All right, by next year it should get exhausted. What about zinc? How is the demand given uncertainty globally and the impact on zinc prices then?
Zinc prices are up, and I'm sure it will remain at $3,000 to $3,100. I had predicted by December $3,000. It should go up to $3,000, $3,100. Not beyond that. And this will also continue because whenever there is a push on precious metals, also the people start investing on some of the base metals for people to hold on to. And as of now, looks like this pressure will continue. And yes, we are seeing good demand, not only in India, also abroad. And Chinese economy is picking up. Their smelters have started producing more. And yes, this will continue.
All right. What about silver production? The guidance out there continues to lag behind schedule. Are you optimistic that it ramps up?
No. So we have taken, if you look at the silver guidance of 680 tons, and in the first half, we have done only 293 tons. That means we'll be producing more than 380 tons in H2. So that is after a lot of effort in prioritizing mining areas where there is more silver. At 380 tons, if we manage to produce in H2, it translates to 760 tons per annum kind of a capacity, which we have never done earlier. So yes, we are putting all bets in one place to produce more silver. That will do. And as far as production is concerned, in H1, we slipped a bit on zinc production, primarily because of one of our new roasters, R6, which was to be commissioned earlier by February or March, took time. And because of that, other shutdowns came in, and then we had we are running sort of calcine, and so that has impacted. Nevertheless, those shutdowns are behind us. We will produce at the peak capacity in H2 and come to a number of 1,075 KT of metal production, which again itself is more than about 500 KT production in H2 itself. So that gives us a more than 1 million ton capacity again.
Mr. Mishra, you have been talking about scaling up towards the 2 million tons odd mark. What's the progress on that? Till now, I think you've announced around 1.45.
I think by next month, we will be able to announce because our consultation with the designers is complete. We exactly know what design, what to do. Only we are waiting for various commercial offers to kick in. Once we get the commercial offers are frozen, by next month, we should be able to announce further 650 KTPA smelter. 650 KTPA smelter will consist of 450 KTPA zinc smelter and 200,000 tons per annum of lead smelter. And also expansion of mines. So those will also have their own expenditure. Putting up new concentrator plants, that will have its own expenditure. So all that as one go, we will announce by next month.
Well, the cost of production actually has plateaued out. That's the sense that we try to get. Do you think there's more to go though on the downside, because it's come down substantially?
No, it will continue because we are just at around 19% renewable power, and by the year end we should be at 25% renewable power, and that should see us even going down the path from $994 a ton to towards the direction of $950 a ton. So this push for lower and lower prices will continue, and since in H2 we will produce more, so there will be more spread of fixed costs. So we will see the costs coming down while we produce more in H2. And that should push up the EBITDA level even further.
Mr. Mishra, silver prices have run away. You all have been talking about this unlocking of value. Don't you think it's an opportune time now to go ahead and unlock value, separate businesses in Hindustan Zinc?
Absolutely, absolutely. I have been quite vocal on this, that Hindustan Zinc must be demerged into zinc-led company and silver company separately. We are again taking it up with all the board members. And had we done this a year back, by now we would have reaped the benefits of very high market cap of both these companies together.
Take that point entirely, but you had hedged it at a price much lower than the current price. So, you know, we would have had an impact of that on the market cap as well. But be that as it may, we take your point and wish you and your family a very happy festive season as well. But it's all about managements, right? We have JSW Energy as well. Sharad Mahindra, who's the Joint Managing Director and CEO of JSW Energy, joins us to discuss their quarter. Thanks a lot, Mr. Mahindra, for joining in. Festive greetings to you as well. The demand in the second quarter, it looks like, you know, there was still some untied capacity. How did merchant prices pan out, and what's your outlook for the remainder of this year?
The demand, definitely, we have seen overall basis. Quarter one, if we start with, there was a negative demand growth of almost 1.6, 1.7%. But we have seen an uptick in quarter two. When there is a quarter on quarter, in quarter two, there is a demand growth of almost 3.3%. With, of course, volume slightly reduced. On a H1 basis, there is a positive growth of 0.8% in terms of demand. We have to understand some of the factors which have resulted in this. This time it has been an extended monsoon, which has been close to five months. It started sometime towards the end of May and continued till end of September or beginning of October also. So it has been almost an extended monsoon across the country. So these are the factors which have been, but quarter two has clearly demonstrated that the fundamentals remain strong, and going forward in H2 we see further uptake in terms of the demand growth. The tariffs, what has been witnessed during this quarter, has been 3 rupees 93 paisa average, which is definitely lower, and which is purely a demand supply situation.
Well, operating profit growth actually, sir, was subdued despite higher organic growth. Explain that to us.
If you see, first we have to see the EBITDA growth, what we have seen. And EBITDA growth clearly reflects in terms of the impact of greenfield new capacity additions during this half of the year and this quarter. And also the increase in thermal generation, which has been a mix of, one is the KSK acquisition, and also the Ind Bharat Unit 2, which was available for full year, for full entire half year of this year. In terms of the net profit, we have to understand that lot of capitalization, one, that we have acquired KSK Mahanadi, for which we have made the entire payment. And also we have capitalized on the capacities which have got commissioned, which has resulted, if you see the total gross block, in terms of the total assets which we were having, if I go a year back, which was maybe in the range of almost maybe 60 odd thousand crores, we have added 49,000 crores of assets During this last 1 year, if we compare with September 24, taking the total asset value at in excess of 113,000 crores. So all this entire 49,000 crores, which has the incremental asset, is a mix of the acquisitions and mix of capacity utilization, which has resulted in higher interest. And we have to remember that this is during the year phenomena, and these investments have not given us yet the full year annualized basis when we see the returns, which will come and stabilize in terms of going forward once this asset completes. We have paid full, but we have earned partial period only from these assets. So this is the result, which is temporary, but all the more important is with that, because of that reason, the depreciation, the interest rate, interest above value has gone, resulting in a slight negative growth in net profit. But if you see the cash profit has seen a significant growth, which is more important for us in our business, which is again supporting us in our future growths. So all these things put together, the cash profit is more important, which has shown a growth of more than 27%.
Throw some color on the new assets, the acquisitions as well, particularly KSK Mahanadi as well as in Bharat Unit 2. How are they panning out?
See, first and foremost, to start with KSK, it has been a wonderful acquisition. Whatever assumptions we had made before acquisition and paying the value for the asset, the first 6 months we have been able to complete, and asset is performing excellent with availability. Significant improvement if we compare with last year H1 performance. And though we don't feel that is the real benchmark to compare with, it is our own internal plans what we had made, we compare with that, which are significantly higher than the performance asset has given last year when it was under the CIRP process. Our plant availability has been in excess of 97.5%. The PLF actual has been in excess of 76-77%, almost 10% or more higher than what it performed last year. Lot of operational efficiencies we have brought in terms of negotiating the lot of O&M contracts and setting up the better practices, the best practices in our plants, in this plant, which has resulted in a significant reduction in operations and maintenance cost also. All these factors have definitely played out extremely well. We are confident about this asset going forward also. In terms of Bharat, the second unit, yes, which we commissioned in the month of March of last fiscal, has performed extremely well. This is a open capacity in the current year. Full capacity is open in the merchant. Despite the lower tariff discovery in merchant, despite lower demand, because of the low fuel cost being close to the mine pit and with significantly lower fuel cost, we have been able to run this plant. Of course, the generation which has been witnessed in Q2 may be lower or the profitability may be lower. It is only because of the planned annual capital shutdown of the units, because we have commissioned just in last 6 months to 1 year, and the units have to be shutdown is to be taken to fine tune the units, keeping in mind the scenario of extended monsoon, lowered demand and tariffs. We have taken the shutdowns of both the units during this quarter, which was planned was that 1 unit in H1 and 1 unit in December, that is in H2, to take advantage of going forward in the balance 6 months period when the demand is definitely expected to be better than what we have seen in H1. So this plant also is going well in terms of what we have expected.
What about the O2 power platform, sir? How's the performance for that scaling up? And if you can quantify a few targets for us, please.
See, O2 Power, when we acquired this portfolio in the month of April, with an operating capacity of 1.34 gigawatt, out of which 270 megawatt was wind and the rest was solar. We have been able to take this platform September end, Q2 end, at an operating capacity in excess of 1.8 gigawatt. These are the greenfield commissioning which we have done post-acquisition. This is one platform. Of course, we have to remember that this is a solar-dominated portfolio, whatever is operating. And we have seen the extended monsoons when the radiation levels have been comparatively low at country level. The solar PLFs have been same or slightly lower than what it was seen last year. And this is a normal phenomenon normally in the case of solar when H2 is better than H1. But this time, because of the extended monsoon, it was slightly even lower than what was expected. So we expect going forward that the performance of O2 platform will be better than what it has been seen in H1. And we are sure that the capacity by year end, we will be reaching somewhere in the range of 2.2 to 3.3 gigawatt of solar of O2 portfolio. So it means almost close to a gigawatt of fresh capacity will be adding post acquisition in the current year only.
Take that point entirely. Thank you so much for joining in and giving us an outlook. We wish you once again and your team a very happy festive season. With that, we're out of this time on this edition of Chartbusters. Thank you so much for watching. From Nigel, me, the entire team, once again, wish you a very happy Diwali. Stay tuned. The team of Trading Hour comes up next.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today, Reema Tendulkar and Hormuz Patakia. Wishing all our viewers a very happy Diwali and festive season as well. And also wishing Hormuz a very, very happy birthday. So double party for all of us at the CNBC-TV18 studios.
Thank you so much. And yes, the party is due. And hopefully the markets are cheering that as well. So yeah, all good. No reasons to complain.
Yes. Happy birthday to you, G.
Thank you.
Wow.
Thank you.
Back at Hindi again. That's another thing to celebrate.
That's a bigger celebration.
Well, it's looking good, right, for the markets?
Oh, yes, of course. We crossed that 25,900 mark today. We've come up from those levels, but as you said, there's nothing to complain as such. We have the banking index, which continues to be in focus. The mid-cap index doing well as well. So the PSU banking index up 1.7%. We have Nifty Infra Index, which is up 1%. Private banking index, another 1% there. So all in all, it has been a good start for the week and the festive week as well. Banking index, that continues to be on our radar. It was such a busy week with banking earnings this time.
Oh, indeed. And the Nifty banking index is now up 500 points. But the other big contributor on the way up is Reliance Industries. Yeah. And that is surging close to about 3% on the back of the EBITDA beat, where Reliance Retail did exceedingly well. So those are the two big drivers for the markets right now. But let's get to individual stocks. Hormis, our birthday boy, has moved over to the big wall and he's putting the spotlight on the top movers.
Thank you very much for all of those wishes. And of course, the banking sector today is been in the spotlight. It was in the spotlight all through Saturday, and it's showing up in the stock price action as well. You know, take a look at the volumes at which these banking names are trading, particularly the smaller ones. DCB Bank has had 2 crore shares that have already been traded in the first 2 hours. The 20-day average is just 2 lakh shares. RBL Bank more so, of course, for the deal than the results. But still, we have had close to 5.5 crore shares that have been traded. The 20-day average is 50 lakh shares. Federal Bank is 10x of the 20-day average. AU Small Finance Bank is a record high, another 10x of its 20-day average in terms of today's volume action as well. So banking sector names doing fairly well for themselves in today's session. What's not doing well, though, are all of these names, and these are the reactions, the negative reactions. Tejas Networks is down around 8%. UTI AMC has seen a double-digit fall, as has Avantel. Now you look at the volumes here as well. That Tejas Networks is at 10x of the 20-day average. UTI AMC close to 6 lakh shares traded. The 20-day average is only 23,000 shares, and Avantel too is trading with significantly high volumes. What's also doing well, though, are the tire names after the CEAT results, and CEAT itself is trading with 7 lakh shares traded, the 20-day average being 30,000 shares. And in light of CEAT's results, both JK Tires and Apollo Tires too are seeing healthy gains and with very healthy volumes. Back to you guys.
Okay, all right. Thank you so much, Hormis, for joining in. But let's move on and talk about some earnings now. Tata Technologies posted a mixed set of Q2 earnings, with its revenue growing strong but margin declining due to a one-off cyber incident-related consulting fees. Warren Kevin Harris, who's the MD and CEO at Tata Technologies, is joining us now. Warren, thank you so much for joining in. You know, you had told us growth would pick up sequentially from Q2 onwards. In Q2, constant currency growth of 4.5%. Would you say this performance meets or exceeds the expectations that you had set then?
It's starting to align with the expectations that we had at the start of the year. As you might remember, we were relatively bullish as we came into the fiscal year. President Trump then announced the tariffs. Not only did that affect the US market, but it also had implications in terms of the product plan and the expectations that some of the European OEMs had for the US markets. And so, you know, I think everybody took a pause in the first quarter, and then we started to see clarity come to bear. And against that, decisions have been made that we've been able to intersect with. So we're starting to get back to where we expected to be. And as you confirmed, it was a very solid quarter for us.
Warren, hi. Morning, and thank you very much for joining in. Now, you've called out Q3 as a period of tactical challenges. Can you elaborate what exactly it is that you foresee?
Q3 is always a soft quarter because of the festivals and Christmas. We're rolling out our salary increments from October the 1st for 88% of our employee population. And we're also supporting our customer JLR in the UK as they're grappling with the cybersecurity challenge that has impacted their operations in September. So those are the headwinds, but they really are, as I've commented, they're tactical, and we certainly do not think that they are going to get in the way of the momentum that we're building.
Interesting. You know, Warren, there was a lot of issues with regards to the cybersecurity incident at JLR. And has there been any impact as such on your company, and will there be any spillover if so?
Well, it had an impact on their entire operations. And so from the perspective of our activities, it was disruptive, but it did not have any financial impact in the second quarter. And right now we're working with the JLR teams to get some visibility in terms of what the disruptions will mean in Q3. And as of right now, we're still working through that.
But what led to the margin decline that we saw in quarter 2 versus quarter 1 this time?
Yeah, we had some one-off expenses that we incurred as a result of the cyber attack that we were exposed to at the beginning of the calendar year. There were some consulting expenses that we incurred. If you adjust for those one-off expenses, our actual underlying operating margins were 16.4%, which was an improvement upon the first quarter. So not only did we see some sequential improvement in top line, we were also able to translate that into margin improvement.
Okay. Other than the seasonality and the furloughs, are there any other headwinds that you see to the top line in Q3? And what about margins? You spoke about what led to the Q2 margin drop. Will margins further decline in Q3?
We are very, very confident in the context of H2 and the run rate that we expect to take into FY27. But we are still grappling with the issues associated with the disruption at JLR, and so we're not in a position at this point in time to make any commitments with regard to what that particular challenge will mean in the short term and specifically as it relates to Q3.
So Warren, basically you're saying that you have no clarity on how long this disruption associated with JLR take to resolve itself. Is that what you're trying to say?
We are confident because we're in the midst of bringing up their systems as we speak, and so we are very confident the JLR operations will be back to normal fairly soon. But how they then look to recover from the disruption in September is still what we are working with JLR on. And so once we have clarification on that, we'll be able to confirm exactly what that means.
In that case, what happens to your medium-term margins target of say 18 to 19 and north of around 20%? Does the margin anticipation get pushed out in the future in that case?
I think we are still expecting and very much planning on getting back to 18% and pursuing the North Star of 20% margins, which has always been our aspiration. And certainly our goal right now is to ensure that our run rate as we end the fiscal year is at that level. Now, whether we achieve that in Q3 or whether we achieve that in Q4 will relate to some of the issues that we referenced before.
But just getting back to that point that you were saying, Q3 tactical challenges, but a solid rebound in Q4. Can you again give some more color? And what is the broader industry looking like? I mean, the global ER&D spending across OEMs?
Absolutely. And, outside of again, the issues we talked about, momentum is continuing to build. And that's what really has excited us about what we've seen in Q2. Our customers are making decisions. The demand environment is much improved, and much of the projects and the product investments that our customers were expected to make at the beginning of the fiscal year, we're now seeing that coming through, and we expect to build upon that in Q3 and in Q4.
But Warren, what about client spending? Are you seeing an improvement on that front, particularly in Europe? And what's the outlook for North America, given that it has remained soft in the last few quarters?
Well, we've seen growth across our three verticals: automotive, aerospace, and industrial heavy machinery, and we've also seen improvement in North America, Europe, and Asia Pacific. Europe has been strong for us in the second quarter, but so too has North America. And I think the disruptions that we've seen since January that were compounded by the tariff announcements in April. I think the uncertainty is starting to dissipate. Everybody's getting now aligned with the new normal, and as a result of that, they are starting to make the decisions again that we expected earlier in the year.
Has the Aztec acquisition closed this time?
The Aztec acquisition is not yet closed. We've still got regulatory approval in Germany and Morocco to confirm. But we anticipate that in November we'll get that acquisition closed, and so Aztec will contribute to the growth story at Tata Technologies from about the December timeframe.
Warren, great chatting with you as always. Wish you all the very best. That is Tata Tech for you. It's an okay quarter. The stock is down close to about 0.6%. They see challenges in Q3, but in Q4, things should get back on the growth trajectory. We'll get into a break. On the other side, we'll invite the management of PNB to talk about their Q2 numbers. Stay tuned.
Welcome back. 160 points higher on the index. Leading the charge are the banking names, and almost every single bank barring ICICI that you can think is trading with gains. Punjab National Bank is also one of them at the highest point of the day, currently 3% higher in response to its quarterly results. Meanwhile, ICICI has slumped to the lows of the day. We are now being joined by the management of PNB. Ashok Chandra, the MD and CEO, is now joining us. Mr. Chandra, good morning. Thank you so much for joining in, and wishing you, your team and your family a very, very happy Diwali and a very prosperous new year as well. Start off with your numbers, Mr. Chandra. Your loan growth was a bit lower than what your own guidance was suggesting, and specifically when you see the retail bit, it is impacted as well due to the IBPC. Now, can you tell us exactly what happened during this quarter, and do you see better times ahead in terms of the loan growth in the second half of the financial year?
Thanks for giving this opportunity, and wish you, your entire team and all the viewers of CNBC TV18 a very happy Diwali. If you see the performance overall in the credit growth also, we have shown a growth of more than 10%. There is a double-digit growth is there. And retail segment, see, we were very mindful of the low yielding advances and high yielding advances. And that is the reason you are seeing that there has been some tractions happening in the corporate loan book. But the retail, which we call it as a core retail, that has grown at more than 18%. Agriculture has grown more than 13%. MSME has grown more than 18.6%. Now, if you include all these things with the corporate loan book, because corporate loan book has grown at 7.9%, but the sequential growth in the corporate loan book also, like QOQ, if you see, it is more than 3%. And YOY is also 7.9%, which is higher than the Q1. So if you add all those things, then then the entire credit growth, it comes to 10.1%. But excluding that corporate loan book, my entire book has grown more than 15 to 16%. And in fact, in the corporate loan book also, last time also, I had shared some figure that we had 1.36 trillion sanctioned book. It is not the pipeline. This is already sanctioned book. Now that figure has gone up now. It is 1.78 trillion now. And this is already sanctioned book for which we are expecting that the corporates will come forward and they will avail that facility. And disbursements should start Q3, Q4 onwards now. So I think we are well poised for a good growth in the credit segment. And the guidance which we have given at the beginning of this financial year, that is 11 to 12% credit growth will happen at the end of this financial year. I think definitely we are going to reach that goal, and we are going to surpass that figure at the end of the financial year.
Okay, Mr. Chandra, that's about the loan growth. Now, let's come to your net interest margins. Your commentary has indicated that it has bottomed out in terms of the number, but there is an indication that there could be more rate cuts as well. What happens to the net interest margin? What are you targeting? Plus, is there an expectation of that changing once there was one more rate cut that happens?
If you recall our last interaction also after the Q1 result, we had already indicated that the full impact of the 100 basis point repo cut will happen in the Q2. Because 50 basis point rate cut full impact was there in the Q1, and the 50 basis point subsequent which has happened, only 1.5 months was there in the Q2. So full 100 basis point impact has happened in the Q2. And I had already indicated in the last time also that Q1 and Q2, definitely there will be a shrink in the NIM. But if you see the impact which has happened, if you see the YOY also and QOQ also, I think it is a very, very muted, the negativity has happened. Like 2.84% was our domestic NIM in the Q1. And this quarter it is 2.72%. Going forward, because we all know that whenever the repo rate cut happens, we are passing this entire thing immediately on the next working days. And when the 49% of my book is priced on the repo rate and EBLR, I think we have passed all those benefits to the clients now. And the same thing doesn't happen in the deposit side, because there is a lag in passing that the reduced interest rate benefit, interest rate to the customers, and that takes some time. And there were some deposits we had a special scheme of 400 days deposit where we were paying 7.25% and 7.75% at senior citizen. So all those things are getting repriced now. And like last time, I have already indicated, and I am holding to that view, that Q3 and Q4, definitely there will be some improvement. I'm expecting that at least 5 to 7 basis point improvement will happen in the NIM in Q3, and around 10 to 15 basis point improvement will happen in Q4.
Okay, 5 to 7 basis points NIM improvement in Q3 and 10 to 15 going ahead. The other thing is your credit cost. While you have lowered the guidance while moving from FY25 to FY26, and even this quarter you've reported a negative credit cost, will it sustain? And what is the guidance, sir, you can give on your gross NPAs?
Yeah, see, the credit cost in the first quarter itself, it was 0.14%. And the guidance which we are given for the full year is below 0.50%. This quarter, it is almost at the bottom, rather it is negative now, 0.2622%. We are still holding that our credit cost will be really very small number will be there. The guidance 0.50, definitely we will be far below that number. Reason is that we have almost a 97% PCR. Exact number is 96.91%. And this quarter also, if you see, there has been further improvement in the PCR. Despite having negative credit cost, we have improved in the PCR, and absolute number in the net NPA, that has also come down now. So we have made some provision in this particular quarter also. Despite making a provision, since there was a good write back of provision was there, and we have a very good slippages management. I think that is also playing very, very important role. Like in this particular quarter, our slippages was only 1,900 crore compared to last year it was 2,200 crore. So slippages management and the good recovery, I think that is playing important role in the credit cost. As far as the gross NPA is concerned, if you see, the drastic improvement has already happened now, and we are at 3.45%. And the guidance for the full year is below 3%. I think definitely we are going to achieve that guidance. And when the net NPA also, 0.35% we have given the guidance, and we are at 0.38. So we are all well above the guidance which we have given, and definitely there will be significant improvement in the asset quality, and all the parameters related with the NPA management will be there.
Mr. Chandra, one final. There are lots of questions, but I'll sneak in a quick one on PNB Housing as well. The hunt for the new CEO. Where has that process reached? And part two, will it be an internal candidate, or are you zeroing in on an external candidate as well?
See, in my last conversation, I had made it very clear that there will not be any internal candidate from PNB to the PNB Housing. And still, I am holding to my view on that. As far as the process is concerned, I think you have seen that very transparent process was initiated by PNB Housing Finance Limited. We are one of the promoters, but we maintain a very arm's length distance for all the process, which is being conducted by the PNB Housing Finance Limited. I am also expecting that very soon the final outcome will come, and we will have a new MD and CEO in PNB HFL.
How soon is very soon, Mr. Chandra? If you could share a timeline, sir.
See, there are certain processes are there, because they have to finalize the name, then NRC and the board, they have to give the approval, and then finally it goes to RBI. Once the RBI approval comes, I think then only it will be in the public domain, and then only it will be known to everybody.
All right, take that point, Mr. Chandra. Thank you so much for joining in today with your insights and the outlook about bank's performance going forward. With that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side.
Welcome back. One stock which is under severe pressure today is Tejas Networks. This is a company which manufactures telecom equipment. It participates in the entire ecosystem. They get a lot of revenues from the BSNL contract, setting up networking sites for them. Came out with numbers over the weekend, disappointing said. The company reported a loss for the third consecutive quarter, and the loss in Q2 was close to about 300 crore rupees. And the company said that, one, the revenues were lower, although they did, there was a delay in the shipment of orders from BSNL. So they got a purchase order, but the actual, it wasn't implemented. So that resulted in the loss. But secondly, there were also provisions due to manufacturing process losses, some warranty, inventory obsolescence, and that was to the tune of 190 crore rupees. So out of the 300 crore loss, 190 was on account of that. So the street is quite disappointed. And the stock itself is down 7%. And from the start of the year, it's seen a cut of close to about 54-55%, I think. So this has been one bit of a big miss.
It's one of the worst performing stocks, right, on the small cap index has been Tejas Networks, 8% lower. By the way, you can't take your eyes off the smaller banks, and two of them stand out. We just spoke of DCB Bank, 15% higher on that stock. But South Indian Bank, results came out last week. The stock is up 17%. It was not one of the blowout quarters that we spoke to the management as well on Friday. That stock is up 17% now. But the Nifty still holding on to levels of 25,850. What is the FNO data indicating? Mangalam joins in now from the FNO desk. Mangalam.
Well, the Diwali dhamaka continues for the frontline index. In fact, if you look at it, the Nifty led higher by the Nifty Bank. All the other indices also contributing to it. The mid-cap index not gaining as much as the frontline index, but not underperforming as much as we saw on Friday as well. And a large part of that is on account of FII short covering. So if you look at the FII long exposure over the last 4 trading sessions, that's increased from 7% all the way up to 17%, telling you some of the shorts have been caught on the wrong side, and they've covered nearly 50,000 contracts. So that's boding well for the frontline index. What's doing even better today is that we have contribution from the top heavyweights. We have Reliance, which is doing extremely well. The Nifty Bank is performing well, as the Nifty IT index. So all of them putting their foot forward and supporting the frontline index, though the advanced decline ratio could have been a slightly better one as compared to the others. So that's something we will monitor as we move towards today's trading session. The important part is today is also the weekly options expiry on account of tomorrow being a Muhurat day trading. So the 25,800 put and the 25,900 put writers fairly active, telling you between 25,750 to around 25,850 there is support for the frontline index where we are at right now. However, as we move higher, closer to 25,900 and perhaps 26,000 as well, which is where the psychological resistance comes in. That's a mark that we need to contend with, at least for today's trading session. So between 25,950 to 26,000, there could be some sort of supply that may emanate. But a lot of these smaller banks you guys spoke about, AU Small Finance Bank, Indian Bank, seeing a lot of long positions being added. Axis Bank also fairly well bid in today's trading session. But just watch out for RBL Bank because the shots have been squeezed out there. The stock entering into the deal news was in the FNO ban. It may exit FNO ban today, and were that to happen, we'll see an impact on that in tomorrow and thereafter the other trading sessions as well. So far, very good going for the markets. 25,950 to 26,000 may see some supply.
All right, take that point. Thank you so much, Mangalam, for joining us with that FNO setup. Let's take a short break now. When we come back, we'll put focus on Reliance Industries earnings and the banking sector as well, both of them buzzing in trade. Welcome back. You're still tuned into Trading Hour. One of the big movers in the market, which is supporting Nifty's gains, is Reliance Industries. Reported numbers on Friday post-market hours, and it was a strong set led by the beat that we saw in the retail business, oil to chemicals business, and also their digital services business. If you look at the consolidated numbers, the EBITDA was at a 6-quarter high, came in at 45,885 crore rupees, which is higher both on a quarter-on-quarter and on a YOY basis. Their net profit at 18,165 crore rupees is higher on a YOY basis, lower quarter-on-quarter, but do remember there was an element of stake sale in Asian Paints that led to higher other income in the quarter gone by. But Reliance Retail, that was the big driver. The growth came in at 18.6% versus estimates of 13 to 15%. Jio EBITDA growth came in at 17.5%. That was led by higher revenues and also 240 basis points YOY margin expansion to 56.1%. Brokerages, they are quite sanguine on the stock now. Nomura says they have a buy with a target price of 1,700 rupees a share. They've raised their FY26 and FY27 EBITDA estimates by 4% and 12%. Morgan Stanley says that they have an overweight rating. Reliance Industries earnings now should get the investor confidence back. There's a re-rating ahead as the consumer retail is turning around and beating estimates as well. JP Morgan has an overweight with a target price of 16.95 on the stock. They say Q2 was operationally better and this growth should sustain in the long term, and that's why they are also very positive on this name.
Indeed. Fourth best day of 2025 is what Reliance is having currently. Almost 3.25% higher on the stock, single-handedly taking the Nifty higher, even as the other two major constituents, HDFC Bank and ICICI Bank, have cooled off from their respective highs. In fact, ICICI Bank is now at the lowest point of the day. And staying with banks, this whole bunch of earnings that came in after market hours on Friday and over the weekend have proven that why the Nifty Bank was the first one to reach fresh all-time highs. Lata is now joining in with her editor's take on how the narrative for the entire banking sector has now changed.
Well, to start with the micros, the margins reported by banks has completely beaten analysts' expectations. ICICI actually reported, let me start with the biggest. ICICI reported 4 basis points fall in margins, but actually that was because the previous quarter they had an income tax gain. The base was higher. If you adjust for the base, actually ICICI has reported a rise in margins by 3 basis points if you compare like to like. And then Federal, AU Small Finance, DCB, IOB, IDBI, a bunch of them have reported higher margins. Now that's not easy when repo rate gets cut by a full 100 basis points. That shows excellent management of deposits and of assets. So overall, they've repriced very sensibly, the banks, and very nimbly. HDFC Bank, the big one, that was the one that was keeping the bank Nifty under the weather. That has kept its word on loan growth. For 2 years, they were in mid-single-digit loan growth. They promised that in FY26 we will grow along with the industry. FY27 we will grow faster than the industry. They have kept their word as far as the first promise comes. And it's not easy, when you're a 27 lakh crore bank, to control loans when you want, to let it grow when you want, to allow deposits to, grow exponentially when you want. That's huge. They have eaten up a 7 lakh crore asset book of HDFC, and in just 2 years they are back to industry standards. So the point is, one shouldn't be surprised that the Bank Nifty is the first one to go to all-time highs and not the Nifty. And that is for a bunch of reasons. One, this year, the Nifty EPS may be 12-13%. But bank EPS, if you take the big banks' EPS, it's likely to be an 18%, even a 20% EPS growth. Secondly, NIMs. NIMs have improved much faster than the industry expected. And now, even with one more rate cut, if they can manage 4 rate cuts, what is one more? They will be able to grow their margins. Credit growth, which was really under the weather in the previous 4 quarters, is likely to take off. The GST boom is only going to help this credit growth. CRR advantages are yet to flow because it was in the latter part of September that the first CRR cut comes in. So that advantage will also come. FPIs are seriously underweight, even in the MSCI India index, EM index. So once they come in, the banks are the big weight in that index. So you are going to see a serious flow into banking stocks. The important point to note is the narrative change. 1 year ago, everyone was saying, they're losing their savings to mutual funds. Now banks are, the best period of banks is over. Look at the way the narrative has changed. They're better on margins, better on loan growth. If volume and margins are both better, you are going to see, a good period of earnings growth and ROE growth. And finally, it is this purchase of stake by NBD in RBL and SMBC in Yes Bank. It is telling us that a huge door is opening of foreign capital coming in. Never mind if the European banks are too weak after the Credit Suisse fall and the American banks like Citi and all have been selling off their retail assets. There is a whole new world opening up in terms of Japan and Middle East, which is rushing in, and private equity capital. Federal Bank is going to announce something very soon. So private equity also rushing in. My sense is that Bank Nifty is going to be able to pull the Nifty to new highs and lend its weight in a very big way in the days to come.
Well explained. Thank you, Lata, for providing that editorial perspective. We will slip into a break on that note. On the other side, more in the market. Stay tuned. Welcome back. Let's get to the big story of the day, and it's none other than RBL Bank after Emirates NBD's deal with RBL Bank. First, Gaurav is here to take us through the details.
Well, yes, when we look at the RBL Bank, we have already seen the stock has ran up, and let me give you why, the reason why. When we look at result, it was not that great. In fact, profit declined almost by 20%, but there was another lever which is actually pulling the stock, which is Emirates NBD is going to now invest around 26,853 crores in the bank. This will be invested to get 60% stake in the bank. Remember, this is the largest FDI investment in the Indian financial segment, and also it is also the first acquisition of the majority interest in the profitable Indian bank by a foreign bank. After this deal, definitely it will trigger an open offer, and Emirates NBD will make a mandatory open offer to acquire another 26% at a price of around 280 rupees per share. When we look at the overall transaction, the board of director of Emirates NBD and RBL Bank, they have approved for the amalgamation of the branches of both the banks, and at the same time, after completion of this 60% stake acquisition, Emirates NBD will be designated as the promoter of the bank, and at the same time, they will also have rights to nominate director of the board, subject to regulatory approvals, of course. The benefits, if we have to highlight a few, first is that this infusion will increase the net worth almost by 3 times. Currently, it stands at around 15,000 odd crores. It will increase to more than 42,000 crores. Apart from that, this will also mark the beginning of the bank's next growth chapter. It will be stronger, more diversified and future ready as per management. Now, the next date that you should be watching out for is the 12th of November, because that is the date when EGM will happen, where bank will seek shareholders' approval. And from here on, management is also very optimistic about it. In fact, they indicated that Emirates NBD currently runs at around 19 to 20% of the ROE. So they are also hopeful to reach that level. Remember, currently the bank has ROE of around 5 to 6%. We also got a chance to catch up with the management. So let's also hear to what they had to say about the deal from here.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. Yes. When the book value moves up, this is something which is going to add up to your market value, market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers, and it is hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today my capital adequacy is, CRAR is around 15%. 15. For the discussion purpose of understanding, but let us hold it there, right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done, and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus, and naturally this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things, and there will be positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA, we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest-free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated PAT we are looking at, then it will be in a position to come back to its double-digit maybe in another 2 to 3 years' time.
RBL Bank 8% higher on the stock after that mega deal announcement, or from one banking stock to another, possibly the stock of the morning, if you could call it that. DCB Bank 15% higher now after its results. The second quarter, good one. Credit costs were down, the margins expanded. Mr. Praveen Kutty, the managing director and the CEO of DCB Bank, is now joining in. Mr. Kutty, good morning. Thank you so much for joining in, and wishing you, your team, your family a very happy Diwali. First up, your credit costs have seen a significant improvement.
Thank you for having me here.
Your credit costs, they have seen a very significant improvement, right, from the previous base quarter. Do you see that trend improving? Was there a one-off that led to this improvement in credit costs, or do you see this trend being normalized in the second half as well? Where do you see them by the end of the year?
So what we are seeing now is a series of quarters where our growth has been consistent. And last quarter, our credit cost was 0.59%. And I had said that at that point in itself, that's a one-off. We are being prudent, and we are taking up increased provision for the unsecured portion in our books, primarily comprising of MFIs. Now that's done, we are back to normal. And I remember telling you last time itself that for the full year, we would be less than 0.45. And if you were to look at the last half year, the current 31 bips credit cost and the previous quarter 59 59 bips credit cost. We are still at the 45 bips mark. And my guess is that we will end the year in the early 40s, if not 40.
Okay, that's about the credit cost. There's been an improvement in net interest margin as well to the tune of 3 basis points. How will NIM shape up from here on? It'll reach that 3.5% mark by FY26?
The way I see this is that across the bank over the last 5-6 quarters, we have gone ahead and tightened our belt. And that's true in cost of deposit, that is true in cost of borrowing, that is true in cost, OPEX by itself, and we'll talk about that at some point in time. I really felt that we were leaving too much on the table on multiple parameters, but we've significantly tightened stuff. And the repo rate cut, a 100 basis point repo rate cut, has been a blessing in disguise because it helped us cut the flab, make us leaner, look at every opportunity of cutting flab. And I think we're seeing the beginnings of that. The bank has grown 19% on deposit, 18.79% on deposit YOY, with a much tighter cost of deposit coming through. And that is a change not only for the quarter, but I wouldn't say it's cultural yet, but if you see 2 or 3 more quarters of a similar kind of growth coming in with similar kind of tight cost of funds coming through, then possibly we have a good thing going in the future. But I can confidently say that the NIMs have, the bottoming out of the NIM has happened. So from here on, unless there's another rate cut, we would tend to see a NIM expansion happening.
And unless there is a rate cut, what could be the extent of NIM expansion over the next 2 quarters? You're at 3.26, I think, now.
So we're at 3.23 right now, which is 3 basis points higher than the last quarter. I'll tell you how it works. Our term deposit usually is of a 15-month duration. So with every passing month, the deposits that we have booked 14, 15, 13 months back is coming up for renewal, and you're getting the benefit of a significant amount of benefit because the new term deposits are being priced at a much lower rate than the old one. So even if you were to our renewal ratios continue to be as it is, and let's assume there's no improvement, we would see a significant decrease in our cost of deposit by virtually doing nothing, just by renewing our existing deposits.
Now, Mr. Kutty, your cost to income ratio, it's inched up slightly during this quarter. If you could shed some more light on that. And is it only because of the lower base? Back on the back of some muted other income, do you believe that this will normalize in the second half?
I look more at cost to average assets than I look at cost to income. But since you asked about cost to income, it's pertinent to point out that between Q1 of this year and Q1 of last year, we shaved off 700 bips in last Q1. And in this Q1, where there's been an uptick and we are at 61% plus, we have shaved off 300 basis points. So if you were to compare it where we were 12 months back and now, both across Q1 and Q2, there has been a significant cutting down in cost to income ratio. Now let's look at cost to average assets for a change. It was 2.75 5 quarters back, went down to 2.65, 2.54, 2.52, and now we're at 2.43. And this is like consecutive. Every consecutive quarter, we've been lesser than the previous quarter. So we shaved off 32 basis points on cost to average assets in the last 5 quarters and last 5 successive quarters. So that's a trend. That's not a one-off. And that's why I said there is a bit more of fiscal discipline. There's a bit of tightening of belt across the various units of the bank. Yields have gone up, have been tightened. We have let go of borrowings which are expensive. We let go of investments which are poor returns. And on OPEX, we have seen that we have reduced 1,118 people in this year from last year to now, and we've still grown 19%. And you also see that technology adoption has been significantly higher, which is helping us in our OPEX cost. So these are not one-offs. These are I would tend to think these are cultural shifts. These are tech adoptions, and that would keep the bank in good stead in the coming days. We haven't seen the full impact of all we have done so far. We just scratched the surface, much more.
Got it. Mr. Kutty, last question before we let you go. Quickly, if you can tell us what is the target on loan growth and which segments are driving loan growth for you?
Yeah. So we want to keep it between 18 to 20% growth, which is the way we've been growing for the last 5 quarters. You would see similar kind of growth happening. The sectors, frankly, nothing new. SME is a very important component. Mortgages is important. Within mortgages, LAP will overshadow home loans. You see gold loan, organic gold loan increasing as we go along. The only area where you would perhaps find a reduction in a percentage terms would be co-lending. Q4, you would find that our co-lending ratios will come down. We are at 16% plus currently. By the time the financial year ends, it will be 15% or less. But except for that, I think every other asset category, you would see the normal kind of growth that you've been seeing for the last 4-5 quarters continuing.
Thank you very much for that. That is DCB Bank guiding for an 18 to 20% loan growth. They expect the NIMs to improve from here on in Q3 and Q4 unless there is a rate cut. So the management categorically saying they have bottomed out. And even the credit cost, which in the first half of the year was 45 basis points, towards the end of the year, it could end closer to 40 basis points or between 40 and 45 basis points. I think that explains why the stock is up nearly 15%. Get into a break. On the other side, we'll focus on the crypto market. Manisha Gupta joins in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Shifting focus now to the crypto space, Manisha Gupta joins in as promised. Manisha.
Well, in Crypto Corner today, we talk about the last 1 year that has been in sense of crypto from Diwali to Diwali. So when you look at the price moves, those have been clearly very, very assuring. If you look at Bitcoin, we've seen 64% of gains. Ether is up 52%. Good gains coming in for Cardano and Binance as well, with nearly 84 to 89%. But the outperformance comes in from Ripple with 345% of gains in last 1 year when you look at many of these crypto prices. The last 1 year has been quite productive and newsy and eventful as well when it comes to crypto. To begin with, Bitcoin marked yet another record high in this year at around $1,25,000 therein. If you look at the evolution of Web3, decentralized finance, stable coins. We saw a lot happening in this space as well in various geographies. There also was an approval of spot Bitcoin exchange. You don't have to go for a case-to-case. Now you can just file, especially when it comes to US. And the total product inflows have crossed $50 billion just in this space itself. The institutional framework investment demand has been quite on the stronger side as well. Various corporates, banks are now moving in to include crypto within their treasuries, also enabling or facilitating crypto movement, price movements as well in sense of a trading desk for their wealthy and institutional investors also. And then the street also has seen strong regulatory developments, government interference as well when it comes to US especially, and then various countries in Asia and Europe. The markets also are looking at network upgrades and activities within as well. The expansion of real-world asset classes, including traditional assets like real estate, securities, commodities, which are now being tokenized on-chain, also saw a huge growth here. It also has been about major advances in layer 2 scaling solutions that we saw come in from Polygon, Ethereum in various ways as well, and Solana also for that matter. There also is growth in BaaS, which is blockchain as a service. Adoption from various tech companies, whether it was Google or Alphabet, we saw various strong numbers come in from there. And then blockchain as a supply chain and healthcare also made inroads in various countries, including India as well for that matter. Finally, it was about improved interoperability, whether it was between the blockchains or within countries and cross borders. It also has to do with the AI integration that we saw strongly take over when it comes to blockchain and cryptos. That has been quite positive as well. I mean, these are just a few that we have seen in sense of development and growth, scalability even in the last 1 year.
Thank you, Manisha, for joining us with that update from the crypto market. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime report comes up next with all the market action.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Heavyweights lift indices as strong earnings and rising foreign interest in India's banking sector ring in some cheer. Energy and IT are the big gainers while consumer durables and metals drag.
The street cheers Reliance Industries' strong operational performance, with most analysts re-rating the stock and upgrading the price targets. The strong showing by retail, Jio and O2C segments boost confidence.
The largest ever foreign direct investment in the Indian banking sector, Emirates NBD is set to buy 60% stake in RBL Bank for 26,850 crore rupees. The Dubai-based Middle Eastern bank's fund infusion is seen as a big growth boost for RBL.
Federal Bank refuses to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meet to consider raising funds on October 24th. The stock jumps. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu as well as Vinny Motiwala. Well, we are glittering like the market is this afternoon. So happy Diwali to all our viewers and their families. For the Nifty, we're up around 133 odd points, no complaining there. And we have the Bank Nifty, which is really moving ahead with a gain of around 0.8%. So absolutely no complaints coming in. It's a happy Diwali at this point in time. We have the Muhurat session as well. So maybe there is more momentum which is coming through. 25,842 is currently where the Nifty is at. Slowly inching towards that 26,000 mark on a more sustainable basis. Hi, guys.
Hi, Ekta. Let's see whether that 26,000 mark comes or not. But just for today, it's also the weekly options expiry because of the Muhurat session tomorrow. And there have been a lot of calls written at around 25,900 and 26,000. So after a big rally that we've seen culminating all the way up to the Diwali session, we may see some supply around 26,000, but be that as it may, no complaints for the market. You know, the top three batters all in fine fettle. You have Reliance, which is picking pace. We have the Nifty Bank, which is at a record high and only building on to gains out there. The broader market banks are doing even better, some clocking in double-digit gains. And the IT index, not particularly underperforming either. We have the IT index up around 0.2%. So all the three batters for the Nifty doing extremely well. The broader market is doing even better. The only thing that could have added to the shine would have been the advanced decline ratio, which is still at an even keel. But, who's to complain? It is a lot better than what we saw earlier.
Absolutely. Hi, guys. Good afternoon and happy Diwali to both of you all as well. Happy Diwali to our viewers. But talking about sectors and the cheer that is there in the market, all the sectors right now are trading in the green. So no complaining there as well. We're managing to hold on to gains. Even the metal sector, slight bit of a flip-flopping between the red and the green. But right now, a bit of a positive bias is what we're keeping an eye out on for the Nifty metal as well. And Mangala mentioned, whole host of these banking names that are buzzing in trade. We had them report their numbers over the weekend as well. EU Small Finance Bank, RBL Bank, Federal Bank, all of them managing to hold on to gains as well, Ekta.
Yes, absolutely. It's a day for the entire banking space as well as the likes of Reliance Industries, which are gaining. But let's talk about one specific stock which is in focus, Biocon Biologics. The subsidiary of Biocon, which is basically contains the biosimilar business, announced the expansion of its strategic collaboration with Civica. Now, the partnership includes a new insulin glargine, which they will be basically distributing. It's going to be access to the affordable high-quality insulins in the US. To discuss this and more, we have Shriram Finance, who's the CEO and MD of Biocon Biologics, who's joining in now. Mr. Tambe, thank you very much for joining in, and a very happy Diwali to you. It's definitely a positive for Biocon Biologics, considering that you all have this new partnership with Civica. In fact, you all have extended your partnership with Civica for insulin glargine in the private market. You haven't disclosed any financials of this particular tie-up, but give us a sense in terms of what this means for Biocon.
Thank you, first up, Ekta, for having me on your show, and happy Diwali to you and to all your viewers. Clearly, it's a very, very significant development, not just for Biocon, but a very significant development in terms of how insulins will be made available to patients in the United States. This is something that's been going on for a while. We've been working with the government of California. And if you track this, the governor in California, Governor Newsom, had actually talked about this in 2020, where he realized that Californians didn't have access to high quality, affordable insulins. And given that Biocon has an approved biosimilar interchangeable insulin, which we've been commercializing in that country for a while, we wanted to collaborate with the government of California, and we're very proud that through the non-profit organization Cipla, we will be able to distribute the CalRx branded insulin, which is the same high-quality insulin that we already sell in the United States. So a very significant development, and just tells you the power of our commercial platform that allows us to bring products through the commercial channels that we're currently doing, through closed-door networks that we've done with the other hospital networks. And now you're seeing us bring product from our manufacturing directly to consumers or to pharmacies. So it just tells you that we are in a position to bring products in a more affordable manner and work on that health equity legacy that our founder, Kiran's really been very committed to.
Right, Mr. Tambe. Also just how much does the company then make from this tie-up? If you could give us any number or indication there as well.
Yeah, I think that's a very significant question. And without diving straight into how much we would make, let me just scope the opportunity for you and where this is. The insulin glargine opportunity, which we've just signed up for with the California government through the Civica partnership, is about $1.3 billion just in the United States. California is a large state. It has about 12 to 15% of demand within that over $1 billion of sales that you see. Part of it would be Medicare, part of it would be outside of it, but a very significant portion. If you see the announcement that Governor Newsom's made, these pens will be made available at $11 a piece. And now, if you look at that as a 15% of over $1 billion, you're talking about anywhere in that $150 to $200 million opportunity just in one of the 50 states. Clearly, a very accretive opportunity to what we already do. We have a significant business, and this is just another way of reaching patients who need insulins.
So how does this change things for your own insulin glargine? I mean, when it comes to the pricing, when it comes to supply, how does this impact that?
It actually impacts it in a very positive way, because just as I was saying before, it just tells you the power of our commercial platform. We are able to commercialize products in whichever way that our consumers are looking for. We can commercialize it directly through consumer, like you're seeing it here in the case of Civica, which will distribute it directly through pharmacies without as a not-for-profit option. We can also do it through the commercial payers that we covered 60 odd million lives and more. So that's the other channel. We also do a direct to closed door network hospital chains who procure on insulins and give it to their patients. So that's a tremendous flexibility, I would say, that we've got that allows us to be a very significant player in the insulin space.
Okay. Well, Mr. Tambe, this agreement or this tie-up with Civica comes at a time where there's a lot of uncertainty in the US when it comes to the policies on pharmaceuticals. But maybe there is a little more clarity, considering that now, the Trump administration has indicated that maybe Section 232 would be something that they are not actively considering at this point in time, and maybe tariffs on generic pharma is off the table. Do you think that Indian generic pharmaceuticals are out of the woods when it comes to this uncertainty?
I think let's talk about the certainty first for a minute, because I think there's a lot of uncertainty we talked about. The one certainty in this whole thing is that the administration in the U.S. has been committed to making America affordable again. Now, whichever and how they do it, people can have views, but their commitment is how can we make healthcare more affordable for Americans? And that's where they've identified generics and biosimilars as the part of the solution. So we are clearly a part of the solution. We are a part of making sure that we can help the healthcare costs in whichever way. What we have done today with the California government is another proof of the pudding there right in front of everyone, where we can deliver products in an affordable manner. I think there is more clarity than before, I would say. The Section 232 investigation closing off is a good sign. I would think that the appreciation that the maintenance of not just the health of the United States, but the health of the planet is on the generics industry. And I think that appreciation is growing, which allows us to then provide products, high quality products, at an affordable price to several million patients.
All right. Is Biocon impacted at all with regards to that 100% imposition of tariffs on branded products unless a company has a manufacturing presence in the US? We do understand that you do have that manufacturing facility in New Jersey, but in any way that Biocon's products or branded portfolio would probably be at risk due to this?
Actually, none at all. We have no risk with that guidance that has come through. And more importantly, like you just cited, we have an investment in Cranberry, New Jersey, which we just inaugurated. But as a group, we also have an investment in Baltimore, where we've got an investment in drug substance biologics, which our group company Syngene has invested, where we acquired a facility recently. And then if you look at the previous announcement, Biocon Biologics has also extended its partnership, where we are manufacturing even our insulins with Silica in the United States. And many of these conversations predate the tariff discussions because they make a lot of business sense and provide a lot of predictability of supply to patients, where we have a large consumer base. So it's been predicated not only on the tariff discussions, which may be at that point in time, but more importantly, a sustainable business case, which is underwritten some of these longer-term decisions that we've made at Biocon.
All right. Well, I know you are on your silent period, so it'll be difficult to sort of discuss numbers. But if I could just extend one more question with regards to what's taking place in the US, because we do have the Biosecure Act, a watered-down version which has been passed by the Senate. In that sense, as an industry veteran and a watcher, how much of an impact do you think the Biosecure Act would have on CDMO companies or on Indian pharmaceuticals, in the context that it's a watered-down version of what it was earlier?
Yeah, I mean, without getting into the specifics of the acts, I think if you look back in time and if you see, since the mid-80s of the Hatch-Waxman Act and then subsequent to that, I think Indian generics companies have been one of the biggest allies that the US has had. A very significant portion of what the US consumes today is an Indian product, and it's a high quality product. So I would look at this whole thing, more from an exclusion standpoint. I would look at more as an inclusion standpoint, where I think India is really a natural ally of the US and continues to be committed to maintaining the health of patients in the US. So I'm actually not specifically concerned about an exclusion of certain countries or certain companies in the Biosecure Act or the watered down version, because there is enough and more that companies can contribute to. India has a large manufacturing base, and it's moved up the value chain on the innovation front. And with companies like Biocon working on cutting edge biologics and science with a commercialization capability in several countries, I think Indian pharma is here to stay as a global presence.
Okay, Mr. Tambe, thank you so much for joining us on the show, talking to us about your business as well as in terms of what these tariff uncertainties and the outlook going forward over there as well. Thank you so much for joining us this afternoon. Let's move on, and a quick note for our viewers as we step into the break that as you can see on the screen, there is going to be a money control stock score that has been coming up just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. It is calculated by analyzing 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and a T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. Now let's sip into a break. After the break, we'll have Nikhil Khandelwal, Managing Director of Systematic Groups, joining us to discuss RBL Bank's as well as Emirates NBD's deal. Stay tuned in for that. Welcome back to Halftime Report on CNBC TV18. Nifty as of now managing to hold on to 140 points of gain, almost 0.5% of uptick for the Nifty 50. But which are the stocks that are buzzing around in trade? We have Vivek to take us through that list. Vivek, good afternoon.
Well, thank you so much for that. Again, a session where we're actually seeing more green rather than red, especially in the broader end of the market, which are stocks doing quite well. You have to start off with Reliance Industries. Very strong set of numbers. On the back of that, stock higher by over 3%. One of the top gainers as far as the Nifty is concerned. One of the primary reasons why markets are significantly higher today. The other set of stocks that are doing very well are the mid-cap private financials. You're seeing multiple deals come through. Number one, of course, look at RBL Bank. 8% higher, even after the rally that we've seen over the last 2 months. Our Federal Bank, again, fundraising plans over there. Market is keenly anticipating that. Innocent Bank and Yes Bank, despite muted results, doing quite well in the session. Along with that, the entire PSU banking basket also doing very well. Look at Indian Bank, that particular stock higher by almost 4%. Union Bank, Central Bank, all of these stocks, all of them higher by over 3% each. We did speak to the management of Biocon some time ago. Positive news flow coming in terms of the launch of insulin Gargin, that stock higher by 2%. And Polycab, Friday, this particular stock took a bit of a knock post the results, but the conference call management went ahead and clarified on multiple one-offs. After that, Polycab is doing quite well in the session today. On the other hand, quite a few laggards as well. UTI AMC, well, a muted set of results. The company has been seeing market share loss. That stock lower by over 5%. Dixon, schooled off from the day's highest point. The management has gone ahead and moderated the volume guidance. That stock lower by 2%. JSW Energy, peak valuations, PAT impacted by multiple one-off, stock correcting from the recent highs. And Divi is under a bit of pressure. Recent comments coming from President Trump on weight loss drugs price that could be put under some amount of control is something that's weighing a little bit on Divi's today.
Right, Vivek, thanks a lot for that. So those are a bunch of stocks which are buzzing around, but none more than the mid-cap banks today. They're doing extremely well, and this as UAE-based Emirates NBD Bank is set to acquire a controlling stake of 60% in RBI through a primary capital infusion of nearly 27,000 crore rupees. Will also be making a mandatory open offer. So to discuss this and more and market at large, we do have with us Nikhil Khandelwal, who's the Managing Director at Systematics Group. Nikhil, thank you so much for joining in. Wish you, your team, your family a very, very happy Diwali and festive greetings as well. Let's start with the banking space. You guys have been bullish on it. From the lows, the Nifty Bank has actually, rallied almost 10,000 points. And it's at a fresh record high, screaming and moving further higher as well, only boosted by this deal that has taken place in RBL Bank. And that's caused a bit of a flutter in all the other mid-cap banks as well, which are buzzing around today. What's your view now after this run-up? Do you think there's space for more? What would your top picks specifically in the banking and financial space be?
Yeah, well, good morning and good afternoon, and thanks for having us on the show. Banking sector, of course, has been, from our desk, has been one of the strongest buy calls over the past couple of months. We have been seeing that the Indian banks per se have been maintaining very strong balance sheet, but also, there's a lot of value which was beginning to come in the banking sector. But what has played out, I think, beyond the fundamentals has been a significant vote of confidence on the banking sector by global investors. Which started with the transaction in Yes Bank. I think SMBC transaction, although it was a secondary transaction, a large global bank taking a stake in a mid-sized Indian bank. I think it spoke a lot about the Indian banking sector, followed by the transaction of IHC in Samman Capital, and now this largest FDI in the banking, in the mid-sized banking, in a mid-sized bank from UAE, second largest bank, wherein the net worth of RBL is just about 15,000 crores, and the bank will be getting close to about 27,000 crores of capital infusion. This changes the entire dynamics of the banking sector, and kind of one gray area within the banking sector, which is a mid-sized bank, gets a significant vote of confidence. A lot of such buzz is happening in Federal Bank as well. So, combination of all these developments combined with the value which sits in the banking sector at large gives a lot of confidence for Indian as well as global investors to put more capital within the banking sector. I think broadly this is the broader way which we have been looking at it, but within the space, we have been quite excited by the potential value as well as the potential growth prospects within the PSU banks. So while private banks has been an interesting play, combined with the potential of earnings rebound and deep value, PSU banks, according to us, are another big pocket of growth and investment, which we have been looking at quite positively. Sure. And all our calls are among the larger banks in PSUs, whether it's the SBIs or the BOBs and the PNBs. And definitely those are significant amount of pockets of capital where there's a lot of value and growth, both quite visible.
Sure. Nikhil, if you could just sort of narrow that down for us, considering that you are liking PSU banks, you like the larger banks at this point in time. So tell us what exactly is your preference list? If you could just list down maybe your top 3 banks within the PSU space, your top 3 banks within the private banking space, and within these two as well, what is your preference?
Right. No, I think what the way we have been looking at the banking space, I think the balance sheet of the banks per se has been, whether it's PSU or private, I'm talking about mostly the larger banks, has been top notch. there is, however, pressure of advances growth, which we are beginning to see in some of the larger private banks, wherein the larger consensus view and our analyst expectation and our house expectation also on the private banking space for advances growth is high single digits. However, on the PSU banking front, we believe that the advances growth will be in low teens. And that kind of advances growth will mean that these banks will register, the PSU banks will register higher earnings momentum going forward. The second thing in our view is that the quality of earnings, the PSU banks actually generate the proportion of their revenue, which comes from fee income, as well as other sources of non-banking income like housing finance, etc., has been quite low. They have been inching up their fee income portfolio as well as their other non-banking income portfolio and book quite aggressively. And those factors will actually ensure that in times when general NIMs are shrinking, the PSU bank should be able to not just maintain and possibly expand their net interest margins going forward. So a combination of these three factors is why PSU banks are actually topping our buy list.
Sure.
In that, as I said, Bank of Baroda stacks up as number one, followed by SBI and then PNB.
Okay, Bank of Baroda, SBI, and then PNB. Nikhil, then, you've spoken about and you started by saying these flows, foreign flows that have come in from the banking side. Do you expect that to still continue going forward as well for more banks? Federal Bank, obviously, the buzz is going around there as well. And what will it do to the books of these banks then going forward?
No, I think the federal banks or the RBLs, etc., have a significant I'll say, significant position in the banking space. They have created strong retail as well as corporate base in India, Yes Bank included. The health of these banks, their capability to provide loans, especially working capital financing, and as I think as we move forward, a lot of private and public capex is also kind of increasing. These banks have a significant role in shaping the larger banking sector. I think the health of these banks and more than the health, I think the perception about the larger banking sector through these mid-sized banks has to remain extremely positive for the larger health of the economy. I think broadly from that perspective, these banks getting some very serious anchor investors and promoters. Secondly, getting this kind of capital will ensure that these banks not just start to engage and come back into the market as far as corporate lending and retail lending is concerned, but also expand other avenues of financing. RBI is opening up the banking sector on multiple fronts, including acquisition financing, etc. And we need strong domestic banking sector to ensure that these new avenues and new growth areas are capitalized by the larger banking sector and the Indian banking sector.
Absolutely. Point is taken, Nikhil, and we wish you a happy Diwali and festive season. Thank you very much for joining in and speaking with CNBC TV18. Well, we need to take a short break with the news that the mid-cap index is up around 0.8%. We have the Bank Nifty also, which is up a cool 454 odd points. Take a short break, but we'll get talking more about the market. Sudeep Shah from SBI Securities will join in with his trading call. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Turning out to be a fantastic day for the banks at this point in time. Just look at the way EU Small Finance Bank is moving. It's up around 9% We have Federal, which is up around 7% at this point in time. In fact, very close to its at a 52-week high, you'd have to say, at 229 odd rupees for that particular stock. IDFC First Bank, PNB, Canara, SBI, all of them showing momentum on the upside. The only one is HDFC Bank and ICICI Bank, both released numbers, both a little bit under pressure at this point. But Manglam is here to tell us what he's tracking on the F&O side. Manglam, go ahead, tell us.
It is weekly options expiry, so what do you call it? Diwali Dhamaka, which is continuously, playing out underway in our frontline indices. The Nifty around the 25,850 mark, doing extremely well. The mid-cap index has picked pace as well after underperforming for the first half of trade. And we have the Nifty Bank, which is doing well as well. What will make bulls happier is that in the earlier part of trade, the India VIX had spiked and now it's cooling off and it's virtually at the lower end of today's trading range so far. And powerful short covering is definitely underway. We'll have some data today to confirm that as well. Why do I say that? Because from October 14th to all of last week, the FII longs actually inched from 7% all the way up to 17%, and shorts were covered by nearly 50,000 contracts, with the Nifty having moved 400-500 points from those levels itself. Who's to say, this won't continue? The top contributors today, all three batters in fine fettle. Reliance up 3.5%, Nifty Bank up 0.8%, Nifty IT Index up nearly 1% as well. So all of them doing too well. The only thing we'll have to watch out for after we moved so much is that the 25,900 call has been fairly well bid in today's trading session, or rather fairly well written in today's trading session as we move towards expiry. So 25,950 to 26,000 may be a bit elusive as we move towards the expiry end of things. But if the market does pick up, then there would be short covering which would power it beyond the 26,000 mark, if at all it does cross that 25,950 to 26,000 mark as well. At the lower level, firm support seen between 25,850 to 25,750. So that's an important mark. A lot of individual stocks in focus from the broader markets. Banks seeing a lot of buying. We have AU Small Finance Bank, Indian Bank, seeing a lot of long positions being added. Though some of the bigger banks, we have Axis Bank as well as ICICI Bank in focus. ICICI Bank is seeing some shorting, and Dixon Tech as well, after their numbers, is seeing some shorting. Currently, that stock lower today. We also have some long positions being unwound in Dalmia Bharat. And finally, the stock of the day has been RBL Bank when it comes to news. But remember, for the last many trading sessions, it's been in F&O ban, including day one of the new series. Now it seems like the bank may come out of F&O ban because of the shorts that have been caught on the wrong side, and the stock, which has rallied almost 9%.
Okay, all right, Manglam. Well, that's on the entire F&O setup from the F&O desk. Sudeep Shah from SBI Securities now joins in to discuss what he's tracking on the markets this afternoon. Sudeep, hi, welcome to the show, and wishing you a very happy Diwali as well. If you could just start by giving us your call on the Bank Nifty, considering the kind of momentum that we've seen today.
Yeah, season's greetings. Happy Diwali to you as well as the entire team at CNBC TV18 and all our lovely viewers. See, Bank Nifty, coming to Bank Nifty, the weekend was a blockbuster in terms of number of results, and except for a couple of them, most of the results were pretty good, or even they've beaten expectations, and the deal of RBL Bank now. So large caps as well as mid cap banking, we have seen it all, and most of them are moving, and they are moving in positive direction. So coming to Bank Nifty levels, 57,700, 57,800 now we feel would be decent support on the downside until this is held. 58,700, 59,200 can be witnessed. It's just that post opening today, HDFC Bank and ICICI Bank, they have seen some kind of pressure from higher levels because they had moved in the last several days. So apart from that, a lot of mid-cap banks, PSU banks, we feel could continue showing their positive momentum in the coming few sessions.
Okay, and Sudeep, which are the top bets that you're looking at this afternoon?
See, couple of them. Now, the one is from the PSU banking space, that is Union Bank of India. Here we have seen a consolidation breakout coming, and we feel that with the kind of weekly charts, the setup that the weekly charts are throwing up, 137 will act as a strong support, and the stock can be bought with that stop loss. And on the upside, the stock has potential to move up to 151, 154 levels in the coming few weeks. The second stock that is there on our radar is is a defense name. BEL 415, 416 is where the stock is currently trading at. This also has given a consolidation breakout last week. We have seen a decent support at 410, 408 levels. Every time the stock is dipping to those levels, we are seeing some good buying from those levels. So we feel that PL can be bought with 408 as a stop loss on the downside and a potential target of 427 and 432 on the upside.
Okay, Sudeep, thank you so much for that. We'll be keeping an eye out on all those stocks and hope you enjoy your holidays as well for Diwali. Festive greetings to you as well as a family and your team. But on that note, we're going to zip into a very short break. On the other side, we'll have Manisha Gupta, who will be in conversation with Manoj Jha of Kamakaya Jewels, and they'll be talking about commodities. Stay tuned in for that.
Welcome back. Joining us on the show now is Manoj Jha from Kamakaya Jewels. Mr. Jha, hi, thank you so much for joining in and very happy festivities to you. What has been your reading of the market, especially with the Dhanteras done now? How are we looking at the volumes really playing out?
Namaskar, Manisha ji. It was really nice, wonderful experience we have at Dhanteras. Previously, we thought that in Dhanteras we will have a dip of 40 to 50% in terms of volume. But surprisingly, in terms of volume, if you see across the country, not more than 15 to 20% dip in volume we got in jewelry sales. And especially when you see in the bullion we have crossed the limit of last year. It's more than 25% more, 125% we have done sales in bullion. So overall, the festive season is very good, very positive movement is there. Diamond sale is diamond. I mean to say diamond is all the studded jewelry is at par. If previously it was someone have sold 100 carats, so this year they have also sold it 100 carats. So the overall jewelry industry got a very good boost on these days because the last few months was not very pretty good for the jewelry sales.
So, Mr. Jha, are you saying that the Diwali as a month as well perhaps could be working with these numbers if there are any indication to go with?
Yes, yes. Even yesterday, the Dhanteras sale was till 2 o'clock in the afternoon. So there was 2 days for Dhanteras. today also you can see across the country good sales are going on. And I'm saying overall, when you will see the sales of this month, definitely there will be a drop down in the volume. That must be around 10 to 12%. And but overall, if you'll see the season, it may come to the par. We are waiting for the gold rate. If it corrects more, then there will be good volume business you can see across the country.
Let me come back to the gold rate then, and those prices clearly have been very, very volatile. If we look at this year, we've not just seen all-time highs, but we've seen very strong percentage gains as well. At these current levels where we seem to be holding 4,200 off those all-time highs, and you do a lot of reading and research in case of gold prices, what is your sense on where could we be if people are buying gold this Dhanteras? Where do you see gold prices by next Diwali?
Next Diwali, little bit difficult to say, but right now I can tell you, gold have reached its inflection point. Even the investor are little bit worried. Previously, the gold have given a big rally in 1979 and 80, and even in 2010 and 11. And after that peak, gold has given a sharp correction. So investors are a little bit nervous there. And because last few days, you can see a lot of volatility in the gold rates. So that seems that gold have now came in a bubble zone, and you can see some sell-off now. Even at the geopolitical end, you can see Trump is mellowing down a lot of fronts. In Russia, Ukraine also, he is trying to push it should be settled down soon. Even in the tariff war, you can see the China and US tariff also, he is giving some cool statements. So even his shutdown, he have to release immediately. Government shutdown has to release immediately because a lot of rallies are happening in the US and people are really in an unrest position. So all these things are maybe happening soon. And if you can see a sell-off, you can see a profit booking in gold.
Okay.
So
Mr. Jha, what are the levels? I mean, that is something that the viewers would love to know about. So where do you see prices then?
Very soon, I am seeing approximate $300 to $400. You can see a profit booking in gold, and at that time, at that level, a fresh investment you can see, because in portfolio, if people having generally a 10 to 12% of gold in their portfolio, but now after the price rise, their portfolio have gone to 18 to 22%. So there also people want to do some profit booking there, and it's in overbought zone. So definitely you can see some sell-off, and $300 to $400 you can see in coming months.
And you were saying that every dip is going to get bought into. So by next Diwali, we perhaps could be looking at higher numbers therein. Mr. Jha, even as gold and silver price is gaining so much, I was speaking to World Gold Council, and they said in last 1 month, they've seen perhaps 60 to 65 more stores that have opened in India. Overall, pan-India, perhaps the number is not so huge, but in a period of 1 month, that tells you the Indian jewelry story, perhaps?
Definitely, Indian jewelry is booming across the country. You can see every year there is an increase in store. You will surprise, 5 to 7% increase in the number of stores every year. So especially in B tier and C tier cities, all the corporates are entering. If you take the name any corporate, they have plans. Everyone have a plan of 2030 till 2030. Maximum corporate want to expand their business, their stores by 50%. If someone is having 100, and by 2030 they want to have 150 stores. So in next 5 years, there 50% of growth of stores you can see. But the main point is that, is there any increase in the volume of sales? Because if you can see the couple of years, the import figures is almost same. Import figures is almost same. So volume of gold is not increasing. And that also you can see the jewelry, the products which were made in, example, 100 grams necklaces were there. So that necklace now is made in 30 grams, 35 grams. Technology have, a lot of technology is there. We have taken a lot of technology from the out of country, Germany, Italy and all. So same type of jewelry coming in lightweight. So I can't see much of in volume gain. But definitely jewelry sales will pick up, and a lot of new stores are coming. And in next 5 years, I can tell you, you can see 50% more jewelry stores in the country.
That's a very valid point that you make, Mr. Jha, that by 2030, the jewelry business will increase a lot. But I also get your point that the imports are same. So it's going to be lower volume, but higher business and more margins, perhaps. And that would work very well for the industry there. Mr. Jha, as always, thank you so much for joining us here at CNBC TV 18. And with that, we go for a short break. When we come back, we'll talk more markets and stock specifics for you.
Welcome back. Well, stable for the market. So let's get talking about one of the big stocks in focus today. That's Federal Bank. That stock is up around 7% at this point in time. So let's get in some views from the management. In fact, Federal Bank refuses to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meet to consider raising funds on the 24th of October, which is on Friday. Listen in to a slice of that conversation with the management.
In our case, we have given a notice of our board meeting on Friday, and we will update you once the board meeting is over.
Can I just, if I can, without of course divulging details and not wanting you to say anything which is against regulations or anything, but is this a minority transaction? The name which is of course being talked about is Blackstone picking up a 10% kind of a stake in the bank. Would I be, without you going into specific, in the ballpark, be correct?
Prashant, as I said, the board will be meeting on Friday to consider this agenda item as we have put up in the exchange. And please let us time till Friday, and after the meeting, whatever is the outcome, we'll give you an update.
But sir, can you, we understand you can't take any specific names, but I believe the bank is already well capitalized. Can you just update us on the latest capital adequacy levels? And also, why are you looking to raise capital? Is this just an enabling resolution? Or are you looking to, maybe expand in certain businesses, wealth, etc.? I mean, why the need to look at capital at all right now?
Like I said, I'll just repeat, just bear with us till Friday. Once the board meeting is over, then we definitely come out and give you an update on the outcome of the meeting.
This is a minority transaction, right? That much you can tell us.
I don't even know what transaction you're referring to. All that I know is the board is meeting on Friday on the agenda, which we have put up a notice on. And we will, as I said, we will definitely come back and give an update post the on the outcome of the board meeting.
All right. So in the past, you have said that wealth management is something that you like to look at. Possibly that you're looking at some inorganic growth in this direction?
On wealth management, Nigel, as you know, we have recruited a head of wealth management who joined us earlier this financial year. And we are building out our platform for launch of the organic offering of wealth to our customers, which is on track. And in Q3, next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track. And, we do, of course, want to grow as part of our strategic objective, which we had outlined in the analyst meet. Wealth is a focus area and the organic rollout is on the cards.
And what about inorganic growth, sir?
Nothing on the table at this stage, Nigel.
So the money that you're raising could probably be used for some other inorganic growth?
I don't want to comment on this aspect. As I said, let's wait till Friday and then we can talk more on...
But it's not just an enabling resolution. The intent is to go ahead and raise money, right?
The board will consider all options and we'll have to respect the wisdom of the board.
As we move towards the close of halftime report, as you can see, the Nifty is at the high point of trade, led higher by Reliance, which continues to power ahead. But the last few minutes definitely belong to Tata Consumer. It will be very interesting to see where this goes, largely because the last couple of quarters, their margins have been under pressure because of higher tea prices. But from the peak, tea prices have come down. Is the street betting in better results and more importantly, better commentary for the second half of this year or not? Is something that we're watching out for. We'll get an inkling into that from HUL's results that happen on Thursday. With that, from our glittering team of halftime report ladies, we wish you a festive season once again and take your leave. On the other side, we have Business Lunch, taking all the market action ahead.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग. In association with Prakash Surya Steel Tubes and Pipes. And Polycab, India's safe, happy connection.
Heavyweights lift the indices as strong earnings and rising foreign interest in India's banking sector rings in some cheer. Pharma and IT are among the big gainers as well. The street cheers Reliance Industries' strong operational performance, with most analysts re-rating the stock and upgrading price targets. The strong showing by retail, Jio and the O2C segment boosts investor confidence. In the largest ever foreign direct investment in the Indian banking sector, Emirates NBD is set to buy a 60% stake in RBL Bank for 26,850 crore rupees. The Dubai-based Middle Eastern bank's fund infusion is seen as a big growth boost for RBL. Federal Bank refuses to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meeting to consider a fundraise on the 24th of October. The stock jumps. Good afternoon, you're with us here on CNBC-TV18. You're watching Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios, this decked up studio. And from all of us here at CNBC-TV18, we wish you a very, very happy Diwali and a very prosperous New Year as well. And a happy Diwali for the street as well. The benchmark indices doing as they left off from last week, moving from strength to strength. The Nifty now again nearing the highest point of the day, back near the mark of 25,900, almost the double hundred on the index yet again. And it is the index heavyweights that are powering the Nifty ahead, but none better than Reliance Industries. 3.5% now, almost 4% higher now on Reliance Industries. The last time the stock saw such a move was back in the month of May. It's the highest point of the day for Reliance Industries, 1473 on the stock. Price targets on from analysts going up to as high as 1890 from Investec, which initiated coverage just on the day of its earnings on Friday, was contributing almost 60 points to the index upside. And very valuable contributions also coming from Bharti Airtel, Axis Bank, Infosys and State Bank of India, all of them contributing to the gains on the Nifty. In fact, State Bank of India at a record high in today's trading session, making a scaling, going past the previous levels of 912, currently trading at 908, but made an intraday high of close to 914. What's not doing well though, the only sore spot in today's otherwise very good day of trade has been ICICI Bank, and that has been the top loser on the Nifty. That is the top point contributor to the index downside as well. At the lowest point of the day now is ICICI Bank, 2.5% lower on that stock as well. But we were speaking of Reliance Industries, the Nifty big boy, seeing very strong gains after its results. Sonal is here with more details on this. Sonal.
Oh yes, it's a strong set coming in from Reliance Industries, a top-down beat which was led by their retail business, their auto chemicals business and digital services business as well. Let's talk about the EBITDA first up, which was at a 6-quarter high this time, came in at 45,885 crore rupees, which is higher on a quarter-on-quarter and on a YOY basis. The profit at 18,165 crore rupees is also better than estimates. It's higher on a YOY basis. Sequentially, it will look lower, but do remember in the quarter gone by, there was an element of stake sale in Asian Paints to the tune of 8,900 crore rupees. So there was higher other income in the quarter gone by as well. Reliance retail revenue grew at 18.6%, which compares with estimates of around 13 to 15%. Jio EBITDA growth came in at 17.5%, led by higher revenues. Also, there was a 240 basis points improvement in EBITDA margins at 56.1%. Brokerages, they are quite sanguine. Nomura has gone ahead. They have increased their EBITDA estimates by 4 and 12% for the next 2 fiscals. They have a buy rating with a target price of 1,700 rupees a share. Morgan Stanley has an overweight rating, target price 17.01. They say Reliance Industries' earnings this time should improve confidence for investors, and consumer retail is turning around and beating estimates as well. JP Morgan has an overweight, the target price of 16.95. Second quarter is operationally better and growth should sustain in the near term according to them.
4% higher on Reliance Industries. Sonal, thank you for summarizing the numbers for us. And after Reliance Industries, the other major pocket today is the banking names. And every single bank that you can think of reported results on Friday and on Saturday. And Gaurav is here with the fine print of all of those results. That also include HDFC Bank and ICICI Bank. After a very busy weekend, Gaurav is here to summarize all of that. Gaurav.
Well, yes, when we look at the bank results, all the banks actually reported in-line set of numbers. In fact, some of them actually outperformed the management street's expectation. First, let's talk about HDFC Bank. When we look at the numbers, profit that increased almost by 11%, which was higher than the street's expectation. And at the same time, when we look at net interest income, that increased by 5%, and PPOP, which is pre-provisional operating profit, that increased almost by 13% on a year-on-year basis. Now, in this quarter, we saw higher trading gains, which actually supported the profit for the bank. But at the same time, net interest margins that declined almost by 8 basis points, in line with the street's expectation. And what remains positive is that the asset quality, there also we saw a decline in credit cost, which was again in line but healthy given a very large size of HDFC Bank. Another positive trigger for HDFC Bank is that management again reiterated the fact that in FY27 they will outpace the loan book growth of the system. Other than that, when we look at ICICI Bank, when we look at the numbers are good. In fact, the profit that increased by 5%, it was actually higher than the street's expectation. But when we look at the stock performance, it is not performing well. And the reason being that when we look at advances growth, now although it was in line, it came in at around 10% on a year-on-year basis. Second factor is that when we look at net interest margins, although they have declined, management during the con call highlighted that the margins are likely to remain range bound from here on. And at the same time, they also said that NIM stability in this quarter was because of the deposit rate cut. Now, what brokerages are assuming is that from here on, it might be the case that net interest margins may remain range bound. At the same time, if you look at the stock, it has outperformed the Nifty over the past few months. So definitely, there were high hopes from the bank's results going ahead. And given that the net interest margins are likely to remain stable versus other banks who are guiding for expansion in net interest margins, we are seeing some kind of fall. When we talk about IndusInd Bank, we saw profit. Actually, bank reported losses somewhere in the tune of 430 crores. And at the same time, management said that the credit cost is not likely to decline significantly for the next at least 2 quarters. But at the same time, in this quarter, they said that there were prudent provisions that they were made. And that is the reason why they are confident about the book going ahead. Lastly, let's also focus on Federal Bank. When we look at the numbers, we saw profit declining almost by 10% on a year-on-year basis, but it was lower than the street's expectation. Other than that, when we look at the net interest margins, we saw a big positive 12 basis point of increase in net interest margins on a sequential basis. It came in as a big positive. And at the same time, 24th October is a date when they will consider, they have a board meeting where they will consider fundraising via equity. Now, that is something which is keeping the stock buzzing. And the reason being that when we look at CET ratio, it is healthy. But at the same time, given there are some speculations around the fundraising, and we have already seen series of big boys buying into banks, there is some speculation in Federal Bank as well. So definitely on the back of that, if you look at stock performance also, it is up more than 7% today.
Indeed, Federal Bank as well. Now, all eyes on Friday for the board meeting for Federal Bank. But since you spoke of fundraising, Gaurav, it was not as if you only had earnings to track. The RBL Bank also reported its results, but more importantly, it was in focus on the back of the Emirates NBD deal. Tell us more on that.
Well, yes, RBL Bank, it was in focus on the back of 2 reasons. First is that earnings. When we look at earnings, they reported mixed set of earnings because profit that declined almost by 20% because of the higher provision. But what is keeping stock afloat today is not earnings, it is the news flow. Emirates NBD is going to buy 60% stake in RBL Bank for a cost of around 26,850 crores. Now, this deal implies that they are buying stake at around 280 rupees per share. And at the same time, this deal also triggers an open offer. They have actually already rolled out an open offer at a price of around 280. Now, remember, this is the largest ever FDI investment in the Indian financial segment, and it is also first acquisition of a majority stake in a profitable Indian financial bank by a foreign bank. Now, why this is important is that when we look at some of the changes, now Board of Director of NBD and RBL, they both have agreed to amalgamate the branches, and post completion of this total acquisition, NBD will be designated as a promoter of the bank, and at the same time they also have rights to nominate the directors. Now, when we look at benefits, let's let's point out a few. First is that this infusion will result in net worth increasing almost threefold from 15,000 odd crores to around 42,000 crores. Apart from that, this will also mark a beginning of RBL Bank's next journey, which will be stronger, more diversified and future ready. Now, the next date that you should be watching out for is 12th November, where EGM, which is will happen, and the board will seek shareholders' approval for this acquisition. And at the same time, let's also not forget that management indicated that in NBD currently runs at around 19 to 20% ROE, and they are also optimistic that hopefully RBL Bank will also get there. So definitely a very positive deal for RBL Bank in terms of growth as well as in terms of expansion. And on back of that, when we look at stock performance, it is up more than 8% today.
Wow, 8.5% higher on RBL Bank. Gaurav, thank you for that update. But mind you, the stock is in the F&O ban, which means no new positions can be created on the stock. In fact, we did speak to the management on this deal, listening to what they had to say.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. Yes. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers, and it is hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today my capital adequacy is, my CRAR is around 15%. 15. For the discussion purpose of understanding, let us hold it there. Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done, and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus, and naturally this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things, and there will be positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA, we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth what we are looking at, an accelerated PAT we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years time.
The management of RBL Bank on that mega deal. Let us now also focus on the other stocks that are buzzing in trade. There are plenty of them, of course, a lot of earnings reactions as well. Upasana is here with more details on this. Upasana.
Certainly, Hormaz. First up, let me start with Polycab. They reported their numbers on Friday. So they have reported a robust growth in its key, that is cable and wire segment, along with a very good margin expansion. Now, their revenue growth stands at 20% in this segment, and margins are also up as high as 270 basis points. So we can certainly see the stock surging in trade today on the back of this. Next up is Dixon Tech. Overall, it's an inline set of numbers, but the management has cut its revenue growth guidance from 40 to 45% to 30 to 35%. Next up is Hindustan Zinc. The overall results are in line for the company. This was mainly led by favorable pricing. Now, revenue growth stands at 4% on year-on-year basis and 10% sequentially. Tejas Network is the next one on our radar. It has been a disappointing quarter for the company. It is the third loss-making quarter in a row for the company, which the company has reported, and the revenue here is down nearly 91% on year-on-year basis. The net loss also stands at 307 crore, largely due to lower revenue and provisions. Next up is UTI AMC. The revenue has declined as high as 24% sequentially, broadly in line, driven by a sharp 91% fall in the other income. And company's quarterly average AUM has risen by 5%, and market share, but in company's key products all across the segment, has seen a decline. So all in all, these were the top stocks on our radar on the back of the result reaction.
Upasana, thank you for that update, and a significant recovery from the lows of the day for UTI AMC. So at one point was down 10%, has recovered now from the lows of the day. Take a short break. More news follows on the other side. Stay tuned. Welcome back. Now, sources close to the Tata Group say that the Tata Trusts is planning to consider renewing the terms of two trustees at Sir Dorabji Tata Trusts. A circular seeking the renewal of Venu Srinivasan's term as trustee of the Sir Dorabji Tata Trusts has also been issued. All trustees have to give their approval for the renewal of terms for the two trustees before the 23rd of October. Now, sources say that Meli Mistri's term is also likely to come up for renewal soon. On to some geopolitical news now pertaining to India. US President Donald Trump has reiterated that Prime Minister Narendra Modi had told him that he is quote-unquote not going to be doing the Russian oil thing. Trump has warned that India will continue to pay massive tariffs if they don't discontinue the Russian oil purchases. Listen in.
I spoke with Prime Minister Modi of India, and he said he's not going to be doing the Russian oil thing, so that's it.
But why would India say that they're not going to do?
I don't know, but if they want to say that, then they'll just continue to pay massive tariffs, and they don't want to do that.
Moving on, as investors head into the new Samvat, questions are abound. Now, has India's dream run finally paused, or this is just a catch-up phase before the next leg begins? We spoke to a few market veterans, listening to what they had to say.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World excluding US is up some 23-24%.
Right.
So you can do it because you are upset with US policies or tariffs.
But there's performance as well.
And there is so it's not that I don't like US. Little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US or 2% and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully
of
that
India.
also perhaps.
That I think is getting over.
This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat.
Right.
If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bank.
Which is PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme. That, like, I'm just surprised people haven't realized. Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
Traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental things. All the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We are all talking these central banks are buying, dollar debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.
Take a short break. More news and updates follow on the other side. Stay tuned. Welcome back. Now, after a long-drawn peace truce between Hamas and Israel, the Israeli Defense Forces launched a new wave of strikes against Hamas militant targets in the southern Gaza Strip. The next report tells you more.
Palestinians were rushed to a hospital in Gaza's Deir al-Balah on Sunday after Israel launched a series of deadly strikes in the enclave, shaking an already fragile ceasefire. The Israeli military said some strikes targeted militants in the southern area of Rafah who had launched an anti-tank missile and fired on its soldiers, killing at least 2 of them. In a statement, the armed wing of Hamas said it remained committed to the ceasefire agreement in all of Gaza, adding that it was unaware of clashes in Rafah and that it had not been in contact with groups there since March. The new ceasefire took effect on October 10th, halting 2 years of war, though the Israeli government and Hamas have been accusing each other of violations of the ceasefire for days.
We want to make sure that it's going to be very peaceful with Hamas. And as you know, they've been quite rambunctious. They've been doing some shooting, and we think maybe the leadership isn't involved in that, some rebels within. But either way, it's going to be handled properly. It's going to be handled toughly, but properly.
Is the ceasefire still in place?
Yes, it is.
But Sunday's flare-up was the most serious test yet to the ceasefire agreement. While bulldozers were used to search for bodies of Israeli hostages in Han Yunis, hundreds of people gathered in Jerusalem Sunday to pay their respects to Uriel Baruch, an Israeli hostage whose body was returned to Israel. Israel says Hamas, which had released all 20 remaining living hostages it had been holding since the October 7th attack, is being too slow in handing over bodies of deceased hostages. On Saturday, Israel said that the Rafah border crossing between Gaza and Egypt, a key channel for humanitarian aid to flow into the enclave, would remain closed. It said that the reopening would depend on Hamas fulfilling its obligations under the ceasefire.
And with that, we call time on this edition of Business Lunch. From me and the team that put this show together, thank you for watching. We wish you again a very happy Diwali and a very happy New Year. The Nifty still 160 points higher. Mid-cap radar on the other side.
Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग. In association with Prakash Surya Steel Tubes and Pipes and Polycab, India's safe, happy connection. Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग।
It's Diwali. Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Markets in the cheerful mode. We are at the 25,890 mark. We actually crossed the 25,900 mark as well. But you know what is happening is some retracement from the top, but there's nothing really to complain. Markets are cheerful. We have a lot of action coming in from the banks. Reliance Industries is doing really well. And the mid-cap index has surged as well. Almost a 1% gain is what we are seeing there. But there's so much to catch up on. So let's start the show with the top headlines. Heavyweight lift indices as strong earnings and rising foreign interest in India's banking sector ring in some cheer. Pharma and IT are big gainers. Mid-cap surge.
Emirates NDB is set to buy 60% in RBL Bank for rupees 26,850 crore in the largest ever foreign direct investment in the Indian banking sector. The Dubai-based Middle Eastern Bank's fund infusion is seen as a big growth boost for RBL.
A whole host of banking stocks are also in focus. PNB, DCB, IDFC First Bank surge after reporting their Q2 numbers.
Tejas Networks under pressure after reporting third loss-making quarter in a row, reports a net loss of 307 crore rupees, largely due to lower revenue and provisions due to a manufacturing process loss.
Dixon Tech is under pressure after its Q2 numbers. Revenue, margins and profit after tax in line. Mobile volume growth misses street expectations. Management tells CNBC TV18 that their margin can expand by additional 50 to 60 basis points going forward. They have also cut their margin guidance going forward, growth guidance going forward. All right, those are the top headlines that we are tracking today. A lot of stocks which are on our radar on the back of earnings and a lot more. CEAT, for instance, is up 9.5% as we speak. GMM Pfaudler up another 8%. In terms of sectoral movers, of course, it's the PSU banking index that's doing really well, 3.3% higher there. Oil and gas, infra, IT, all of them are the big movers in trade. Of course, we have the Muhurat trading tomorrow and then there's a holiday. But, you know, earnings, they continue to trickle in and they are the big talking point.
That's right. Good afternoon, Sonal. You're absolutely right. Now, like you mentioned, earnings, Reliance over the weekend, extremely strong set of numbers, and all of the banking names too, very, very strong. So, you know, the large caps have actually been quite strong. What's actually doing quite well is the mid-cap private banking. So look at names like RBL Bank, Bandhan Bank, Federal Bank. Remember, even Federal Bank has a board meet where you actually have a fundraising proposal on the anvil. So that particular stock too will be in focus. That stock higher by 8% is going to be interesting to see what is the quantum of the fundraise and whether, you know, the company said it's going to be via the preferential route. So who exactly is the buyer over there? Along with that, the entire PSU banking space is doing quite well. So look at names like Indian Bank, that particular stock doing quite well. Bank of Maharashtra, all of the names, you know, Bank of India after a strong set of results doing quite well. But we have Hormaz standing by the wall to take us through all of the movers from the mid-cap end of the side that are making the moves today. Good afternoon, Hormaz.
Good afternoon. And of course, there is only one talking point today, right? It's been banks, and it's banks all the way. Be it bigger banks, be it smaller banks. But take a look at South Indian Bank, for instance. The numbers came out last week, weren't the most appealing. We spoke to the management. The stock is up 17%. Now, DCB Bank, after some very strong results, is up 13%. RBL Bank, of course, after the news. And in light of all of this, CSB Bank too has seen a move towards the highest point of the day, 7.5% higher on this stock as well. Now, there are some not so positive earnings reactions as well, is what we are witnessing in today's session. It's not just all positive. There are names like Tejas Networks, there are names like UTI AMC. But before we get to that, you take a look at the other theme that's buzzing today, and that is tires. And look at CEAT after its results. And in light of CEAT's results, JK Tires and Apollo Tires too are seeing gains of anywhere between 5 to 7%. We spoke of negative earnings reactions. UTI AMC has recovered from the lows of the day. At one point was down 10%, so there is a significant recovery from the lows. What has not seen a recovery is Tejas Networks, is still down 8.5%, and Avantel at one point was down around 12-13%. That stock too still down around 10%. Stocks that are doing well on the back of strong volumes in today's session can not have a financial name here as well. Canfin Homes among the volume-led movers. Radico Khaitan and a lot of the other Alcobev companies also doing well today, and Rajratan Wires is now up 13% on very strong volumes. And among the last on the list today, stocks that are at a 52-week high, no prizes for guessing, they are financial names. You look at AU Small Finance Bank, that's at a record high. Bank of India is at the highest point of the day. PNB, we just heard from the management a couple of hours ago, and Karur Vysya Bank, all of them seeing gains of anywhere between 5 to 10%, all of them at 52-week highs today.
Oh, yes, some interesting names there. Thank you so much, Hormus, for joining us and giving us that list. Well, it's a good time to get a technical check on the markets. Ruchit Jain from Motilal Oswal Financial Services is joining us for just that. Ruchit, good afternoon. Happy Diwali to you. What are some of the levels that we should be watching out for on the Nifty? Any individual names that you are tracking as well?
Yeah, very good afternoon. Wish you and your entire team and all the viewers a very happy Diwali. Well, as far as markets are concerned, there is no doubt the overall trend remains positive. We have already seen an all-time high levels on the banking front, and the banking space is continuing that momentum. So even on the Nifty, we can see that a pullback move from the IT, which were the laggards, the IT heavyweights, Reliance Industries. So there's a cross buying momentum seen in index heavyweights, and when index heavyweights move higher, of course, we can expect a good move on the Nifty as well. So on the Nifty, we are eyeing the 26,000 level where the call writers positions are placed, and if the market manages to surpass that 26,000 mark in this week itself, then I think we should head towards 26,400 mark very soon. So overall trend remains positive, although we can see that on a momentum basis, the small caps are still showing that relative underperformance in this up move. So we are also advising to focus more on large caps or large mid cap names where the trend seems to be gaining momentum. So a couple of recommendations on the long side. One is the TCS amongst the heavyweights, where signs of trend reversal are there post the recently announced quarterly numbers. The stock is on the verge of a breakout from a falling wedge pattern. Positive RSI divergences are there, which are usually seen at the end of a downtrend. So if not an uptrend, then at least we believe that price-wise worst phase is over for the stock. So short-term traders can go long for a pullback with stock below 29.40 for potential targets around 31.60. And definitely you cannot miss the momentum in the PSU banking space. So PNB is our pick within the PSU banks, where we expect a good momentum based on the recent price volume action. So traders can go long on PNB as well with stop loss below 114 for potential near-term targets around 127.
Ruchit, thank you so much for joining us, giving us a view on the markets, and clearly the momentum as far as the PSU banking index is something that you're alluding to. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, one stock that's doing very well today is Federal Bank. Earlier today, we spoke to the management, but Federal Bank refused to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meet to consider raising funds on October 24th. Let's listen to a slice of that conversation.
In our case, we have given a notice of our board meeting on Friday, and we will update you once the board meeting is over.
Can I just, if I can, without of course divulging details and not wanting you to say anything which is against regulations or anything, but is this a minority transaction? The name which is of course being talked about is Blackstone picking up a 10% kind of a stake in the bank. Would I be, without you going into specific, in the ballpark, be correct?
Prashant, as I said, the board will be meeting on Friday to consider this agenda item as we have put up in the exchange. And please let us time till Friday, and after the meeting, whatever is the outcome, we'll give you an update.
But sir, can you, we understand you can't take any specific names, but I believe the bank is already well capitalized. Can you just update us on the latest capital adequacy levels? And also, why are you looking to raise capital? Is this just an enabling resolution? Or are you looking to, maybe expand in certain businesses, wealth, etc.? I mean, why the need to look at capital at all right now?
Like I said, I'll just repeat, just bear with us till Friday. Once the board meeting is over, then we'll definitely come out and give you an update on the outcome of the meeting.
This is a minority transaction, right? That much you can tell us.
I don't even know what transaction you're referring to. All that I know is the board is meeting on Friday on the agenda, which we have put up a notice on. And we will, as I said, we will definitely come back and give an update on the outcome of the board meeting.
All right. So in the past, you have said that wealth management is something that you like to look at. Possibly that you're looking at some inorganic growth in this direction?
On wealth management, Nigel, as you know, we have recruited a head of wealth management who joined us earlier this financial year. And we are building out our platform for launch of the organic offering of wealth to our customers, which is on track. And, in Q3, next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track. And, we do, of course, want to grow as part of our strategic objective, which we had outlined in the analyst meet. Wealth is a focus area and the organic rollout is on the cards.
And what about inorganic growth, sir?
Nothing on the table at this stage, Nigel.
So the money that you're raising could probably be used for some other inorganic growth?
I don't want to comment on this aspect. As I said, let's wait till Friday and then we can talk more on...
But it's not just an enabling resolution. The intent is to go ahead and raise money, right?
The board will consider all options and we'll have to respect the wisdom of the board.
All right, that's about Federal Bank, but banks, they definitely are in focus today. RBL Bank is one of them. Emirates NBD is set to buy 60% stake in the bank for 26,850 crore rupees in the largest ever foreign direct investment in the Indian banking sector. In fact, we spoke to the management of the company on this deal. Listen into what they had to say.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. Yes. When the book value moves up, this is something which is going to add up to your market value, market cap will go up. So taking all these considerations, I feel, it's open offer may not kick in much of the numbers, and it is hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today my capital adequacy is, CRAR is around 15%. 15? 1.5. for the discussion purpose of understanding, but let us hold it there, right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times the, because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us the 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus, and naturally this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things, and there will be positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA, we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest-free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years' time.
Well, RBL Bank higher by over 8% despite the sharp rally that we've seen over the last 2 months in this particular name. But we'll now slip into a short break. We'll get you more on the markets and we focus on Dixon Technologies and Tejas Networks. Stay tuned.
Welcome back. It's a lot about banking names. It's a lot about oil and gas names as well in the broader markets. Also tire names. So something like a JK Tire is higher by 7% in trade as we speak. I spoke about Federal Bank earlier. The other name that is on our radar is AU Small Finance Bank. DCB Bank is up another 13%. You do have MRPL, which is surging in trade. It is up around 7%. It had reported numbers already. They were a good set of numbers. The stock did well that day. And again, there's some addition to those levels. It has surged to the day's high, and remember, oil to chemical segment of Reliance Industries did well. The refining segment was strong, and that is something which is rubbing off on the other names as well. We do have something like an Edelweiss Financial, which is up 6% as we speak. Central Bank of India is up 5.5%. So those are some names which are in focus today. Dixon Tech is one stock which is under pressure after its Q2 earnings. Upasana is joining us to tell us what the numbers look like and what are brokerages making of this set this time around. Upasana.
Well, one of the most important thing is the management joined us today after its Q2 results, and the management has cut its revenue growth guidance for FY26 from 40 to 45% to 30 to 35%. If we look at the numbers on overall basis, Q2 was largely in line with the street expectations, with revenue, EBITDA, PAT, all three being in line. Now, companies mobile and EMS, which is the key segment, has reported a strong growth of 41% on year-on-year basis, while consumer electronics and home appliances segment have seen a weak performance this time around. This is mainly due to deferred demand on GST rate cuts, is what the company has indicated. Now, coming to the volumes, that is the smartphone volumes, they stood at 8% versus the guidance given by the company, that is a sequential 15% growth. So there's a miss on this front as well. Now, looking at the long-term guidance, company is guiding for a revenue of 1 lakh crore and EBITDA margins of up to 4.5% in next couple of years. Now, let us look at what the brokerages are saying. Now, CLSA has downgraded to outperform call, and the target price has been cut to 18,800 per share. It feels that the PLI scheme discontinuation may pressure the margins of the company in FY27. Nomura has given a buy rating with the target price of 21,152 per share. It says it has cut its revenue estimates for FY26 to FY28, but margin estimates are largely intact. Nuvama has given a hold call with a target price of 16,600 per share. It says that the volume growth guidance has been trimmed slightly by the brokerage, but margin pressure is likely possible in FY27. And from medium to long term, it believes that the growth is intact for the company. Phillip Capital has given a sell rating with a target price of 9,085 per share. It says that the FY27 mobile phone volume guidance cut by 10% and margin pressure is expected in H1 FY27. So certainly this is a mixed set of views on Dixon Technologies, even after reporting a steady Q2, but a revenue growth guidance for FY26.
Thank you so much, Upasana. So revenue growth guidance cut from Dixon Technologies for the rest of FY26. Well, moving on, Tejas Network falls in trade after reporting a disappointing set of Q2 numbers. Rima joins in with more details.
Yeah, indeed, Tejas Networks, it's a disappointing quarter. The company's reported a loss for the third consecutive quarter. The company's EBITDA has also come in down at a loss of about 300 crore. The bottom line loss has expanded. In Q1, the loss was about 200 crore. This is further expanded to 300 crore. The company says it's on account of lower revenues, but also there was a 190 crore hit on account of provisions made on account of manufacturing process losses, warranty, and inventory obsolescence. Even the top line of the company, if you look at it, in the first half of the year, the revenue growth has been 200 crore in Q1, now 260 crore, and that is sharply lower compared to FY25, where revenue growth was closer to 2,000, 3,000 crore. The company says delay in receipt of the BSNL 4G add-on purchase order resulted in a shipment loss. So the company has reported a disappointing set of numbers. The stock is down 7% today and 54% lower in the last 1 year.
Yes, big cut there. Thank you so much, Rima, for explaining what went wrong with Tejas Networks in the quarter gone by and the performance so far as well. And as we celebrate Samvat 2082, market veteran Madhukela shares his outlook on the Indian market and the surge in gold prices. Listen in as we wrap on Midcap Radar. Stay tuned. Your stocks will come back when we return.
Traditionally, I've been more positive, always been in equity. And that fundamental view has not changed. you can tactically use gold and silver as an asset allocation call. But I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental things. That all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar is debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। In association with HDFC Sky, make money matter.
Hello, good afternoon. Welcome to your stocks on CNBC TV18, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Firstly, festive greetings. Happy Diwali to everyone and all our viewers sitting at home. Thank you so much as always for showering us with all your love. Hope that continues to the next year as well. So thank you so much for that. But a quick look at what the market is doing, right? Because the Diwali cheer is coming in on the D Street as well. Look at the Nifty, 25,850 levels. About that mark is what the Nifty is trading at. 0.5 to 0.6% of gain is what the Nifty is managing to hold on to. 150 points up there for the Nifty 50. What's leading to the gains today as well is Nifty IT. That's supporting the up move. Nifty IT is up almost 1%. We have Nifty Bank that's also doing well. A whole host of banking companies had reported their numbers over the weekend. So we're seeing that move coming in from the Nifty Bank side as well. So keep an eye out of that one. Broader end of the market, let's pull out the Nifty mid cap. That's doing well. That's managing to hold on to gains of 1%, outperforming the benchmark indices, the Nifty 50. But the Nifty small cap, that's seeing gains, but not as much as the mid-cap space is seeing. So yes, that is what we're watching out for right now, 0.4% of gain for the Nifty small cap. Advance decline ratio, let's look at that as well. Clearly in the favor of advances, declines is almost even Stevens right now. Not much of an up move, either on the advance decline side or the decline side, advance side or the decline side. So that is something that we're watching out for. But yes, Diwali cheer, that is something that is continuing on the D Street. But this is a show where we solve all your stock-related queries. And we're going to be doing just that with our experts for today. We have Ashish Kyal, Chartered Market Technician and author at Wave Strategies Advisors, as well as Gaurang Shah, Senior Vice President, Geojit Investments, joining us to answer all those queries. Gaurang, as well as Ashish, firstly, festive greetings. Happy Diwali to you, your team, your family as well. And thank you so much, as always, for joining us on the show.
Thank you, Vinay, and wishing you and all the viewers and Gaurangji a very special Diwali, and may this new year be very prosperous and everyone does extremely well.
Absolutely, hoping for extremely well. The returns which we missed out last year, we want them coming now. I want them in the next year. So yes, hope this new Samvat actually brings us those, new returns, higher returns, better returns is what we watch out for. On that note, let me get started with those queries then for today. First query for today is coming from Shilpa Joshi from Pune. She's holding 76 shares of Eternal. Price is 201 rupees, making a profit. Long-term investor. Hold, sell, what should you be doing at current levels? Gaurang, good afternoon. Thank you so much for joining us. And what should the viewer do? Eternal is, I think, it's become a favorite of these investors, and the queries we get a lot more. So what are we watching out for now?
It's a favorite on the app also, am I right?
Absolutely.
Well, first of all, season's greetings to all the viewers of CNBC TV18. To my good friend Ashish Kyal, to you, Vinny, and to your entire team. May God bless you all with pink of health and best of wealth. Small disclosure before I go on to Eternal. All recommendations this afternoon on the show are a part of our resisting recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give advice or recommendations to our clients on similar lines. They might have their investment interest. So on Eternal, which was earlier known as Zomato, Vinny, we had covered it during the IPOs. IPO was at 76, if I'm not mistaken. And after post the IPO listing, the share price went down below IPO and then IPO price, and then it has climbed up because of earnings reported. We expect better earnings to come through. Of course, this time around, post earnings, we saw a little bit of profit booking because the stock had run up to its all-time high. And now it is consolidating at lower levels. Dark stores, the number of dark stores they are going to open will benefit Blinkit, which is the e-commerce. And of course, the food delivery continues to ring in the cash registers for Eternal. If you're a long-term investor, stay invested.
Okay, long-term investor, stay invested. And Eternal, Ashish, to you, what are the charts indicating for Eternal? Stay invested or maybe book out some bit of a profit right now?
No, I think it's better to be staying invested on Eternal. We can clearly see the stock has done exceptionally well. If you look at the weekly chart, the stock started running up from 200 levels, currently trading at around 338, and then I don't see any kind of reversal. There is short-term profit booking from the higher levels, so possible we can get a dip around 320 odd levels, 320, 318. But the overall outlook will still remain bullish. we can expect the stock to move towards the level of around 420. And very interestingly, Vinny, one more thing, I've observed that the Gen Z, I have a son, he was supposed to go down to get certain things, but he has started ordering everything online. So it seems these stocks, new age stocks, are going to do very well, and especially Eternal, Swiggy, and those kind of sectors are going to outperform in the coming year. That's what I'm seeing.
Okay, surely the trend of ordering online has picked up, so continue to hold Eternal. That's the word coming in from both our experts. Next query for today, let's move on to that. Manish is writing to us from Mumbai. He's holding 1,374 shares of Carborundum Universal. The price is 1,138 rupees. So they're making a loss on this one right now. The other stock he's holding, he's also got 14,255 shares of Utkarsh Small Finance Bank at 29 rupees, making a loss on this one as well. Now he wants to know the outlook on both these stocks. Should he add more of these shares, is the word coming in. He's not looking to sell. He's asked whether he should average. Gaurang, what's your view?
Well, Vinny, so, first of all, my advice to this investor is that don't ever overexpose yourself to any particular sector or stock. Because if you do that, then you tend to bend towards more riskier kind of a scenario in case if your trade or investment doesn't go into your favor. No specific comments on Carborundum Universal because we don't have coverage right now. But make sure that your losses are tied down. Keep your risk appetite at an alarm bell, wherein if the share price have to go down, then those alarm bells should trigger and you should take appropriate steps. On Utkarsh Small Finance Bank, well, I think it was way back in 2023 when they had come out with an IPO. Post-IPO, of course, not much has happened. We had given a subscribe to the IPO from a long-term point of view. Unfortunately, the numbers have also not looked quite up as of now for Utkarsh Small Finance Bank. But we expect credit demand to go up, Vinny, and that should translate into positivities on the earnings front. So if you're a long-term investor, I'll keep the IPO note as the base of my recommendation. Continue to hold on.
Okay, continue to hold on. That's the word coming in there for Utkarsh Small Finance Bank. Ashish, your view, both Carborundum as well as Utkarsh Small Finance Bank, they're holding considerable amount in terms of both these stocks actually they have in terms of volumes. What should they do? Should they look to add more, average out, given that both the stock price right now is trading at a lower level than the buy price?
See, if you look at Carborundum, yes, we can clearly see that the stock has corrected sharply. The stock was made a high of 1,800, now trading at 900 odd levels. But it looks like forming a triangle pattern. There is a possibility we might see some kind of a bottoming pattern here, and we can see a positive reversal. So hold on to Carborundum as of now. On the downside, stop loss can be maintained at 835. That's a very important level. And on the upside, the stock can move back to 1205 levels on the upside. As far as the Utkarsh Small Finance Bank, I can see that the stock is trading somewhere around 18, 19 rupees on the downside, and the stock has not done anything much. It has continued to correct on the downside over the period of time, over the period of past 1 year. And that's not a very, very promising sign. If that's the stock the user is talking about, viewer is talking about, it's better to be out from Utkarsh Small Finance Bank, and we can then look forward to add into a banking space, something like an SBI or something like a Kotak Bank that looks much more promising.
Okay. That's a word coming in there from Ashish on the technical front for, instead of Utkarsh Finance, he's mentioned some other names as well. Let's move on to the next query then, gentlemen. This is coming from Rahim, who's writing to us from Telangana. He's holding 75,000 shares of Ease My Trip at 10 rupees per share. Right now, it's trading at 8. Now, he wants to know, should he continue to hold or sell the stock? Your word on this one, Gaurang.
Vinny, I hope this is not a punting bet which has gone wrong, because the quantity that this gentleman has bought is 75,000, though the stock price was about 10 rupees. Currently, it is at about 8 rupees. If you look at it in terms of percentage, it's a huge loss in terms of percentage if you equate from the purchase price to the current price. My humble request to all the viewers of CNBC-TV18 is that don't look at the price of the stock and buy the stock in quantity. If you do that, it doesn't translate into a fundamental long-term strategy. I hope that this gentleman had done some homework. We don't cover such stocks, to be very honest with you, Vinny. I would also, advise viewers of CNBC that avoid investing into single-digit stocks. There is a reason why the stock is trading at single-digit, and that's extremely weak fundamentals.
Okay, yes, absolutely true. Be careful when you're investing. Judge in terms of the fundamental front as well, the management side of the commentary, what comes in, what the management is doing. Important to know the issues around that as well. And even the sector is going to be important. But Ashish, your view on the technical front, what should the viewer do?
I completely concur what Gaurangji said. The overall trend for the stock has been down. It moved down from around 32 rupees and 29 rupees and now trading at 8 rupees. There is absolutely no reversal. The stock is not even breaking its 20 DMA since many, many weeks. So the overall trend is down. It's better to be out from something like this and invest in, if you want to invest in something like an Indigo. That has a much better chances of going up than staying with Ease My Trip.
Okay. Thanks for the view there, Ashish. But on that note, we're going to actually slip into a very short break, viewers. But here is a note for you all. For our viewers, you must have noticed that there is a money control stock score above the line graph, and this is a score assigned to each stock based on money control's multi-factor algorithms. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts and technical indicators for each stock. Each of the individual parameters considered for calculation of 4 factors are assigned a score which is aggregated to arrive at an overall Q factor score, G factor score, V factor score and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. Welcome back to Your Stocks on CNBC TV18. This is the show where we solve all your stock-related queries, and we still have with us Ashish Kyal as well as Gaurang Shah to do just that for us. Let's move on to the next query, gentlemen. This is coming from Deepak Dave, who's writing to us from Gujarat. And this is an investment query. He wants to know if it is the right time to invest 2 lakh rupees in TCS for the long term. Gaurang, your view for TCS, what should they be doing? Would you look at TCS in the IT pack right now, or maybe the mid-cap IT companies or any other company?
Well, by asking this question, you put me in a fix, to be very honest. We have coverage across IT that is starting from the base of the pyramid, the small cap, mid cap, as well as large cap. We do have positive coverage on buy side on TCS, and our confidence has just got reinforced, Vinny, post the announcement of Q2 numbers, because a lot of people had wrote an obituary for IT sector and of course stocks related to IT sector in terms of dismal performance. But fast forward to the recent past and of course whatever numbers we are likely to see, I think situation is going to improve as we go into the future. My only request to this viewer is that if you want to put 2 lakh rupees, please have 1.5 year plus kind of time horizon, because it will take time for situations to evolve for positivities, and then you will see those positivities translating into better numbers and better share price.
Okay, that's a view coming in there for TCS. 2 years is the time period. At least you should look to hold on to that long-term story. Then you'll start seeing it playing out. That's a word from Gaurang. Ashish, your view on the technicals. TCS as a long-term story. Would it be a good bet right now?
Yes, indeed. We can clearly see there is some kind of positive divergence already emerging from the TCS. Even the Nifty IT sector has started showing some kind of a consolidation, and I think it's going to be an upside breakout soon. TCS also has a very positive time cycle starting at 28th October. So I'm expecting by the end of this month, there is to be a positive traction from the stock. On the upside, we can expect the stock to move towards the level of 3420, which is a gain level. And on the downside, the support for the stock comes to around 2870. So my suggestion would be accumulate is the way, slowly and steadily in staggered fashion. And eventually we should start seeing positive signs on the IT sector.
Okay, slowly and steadily start accumulating TCS. That's a word coming in from Ashish. So keep an eye out on that and the IT sector as well. Let's move on to the next query then. Ritesh Shah is writing to us from Mumbai. He's holding 200 shares of Dalmia Bharat Sugar at a price of 505 rupees, making a loss on this one. He's a long-term investor, so he doesn't mind holding. But what should he do now? What should the view be for this one that he's watching out for? Gaurang?
So I think entire sugar sector was a bust, for all the good reasons with respect to ethanol, because ethanol had become the big earnings driver for sugar manufacturing company, because it's the byproduct. Now, unfortunately, the percentage of blending that was supposed to happen by the oil marketing companies, it's not even halfway to that mark. Yes, there is a positivity in terms of price of ethanol going up over the last 2 years, but that does not transform into great visibility. Unfortunately, we don't have coverage on Dalmia Bharat Sugar, so I won't give any specific comments. But one request again, we bought it at 505 and the stock is sitting at about 356. Don't let your capital erode so much that recovery becomes difficult.
Okay. And what's your view on this one, Ashish?
See, if you look at Dalmia Bharat, we can clearly see that the stock has broken below the 20 DMA. So the overall trend looks to be reversing on the downside. One has to be a little cautious because the stock moves in a very cyclical fashion. If you look at over the past 3-4 years of chart, it has been failing to cross about that 24,500 mark, reverses there and again goes back towards 1600. So my suggestion would be to be out from here. We can clearly see it is breaking the support, and avoid this sector because the stock moves in a cyclical fashion.
Okay. That's a word there for Dalmia Bharat Sugar. Avoid because it's a cyclical sector. So keep an eye out on that. It's important to know that. Next query for today is coming from Meghna Raj, who's writing to us from Hyderabad. She's holding 35 shares of Just Dial. Price is 1,010 rupees per share. Wants to know if she should continue to hold it or sell this one. Gaurang?
Again, same story, capital getting eroded, Vinny. We used to cover Just Dial quite some time back, but because of the news flow and the kind of performance, we have removed the coverage. Currently, we don't have any coverage. Well, if you really want to, if the viewer is open to an alternative investment idea, I don't know whether the investor is open to this or not, but I think making a move to a banking and finance, something like, say, State Bank of India, the public sector bank has been buzzing for quite some time, and there's improvement on the earnings front. One request again, don't let your capital erode because then recovery becomes difficult. If you are open to making an alternative investment idea, then I would prefer State Bank of India. No specifics on Just Dial.
Okay, no specifics on Just Dial. Can look to switch. That's a better bet is what Gaurang is highlighting. Ashish, your view for Just Dial. What should the viewer do? Is averaging a bet right now, or maybe the downtrend that we're seeing in the stock is something that is going to be continuing?
See, Just Dial has a support at around 750. My suggestion would be do not average it now. We need to see it crossing well above that 900 mark in order to start seeing positive traction. So hold on with 750 as a very strict stop loss, because if the stock breaks that, there is much more downside that we can start seeing on the stock. And on the upside, let it cross about that 900 mark, and then only we can expect a positive momentum.
Okay. I'll keep an eye out on the stop loss there for Just Dial. Let's move on then to the next query, and that is coming from Rajashekhar, who's writing to us from Telangana. He's holding 25 shares of Jyoti CNC Automation. Price is 1,534, and they are making a loss on this one. Future prospects of the stock, Jyoti CNC. Gaurang?
I believe this belongs to an automation. Jyoti CNC Automation is the name. Again, no specific comments because we don't have coverage. But if you're looking at auto ancillary related stocks, and one thing is there, Vinny, if auto sector is going to do well, I think auto ancillary tire and battery manufacturers will do well because they all three are connected to each other. So we have positive coverage on companies like CIE Automotive or Uno Minda.
Okay. Okay, that's a word there for Jyoti CNC. Other names also mentioned by Gaurang, so keep an eye on that. Next query, actually, your view on this, Ashish, Jyoti CNC.
We can clearly see the stock after touching 1300 corrected sharply on the downside, made a low of 840, now consolidating. So possibility it will consolidate in a range. On the upside, I think the stock has stock can move back towards that 1050 where the user can look forward to exit. On the downside, the support for the stock can be 840. Maintain that as a stop loss.
Okay. Let's move on to the next query. This is from Balakrishnan, who's writing to us from Chennai. He's holding 25 shares of Thermax. Price is 4,700 rupees. Long-term investor. Gaurang, should he continue to hold this for the next 1 year?
Well, difficult because, Vinny, our target price was in place and we have given a sell recommendation of Thermax. If you're looking at cap goods engineering or water treatment, effluent treatment or desalination kind of companies, then our view is that there are better companies to look at. One company that we have coverage over here is Viatech Vabag or Vatek Vabag, whichever you want to pronounce it. This would be a better option since we have a sell recommendation on Thermax. Make a switch.
Make a switch, that's a word there. And Ashish, a quick word from you. What should they be doing? Thermax?
See, Thermax has taken multiple supports at around 3,000 levels. It has tried to protect that. That's a very important price action zone. So 3,000 maintain as a strict stop loss. If it goes below it, definitely make a switch from here. And on the upside, the stock can possibly move towards 3,800, which is the previous the zone high. So 3,800 can be the target over near term, and 3,000 can be the stop loss.
Okay, keep an eye out on that strict stop loss over there that Ashish has mentioned. But Gaurang as well as Ashish, thank you so much for joining us on the show. Hope you all have a great Diwali as well. And thank you so much, as always, for joining us, helping our viewers understand and solve their stock-related queries. Viewers, remember, you can always send us and email us your queries as well on the email address that will be on the screens for you all. But thank you so much for tuning in. Have a great next couple of days. Enjoy your holidays. Last hour of trade is still left, so don't go anywhere because closing bell is up next to take you through all of that.
Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग. In association with
HDFC Sky, make money matter.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Lines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng as well as the Taiwan Index managing to hold on to very, very strong gains in today's trading session.
Nifty Bank has made a new all-time high. It's taken out the prior high of 57,628.
The EBITDA of the company closer to 46,000 crores. This compares with 42,900 crores quarter on quarter.
If they want to say that, then they'll just continue to pay massive tariffs.
The fit and proper may not be an issue. However, the regulator has its own deeper understanding.
While we saw net interest margins declining just by 8 basis points, but it was in line with the street's expectation.
A 100-point uptick, 25,800 plus is where the Nifty is now opening at.
Commentary will now focus on how they pivot to be able to utilize this capital and grow their balance sheet from the current 1 lakh crores to maybe 2.5, 3 lakh crores over the next 3 to 4 years.
We are working towards achieving that 40 million number for this year and hopefully 60-65 million number for next financial year.
And next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track.
Markets in the cheerful mode. We are at the 25,890 mark. Happy Diwali!
I think that picture says it all, right? From the entire team, wishing everyone, all our viewers, a very, very happy Diwali. And you can see that on the screen. It's still a bright green. It's come off from the day's high. So we're not still at 25,900. In fact, as we speak, we're slipping actually quite fast. And we're closer now to 25,800. But look at the mid-cap index. Look at the earnings reactions. And there are so many patakas.
Yeah.
Like an RBL bank. You've got a DCB bank. Lots happening.
Well, I guess the market has decided to shrug off and shake off the old and get ready to embrace the new. And the new has had a lot more positives, right? In the last about 10 days itself, we've seen that, turn up in commentary, management commentary, in the earnings so far, in what we've seen in terms of the global expectation as well, with some, hope of a thaw between India and the US, all of that put together. Now, if we do get some profit taking in this last hour, I think it's par for the course, 24,800. If you look at the voices, right, all the commentary, the guests that you guys have also spoken to, I think the consensus is that we are, looking at the, the next Samvat, in all probability, being better than the consolidation phase that the market has endured very smartly.
I think, Surbi, you mentioned something about 24. We're at 25 now. The 24 is behind us. 25,800.
25,800, beg your pardon.
Gunning for fresh all-time highs. And, the way sentiment has turned.
Yeah.
Towards the end of September, people are getting, all paranoid, no returns in the last year. And, portfolios were absolutely hammered. Precious metal continues to move up. Well, October's been good, right?
Absolutely.
Because the markets are up. The Nifty, the headline index is up close to around 1,000 points or even more than that. And suddenly now we're talking about fresh all-time highs. Hopefully the economy picks up as well. Hopefully earnings does come about. And earnings season hasn't been so bad.
Not so bad,
So I think that's in fact the positive. And ultimately flows, everything will go according to earnings because earnings is the key driver of the markets. So considering that that's picking up, besides sentiment, well, flows will come back, earnings will pick up, and hopefully we're in for a better year ahead.
No, absolutely.
I think the corporate earnings picking up has been a big driver of today's performance. Look at Reliance Industries, 3.5% up. So many banks. The Nifty Bank itself is at an, all-time high. And the NIM performance was not as bad. All the managements, pretty much every banking management spoke about NIMs bottoming out and improving subsequently in Q3.
No, absolutely. And just a point that, why, even if, like I was saying, that even if we get some profit taking now towards the end, or if we have lesser gains than the 200 points, how we started the day, I mean, I'd actually take this in an auspicious way, even this. Because if it's a parabolic one-way move, we all know that then those moves end up getting questioned very, very quickly. But if it's a gradual up move with bouts of profit taking, it's always, perceived to be healthier.
I think we've left a little bit for tomorrow, right? We've fallen from 100 points. Tomorrow is the moderate trading. So
who knows?
Yeah,
Who knows?
So maybe we've left a little bit. Anyway, guys, you're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And we have a packed 1 hour coming up on the show. And how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio is now joining in. Mitesh, once again, wishing you a very happy Diwali, your entire team and your family. But first, your thoughts that we've slipped a bit from the day's high, the Nifty Bank too. I mean, what would you make of that? And what's the setup looking like?
Good afternoon, Reema. Wishing you and your family a very happy Diwali as well. I think coming off the highs, I'm not actually surprised given the fact that, we were slightly overbought on the hourly to hourly charts. We've had a rally starting from 25,100 and in 4-5 sessions, we kind of hit 25,920. So I think, gaining by about 900,000 points means that there will be some profit booking happening, given the fact that we are running into practically a 2-day holiday. I think today is a good chance. So the trend is on the upside, but for the time being, the index can, possibly see some more profit booking. I think a pullback to support levels of 25,700 would provide you with a very good entry point if people want to take a long position on the Nifty again. Having said that, on the stock side, I have a buy on United Spirits. That's a stock, which is just trying to break on the upside. So buy here with the stop just below levels of 1354. Look for targets of around 1400 plus. And the other stock is Cipla. Extremely strong price and volume action over here. So Cipla is a buy with a stop at 1650 for targets of 1680.
No banks, Mitesh? I mean, look at all of them, right? Forget the large banks. I mean, look at the trade today on the tier 2 banks, whether it's DCB Federal, all of them on the screen, 6, 7, 8%, AU Small Finance, 9%. It's phenomenal. Federal as well, about 6% right now. IDFC First, 6%. So, I mean, what would your advice be? Because the moves have been very sharp on banks in the last couple of days, including today.
Sorry, not, making a point about myself, but check the last 2 weeks and I've had lots of banks, Bank of Baroda, Canara Bank, Bank of India, AU Bank, HDFC Bank as recommendation. And I think now, the only thing which I like right now, which can give you a good entry point from a risk-reward equation is State Bank of India. Today is a fresh breakout over there, so I would keep a stop below days low of 891, so let's say 889. And I think this stock will still do 950 and in a good case, even 990 to about 1,000. So if somebody wants to enter fresh, State Bank of India is the best choice. The other banks, I would say, at least take some profits off because we have recommended them about 10-12% lower from here. So I think now is the time to take some profits off and just hold on to the position because the trend is on the upside. But again, they are also very close to overbought levels.
Okay, all right. Mitesh, wishing you a good Diwali. I think we'll get your 3 p.m. call as well. But please wish Shubham from me as well. He interned here at CNBC-TV18, a fantastic worker. And do wish your son for us. Tell him we think of him quite often. Well, let's move on to a stock that's under some pressure. Dixon is under some pressure. Their Q2 volume growth missed what the street was working with. And the street is a little bit jittery about the outcome. Obviously, now the problem is it trades at elevated levels. But let Upasana join in and tell us what brokerages are making of the past quarter's numbers. Upasana.
Well, company has cut its FY26 revenue growth guidance from 40 to 45% to 30 to 35%. Now, if you look at the Q2 numbers, they are largely in line across the board. But coming to the company's key segment, that is the mobile and EMS segment, it has reported a strong set of growth that is 41% on year-on-year basis, while the other segments have seen a decline due to deferred demand on GST rate cuts. Now, smartphone volume, if we see for Q2, there is a sequential volume growth of 8% versus the 15% guidance which the company had given in Q1. So again, it's a miss on that front as well. Looking at the long-term growth target, the company has given a revenue growth target of 1 lakh crore and EBITDA margin of up to 4.5% in next couple of years is what the management has indicated. Coming to brokerages now, CLSA has cut its target price to 18,800 per share. It says that the PLI scheme discontinuation may pressure the margins in early FY27. Nomura has given a buy call with a target price of 21,152 per share. it has cut its revenue estimates for FY26 to FY28, and it believes that the margin estimates are still intact for the brokerage. Nuvama has given a hold call with a target price of 16,600 per share. It says that the margin pressure is possible in FY27, but medium to long term, the growth remains intact for the company is what their view is. And lastly, coming to Phillip Capital, it continues its sell rating with a target price of 9,085 per share. It says that the FY27 mobile phone volume guidance has been cut by 10%, and because of which there can be a margin pressure in H1 FY27. So all in all, if we see, it's a mixed set of views coming down for Dixon Technologies by the brokerages.
Okay, thank you very much for that. Earlier today, we chatted with the management of Dixon about the company's margin profile, revenue outlook. Listen into what they had to say.
We had projected a volume, budgeted a volume of almost 40 million mobile phones for this year, smartphones for this year. I think so we are on track for that. And the first 6 months, we have done broadly 20 odd million. Yeah, within the customers, so we pretty much work with all the customers on the Android ecosystem. Yeah, within the customers, there can be some plus minuses, but broadly we are working towards achieving that 40 million number for this year and hopefully 60-65 million number for next financial year. My sense is that should be the run rate for the going 6 months as well. So broadly, we should land up at a similar number for this financial year. But with more backward integration play, I think so the backward integration play should continue to add to our margins. Our expansion in the refrigerator portfolio should add to the margin profile and overall the operating leverage benefit. So my sense is next year, because of this largely on account of this backward integration play, we think we can expand the margins anywhere between 50 to 60 bips. Overall revenue guidance, I would say, should be closer to 30-35% for this year. But definitely, we are looking for almost a large growth for next financial year. So between 24-25 and 26-27, we should be broadly able to double our revenues.
Okay, so that's Dixon, still guiding for pretty robust growth in their mobile business, despite the miss that we've seen in that particular business in this quarter. And they're saying 30 to 35% growth on the top line as well in FY26. So we've got Dipan Mehta joining in. Dipan, happy Diwali, first of all, to you, to all at home, to your entire team. It's a season of new beginnings and hope of wealth, prosperity. And I think the market is giving us that hint that it's moving in that direction. So first of all, let's get your sense on overall, whether you think the next Samvat will be more rewarding than the one that's closing, and then a view on Dixon.
Yes, good afternoon, and thank you for having me on your show. And of course, season's greetings to you and the entire staff at CNBC TV18.
Thank you.
So in the 35 years that I've been tracking the market, I think after a very long time, I'm extremely bullish on the stock market at this point of time. And I think the next year, next Samvat will be really great for investors from a returns perspective. And the reason for that is that after taking so many bullets, we are still standing, and the faith of the Indian investors in Indian equities remains pretty much strong. And with an earnings revival, I'm sure we will see reversal of FI flows as well. So very positive on Indian equities per se. Coming specifically to Dixon, I think first a disclosure, we and our clients are invested in it. We are on the camp which believe that this is really going to be an outperformer for the next 2-3 years or so. And it's all about backward integration. And, even 35-40 basis point increase in the operating profit margins can make a big difference to the earnings per share. So very positive on the company. Valuations have now become reasonable, around 78 times or so thereabout. Trailing 12-month, the higher Ps were almost 110, 120 times or so. So I think that if they're able to double their profits over the next 2 years or so, and then after that also maintain 15-20% type of a growth rate, and the returns could be quite decent over the next 4 or 5 years or so.
Okay, all right. Hi, Dipan. Good afternoon. Season's greetings. Happy Diwali to you, your family, and Varun as well has. I've worked with him, your son. So please give him my regards and look forward to catching up with him for a coffee or drink or something. So best wishes, and good to hear that you're sounding very bullish. The question is, I track 2 sectors closely, as a core beat. You pivoted on one of them. You started sounding reasonably positive on cement after being quite bearish or not interested for a bit. What about metals? Not bullish as yet?
Nigel, first of all, season's greetings. Happy Diwali to you as well. And thank you. I think Varun had a swell time at CNBC working with you.
Me too.
Thank you very much for mentoring him. But I mean, I've been bearish on commodities for the last 30 years or so. Never really understood the sector. If you're an industry insider, you can definitely make a lot of money on it. But look, I think cement has played out well. Don't you think so, Nigel? I think the numbers which have come through from Dalmia, from Ultratech, I think all very good set of numbers. They have gone back at least to the September 23 figures, which they are in terms of profitability. And I think if infrastructure, real estate continues to do well, then you may see even better numbers for the next few quarters or so. So remain positive on cement per se. And I think that the industry is growing a bit more responsibly now than before. And looking at Ultratech's number also and the kind of expansion plans which they have in mind, it does seem that the momentum will continue for the sector as a whole. Look, metals, I think it's, give and take, like Hindustan Zinc looks good, considering silver prices are higher. But by and large, I think, it's all about higher and higher volumes, and how that plays out, one needs to see. But look, I think Jindal Steel and Power's expansion, which is almost 50% higher capacity, which they are creating, and absolutely more or less debt-free balance sheet, does inspire a lot of confidence. Having said that, it's a company in which we have invested, in a small way. So I just like to put that across to your viewers.
But from cement, what do you like? Because suddenly Ultratech has gone ahead and announces big capacity. I'll tell you what the problem is, that they announces capacity addition at around $52 per ton. So those that wanted to sell out, suddenly their bargaining power will go down. People will say Ultratech is selling about $52 per ton. So one of the big buyers potentially may not be so aggressive, point number one. And point number two, since they're doing the capex at such low, capex levels, the ROC will be mid-teens compared to sub 10%. So, they will be in a very good position. They don't need to undercut the market. How do you view that? Will it be a bit of a risk to the North Indian players? Since JSW Cement as well is moving there, you have some capacity expansion. And now 18 out of the 22 million tons that Ultratech has announced will be in North India.
See, I think that it's also, Ultratech is also about India Cements. And we saw the numbers which came from India Cement. You are seeing the effect of the Birla management over there. And as and when the merger does take place over there and further consolidation happens, it will be very positive for the India industry and Ultratech in particular. So I think go with the market leader when the industry is doing so well. If you go with the market leader, you're sure to get at least the returns which are equal to or higher than what the peer group does deliver. And otherwise, also, I think, a lot of these cement companies, their growth rates are kind of, converging. So whether it's a Dalmia Bharat or a Shree Cement or the Ambuja group of companies, you'll get similar type of returns, I feel. But there's comfort in a diversified player. That's my understanding.
Dipan, stay on. Wanted to get your views in on the newsmaker of the day, RBL Bank, Q2 numbers and the Emirates NBD deal. But before that, let's listen in to the management on what they had to say.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers, and it will be hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today my capital adequacy is, CRAR is around 15%. 15. For the discussion purpose of understanding, let us hold it there. Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us the 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one-year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus. And naturally, this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things. And there will be positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA, we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest-free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years' time.
Okay, so that was the stock of the day in terms of the news flow, in terms of obviously the big development over the weekend. Deepan, what do you think? RBL Bank, new international promoter checking in. Now, as an investor, I mean, how should you look at it? If someone doesn't have the stock, should they think of buying now? Or if you have it, then should you just wait for this transition to play out? What's the advice?
I think it's a very positive development for RBL shareholders. And on the whole, I think it'll take the bank to the next level. But look, our view on banking is generally neutral to negative. Excuse me. By and large, the numbers which have come through so far indicate that the industry is growing around about the nominal GDP growth rates, which is just about fine. And one needs to get extremely selective in the banks. So I would say it's a great stock to remain invested, but fresh investment, I think better choices.
And Federal Bank and the 10% pref issue?
Sorry about that. Yeah, same with Federal Bank also. Decent set of numbers, and provisioning also is normalizing for the banking sector and Federal Bank also. So I'm very positive, but as such, one needs to be selective. Federal Bank certainly, IDFC Bank also, IDBI Bank I thought came out with excellent set of numbers, and a clutch of small PSU banks, Bank of Maharashtra, Indian Overseas Bank, Punjab and Sindh Bank. I think those numbers also were pretty good. And now their NPA ratios are better than some of the private sector NPA ratios also. On the whole, this entire banking sector is becoming a red ocean. So I'm not sure that they'll create the same wealth that these companies have created over the past 5-7 years or so. Their returns more or less would be in line with the markets, maybe slightly lower.
There have been lots of big movers in the banking space on the back of numbers. So South Indian Bank, 14-15% up. It's a fresh high on that. You've got a DCB Bank, 11% up. AU Small Finance Bank in the NBFC pack also doing quite well. Edelweiss Financial also gaining in trade. So, Dipan, now for Diwali, Mohra trading, which stocks are you eyeing to buy tomorrow?
So, well, our Diwali pick this year is Sem India, which was erstwhile the ITD cementation and now part of the Adani group. And it's a company, first of all, disclosure, we and our clients are invested in it. So our views are biased. And I think the company has an exceptionally robust order book position. It has got a lot of scope to improve operations overseas as well. And being part of the Adani group, there's great scope to increase captive business from that group as well. Although it will be done on an arm's length business, extremely clean balance sheet, and hardly any exposure to all those hybrid HAM projects or where they need to invest a lot of capital, reasonable valuation, good earning visibility. And of course, they are among the top 3 or 4 players when it comes to executing complex infrastructure projects, be it metro projects or marine projects. So very positive on that company. And I think that it could be a good investment over the long term.
Okay, all right. And the new name, Dipan, you said was Sem India Projects, right?
Yes.
Okay, all right. Any view, Dipan, on these refiners? MRPL is buzzing yet again. CPCL again is buzzing. MRPL came out with a good set of numbers. The point is that refiners actually globally have a lot of capacity has got hit in this Russia-Ukraine war. So that's why part of the street believes that better times will come. GRMs have spiked up big time. But other part says, it's too tricky to play them. New capacity is not coming on stream. Both these two companies are likely to reduce debt as well. You will play it or you'll stay away?
See, I think, Nigel, it's a cyclical business. And from time to time, you will have some fabulous quarters as well. And some of these companies are expanding their capacities. But really, the real play within the sector has to be the PSU oil companies, likes of BPCL, HPCL, which are also growing their refining business, and therefore the dependence on trading or buying refined fuels from other refineries will reduce. A lot of expansions coming on stream, reasonable valuations, and the government is quite keen to improve their the valuations and then the kind of companies that they are, what strength they reflect. So I think that after a long time, we're getting quite positive on all the three oil marketing companies, Indian Oil, HP, BP. They are valuable companies in terms of assets they have on the ground. And there's stability when it comes to these companies because the marketing margins do not fluctuate as much as the refining margins. So very positive on these companies. And I think that certainly their P's can get re-rated upwards. It's one sector where the P multiple is lower than the global averages.
Okay, got it. Yeah, I mean, and hopefully these, as you said, marketing, refining margins, both them looking up. So OMCs would be the way to go. Well, Deepan, we thank you for joining in, giving us your view on a lot of those stocks as well as sectors that we discussed. Wish you well, and we'll catch up soon.
Thank you.
For the time being, slip into a short break. On the other side, I think Jigar Mistry is waiting for us. He'll be joined to give us how he sees market shaping up and all the top themes that he's betting on. Welcome back. Well, the breadth of the market, the number of stocks declining and advancing, they're getting a little closer to each other. But one would have to say it's par for the course. You know, the kind of rally that we have seen. Radico Kaita, and maybe it's going to be in business later tonight. One of those stocks that are moving up 3.5%. That said, let's welcome Jigar Mistry, co-founder, Buoyant Capital, who joins us on the show. Hi, Jigar. Wishing you a very, very happy Diwali. As we were talking in the break, what a great move, Jigar, you made over the last few years. Sell side, working for a company, starting your own and flourishing big time. So wishing you and everyone at Buoyant a very, very happy Diwali and wish you well. May you go from strength to strength. That said, Jigar, been through a challenging phase. Yeah.
Thank you, Nigel, and happy Diwali to all of you, the CNBC family. Just learning from how well CNBC has gone from strength to strength. Plus, the markets and God both have been kind. So, it's time to count our blessings on such auspicious days as well.
Well, that's right, Jigar. Everyone's growing. It's good to see the equity cult here in India being formed as well. I recall before you launched it, we had a brief discussion when you said, this is my plan, and happy to see the way you're executing. Let's look ahead, though, Jigar. What about the markets? How are you feeling about it? We've had a good 1,000-point rally. Suddenly, the sentiment seems to be turning, and hopefully, there's a trade deal somewhere in the offing. How are you feeling about the markets? And give us that one theme, that one Fataka theme for the next 1 year, which you all are reasonably bullish on.
Right, Nigel. So see, despite that run, India is still among the worst performing markets on a year-to-date basis, say save for Philippines, Thailand, and Malaysia, right? The best performing ones have been Korea, Mexico, Germany, and Brazil. And I think one of the key reasons was, and we were talking about a month ago as well, Nigel, that if you look at every time a dollar depreciates, money flows out of the US markets into emerging markets. It has happened this time as well. But instead of coming to India, it has gone to a lot of other emerging markets, sort of Korea, Japan, to name a few. And the reason why it hasn't come to India is because the rupee has depreciated against a depreciating dollar. So it's sort of a double whammy that the foreign institutional investors in India had to sort of tackle. Secondly, there were concerns around trade deal and weak quarterly print that we were saying continue for the last 2 quarters or so. At the end of it, I think both of those things look like they are solvable. We've discussed in the past how the Trump administration eventually will run out of time, whereas China has 20 years to think about. India has been a collateral damage in the piece, and eventually, I think in the next 3 to 6 months, things should resolve. Secondly, the kind of impetus. Now, when you total the central state sort of the money that has been put in the hands of investors, that's totaling to somewhere around 4.5 to 5 lakh crores. That's almost 1.5% of GDP, and eventually it will sort of turn up in a few phases, in a few segments. I think one thing that you asked me at the start of it, I think eventually it won't be more soaps or oil getting sold. Across the board, it is the premiumization and the YOLO theme that will sort of ride through. There will be limited place in the public markets, but there are plays nonetheless which are available and interesting. Banks and realty has driven the market so far. Incrementally, I think there will be a lot more other sectors that will pick up. As I said, not sort of your rudimentary oil and soaps, but a lot more interesting themes as we go ahead, Nigel.
Tell us a few names in the consumer discretionary space. We know there is an Indian Hotels, there is a United Spirits, an Interglobe Aviation, all to play the premiumization, the YOLO theme, etc. But name some that you like.
Right, Rima. So, stocks is a bit difficult given where we come from. But I think the few names that you did mention, we have plays in aviation, we have plays in leisure, we have also plays in cement, which might look like very counterintuitive. But remember, the states have pushed in 1.5 lakh crores. We discussed this last time that almost 70% of the cement by volumes get sold into a segment called, individual house builders. And these are the people buying 10 and 20 bags of cement. And that will benefit at the core. Doesn't look like premiumization when we talk cement, but effectively it's an upgrade for what, that housing, that level of housing has been doing. So we are keen on that space as well. And lastly, I think to round it all off, and that might sound a little bit boring again, but different sort of various ways of lending institution is still a way to play around. We have seen a couple of names, move up today in that spec segment. But again, there are a few lending names that make the cut to sort of finance that premiumization theme that we are keen on.
Jigar, hi, season's greetings. Wish you a very, very happy Diwali. You've actually led me to my question. I did want to discuss financials in more detail because it's very clear, right, that finally after a long hiatus and a lull, banks are catching up. Even big banks have started moving. The numbers have been looking decent. And there's a near consensus, at least now in the market, that second half, margins should eventually improve as well. But it's a very large segment. What do you play in financials? Do you play NBFCs, big NBFCs, small NBFCs? Do you play mid-sized banks chasing more growth? For instance, we spoke with IDFC first today. They're growing at a 20% clip. Or do you stay with something stable and steady like an SBI, ICICI Bank, or even HDFC, right? Pretty stable numbers. So what should the playbook be for financials?
Right, Survi, season's greetings to you as well. See, I think for the first part, we shouldn't really be too concerned about a NIM compression. Our view is that a huge host of cuts are not really coming. And whatever couple of more that they are in the offing, you are talking about sort of a place where the NIMs contract first and then they recover, right? The banking institutions reduce their lending cost later than their deposit cost, and therefore it's a cycle that eventually plays out. Within that spectrum, the sort of mid-sized bank tend to do a little better. The larger NBFCs tend to do a little better. The staple banks, the larger private sector banks continue to remain our focus areas as well. We don't really think there is time for MFI's turnaround to happen yet. We have not fully priced in the risk, but eventually there will be a time even to play those. Now, given that that sector has held up really well over the past 1 year or so, the composition within that, even within our fund, has changed quite significantly. But I think that segment remains very interesting. If you are sort of in line with our views that a huge host, like we're never going back, no, never is too strong a word, but we are not very soon going back to sort of those zero interest rate environments. Given how fast we'll de-dollarize in the next decade or 2 decades, we should be prepared for reasonably elevated sort of interest cost across the globe.
All right, Jigar, I think Marathon, the real estate company, Marathon Next Gen, is a company you'll have in the portfolio. So what are you all bullish on? The company specific, or are you all bullish on the Mumbai market? Give us some rationale out there, because I think that's one of the stocks in your portfolio.
Right, Nigel. So I think, among the other things, as I said, it's a reasonably decent theme, and Mumbai markets operate sort of on its own. For the company itself, there are a few interesting projects that they are undertaking in joint developments, and that sort of makes us interested in a play like this. Real estate per se has done fairly well in the past, like year to date as well. So as a theme, broadly speaking, anything that is priced in a fiat currency is interesting to us. Commodities, we play through a few names. Real estate, we play through a few names. And similarly, gold and silver, obviously, sort of silver, there is a play in the portfolio as well. So we did sort of in the last interactions, we did discuss on why reducing dollar essentially means that all assets with fixed supply priced in dollars tend to, in a nominal currency, inflate. And that is sort of one of the themes why we are interested in, beside the company specific cases.
Shelley Engineering Plastics, is that a company you all are interested in?
No, we don't own that.
Okay. I think the last time we spoke, you had a fair amount of cash. I think close to about 10-15%. What is the cash holding now? And are you incrementally deploying now?
Hey, Rima. So, for a fund like ours, which doesn't follow a model portfolio approach, the median, cash levels in client accounts and the total cash at the fund level is slightly different, because in times when the incremental inflow is elevated, we may have been taking a little more time to deploy, and therefore that shows up. Plus, in a commingled fund concept, which sort of alternative investment funds are, you see at the month end, because of inflows, cash is slightly elevated. So accounting for that, I think we don't believe cash is a very interesting asset class. One data point I'll give you right now is that if you were an investor in the past 25 years, 10 days have driven between 55 and 57% of index return, depending on which index you're talking about. Now, if you tend to miss a few of those days, which most of us will, then the return profile tends to come down a lot. So net-net, we are not all that keen to hold cash, except that we may take time to deploy. Therefore, it shows higher. Today, to answer your question, we are in a single-digit number.
Okay, all right, Jigar. Thanks a lot for joining in. Have a rocking Diwali. May the fatakas, just explode for you all. Wealth, health, and happiness, Jigar. Thanks a lot for joining in.
As well. Thank you.
that part of the show when my man is joining in. The birthday boy, the birthday celebrations, going to be popping the champagne later today, cutting the cake, and the celebrations will flow in. Double the marker for Hormuz, but for the time being, he wants to tell us about all those that are moving and shaking besides him. Hormuz.
Thank you so much, Nigel. And what's already popping the champagne are all the banking names. You pick a name up and it is moving, a trigger or no trigger. You take a look at the volumes at which these stocks have moved today. Look at DCB Bank. Of course, the earnings were fairly strong. Look at almost 5 crore shares have been traded on DCB Bank. The 20-day average is just close to 7 lakh shares. RBL Bank, of course, was supposed to be in the news all along, but 9 crore shares have been traded and it's almost double of the earlier average. Federal Bank has almost had 5 crore shares traded, 10x of its 20-day average. AU Small Finance Bank at record highs, again 10x of its 20-day average. And look at the volumes on South Indian Bank today. The stock is up 18%, but we have had 26 crore shares that have been traded, and the 20-day average is just around about 1.7 crore shares. So moving on very, very strong volumes is South Indian Bank. The other one is Dunseri Ventures. Now, the stock was down 20% last Friday, seeing a rebound in today's sessions, up 10% today. And today's volumes have already surpassed the volumes that the stock had on Friday when it fell 20%. Now, if you take a look at the total volumes that have traded today, they have had significantly higher than their 20-day average. They are the highest since November of 2023. And we have had close to 70.5 lakh shares that have been traded. The 20-day average is 62,000 shares, not 6,200. And despite this, the stock is still below its key moving averages, down 11% so far on a year-to-date basis, and annual returns positive since 2020. And the last one on the list today, Rajratan Global Wires, the biggest single-day gain that the stock has seen since April of this year, so the biggest intraday move in 6 months. The volumes today are the highest in almost 9 years. They are the highest since October of 2016 on this 18% move on Rajratan. 31 lakh shares have changed hands. The 20-day average is only 54,000 shares, and the stock has now moved well above its 100-day moving average of 369 and even its 200-day moving average of 379. So above all of the key moving averages is Rajratan. But despite this move, the stock has been an underperformer, down 25% year to date, and has had 3 back-to-back years of negative returns. Back to you guys.
Thank you very much for that. We will slip into a break on that note. We'll come back with a few BTST calls from our technical experts. Stay tuned. Welcome back. The mid-cap index is up about 3/4 of a percentage point. On the way down is Ola Electric. You're seeing softness in JSW Energy, Hindustan Zinc. Swiggy is taking a bit of a breather. On the earnings reaction front, Tejas Networks has been a big accident. Tanla Platforms too, where the earnings growth continues to remain very, very modest, just 7-8% up on a year-on-year basis. UTI AMC has taken a knock, and Dixon, we've been talking about that, that's still lower by nearly 4%. But for all the action in the futures and options space, Nigel has walked over to the F&O desk.
Few minutes before expiry plays out, and the reason we've come off the top is because the call writers, they're trying to come back into the game. So if you look at it, the 25,850 call, you've got the direction right because the Nifty is higher. However, you're not making money if you bought that strike because there is aggressive writing that you've seen out there. That's why the premium has collapsed. On the downside, the 25,800 put as well, let's see a fair bit of open interest build up. And the premium from around 100 rupees, it's down to almost zilch out there. So we have a bit of a range, 25,750 on the downside, 25,900 on the upside, going by the options data. Individual stocks that we're looking at, ICICI Bank, there's a big shorting that we're seeing in that particular name. Stock is down, open interest has swelled up, and that's a big underperformer actually from the Nifty Bank itself. So that stock should come up for you on the screen. On the flip side, actually, you have fresh buying being seen in AU Small Finance Bank. Surge, just take a look at the surge we've seen in the stock, and it's backed by big open interest build up as well. So that's clearly the big mover in today's trade. Reliance Industries, that's done the heavy lifting. It's taking out some crucial technical barriers today. The stock, if it can go 30-40 points rupees higher in the coming few trading sessions, it could trigger a bigger short covering bounce. But today we have a bit of a demo or a trailer that's taking place on Reliance Industries. And finally, even on RBL Bank, there's a big short covering bounce that's taken out. The open interest, if I got that number right, the open interest is down by close to around 10% and the stock is firing up. However, I think RBL Bank continues to remain in the F&O band, going by the data points that it just had. Earlier this morning, there was big shedding, so it appeared like it could come out of the F&O band, but I think it could spend some more time in the F&O band. Back to you, Rima.
Thank you very much for that. Jain Resources is spiking up. It's one of these recent listings. It's a company which recycles copper waste and makes it into a little more value add. So it's a big play on India's recycling potential, and eventually the company says they also perhaps are looking at exploring electronic recycling since we generate so much of that. So Jain Resources is moving up, and the other one is Tilaknagar Industries. Remember, it also entered into the premium whiskey play post the acquisition of Imperial Blue from Puerto Rico. That happened a couple of months back. So again, a play on premiumization, and that's a stock which is spiking up, 4% up on that. Mitesh is back with us for a few more BTST calls. Mitesh, it's a long 2-day holiday. I mean, tomorrow Muharram trading, but what's the advice?
I think IDFC First Bank, which we had mentioned earlier, looks good to me for a BTST kind of a trade. The idea is that the stock is seeing good continuation, the sector is enjoying momentum. So BTST here is the stock at 76.20 and a target of around 78 when we look at. The other stock which I like, that's something which I recommended in the past. We said that is JSW Energy with a stock at about 529 so 519.
Thank you. But banks is where it's all happening today. The Nifty Bank has also hit a fresh record high. Gaurav now joins it with the fine print of the banking numbers that came out over the weekend, including the big ones, HDFC Bank and ICICI Bank.
Well, first let's talk about the big banks. HDFC Bank, when we look at it, profit increased almost by 11% on a year-on-year basis. And what remained positive is that the net interest margins, they declined by 8 basis points, but it was in line with the street's expectation. The asset quality, that also remained healthy. The credit cost came in at around 0.5%, and at the same time, management said that in FY27, they will grow faster than the industry. Apart from that, when we look at ICICI Bank, results were good, but at the same time, when we look at the other metrics, net interest margins that declined just by 4 basis points. Now, it was a positive actually. In fact, when we look at profit that increased by 5% on a year-on-year basis, but now the street is a bit concerned about net interest margins growth. Because remember, management said that the margins are likely to remain range-bound in the next quarters. And now brokerages say that this is actually a bit negative given that other banks are giving a guidance of improved margins in the next 2 quarters, and whereas ICICI Bank says that the margins will remain range-bound. Apart from that, there were some small banks who are buzzing in trade today. First, let's talk about AU Small Finance Bank. Now, the key triggers which are actually driving the growth. First is that net interest margins that expanded almost by 5 basis points on a sequential basis. Apart from that, the credit cost, now that declined almost by 26 basis points to around 1.7%. And in fact, management says that the credit cost is likely to be around 1% for FY26. Apart from that, when we look at loan book growth, that also was healthy at around 22%. When we talk about DCB Bank, here also we saw net interest margins actually expanding almost by 3 basis points. And at the same time, this bank also gave a positive surprise in terms of credit cost that declined sharply by 28 basis points on a sequential basis. And remember, management, while talking to CNBC, also said that the credit cost is likely to remain somewhere in the range of 40 to 45 basis points. Remember, the bank is also moving towards the 1% ROA mark, which is positive. Lastly, let's also focus on IDFC First Bank. When we look at net interest margins, although they declined almost by 12 basis points, and now they stand at around 5.6%, management said that by the end of FY26, we will see net interest margins somewhere in the tune of 5.8%. Credit cost, now that declined almost by 50 basis points, and here also management gave a positive guidance, and at the same time they also said that the bank will achieve 1% ROE in FY27, which is currently at 0.4%. All of these banks, when we look at the stock performance, they are up more than 5% in trade, so definitely it will be worth watching out on how investors gain in trade from these banks in coming days as well.
Thank you very much for that. Sudeep Bandyopadhyay is now joining in on the last leg of the show. Sudeep, when we started Closing Bell, we asked Dipan his Diwali pick. And he said it's ITD Cementation, whose name is now changed to SEM India, is owned by the Adanis. So same question to you. If you had to recommend one stock for the next somewhat, say 12 to 18 months, what would it be?
Well, I think I'll, Rima, go for large cap universe, and I will recommend two stocks, not one. One is Ultratech Cement. We have been bullish on cement for quite some time, and our kind of thesis gets more and more, improved with what's happening on ground. We are very strongly positive on Ultratech Cement. Look at the greenfield expansion which they have announced, and the cost per ton of the expansion. I think it's quite impressive, and of course the demand is going up. The demand supply situation is such that the pricing power is definitely going to be there with the manufacturers for quite some time. The cost efficiencies have been kind of extracted very, very well. So, Ultratech Cement from a one-year perspective, definitely worth buying. The other stock I will take the opportunity and recommend is Bharti Airtel. I think, we know what's happening with Vodafone, Airtel, and the AGR reviews, and, what's happening in the Supreme Court. The expectation is that some relief will come. Of course, I'm not talking about Voda here, but if Vodafone gets a relief, I think it will automatically also result in relief for Bharti Airtel, which will be a bonus on top of whatever else good things is happening at Bharti Airtel, which includes the ARPU increase as well as the margin improvement, international business doing better and better. So I think both these stocks from a long-term perspective, one-year perspective, definitely needs to look at.
Thank you. And of course, the big bet is that Jio, ahead of the planned IPO in the first half of next year, will also do a tariff increase, because the last tariff increase happened about 15 months back. So investors are betting that the industry will take another tariff increase because that will just help the Jio IPO. But Sudeep, request you to stay on because we just want to get our viewers some of the interesting Diwali, bites, the opinions that we got. So as India's dream, the question is, has India's dream run finally paused, or is this a catch-up phase before the next leg? We spoke to a few market veterans who, let's listen into what they had to say.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25, 27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World, excluding US, is up some 23-24%.
Right.
So you can do it because you are upset with US policies or tariffs.
But there's performance as well.
And there is, so it's not that I don't like US. Little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US or 2% and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully
of
that
India.
also perhaps.
That I think is getting over.
This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat.
Right.
If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Which is PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized. Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
Traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental things. That all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We are all talking these central banks are buying, dollar debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.
Well, the gains are still there. It's still green on the screen. But Nigel has hopped across from the studio to our newsroom, where I think he's got a pretty charged up atmosphere all around him. Look at that. Nigel, what a full frame.
Well, Surbhi, this is the entire CNBC TV18 team in its full glory. We have all the morning producers with us. We have the evening producers, all those graphics that come up for you on the screen. If you feel they look good, well, these are the people behind that. We have our, our debates, and ultimately we try to put the best on the channel as well. And Ritika is our head of the morning team. My best friend. And obviously, if you find the guys that look good, on a day-to-day basis, and if you find the ladies' hair looking very, very good, then we have the makeup team. Dada. So Ivan, Santosh, we have all the ladies who, make sure that Surbhi's hair in particular is looking good, because she's a bit of a problem pocket in the morning nonetheless. But the man, I think, who's been here for the longest amount of time and the backbone of the channel is Shankar sir. Shankar sir, you're going to be saying a few words for us, I believe. And I think the audience says, Shankar sir, Shankar sir is going to be, he's been a guide, not, obviously to me, but to many, many anchors and people have been here for long. So Shankar sir, how do you feel?
I just want to wish happy Diwali to all our viewers, everybody. Yeah. That's all. This is the time to have fun. Let's have fun.
Okay, all right. And so Shankar sir, I better not push myself, otherwise could be a little bit more trouble. But let me introduce you to a couple of stars, who we don't see very, very often on the channel as well, but very, very, have a vibrant presence on digital. Diya, do you like to say a few words? How do you feel? How many Diwalis have you been here?
2.
And how do you feel about it?
Great. Amazing.
Yeah. I believe my boss as well is joining in. Sonal Sachdev is going to be saying a few words for us. A few words. Our audience, the man behind everything, all the research that comes out, who pulls us up and on, but that's part of the job. Yeah. Sir, how do you feel?
All good. Very good. Wish you all a happy Diwali.
Thank you so much, sir. Thank you. But I think we have a couple of more people who have come in there. The PCR, when we are in studio and you have someone who's telling you what is to be done, what isn't to be done, and obviously, being the backbone and basically the heart and soul of the show is the PCR. And the PCR team is here, finally. Kashi hai? How do you feel, madam?
Good.
What is special about this Diwali?
We all are together, more than that.
And madam has been smiling for the last few days as well. So a few more words from you. How do you feel? How many years have you been here?
20 years.
20 years, wow. So you have grown with the channel.
Yes.
And it's going to be a fantastic Diwali?
Yes.
Yeah? Akansha, what about you? The little baby just celebrated her birthday, and you as well celebrated your birthday. So what's the feeling like?
Good. Awesome to be here. Happy Diwali, everyone.
All right. And we have the digital team as well. Tapsu is here. Tapsu, how do you feel?
I feel amazing.
Happy Diwali.
Happy
All right.
Diwali.
Last 10 seconds. So let's get to the countdown. 8, 7, 6, 5, 4, 3, 2, 1. Well, that's the bell for you. It's been a good trading session. I think we have a few more people who are going to be joining in to ring the bell, if you would like to. But it's been a good trading session, and I think no better way to celebrate when CNBC TV18 in its full glory is here. Producers, the makeup artists, you have the hairdressers, PCR team, the backbone, Shankar sir, who's kind enough to give us a few words. So it's that sort of an atmosphere. We're feeling like it's Diwali. It's beginning to look like Diwali. I think Reema wanted to say that the other day. It's not only beginning to look like Christmas, but Diwali as well. So it feels good. Let's ring it one final time before we toss it back. All right, guys, let's do this together. 1, 2, 3. Happy Diwali! Well, I think that's it with regard to entertainment from here. Now, post-market, we'll meet again. But thanks so much, and good trading session. Back to you guys in the studio.
Thank you so nicely done. I'm so glad you called out all those names, because you just see 4, 5, 6, 7 of us here on the screen. But there's an army out there behind the screen that's working to bring these shows to you day in and day out. The news never stops, and nor do we here at Team CNBC TV18. So thank you for joining in. Wish you all a happy Diwali. Of course, Rima's taking a leave. I'm going to continue. Vivek's coming up next because we'll wrap up the day's action on Markets Forward in just a minute.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, बेस्ट है सबको पता है. And बैंक ऑफ बड़ौदा के संग त्योहार की उमंग. Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
The market ends higher. Sensex and Nifty close near one-year highs. The Nifty crosses 25,900 in intraday trade. The Sensex is near 84,400. Broader markets outperform. PSU banks and IT among the top gainers.
The street cheers Reliance Industries' strong operational performance, with most analysts upgrading the stock and also upgrading their price targets. The strong showing by retail, Geo and O2C segments boosts confidence.
In the largest ever foreign direct investment in the Indian banking sector, Emirates NBD is set to buy 60% stake in RBL Bank for 26,850 crore rupees. The infusion is seen as a big boost for RBL. Meanwhile, Federal Bank refuses to divulge any possible interest from a prominent private equity investor in the lender, but it has lined up a board meeting to consider raising funds on the 24th of October. The stock jumps in trade.
Shares of Dixon Technologies slip in trade after its Q2 numbers, revenues, margins and profit after tax were in line. However, the mobile volume growth missed street expectations. The management tells CNBC-TV18 that the margins can expand by an additional 50 to 60 basis points going forward. The management also cut the revenue growth guidance for FY26. Hello and welcome to Markets Forward. This Diwali day, good afternoon, Surbhi. The street clearly cheering Diwali. It's a sea of green across, just like the color that you're wearing. The Nifty high by over 130 points. The mid-cap and small-cap indices doing quite well. And Reliance Industries, the big boy, the heavyweight, doing very well in the session amongst the top Nifty gainers. In fact, the second best performer on the Nifty today. And it's a heavyweight, it has very high weightage on the Nifty, taking the market significantly higher today.
Oh, absolutely, Vivek. I mean, what a day and what a month it's turned out to be so far, right? October, the market's already up 5%, and today was no exception. Bulls were in Diwali spirits through and through, and a whole host of weekend earnings that came in, especially from financials, big names like ICICI, HDFC Bank, even smaller names like a Federal, like we told you in the headline. Many of those stocks were up and about. In fact, financials saw pretty much across the board buying today. The mood has been very, very upbeat. You only had a few misses, and we'll, of course, discuss some of these stocks as we go along. For instance, Dixon, where the expectations from the company's mobile business are running very, very high, but there was a bit of a miss in terms of delivering on those expectations. So you had some snippets here and there, but largely it was a very positive session. We had mid-caps outperforming, as Vivek pointed out. And the mood in the market is that it's upwards and onwards from here. So let's kickstart the proceedings. As always, we have Hormaz, by the way, who's birthday boy and who's still here with us on Markets Forward to give us a detailed account of how somewhat 2081 closed out. Hormaz, happy birthday, first of all. Now tell us about the market action as well.
Thank you so much for that, Surbhi. A year older, maybe a year wiser too, hopefully. But the party was actually being had by the banks today. You pick up a banking stock and the stock would be higher, barring a couple of them, of course. When you look at South Indian Bank, where the numbers are flattering to deceive, but the stock is up 17%. DCB Bank on very strong results. RBL Bank, of course, was potentially poised to be the stock of the day today. But in light of that deal, you take a look at the moves in these other smaller banks. Look at CSB Bank, look at Karur Vysya Bank. They don't have an immediate earnings trigger, but still ending 7 to 8% higher by themselves as well. What was the other pocket that did well today were the tire names, and they got lost in the banking melee today. CEAT, after its results, ended at a record high, 13% higher on the stock, and that took its other tire stocks along with it as well, like JK Tire, Apollo Tires, MRF, all of them. MRF now at 1,60,000 now, and ending another 4% higher in today's session. But not all was green on the screen today. There were a lot of negative earnings reactions, and on the extreme side as well. You look at Tejas Networks was down almost 9% today. UTI AMC at one point was down 10, but then it recovered from the lows of the day, still ending around 4.5-5% lower. ICICI Bank was the only banking sore spot today, still ending well over 3% lower. Brokerages have raised concerns over the growth that the lender is seeing, and Dixon Technologies, of course, after the cut to their guidance, And look at stocks that were at a 52-week high. Unsurprisingly, there were financial names here as well. Federal Bank was up 7. Nippon India AMC did well today. Radico Khaitan, Cipla, all of them ending at 52-week highs. But there were some names that saw some profit booking today. Tata Investment, which was on an absolute tear for the first part of October, this was down around 9.5%. Tanla Platform saw some profit booking, and Jubilant Ingravia too, ending with losses of well over 3%. Back to you guys.
Thank you so much, Harmaz, for joining us and giving us a neat wrap of all of the top movers in today's trading session. Well, joining us today on the show is market expert Sudeep Bandapadhyay. Thank you so much, Sudeep, for joining us. Well, the first question, of course, has to be on Reliance Industries. Very strong outperformer today. Do you feel that from this point on, O2C segment as well as Jio can continue to perform well?
Oh, absolutely. I think we have been waiting for this for quite some time. O2C has delivered the numbers which were expected of them. Telecom, definitely, there is a Jio platform IPO which is scheduled in the first half of next financial year. And before that, I think one more round of tariff increase is expected. So you will definitely get to see a better set of numbers and value unlocking happening through Jio platforms. I'm also positive on the retail side of the business where things have started improving. They have tightened, they have kind of streamlined operations. And of course, FMCG business has been taken out from the retail. That itself also is growing very well. I won't be surprised if some sort of value unlocking is planned for that as well in the near future. Bit of announcement, bit of news, more news flow on the new energy business was expected. That didn't come this time. But overall, I think fantastic set of numbers. And naturally, the market got excited. We have been positive on Reliance for quite some time.
Okay, positive on Reliance and a big move on the stock today. Absolutely, Sudeep. Sudeep, we want to talk to you about the banks as well, because the banks are turbocharging this rally, aren't they? And we've had so many numbers over the last 48 hours or so. So let's do one thing. Let's actually first go across to Gaurav to outline how the big boys have done, both ICICI Bank and HDFC Bank. And the numbers were fairly pristine, I guess. Gaurav didn't see too many complaints. Gaurav?
When we look at HDFC Bank, the profit increased almost by 11%, which was actually higher than the street's expectation. Net interest margins, when we look at this number, that declined just by 8 basis points, and at the same time, credit cost, that also declined almost by 5 to 6 basis points. Now it stands at around 0.5%. When we look at the commentary, now again, management has reiterated the fact that in FY27, their growth will be higher than the system. So overall, when it comes to numbers, those were in line. Specifically, when it comes to profit, that was higher than the expectation because of higher trading gains in this quarter. When it comes to ICICI Bank, once again, we saw numbers which were in line. Specifically, profit, that was actually higher than the street's expectation. That increased almost by 5% on a year-on-year basis. In fact, a big surprise was net interest margins that just compressed by 4 basis points. But what is concerning the street right now is that management said that the net interest margins will remain range bound. Specifically, if you look at other banks, they are indicating net interest margins to expand in second half, whereas ICICI Bank indicated that net interest margins will remain range bound. That is something which was weighing in on the stock price. Apart from that, there are some stocks that we should call out for. First is AU Small Finance Bank. We saw NIM expansion by 5 basis points, credit cost decline almost by 26 basis points, and loan book growth that was strong at around 22%. DCB Bank, here also we saw NIM expansion in the range of 3 basis points, credit cost that declined almost by 28 basis points on a sequential basis. And remember, this bank is going to reach 1% ROA in the near term as per management expectation. Lastly, let's also focus on IDFC First Bank. Here we saw actually NIM compressed almost by 12 basis points sequentially, but management gave guidance which indicates around 20 basis points of upside on net interest margins in the next 2 quarters. Apart from that, credit costs that declined almost by 50 basis points, and they also said that the bank will achieve ROA of 1% in FY27. All of these banks, those were also up in trade today. So apart from the big banks that we saw, the small banks, those were also buzzing today because of the strong results that they delivered in second quarter.
That's right, Gaurav. Gaurav, it was a very busy weekend for you. So many large cap results from the BFSI space. But stay with us and take us through the developments. Number one, Emirates NBD's plan to buy a 60% stake in RBL Bank, and Federal Bank's response to reports of private equity interest in the lender. Back to you.
Well, yes, when we talk about the RBL Bank, Emirates NBD is going to invest around 26,853 crores to get around 60% stake in the bank. Remember, this is the largest ever FDI investment in the Indian banking segment. And after that, Emirates NBD has also made a mandatory open offer at a price of around 280 rupees to acquire another 26% stake. When we look at the benefits, some of the benefits to highlight is that this infusion will result into 3 times increase in net worth from around 15,000 odd crores to more than 42,000 crores after the infusion is completed. Second is that this will mark as the beginning of the bank's next growth chapter as per management, which will be stronger, more diversified and future ready. Now, the next date that you should be watching out for is 12th of November, where EGM will happen, where they will seek shareholders' approval. Specifically, when we look at brokerages, they are also bullish about this deal. In fact, Investec, they increased the target price to 430 rupees. And we also got Citi, who increased the target price to 390. And IIFL gave a target price of 375. Apart from that, when we talk about Federal Bank, there were 2 key reasons. First is that when we look at results, those were actually better than the street's expectation. Specifically, profit that declined by 10% on a year-on-year basis, but it was lower than what the street was expecting. When we look at the net interest margins, they expanded almost by 12 basis points. It was a big surprise. And second thing which is keeping the stock afloat is that 24th October is a date where board will meet, where they will consider fundraising via equity. Now remember, the capital ratios that the bank currently have are adequate, and that is the reason why there is a room for speculation that we've already seen some of the PE deals happening in the banks. So there could be another PE deal which could happen in Federal Bank. Now, the bank has not confirmed yet, but at the same time, while asked upon the meeting about the meeting on 24th of October, they neither denied nor confirmed if it is going to be just an enabling resolution. So definitely both the things, first is that stronger numbers and second is speculation. Both the things are actually keeping the stock afloat. As we speak, when we look at the stock, the day's performance was at around more than 6.5%.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. Yes. When the book value moves up, this is something which is going to add up to your market value, market cap will go up. So taking all these considerations, I feel, it's open offer may not kick in much of the numbers, and it is hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that.
Okay, that was the management of RBL Bank. Remember, Gaurav was talking about that bank earlier, where the big mega deal has happened. Almost 29,000 crores of FDI coming in thanks to Emirates NBD's stake purchase. And therefore, the management was commenting on that. For the time being, let me quickly go back to Sudeep on these 2 banks specifically. Sudeep, what did you make of the RBL transaction, and what would your stance be on the stock? And Federal is at an interesting juncture till we know more about this capital raise. But otherwise, overall numbers look pretty okay for Q2.
Absolutely. Federal Bank numbers definitely look better than what we were expecting. And of course, if there is a transaction happening, we have to see the contours of the transaction, which we'll get to know this Friday. But if there is a transaction and if there is a significant capital raise, it should be good for Federal for the next leg of growth. Remember, beyond everything else, Federal has also moved into gold lending, gold loans in a big way. And I think they have been doing reasonably well in that space. And incremental capital will help them in expanding that business as well. Which is a very safe and sound business. As far as RBL is concerned, I think it's a landmark deal, and I think investors will do good to enter into RBL even now. We are very positive. I think a new chapter in the life of this bank is starting with a significant boost in capital and a scope to increase the business from more than double. They can take the business to more than 2 lakh crore is the capability of the capital infusion to take the business to. So it should be a fantastic opportunity for this bank. Of course, implementation on ground is very important, but as things stand today, the stock definitely looks worthwhile to buy even at current levels.
Well, get your point as far as RBL Bank is concerned, Sudeep, but do stay on. we'll move on to another important story of the day. Remember, the stock price of digital tech slipped in trade today after their Q2 numbers. While Q2 performance was largely in line, the company went ahead and downgraded certain key guidance parameters. Upasana joins in with more details.
Well, company has cut its FY26 revenue growth guidance to 30 to 35% from 40 to 45% guided earlier in Q1. If you look at the numbers for Q2, they were across board in line set of numbers with revenue, PAT and margin, all three of them being in line with the street estimates and with our poll as well. Now, if we talk about the company's key segment, that is mobile and EMS, it has seen a strong growth of 41%, but other segments lagged because of the weak demand due to deferred demand or GST rate cut. Now, if you look at the volume growth for smartphones, sequentially, there has been a volume growth of just about 8% versus 15% is what the company had guided for. So it's a miss on this front as well. Now, if you look at the long-term guidance given by the company, their revenue target is 1 lakh crore and the EBITDA margin might go up to 4.5% is what the company is guided in the upcoming quarters. Now, let us look at what the brokerages are saying. CLSA has cut its target price to 18,800 per share. It says that the PLI scheme discontinuation may pressure the margins in early FY27. Nomura has given a buy call with a target price of 21,152. It has cut its revenue estimates for FY26 to FY28, but it has kept its margin estimates intact for the company. Nuvama has given a whole call with a target price of 16,600. It says that the margin pressure is possible in FY27, but from medium to long term, the growth remains intact for the company. And lastly, Phillip Capital has given a sell rating with a target price of 9,085. It says that the FY27 mobile phone volume guidance cut by 10% and margin pressure is expected in H1 FY27. Hence, we can see the stock was in pressure today.
Well, thank you so much, Upasana, for joining us and giving us a sense of what exactly dragged the shares of Dixon lower today. But remember, the street cheered Reliance Industries' strong operational performance, with most analysts going ahead and upgrading both the stock rating as well as their target prices. Sonal joins in with more details.
It's a strong set coming in from Reliance Industries, a top-down beat which was led by their retail business, their auto chemicals business and digital services business as well. Let's talk about the EBITDA first up, which was at a 6-quarter high this time, came in at 45,885 crore rupees, which is higher on a quarter-on-quarter and on a YOY basis. The profit at 18,165 crore rupees is also better than estimates. It's higher on a YOY basis. Sequentially, it will look lower, but do remember, in the quarter gone by, there was an element of stake sale in Asian Paints to the tune of 8,900 crore rupees. So there was higher other income in the quarter gone by as well. Reliance retail revenue grew at 18.6%, which compares with estimates of around 13 to 15%. Jio EBITDA growth came in at 17.5%, led by higher revenues. Also, there was a 240 basis points improvement in EBITDA margins at 56.1%. Brokerages, they are quite sanguine. Nomura has gone ahead. They have increased their EBITDA estimates by 4 and 12% for the next 2 fiscals. They have a buy rating with a target price of 1,700 rupees a share. Morgan Stanley has an overweight rating, target price 17.01. They say Reliance Industries' earnings this time should improve confidence for investors, and consumer retail is turning around and beating estimates as well. JP Morgan has an overweight at a target price of 16.95. Second quarter is operationally better and growth should sustain in the near term according to them.
All right, so that's Reliance Industries, cheering up the streets, sparking the Diwali mood with a pretty solid performance in the second quarter. Sudeep's already given us his view on Reliance. So Sudeep, before we let you go to enjoy your Diwali break, a lot of weekend earnings. I mean, tell us what stood out, if anything, any new stock ideas as you've gone through a whole batch of earnings in the last couple of days.
I think the BFSI definitely does look good. Market is also pretty excited with the BFSI numbers. I would draw the attention to some of the PSU banks because valuation-wise, even now, I think there is an opportunity for an upside. So some of these smaller PSU banks definitely can be looked at. Also, there is a talk of a consolidation, which may be in the offing, and that should also unlock some value. So while SBI continues to remain our favorite amongst the PSU banks from a long-term perspective, some of the smaller banks, particularly let's say Central Bank of India, can be looked at because I think that the valuation does really look attractive from the perspective of peer comparison.
Well, thank you so much, Sudeep, for joining us and giving us your view on some of the key numbers and key stocks that you have on your radar for the coming days and weeks. So with that, it's time for a short break. We'll get you top corporate voices along with key market events to watch out for on the other side. Welcome back to Market Forward. Well, let's now go across to some key corporate voices. First up is Hindustan Zinc. The stock slipped in trade after the company said that they have hedged part of their silver sales in the second half of the year at $37 an ounce, which is at a sharp discount to current silver prices. The management adds that value unlocking through demerger of silver business will be explored at a later date.
Okay, let's talk about the next company on our radar, Havells India. The management expects a big turnaround in summer products. It guides for strong second half growth. The company is saying that it expects some growth in the third quarter and a stronger rebound in Q4. And it adds that trends remain fairly positive in the wires and cables business.
Well, with that, it's a wrap on this edition of Market Forward. Wishing the entire, all of our viewers a very happy Diwali. Myself and Surabhi and the team that put the show together. We will leave you with some food for thought on the markets. Listen in.
Happy Diwali.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World excluding US is up some 23-24%.
Right.
So you can do it because you are upset with US policies or tariffs.
But there's performance as well.
And there is so it's not that I don't like US. Little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US or 2%, and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully
of
that
India.
also perhaps.
That I think is getting over.
This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat.
Right.
If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized. Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Presented by Standard Chartered.
Well, the Festival of Lights is here, and here's wishing everyone a very happy, prosperous, safe Diwali. I'm Shriram Finance, and from all of us here at CNBC-TV18, thanks very much for tuning in to us as we usher in a new Samvat. Hello and welcome to Business 360. Here are the top stories that we're tracking for you this evening.
3, 2, 1.
The Sensex and the Nifty hit a 52-week high as somewhat 2081 ends. The Nifty is up 4% this year, even as many other emerging and developed markets clocked double-digit returns. Precious metals dazzled this Diwali, outperforming every other asset class. Gold and platinum prices are 60% higher, while silver prices surge by 80%. President Trump says India will continue to pay massive tariffs if it continues to buy oil from Russia. Claims once again that Prime Minister Modi has promised not to buy Russian oil.
China's economy expands at 4.8% in Q3, the slowest pace of growth in a year, but Beijing maintains it can achieve the full-year growth target of 5%. The Chinese Communist Party kicks off its annual meeting where President Xi is likely to outline the growth roadmap for the next 5 years amidst trade tensions with the US. Shares of RBL Bank rally after Middle East banking powerhouse Emirates NBD announces a landmark 27,000 crore rupee deal to buy 60% stake. This is the largest foreign direct investment in India's financial sector. This is also the first time a foreign bank is acquiring a majority stake in a profitable Indian bank. Large private banks deliver in Q2. ICICI and HDFC Bank meet expectations even as margins come under pressure. Smaller private banks report some improvement in margins as credit cost declines. Tata Trust likely to renew the terms of 2 trustees at the Sir Dorabji Tata Trust. Sources close to the Tata Group say the proposal circulated to extend the terms of Venu Srinivasan and Mehli Mistry. All trustees need to sign off on the renewal by the 23rd of October. At least 97 Palestinians killed in Gaza since the ceasefire took effect. Israel and Hamas accuse each other of violating the truce. President Trump says the ceasefire is still on. U.S. Special Envoy Steve Witkoff and Jared Kushner arrive in Israel. A major outage at Amazon Web Services takes down several online services, including Amazon, Alexa, Snapchat, Roblox, Fortnite, Perplexity, and others. The cause of the outage is currently unclear. Well, let's start with the day's market action. The Lal Street ending higher with the Sensex and the Nifty nearly hitting a one-year high. The Nifty crossed the 25,900 mark intraday and it closed strong for Samvat 2081. So 0.5% higher on the Nifty. The Sensex, similar story. The mid-cap index also not doing badly at all, fueled by strong private bank earnings that we saw come in over the weekend. And that's the market for us. It's up 4%, even as many other emerging and developed markets have clocked double-digit returns for the year. Surbi standing by now to take us through the market action. Surbi, it's the close of Samvat 2081 and all set for the new year.
Well, Samvat 2081 has drawn to a close and it has taught investors a very, very important lesson in equity investing. And that is the lesson of patience, the virtue of patience. And as we get ready to welcome the new Samvat, the question is, will the rewards of this patience actually come through in Samvat 2082? Well, that is exactly the positioning and the thought that the market is taking right now. We've ended the Samvat on a fairly optimistic and positive note, with a lot of experts in the market saying that perhaps this consolidation phase that we've been in over the last 1.5 years, it's perhaps coming to an end. So let's come and look at the numbers first. So the year that's closed out, the Nifty managed a gain of just under 4%. The mid-cap index was absolutely flat. The small-cap index slightly lower, actually, falling about 4.5%. If you look at individual stocks, there was a fair amount of pain. Time correction, if not price correction, really playing out. However, if you look at the sectoral spread, I'll just pick out the best and the worst performing sectors. The worst performing sector, IT, and we all know why, directly exposed to the US. A lot of issues out there. Aside of H-1B visas, aside of all the rhetoric that we're getting from the US administration, just lack of growth, low single-digit growth posted by most of the large IT services companies. So down 18% on the Nifty IT. On the other side, the Samvat that's closed out brought about a brand new sector to invest in, and that was the defense space. The Nifty Defense Index actually ending with gains of about 25%. And again, a near consensus in the market that levels may vary, there might be volatility, but it's a sector that's here to stay. And that was the new investment theme thrown up by the Samvat that's closed out. Now, what were the issues? Why did we have this sort of a lackluster one-year range-bound move? Well, quickly to wrap it up, of course, we had the India-US trade war. The fact that after Liberation Day, we were not the first in line to get the deal as was initially anticipated. We had the India-Pakistan war. We had, of course, this relentless global AI trade that is showing no signs of abating, at least as yet. And that's where the money was literally going. Then we had, of course, FPI selling because India did not have a deep tech or an AI straight-up offer to give to the foreign investors. And therefore, the foreign money was going elsewhere in a lot of the other regional markets in our neighborhood. And then, of course, elevated valuations was a point of concern. However, the tide has started turning in October, and as we, celebrate Diwali, the festive cheer is really apparent, and it's more than just the festive spirit. Let's look at the numbers again. Month to date in October, the Nifty is up 5%, the mid-cap index is up 5%, and even the small-cap index has shown a sparkle of about 3.5%.
Surbhi, many thanks for joining us. That's somewhat 2081. It is behind us. What can we expect in the new year? Listen in to top market experts with their bets for the way forward.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years.
The market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat.
Right.
If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well.
My premise is based on very fundamental thing. That all the noise about this gold and silver price is all technical in nature. There is nothing fundamental about it.
बैंक्स ही लीड करेंगे क्योंकि बैंक्स के स्टॉक्स अभी भी सस्ते हैं और काफ़ी अर्निंग्स ग्रोथ आने वाला है। जो पिछला क्वार्टर था वो तो एक्चुअली ख़राब क्वार्टर होना चाहिए था। उस ख़राब क्वार्टर में भी बैंक्स ने अच्छी अर्निंग्स दिए हैं।
Well, market voices there. One sector that has dazzled: metals. This Diwali, gold and platinum prices are 60% higher. Silver prices have surged by 80%. Manisha is standing by. She's had a busy last couple of weeks. Manisha.
Well, the somewhat gone by clearly belong to precious metals, which performed the best within the segment and as related to other asset classes as well. Gold and silver prices hit all-time highs, and we saw strong gains come in for various other precious metals as well. Well, this is because of the weakness in US dollar index, which is down between 8 to 10% in this year. The global economic uncertainty given the wars, geopolitics and tariff concerns as well. The slowdown, the Western debt also led to a lot of buying in tangible commodities, where gold and silver clearly took the best of the gains there. And then you had strong central bank buying, institutional buying, ETFs were surging as well. So everywhere that you saw, the money seemed to be rotating within precious metals. So when you look at the past year, we've seen gold prices gain up by 60%, silver is up 80%, and you have platinum prices almost 60% of gains therein as well. And the next chart shows you on what we've done in sense of Diwali to Diwali in last 1 year for many years now. And as you see those gains coming in from 2021 itself for the gold prices, but as you can see, every year we've seen gains kind of double up. If you look at the last 2 years, gold prices have doubled up in prices there. The next one is silver on your screens, and when you look at silver prices, well, we have seen silver prices double up in the matter of one last year itself. So last year during Diwali, we were trading at 94,000 rupees. We've seen silver prices hit 1,70,000 rupees as well in the previous week itself. So very, very strong gains coming in for this one. What has closed the year in negative has been the energy prices. So crude is down 18%, coal is down 29%. But the other metals also have done well. So palladium is up 41% in last 1 year. Copper is gained up by 15%. Aluminum up 6%. Not so much great gains for zinc, which has seen a 4% of a decline in the previous year.
Well, look at that rally in gold and silver. Manisha, many thanks for joining us. Now, President Trump has reiterated his claim that India has agreed to stop buying Russian oil for the second time in 5 days. Speaking to reporters on Air Force One, Trump said that Prime Minister Modi has assured him that India is not going to be buying more Russian oil. India's foreign ministry had said it was not aware of any telephone conversation between Prime Minister Modi and President Trump. When asked about this, Trump said, and I quote, "If they want to say that, then they'll just continue to pay massive tariffs."
I spoke with Prime Minister Modi of India, and he said he's not going to be doing the Russian oil thing, so that's it.
But why would India say that they're not going to do?
I don't know, but if they want to say that, then they'll just continue to pay massive tariffs, and they don't want to do that.
Well, that's President Trump reiterating his claim. And speaking of President Trump, the US president has said that he is willing to lower tariffs for China if the government is willing to, and I quote, "do things for the US." Now, these things will include buying soybean from the US and halting curbs on rare earth minerals. Speaking to reporters, Trump said, and I quote, "They have a very good relationship with President Xi of China. We're having disputes on things. They're paying us a tremendous amount of money in tariffs, and they would probably like to be less. And we'll work on that, but they have to give us some things too." End of quote. The statement comes after Trump announced a 100% tariff on China, which he himself later said was unsustainable. Now, China's economic growth slowing to a one-year low of 4.8%. That's the number for Q3. It's in line with expectations. Retail sales, fixed asset investment weakened. However, industrial output has seen an unexpected uptake. Beijing has said that the country is still on track to achieve the government's full-year growth target of around 5%. But the big corporate story, it is the biggest investment by a foreign financial institution into the Indian banking sector. Middle Eastern banking giant Emirates NBD will acquire a majority stake in RBL Bank for nearly 27,000 crore rupees. This is the single largest foreign direct investment in India's financial services sector and also marks the first acquisition of majority interest in a profitable Indian bank by a foreign bank. Let's quickly take you through the contours of this deal, which of course is subject to regulatory approvals. Now, Emirates NBD is looking to buy up to 60% stake in RBL Bank. The proposed investment will be via the preferential issue route at 280 rupees a share. The RBL board has approved the allotment of around 96 crore new shares. RBL Bank will seek shareholders' approval at an EGM on the 12th of November. Emirates NBD will also launch a mandatory open offer, and that is how it gets majority control. Take a look.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers, and it will be hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that.
Well, that's RBL Bank on the big deal with Emirates NBD. Here's a CNBC-TV18 exclusive. Tata Trust has issued a circular seeking the renewal of Venu Srinivasan's term as a trustee of the Sir Dorabji Tata Trust. Sources also say that all trustees have to give their approval for the renewal before the 23rd of October. Srinivasan serves as a trustee in both Tata Trusts. He is also a nominee director on the board of Tata Sons. Sources also say Mehli Mistri's term is likely to come up for renewal soon. Once approved, these appointments grant lifetime tenure. This comes amidst the alleged rift within the Tata Trust. Remember, Sir Dorabji Tata Trust and Sir Ratan Tata Trust are the two trusts that hold 51% stake in Tata Sons. The union government believes the latest GST cuts are being passed on to the consumer and will give a significant boost to consumption, which may rise by as much as 10% this year. Finance Minister Nirmala Sitharaman, Commerce Minister Piyush Goyal and IT Minister Ashwini Vaishnav addressed a joint press conference over the weekend. The Finance Minister said they were closely monitoring 54 items and there is not even one item where the government believes the tax cut has not been passed on.
Item by item, I'm here to tell you that which is weighted average of the reduction which should have gone to the consumer is going, and more is also being passed on. So there is a remarkable impact of this set of new GST rate reductions that have happened, and every item that I've monitored which is of relevance for day-to-day life of common citizens, 54, and we still continue to monitor them, the rate has been, the benefit has been passed on to the consumers.
Well, that's the Finance Minister on the impact of the GST cuts. We'll end to a break, but up next, a 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has been filed naming CEO Bhavish Agarwal after a complaint from the family. Details when we return. The big national story, Lalu Prasad Yadav-led Rashtriya Janata Dal has released its list of 143 candidates for the upcoming Bihar Assembly elections. RJD leader and former Deputy Chief Minister Tejasvi Yadav will contest from the Raghopur Assembly seat facing BJP Satish Kumar Yadav. 24 women candidates have been given seats, including Veena Devi, the wife of former MP Suraj Bhan, who's barred from contesting due to his conviction in a criminal case. RJD's total seats are one less than the 2020 Assembly elections, while Congress has fielded 60 candidates. A formal seat-sharing deal has not been announced. Meanwhile, the Jan Shakti Janata Dal chief and Lalu Prasad's eldest son, Tej Pratap Yadav, has been booked for allegedly violating the Model Code of Conduct during the filing of his nomination papers from Mahua. Air pollution in the capital continues to worsen, with the air quality index entering the very poor category. The government has imposed the stage 2 of graded response action plan across the national capital. Experts warn that Diwali firecrackers could push pollution levels even higher in the coming days. Prime Minister Modi celebrated Diwali with the Navy personnel on board the INS Vikrant off the coast of Goa and Karnataka. The Prime Minister celebrated the valour of the armed forces during Operation Sindoor. He spent a night on INS Vikrant. A 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has now been filed naming CEO Bhavish Agarwal after a complaint from the family. Now, Ola Electric has moved the Karnataka High Court, challenging the basis of the FIR. Rachna is standing by with the details. Rachna, what has happened here? Take us through what the police is investigating.
Well, Ola Electric's chief executive Bhavish Agarwal has been named in an FIR after 38-year-old engineer allegedly died by suicide. He has been named along with one more official of the company, Suprit Kumar Das, who, according to his LinkedIn, heads vehicle homologations and regulations at Ola Electric. Now, K. Arvind, who had been employed with Ola Electric since 2022, was found dead at his Bengaluru residence on the 28th of September. Investigators say a 28-page note was recovered from the spot, and the note refers to mental stress and blames company executives, including the CEO. The document is now a part of the police evidence and its contents are being verified. The complaint filed by his brother and father alleges that Arvind had faced sustained workplace pressure and humiliation while working at Ola Electric's head office in Koramangala in Bengaluru. Now, the FIR also records that 2 days after Arvind's death on the 30th of September, a payment of about 17.5 lakh rupees was made through NEFT from an Ola Electric account to his bank account. That transaction and whether it was routine or an attempt to settle dues posthumously is under investigation. The case has been registered under Section 108 of the Bharatiya Nyaya Sanhita, which deals with the abetment of suicide. Police say the investigation will focus on establishing causation, verifying the handwritten note and electronic communication, and tracing financial and managerial responsibility. Ola Electric issued a statement saying it is cooperating with authorities and has questioned the basis of the FIR, maintaining that there were no prior complaints against the executives named. But this is the second death by suicide linked to an Ola Group company in just about 6 months. In May, we saw a 25-year-old machine learning engineer who worked at Ola Krutrim die by suicide. Now, he was also found dead in his Bengaluru house, where the family similarly and his former colleagues alleged that he died because of work-related stress.
Rachna, many thanks for joining us. That is the latest, the matter under investigation. Now, the big international story: authorities in Gaza are claiming Israeli forces have killed at least 97 Palestinians, wounded 230 people since the start of the ceasefire. They allege ceasefire has been violated 80 times. The Israeli military claimed 2 soldiers were attacked, which prompted a wave of airstrikes. Meanwhile, President Trump has said the ceasefire in Gaza is still in effect. U.S. Special Envoy Steve Witkoff and the president's son-in-law Jared Kushner have arrived in Israel to oversee the ceasefire agreement. 2 people killed in Hong Kong after a cargo plane skid off the runway and hit a security staff patrol vehicle before ploughing into the sea. Police said that the 4 crew members on board escaped uninjured. The Boeing 747-481 was operated by Turkish carrier Air Act and was arriving from Dubai. Staying with aviation, 2 incidents of a fire inside flights has sparked concerns over the weekend. One incident happened on an Indigo flight and another on an Air China flight. Power banks carried by passengers appear to have caused the fire. Madiha is here with the details. Madiha, what's going on?
Well, 2 flights saw incidents of fire inside the cabin in 2 days, and there was one common cause. batteries on board. On October 19, an Indigo flight from Delhi to Dimapur had to return to the bay after a passenger's electronic device caught fire right inside the seat pocket. The crew reacted instantly, followed safety SOPs, and the situation was brought under control within seconds. Everyone was safe. Passengers were even served refreshments while the checks were done. A day earlier, on October 18, an Air China flight from Hangzhou to Seoul had a terrifying moment mid-air. A lithium battery caught fire in the overhead bin, forcing the plane to divert to Shanghai. Passengers panicked, but the crew's quick action prevented a potential mid-air disaster. All passengers were safely evacuated. Lithium batteries, found in phones, laptops, power banks can overheat or spontaneously combust if damaged or short-circuited, and that's why batteries are banned in checked luggage, because they can catch fire unseen. And this was decided back in 2016 after a series of cargo fires were seen, and when aviation regulators worldwide banned lithium batteries from checked-in baggage. So airlines tell you to carry them in the cabin where at least the crew can respond and contain the fire. But the problem now is when they start catching fire here too. So the FAA has logged dozens of such fires this year alone, from the phones, laptops, e-cigarettes, power banks, which are all perfectly legal to carry on board. Now it raises a tough question. If the cargo hold isn't safe and now even the cabin isn't risk-free, where do passengers really keep their batteries?
Well, that's the question, but fortunately, both those incidents are not ending in anything catastrophic. Madhya, many thanks for joining us. The Louvre Museum in Paris has been closed after a heist. The French Interior Ministry said that a number of people broke into the Apollo Gallery through a mechanized lift and took jewels, adding that the items that were stolen are of incalculable value. Officials said the thieves were carrying small chainsaws and escaped on a scooter. No injuries were reported, and investigation is underway. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Of course, stay tuned. Even though it is Diwali and it's being celebrated in large parts of India today, we are, of course, going to be working, and we'll bring you all the more trading action tomorrow. From all of us, thanks very much for watching, and again, a happy Diwali.
Presented by Standard Chartered. Special partner, Novama. Let's do it right.
Hello and welcome. It's that time of the year again when lights, optimism and the spirit of renewal takes center stage. As investors look behind the candles and crackers to the year ahead, we are here to decode what lies beneath the sparkle of markets this Diwali. Joining us today are two of India's most respected market voices. Manish Chukani is veteran investor, needs no introduction. Actually, both don't need any introduction. As I like to say, he's of course director at Enam Holdings. Madhu Khela is with us, veteran fund manager, and of course founder of MK Ventures. Again, needs little by way of an introduction. Together, we'll take stock of the year gone by, explore what the next Samvat could hold, and ask the question every investor, I think, is thinking about. Is this the time to stay the course, take profits if there are profits, and of course, or double down? Manish and Madhu, great to have both of you here. Thank you very much.
Thank you, Prashant. And a very happy Diwali to you, the entire team at CNBC and all your viewers.
Happy Diwali to you, Madhu bhai. Happy Diwali.
Happy Diwali.
I want to start not with stocks, but the hard stuff. Gold and silver is, I think, top of mind. Every day we are sort of seeing this dizzying move. It has been dizzying. Gold, $2,000 in 2020, almost $4,200. Silver has taken out this $50 mark, and it's been a dizzying rally. Manish, you've been talking about this move to hard assets, the dollar debasement kind of trade. But take stock of it from where we are, because what you do depends on what you've already done. So in that sense, what's your take?
So let me take 2 minutes to just give the background to how it plays out. That the world's always looked for something which is a store of value and a medium of exchange. And that's typically then centered around the US dollar ever since they broke what was the gold standard. What that has done is it's given the US the freedom to print money and effectively debase all other currencies and all other asset prices, leading to US now becoming 70% of global market cap. And they were at peak, I think, also 65-70% of global currency reserves. But every decade, this excess money printing has led to bubbles. So in the 70s, you had the Nifty 50 in the US, which then culminated in the rise of gold, silver and oil in 1980. In the 80s, it went to Japan and Taiwan. Their markets went up 12 times. In the 90s, it went to NASDAQ. In 2010 period, it was back to commodities and emerging markets, of which China was the center. 2010 to 20 went back to technology. And it got extended by the excess money printing which happened around COVID. And that led to also this money going into AI and stuff, which really has 10-15 year gestation. Great technology, but otherwise you would not have had that kind of money to pour into it. On that, when they started seizing the assets of the Russians and cut them off swift, I think the world woke up that we need an alternative to the dollar. And
they went back to the oldest.
And they went back to what they knew best. And remember, 2020 to 30 was also meant to be the changeover from tech to hard assets. So you got both the themes coming together, and this rise of gold, silver, uranium, hard assets. So when you get parabolic rises, typically the market pauses for breath, like a stock market. Last year we were very high. The market went sideways. We paused for breath. It cannot go up continuously. And as Buffett says, gold is a fear trade. It's an insurance. It's not a dividend-paying cash flow asset. Equities is your hope trade. So the world is clearly divided. The equities is going with the AI boom, which at some point will climax out.
So for now,
but this hard asset theme is here to stay.
But pause. I mean,
yeah, I mean, when you see parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit, but this bull market by no means.
Gold, by the way, going back in history, has corrected 30-40% at times. It has. By the way, I spoke with.
But just pause that thought, because people argue this in dollar terms. But because the rupee keeps collapsing, the Indians have never seen down years in gold.
Correct, obviously.
So that's why gold and real estate have been such favored assets for the average Indian.
William Buter, who was the global economist at Citi, the interview will air tomorrow. Okay. He wrote an article in the FT saying that central banks must sell all their gold now.
Great.
Thinks, well,
and by what?
He says the reserves should be a diversified set of things. It cannot be 25% in gold, which is where it is now.
How much is it?
It's just a controversial view. I'm just taking the opposite side for the sake of it.
Bring him on.
So you're saying a pause, maybe a bit of a correction.
Pullback will always happen, but it's a long-term bull market.
Madhu.
So traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar is debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver. That is point number one. And point number two, right now, the rise looks, as a market participant, it looks very euphoric to me. अभी टैक्सी वाला, पान वाला सब gold silver लेने का advice कर रहे हैं. So I would suggest, if you are buying incremental gold, unless you are buying it for usage, for saving, that you should refrain.
Actually, we've spoken to gold companies. They said that volumes are down 20%.
Yeah.
Value is up 20% because of
And I'll make one important point here. Why are we feeling so good about all this, Prashant? COVID low, our market cap had fallen to 1.2 trillion. Today it is $5.5 trillion. Gold has literally tripled from COVID lows. More than tripled, right? And analysts used to expect our gold reserves are $1.5 trillion 5 years back. So but just by definition, it should be close to $4 to $5 trillion, including all the gold, which is
the temples and everything.
Yeah, a temple, hidden, not hidden, right?
Correct.
Just imagine the wealth effect which India is going through.
Yeah.
That is the bigger point. That's the bigger picture everyone is missing. Let's say $3 trillion in gold and $4 trillion in the stock market. 85% of all stock market gains are domestic. Only 15% owned by foreigners.
Correct.
100% of all gains in gold are domestic.
But that,
in economy,
but that gain, it is, wealth effect is very powerful effect, but you can't monetize that wealth effect in that sense.
Prashant, you are feeling good. That's why you're buying a 700 crore apartment, right?
Maybe not
700 crore. Well done, Madhu.
No, I'm just saying the people are buying. This all over the place. I'm just saying this wealth effect is what is a
powerful one.
Is a very powerful one in an economy which is 4 trillion. You have literally created $7 trillion of incremental wealth in last 5 years.
Yeah, 100%. Let me segue from that point. You say it's a fear trade. Maybe the fear now, hopefully the fear goes down as well, right? Which is one of the factors there. From our perspective is this India-US trade thing, which went completely the opposite way than all of us expected. Voices and generally just the tone, tenor, etc. suggest that maybe it's on the mend. Would you agree, Madhu?
I agree. That's what I'm saying. And this is how the markets make kind of a, euphoric rises. That it has to get coupled with this rise. It has to stall somewhere. It has to get corrected with some fundamental thing happening. And this could be the trigger that, the 5 wars have stopped. You have to give credit to Trump that, literally 5 wars have literally stopped, right? And let's say if US-China trade deal happens and US-India trade deal happens, then a lot of uncertainty will go away. So that fear trade which was going on, at least in gold, specifically the panic buying, I would say, by central banks, that could temporarily stop.
Yeah, maybe along with that Bitcoin as well. That's another story. But
but on the India, all these guys haven't held that physical gold. They've all got in a short squeeze. So what he's saying is right. It's all technical squeezes which play out in parabolic rise.
But India-US money, more and more looks like something is going to get done soon.
See, think of India. All the tailwinds now are behind you. Last year we were worried about valuations. We've gone sideways for a year, so we're generally better off. The government's given you tax cuts. They've given you GST cuts.
2.5 lakh crores.
The central bank
budget and GST, 2.5 lakh crores.
Then central bank given you interest rate cuts, and the regulators actually encouraging banks to go out and give more credit. So you couldn't have better conditions for business to take risks. The government's encouraging you with PLIs or what can we do to help you. So the conditions are actually good this year, unlike last year.
One thing still remains a bit of a, that's what I hear from...
When you said it, even last time, remember we said our exports were 80 billion, 40 billion were excluded from it. 40 billion largely came down to textiles and aquaculture and so on.
Correct.
So the sentimental effect is great. But the way the erratic policies keep coming and going. If you're an industrialist, do you take a 10-year bet saying I put up a plant? Because if it's beyond this term, then you take a bet. But at the end of this term, what if the next guy comes and says, I want to overturn it? So that animal spirit, as the RBI governors also said, has been a bit missing. Because these policy uncertainties are what keeping us
Do you think
behind.
it'll come back with this thing happening?
It will be much better. But we couldn't say when the deal didn't happen that we are not so affected and now suddenly say, wow, it's fantastic.
Correct.
It is a positive,
Yeah.
but this market anyway is going to take a lot of these positives and start climbing.
The perception, I think what the market was actually worried about, including me, is the perception that India and
get
US
worse.
are not getting along. And then things could get much worse. 40% of all FI flows have come from the US. Let's not forget, right?
Yeah.
And it is one thing is this $40 billion is only goods export. But just imagine the services dependency on. So US is a very important partner.
I'll give you
and
one
we need
more.
to be friendly.
Absolutely, for sure, you want to be friends with everyone. But I'll give you another interesting way to look at it. The US is close to $65-70 trillion market cap, and it's held 30% by foreigners. So it's almost $20 trillion of foreign ownership of US markets. Every fund manager now in the world knows that you're near the end of the boom over there. That money has to rotate out. The biggest enemy of US is China. Money went to China. The Chinese market is up 40% because when valuations
money went this year. I mean, actually, last couple of years,
but this is when the war was at the peak with China. So we give too much importance to people can be patriotic and they can be investors and they need not be the same thing.
Under Biden, I remember having conversations with foreign investors saying that, well, when Chinese funds, etc., come to pitch, they've said it on air. We just told them, sorry, boss.
But it changed.
But it changed.
It changed. That's what I'm saying.
And it will change big time.
And when you see a profit opportunity, same way 18 months ago, people would say China is uninvestable, it has no terminal value. How come the same chaps have gone and bought it?
Madhu, you have a directional view in terms of if this US-India thing happens, let's just bring it down to the level of sectors where it will show up the most. What's your sense?
So I would say what has proven even in the last year, well, I would like to see two things really matter. One, are you able to catch some real long-term theme? Like we discussed 3-4 years back, this energy transition. And you see how much value creation has happened.
On the back of this, where do you think? On the
energy transition thing, right? So I would pick up the larger trend which is there is the usage of AI.
Okay.
And really people working on scale and cost using AI. I think it will make dramatic and very significant impact on companies which are able to adopt this. And on companies which are not able to adopt this, it will be a Kodak moment for them.
True. Wow. That's a perfect Kodak moment to take a break also. Let me just, allow me to take a break. I'll come back and we'll start exactly on this point and we'll look at other sectors as well. So take that break. We continue this very interesting chat with both Madhu and Manish. Stay with us. Welcome back to this Diwali special. We are sitting down with Madhu Kela and Manish Chokani, and we are now, with the next 7 minutes, we're going to talk about where to bet on. I mean, we're not near term, but which are the bigger themes to focus on from here. Before we took that break, Madhu, you said AI.
Yeah. So the AI usage is here. And I would think that this is very early stage of the usage, at least in India. And clearly not reflected anywhere in the market. On a $5.5 trillion, I can't even count $2 billion worth of real AI direct companies. While, in the US, that number could be 15, 20, 25%. Or in China, that number could be similar.
अगर आपको नहीं मिला तो फिर
नहीं ना, listed है नहीं ना.
Listed नहीं, unlisted.
Unlisted में खोज रहे हैं.
We both agree on AI being powerful. And like when the internet came, the beneficiaries were people who used it.
Yeah.
Now, when you think of AI, you want organized data sets for the AI to be unleashed. Who has the most organized data sets? We were the beneficiaries in internet as the BFSI. The same thing applies today in AI. We create analyst reports now in literally 10-15 minutes with use of AI. Imagine what it's doing to the banking sector. Think of productivity gains, which you'll get both in capital marketplace as well as in banking as well as in insurance. It's the biggest play of India, of AI, is actually our financial space. In any case, it's playing into this thematically, that financials is poised to lead this market going forward from here. Like I've given you in our last interaction, that SBI beats Reliance in profits soon. ICICI beats TCS in profits. Axis Bank beats Infosys in profit. It's a seminal change which is going on and people haven't realized. And the capital market theme is a secular structural trend.
So you're saying
and
there is
even for private equity, like we spoke before the show, you have ways to access private equity deals also with some of the best. His nephew runs a fantastic fund.
Right, absolutely. Are there those plays in the private market, Madhu?
There are those plays which are coming up.
Not listed yet, but they are there.
There are those plays which are coming up. But we are more focused on usage of AI.
Which is application layer.
Which is application layer. I think that is where the real money will be made. Prashant, I'll just take 30 seconds to give you an example. Like today, all legal work is still not AI-led. Now tell me, there are hundreds of judgments which would have happened on any subject in last 100 years.
Right.
Just imagine a situation. Someone will create it in 3 years down the line. If there was a layer, how powerful it will be. And the lawyers who are not using it, how
No, it's happening. I
inefficient.
had a conversation about this with Cyril Schroff, and he said, well, they are doing some real work.
Put it in the
And
judiciary.
I can tell you, already in America, it is already happening. There is already a company which has been able to do it in America already.
If they legislate this for the judiciary to give you judgments, those 6 million or 60 million cases stuck in the High Court, then you be bullish on India.
Money, that's
because that is real ease of doing business.
That's
where we are stuck.
If not the judgment, but at least judges will start using it to get a proper summary of it.
Absolutely.
जो आप बोल रहे थे 13 मिनट में analyst report. I mean, if you're able to sort of summarize cases which are going out.
It's crazy, boss. Absolutely. I'm saying we are seeing the gains of productivity.
The other
already.
one with AI, it's related, is basically the physical infrastructure, which is data centers in India.
Absolutely.
You've invested on the private side at least with many of these
sort
of
absolutely.
things which go into the data center.
Absolutely. Data center and energy both.
Okay.
Because that is what is like an indirect way to play. Because there is so much data that you will definitely need. And according to me, the scale and the size of the growth in all of this will surprise many optimists as well.
Okay.
That's where I can see things going.
On the listed space, there are a bunch of them, but you think
not too many, not too many. And one or two which are there direct plays are not the ones
where you think where you are kind of at least.
Now I am saying, but what has played out for us is you identify a large theme, right? And you start early, even if you have to wait. I'm saying in a fantastic theme, even if you make a mediocre investment, your gains will be phenomenal. If you make an exceptional investment in an industry which is tailwind, I have come out very frustrated investing in best companies.
Where the tailwind is missing.
Where the tailwind is missing. Or rather, there is headwind.
Correct. Manish and Madhu, from the AI is one theme, and I think it's that direction, as you're saying, it's in a way positional chess. I mean, you directionally it is going to grow. So you got to find things which you said it's capital markets, financials, which perhaps anyway have a tailwind, and this kind of bolsters the argument. And you spoke about data centers and power, etc. as themes. And of course, on the private side, many application layer companies where you're making.
Which are coming up.
What else as you look ahead into 2026, both of you?
I would
which
say
are these themes where you should look for ideas?
Prashant, I would say, let's say broad market. Last year, people are crying. You yourself gave me data. 30% of the companies out of 500 still made 30% return. Because there are opportunities on bottom-up basis. India is happening, my friend. All this capital market money which is being is raised. People are not going to put in fixed deposit. This is money is being raised for productive purposes. And I am specifically very bullish on some of the smaller companies, even the companies which are getting listed on the SME exchange. 100, 200, 300 crore market cap. These entrepreneurs are coming from tier 3, tier 4, tier 5 cities, exceptionally hungry. They have not seen this kind of capital in their lifetime. So there will be lots of winners from here. So Prashant, it's not about calling the broad market. It is actually betting on India's entrepreneurship on a bottom-up basis. That is the way to make money.
Are you going small in that sense now?
We are objective. It's not we are only looking small. I am saying the opportunity is bottom-up. And as long as the market doesn't fall, if I can make a case that market will fall 20%, then this bottom-up will not work. Then everything else will fall. I am not making that case. I think market remains sideways. The view is more marginally positive on the market than on negative, because Manish already spoke about it. There are a lot of things which were like a headwind has already turned like a tailwind for the market. So earning growth will be higher, liquidity is there, RBI has cut rate, globally things looking like settling down. And predictions for earning growth is maybe at the bottom. Things will improve from here for the market as a whole. Now within that, if you call the market, I am saying you bet on bottom-up ideas rather than betting on Nifty. That's
no, 100%. Both without saying, but my point in terms of themes, as you identified, AI is a theme, energy transition was one. Names like transformers, rectifiers, etc. have made a lot of. I mean, there are many actually. Alcoholic beverages. I mean,
so that I would say, I would if you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential, and we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays, and the second you can even play banks.
Capital market and banks, and this can sort of squares with what
I'll give you a most unpopular one. Yes. Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
And you have, I mean, you and Inam, the group has been positioned with metals, JSW, etc.
And so, see, like, again, that gold and all is, like he rightly says, it's part of your asset allocation. It's your insurance policy. It's not an asset.
Earnings kicker is
where. Earnings is fun is from people who make money out of hard assets. It includes manufacturing as well, which is a big theme for India.
If I can give 30 seconds, before we close. I think I see a lot of people are nervous because money is not being made in the last 12 months. You know, on a contrary, developed markets have done well, silver has done well, gold has done well. But markets have proven that people who have stayed invested through last 20-25 years are the ones which are smiling. So I don't think people should deter away from equities just because last 6-12 months performance have been muted.
Manish and Madhu, thank you very much for joining us.
Thank you.
Thank you.
Shubh Deepavali.
Special partner, Novama. Let's do it right. Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग.
Hello and welcome to the special edition of Newsmaker. Dubai-based Emirates NBD is all set to purchase a majority 60% stake in India's RBL Bank in what is the largest cross-border acquisition in the country's financial sector. The investment will involve a capital infusion of up to 26,853 crore at a price of 280 rupees per share, and once the preferential issue is completed, Emirates NBD will acquire control of the bank and become its promoter.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also.
Yes.
When the book value moves up, this is something which is going to add up to your market value, market cap will go up. So taking all these considerations, I feel, it's open offer may not kick in much of the numbers, and it is be hovering around 60 plus the branch merger, whatever the percentage is going to come.
Okay, but the brand remains RBL, or will they be? It's going to be a combination of their name, your name.
So the entire discussion went around the brand strength. Today, if you look at it, the RBL has created its own strength, and specific discussions have not taken place with regard to that. But left to my thinking, I feel that the greater part of the RBL will remain as it is. And it is not a part of our CP or conditions or anything. Otherwise, you would have seen it in our IA itself.
But it's possible that, they may be accommodated.
They may be, correct.
Down the line. No, not.
Yeah, not immediately. Immediately, it is going to be the RBL to start with. And we have to wait for the things to evolve rather than taking a preemptive thought in that.
The RBI, of course, will take a look at the deal. There are all these other sort of regulatory aspects as well. But I assume there would be some amount of comfort you would have sort of gotten that this is kosher, fit, meets fit and proper. All of that, this is formality in that sense. Obviously, it's not formality, it is done.
Formality.
But I just wanted to get a sense.
Yeah, absolutely, Prashant. It can't be a formality. Sure. It is a very deep evaluation of it.
Sure.
Why we feel that the fit and proper may not be an issue is that they have already participated in elsewhere, and they have also been given an in-principle approval for the WAS.
Sure.
So the fit and proper may not be an issue. However, the regulator has its own deeper understanding and evaluation and technique. We can't say beyond this.
Let's get to the size of what this enables you to do, right? I think the net worth goes up to about 42,000 crores. So from 15 it goes to 42. Your leverage right now is about 8, slightly over 8 times or so, right? Assets are about 1 lakh crore. What does this enable you to do in terms of growing that asset book, loan book?
This gives enormous opportunity. Just for understanding, today my capital adequacy is CRAR is around 15%.
15. Right.
For the discussion purpose of understanding, but let us hold it there.
Yeah.
Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital.
Sure.
So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us the 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done and will work much better. During this period, we will continue to make a profit, and I'm sure that the profit will also enable us to scale a little higher. The combination will make us to take it to the better league than where we are today.
So everything remaining same, which is you holding at the capital adequacy of current capital adequacy, not going up to 20%.
Yes.
From 1 lakh, you can go up to about 2.5 lakh crores over the next 3 years.
Exactly.
Or so, right?
That's an opportunity available for us.
And would you hold at the current capital adequacy? Will you go to 20?
No, the most ideal situation will be to have around 17-18%. That is what we wanted to have it because of the environment in which we need to have a strong capitalized bank. We don't want to be in the 15 range. That is a natural thing. And as we move forward, we will evaluate a little deeper to see that should I hold it at 17-18% or go to 20%. The most ideal situation will be around 18% will be something which is going to help us out to sustain this.
NBD is AAA rated.
Yeah.
51% owned by the government. What does this give you a lift as well in terms of cost of borrowing, etc. for you?
I strongly believe this is going to get our credit rating revised. We are now AA minus. And naturally, this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things. And there will be positive rating upgrade for the bank is concerned. There is every possibility.
Could you talk to us a little bit about the cost of funds? I mean, what is it right now? What's the expectation over a period of time as this materializes?
See, today, if I look at it in my overall cost of funds in here, savings fund, we are able to bring it down from around 6.54 to around 5.3. There's a big down. That is mainly because of we recalibrated the rate at which we are paying it to them. Peak was somewhere around 7.25, which we brought it down to 6.25. Similarly, in respect of the TD, we were at the peak of around 7.25, which we brought it down to 6.75. These two things have already reduced my cost. And the FD, almost everything has been rewritten in the last 1 or 2 quarters. We have a little portion of it is getting rewritten. My residual maturity is somewhere around 11 to 12 months. So if I look at it, this is the natural corrections have happened because of the repo rate correction which has happened here. And 1%, we already reduced our savings rate by 125%. In respect of the FD, we have reduced around almost around near 100. This particular deal will enable us to get much better with regard to that rating of the deposits. We are confident that our rate of deposit, the rate at which we are offering the FD as well as the savings will definitely substantially come down, which will reduce our cost of deposit. When our cost of deposit comes down, our ability, and because the re-rating of the bank and rating of the bank goes up, our ability to borrow at the cheaper rate is also going to come up.
Sure.
So the overall, if you look at it,
could you put some numbers to it roughly? I mean, I won't hold you to it, but broadly, how do you think about this?
See,
on a blended basis,
yeah,
what's the advantage?
I mean, in my rough mental calculation, I need to back check my numbers again. Maybe around 100 bips, 125 bips will be the reduction, what we'll be able to see that in respect of our cost of funds and cost of deposits over a period of 1 to 2 years from what it is at current level.
100 to 125 basis points reduction in cost of funds.
Cost of funds as well as the cost of deposits.
So what does that do to margins then?
See, today the margin we are holding it around 4.5 and we have a plan of action to take the margin to somewhere around 4.8 during this current year itself, which we thought that we'll be able to hold it. And we have around 40% of our total advances in the fixed rate, which will be continued to hold it that way only. And since we are able to get a lower cost of this thing, my ability to lend at AAA as well as the housing loan, which we are holding back today, will shoot up. Although it may not alter my margin in a big way, the reduction of the cost is going to help us out in losing the margin. There will be upward trend from once it is consummated, the NIM will start moving up. In my rough calculation again, in a year's time, it may move up by around 10 bips and keep increasing by around 10-15 bips as the advances are increasing it and my interest income goes up. And
NIMs may improve by 10 basis points and then keep improving perhaps.
Improving it as my book grows and my NII increase it. Our intent is to grow the NII at least faster than that of our advances.
What does it do to return ratios? I mean, ROAs and then subsequently ROE?
See, today our ROA, we are intent to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest free, that is automatically going to kick up my ROA maybe around 0.5% to 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. And with a higher margin we are thinking of, and with a reduction of the OPEX, so which is one of the big focus area for the bank. And my provision will also come down. The credit cost is going to come down. The trending well. The MFI is almost on near normal. In credit card in another 1 or 2 quarters it will become normal. With these things put together, it is going to kick up my ability to move up my ROA by another 0.1. See, our current business will facilitate us to improve the ROA of around 10 to 15% year on year.
Sure.
This new addition will facilitate us to increase it by around 30-40%.
Okay.
So both put together, possibly in the first instant year, we will be able to grow by around 40 to 50%. Thereafter, it will be in the range of around 10 to 15% year on year.
There is though large expansion of equity. So in terms of return on equity,
yeah.
You think, I mean, at least for the next few years, you are...
Few years, yes. I fully agree with you. The base has increased multifold from that other 60 crores to 150 crores. So naturally it will have its impact on ROE. But in the next 2 to 3 years, then accelerated growth, what we are looking at, and accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years time.
But over the next couple of years should be 6-7% in that range?
See, next 2 years, maybe in the high teens. So maybe after 3-4 years, it will go back to its around maybe around 12-13%, and then it will start improving it thereafter in an accelerated way.
Sure. You mentioned housing. That's a large segment, growing segment. It's a segment which you were not very active in. But with, as you said, cost of funds coming down, you're able to participate and play in that segment in a big way. Is that going to be a big focus area?
See, today our focus is as entire retail sector. We have been focusing on the AHL and the SLAB because of its, we are looking at the margin which we wanted to get a yield, better yield. So once our cost of deposit comes down, our ability to improve, our ability to compete in the market today will go up. See, while we are very conscious about it, we will not do a business which is going to make a loss. And we will continue to do the business which is going to make us a profit. Because none of the, PHL is the only one by the end of the year will be making loss, the current scheme of things. And with your cost of funds coming down, that provides a big opportunity. We will definitely explore it and then see that how we can be leveraged further.
What are the businesses are you able to do now with this investment in, which you were not able to do earlier? I mean, apart from housing in this segment.
See, apart from the housing, which is a natural response of the interest rate, the areas where we are confident that we will be able to do more is wealth management.
Sure.
The private banking space, we have a very good relationship banking with the niche customers of HNI and UHNI. Today, we are not able to expand beyond a point because we are not into the niche of private banking.
Sure.
Wealth management.
Sure.
This, I'm of the firm view that ANBD with their rich international presence, and they have their own Singapore wealth management arm, with their expertise, with their input, we will be able to do better in wealth management. That's one important area. The second, Middle East per se, you know that it is a huge remittance which is coming from India.
Sure.
And around 40-50% of the expats are from India only as far as UAE and the GCC countries are concerned.
This you mean remittances?
Yeah, 40-50% of the remittances from our total thing. Other than that, the residents who are there, the entire GCC is also a fairly big number of Indians are there residents.
Sure.
So the NR accounts can be a very big leeway which we can tap it and then bring it into our account, our bank today. Second is that the remittances is one easiest thing which can be done today because we have a payment platform well oiled and well functional today with us. We can leverage that and then try to get a greater share of that particular remittance business from Middle East, the Middle East corridor. Today, our Middle East corridor may be doing around 1% or 2 or 3% of the total businesses. But with this deal,
so people who are working there,
correct,
and so they will send money to India, to their families here. What, I mean, you would have Emirates NBD would have what share of those accounts?
If exact numbers I'm not aware of.
Would be 40-50%?
Yeah, because being the second largest bank there, I'm sure that they will be having it around 30-40% will be there. So those people, remittances is the first business we will be able to leverage and get into India. The second, those people, since they have a relationship in Indar, the extended relationship in RBL can also be another big business we can get it. The third important thing is that my corporate business. The large corporates are doing a business in, Indian corporates doing business in UAE as well as GCC. Same way, their corporates are doing business here,
correct,
which their branches were catering earlier. So this is going to be another big area where we will be able to grow our businesses. And the third, another important area where we can do a lot of business is the digital bank. See, they have a niche understanding of the digital and technology. So they will be able to share and we will be able to upgrade our digital offerings to the next level. And I'm sure that we will be able to do more on the digital platform, which have bring down my cost of operations further down.
Mr. Subramaniam, I have a lot of more questions, but I think it's your time, your packed schedule. I congratulate you and your team on this deal. Wishing you, your loved ones, the team at RBL, and of course now Emirates NBD as well, a very happy Diwali. Thank you very much.
Thank you very much. Happy Diwali to you and your entire viewers. And it is an effort of the entire RBL team which made it possible. It's an endorsement of the trust, the banking sector of the India, especially the RBL's compliance culture and its the confidence has been reposed in us. Thanks to everybody. Thank you very much.
Thank you very much, sir. Thank you.
भारतीय बाजार ने पिछले एक साल से ज्यादा वक्त से अंडर परफॉर्म किया है, लेकिन दिवाली से कुछ पहले ही बाजार ने रफ्तार पकड़ी है। बैंक निफ्टी न्यू ऑल टाइम हाई लगा चुका है और निफ्टी भी नए शिखर की ओर बढ़ रहा है। कंपनियों के नतीजे भी बेहतर रहे हैं। जीएसटी कटौती और ब्याज दरों के नीचे आने से कंजम्पशन को भी एक पुश मिला है। ऐसे में क्या भारतीय बाजारों के लिए गोल्डीलॉक्स सिनेरियो बन रहा है और किन थीम्स पर फोकस करना चाहिए? हमारे साथ आज जुड़ रहे हैं मॉर्गन स्टैनली के मैनेजिंग डायरेक्टर रिधम देसाई। रिधम जी, सबसे पहले तो दीपावली की बहुत बहुत शुभकामनाएं। आज दिवाली वाले दिन आप हमारे स्टूडियो में आए, उसके लिए आपको बहुत बहुत शुक्रिया एंड हैप्पी दिवाली टू यू।
अनुज, आपको भी शुभ शुभ कामनाएं दिवाली की और दर्शकों को भी हैप्पी दिवाली और आगे वाले साल के लिए खूब खूब अभिनंदन।
रिधम जी, एक चीज़ मैं आपको ज़रूर कहूँगा कि मार्केट में भले ही काफ़ी पेन रही हो, लेकिन आप काफ़ी बुलिश रहे हैं मार्केट पर। और आपकी एक लास्ट रिपोर्ट में पढ़ रहा था, आपने कहा था द इक्विटी मार्केट में बी अंडर एस्टिमेटिंग द लाइकली टर्न इन ग्रोथ साइकिल, द अर्निंग्स एंड मार्केट पीक इज इन फ्रंट ऑफ अस। आप काफ़ी समय से रहे हैं बुलिश मार्केट पर। आपको लग रहा है कि कुछ ज़्यादा ही बेरिशनेस हो गई थी मार्केट में और अर्निंग्स को लेकर खास तौर से बहुत ज़्यादा एक नेगेटिव व्यू हो गया था? एफआई की सेलिंग लगातार, बहुत कुछ नेगेटिव मार्केट ने झेला, लेकिन मार्केट गिरा नहीं।
सो अनुज, अगर मैं एक शब्द में पूरा अपना जो आगे का जो इंटरव्यू आने वाला है वो उसको समराइज कर दूं तो वो है रिफ्लेशन, जिसको हम हिंदी में अनुवाद करते हैं पुनः मुद्रास्फीति, रिफ्लेशन। सो क्या हुआ है कि सरकार ने और ख़ास करके आरबीआई ने ये तय किया है कि हमारे ग्रोथ को बढ़ाना है और उसके विरुद्ध अगर आप काम करोगे तो बहुत पछताओगे। यू नेवर, अंग्रेजी में कहा जाती है, यू नेवर फाइट द सेंट्रल बैंक। तो अभी सेंट्रल बैंक को अगर आपको सेंट्रल बैंक के साथ झगड़ना है तो वो आपका नुकसान है। तो ये स्थिति ऐसी हुई है कि फरवरी से लगातार हमारे आरबीआई ने ये कोशिश जारी रखी है कि कैसे इकोनॉमी को टर्न करें। और जो सितंबर में जीएसटी रेट कट्स हुए उसमें सरकार ने भी उनको साथ दे दिया। और अक्टूबर में जो पॉलिसी आई उसमें रेट कट नहीं था, लेकिन काफ़ी कुछ डीरेगुलेट किया लोन ग्रोथ को बढ़ाने के लिए। तो आज स्थिति ये है कि लोन ग्रोथ जो पिछले कई महीनों से 9-10% के आसपास चल रही है वो बढ़ के 12-13 हो सकती है अगले 12 महीने में। और उससे लेके जो अर्निंग्स ग्रोथ जिसकी आप बात कर रहे थे, जो 3-4-5% चल रही है, जो इंडेक्स आप पकड़ो उस हिसाब से, वो मेरा ये मानना है कि 15-20% पे आ जाएगी। ये जो आज निफ्टी का लेवल है उसमें 15-20% ग्रोथ है, मेरे हिसाब से नहीं है। तो अगर दुनिया में कुछ गड़बड़ नहीं हुई, और बहुत कुछ हो सकता है गड़बड़, क्योंकि यहाँ एक ट्रेड वॉर चल रहा है, कुछ युद्ध चल रहे हैं, यूएस में रिसेशन आने की संभावना है, यूएस के मार्केट्स बहुत हाई हैं और पूरा एक एआई का माहौल है जिसमें इंटरनेट की याद आ जाती है। तो काफ़ी कुछ खराब हो सकता है अगले 12 महीनों में, लेकिन अगर बहुत कुछ खराब नहीं हुआ तो ये निफ्टी यहाँ से काफ़ी बढ़ सकता है। मेरा ये मानना है
निफ्टी यहाँ से काफ़ी बढ़ सकता है। आपने एक और चीज़ कही थी, आपकी मैं सितंबर एंड की रिपोर्ट पढ़ रहा था कि रिस्क टू द अपसाइड, कैटलिस्ट अहेड अर्निंग्स में। आपने ऑलरेडी इसको मेंशन किया। इसका सबसे बड़ा एग्जांपल रहा बैंक्स। अगर आप देखें तो बैंकों में जो तेज़ी हुई, और बैंकों में तो पिछली आरबीआई की पॉलिसी उसमें क्लियर हो गया था कि जो उससे पहले सरकार जो सेंट्रल बैंक का व्यू था उसको वो चेंज करने को तैयार थे कि पहले उन्होंने कहा था कि एक ही रेट कट होगा, अब वो बोल रहे हैं कि हम ग्रोथ पर फोकस करेंगे क्योंकि अब इन्फ्लेशन हमारे कंट्रोल में है। क्या बैंक्स यहाँ से भी मार्केट को लीड करेंगे? क्योंकि सबसे बड़ा पिलर मार्केट के लिए, हमारी मार्केट के लिए बैंक्स ही हैं।
बिल्कुल अनुज, बैंक्स ही लीड करेंगे क्योंकि बैंक्स के स्टॉक्स अभी भी सस्ते हैं और काफ़ी अर्निंग्स ग्रोथ आने वाला है। जो पिछला क्वार्टर था वो तो एक्चुअली ख़राब क्वार्टर होना चाहिए था, उस खराब क्वार्टर में भी बैंक्स ने अच्छी अर्निंग्स दिए हैं। सो जो क्रेडिट कॉस्ट जो है वो सीमित है और मुझे नहीं लग रहा है कुछ ज़्यादा क्रेडिट कॉस्ट बढ़ने वाले हैं। और नेट इंटरेस्ट मार्जिन ये स्टेबल हो सकता है। हमारा ये मानना है कि आरबीआई एक और या 2 और रेट कट कर सकती है अगर वो किया तो एक आपको ट्रेडिंग अपॉर्चुनिटी बैंक्स में ज़रूर मिलेगी, लेकिन मुझे लगता है जो निम्स में जो नीचे जा सकते थे वो सब हो गया है। और मैंने जैसे समझाया, यहाँ से लोन ग्रोथ बढ़ने वाली है, तो ऑपरेटिंग लेवरेज होता है, और थोड़ा सा लोन ग्रोथ अगर 10 का 12 होता है तो अर्निंग्स 10 का 12 वो 2% से नहीं बढ़ते, वो 10% से बढ़ते हैं, क्योंकि ऑपरेटिंग लेवरेज आ जाता है, क्योंकि आपके जो खर्चे हैं वो तो सीमित है, वो लोन ग्रोथ के साथ बढ़ते नहीं है, तो काफ़ी ऑपरेटिंग लेवरेज है। सो मेरा ये मानना है कि अगले 12 महीने में बैंक्स की अर्निंग्स बहुत ठीक ठाक रहेगी पिछले 12 महीने की तुलना में, और शेयर अभी भी सस्ते हैं।
ये जो आपने बात कही, अब अगर डबल डिजिट लोन ग्रोथ आएगी बड़े बैंकों की, तो कंपनियां तभी लोन लेंगी जब वो केपेक्स करेंगी या फिर उनको वो कंजम्पशन में वो रिवाइवल दिख रहा होगा, क्योंकि हमारे लिए कंजम्पशन एक थोड़ा सा एक प्रॉब्लम रही है। क्या जीएसटी कट, उससे पहले इनकम टैक्स कट, जो 3 लाख का स्टिमुलस, 3 लाख करोड़ का एक स्टिमुलस प्रोवाइड किया गया है, क्या उसकी वजह से कंजम्पशन, ऑटोज, एफएमसीजी, रिटेल, इनमें आप एक अर्निंग्स एक्सप्लोजन देखते हैं आगे जाते हुए?
अनुज, एक्चुअली स्टिमुलस 3 लाख करोड़ से ज़्यादा है। 3 लाख करोड़ तो सरकार ने दिया है, आरबीआई ने 100 बेसिस पॉइंट इंटरेस्ट रेट में ऑलमोस्ट 10% वहाँ दे दिया है। कोई भी गाड़ी खरीदता है 80% गाड़ी लोन पे आती है, रियल एस्टेट लोन पे आता है, तो उनके भाव आरबीआई के रेट काटने से 10% गिरे हुए हैं, ऊपर से आपने जीएसटी 10% काटा है, 20% अगर आप भाव काटते हो तो एक कंप्लीटली नया जो कंजम्पशन सेक्शन है इस सोसाइटी का वो आ जाता है, तो कंजम्पशन में तेजी होगी। और ये जो आप लोन ग्रोथ की जो सवाल था आपका, वो कंजम्पशन से होगा, और जैसे कंजम्पशन बढ़ेगा फिर आपको कैपेक्स आएगा, कॉर्पोरेट लोन ग्रोथ पीछे से आएगा, पहले रिटेल लोन ग्रोथ जाएगा ऊपर। और मैं आपको एक आंकड़ा देता हूँ, 2 साल पहले कंज्यूमर अनसिक्योर्ड क्रेडिट 30% के ऊपर चल रहा था, वहाँ से गिर के 7 पे आ गया है। अगले 12 महीने में वो 15 हो गया तो मुझे बिल्कुल आश्चर्य नहीं होगा। वहाँ से आपको फिर वो कैपेक्स दिखेगा। वैसे ही बहुत सारे सब सेक्टर्स में कैपेक्स तो हो चुका है और हो रहा है, जैसे सेमीकंडक्टर में, डिफेंस में, सोलर में, काफ़ी हद तक वहाँ कैपेक्स बढ़ रहा है। आप एप्पल सप्लाई चेन देखिए, सो ये सब कैपेक्स हो रहा है और जनरल कैपेक्स आएगा। सो ग्रोथ में मुझे लग रहा है अभी भी रिस्क टू द अपसाइड ही है, और ये रियल ग्रोथ की मैं बात नहीं कर रहा हूँ, क्योंकि लोग अगर रियल ग्रोथ तो 7.5% है, नॉमिनल ग्रोथ, इस रिफ्लेशन का यही अर्थ होता है कि नॉमिनल ग्रोथ बढ़ेगा, और अर्निंग्स नॉमिनल ग्रोथ पे आधार है, रियल ग्रोथ पे नहीं है। सो नॉमिनल ग्रोथ जो पिछले क्वार्टर में 8.8% था, वो बढ़ के मुझे लग रहा है 11 के आसपास आ जाएगा अगले 12 महीने में। और वो नॉमिनल ग्रोथ जब 9 से 11 होता है तो अर्निंग्स 5 का 20 होता है।
ये रिफ्लेशन की जो आपने बात की, इसका कोई लास्ट एग्जांपल, जैसे 91 का एग्जांपल दिया जाता है, कोविड के बाद का कुछ एग्जांपल दिया जाता है, तो क्या मतलब
पिछले 15 सालों में 2 एग्जांपल है। एक तो 2008 में और दूसरा 2020 में। मैं और एक बात बोलूं, अप्रैल में जब आरबीआई ने रेट काटा और सीआरआर दोनों साथ में काटे, ये डबल रेट कट किया और सीआरआर कट किया, ये पिछले 25 साल की आरबीआई के इतिहास में सिर्फ 2 बार हुआ है, ग्लोबल फाइनेंशियल क्राइसिस में और कोविड में। और अप्रैल में माहौल ऐसा कुछ नहीं था, कोई क्राइसिस का नहीं था,
ठीक बात है,
एक ग्रोथ स्लोडाउन था सिर्फ। तो जो रिस्पॉन्स था उनका बहुत बड़ा था, तो उससे अगर इकोनॉमी टर्न नहीं हो, जैसे मैं अपने लोगों को ऑफिस में बोलता हूँ, अगर इससे इकोनॉमी टर्न नहीं हुई तो हम सब रिटायर हो जाने चाहिए।
एक बहुत ही बुलिश रिदम देसाई के साथ इस कॉन्वर्सेशन का यहीं पर समापन करते हैं। आप जुड़े रहिए सीएनबीसी आवाज के साथ।
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Special partner, Nuvama. Let's do it right.
Hello and welcome to this Diwali special Market Cafe Sambat 2082. I'm Nigel D'Souza, and with me, my co-anchor today, Nimesh as well. Well, Nimesh, it's been a difficult year for the markets.
Absolutely.
But we have an elite panel with us today.
Oh yeah. So happy, festive greetings to you, to your family, to all the viewers, and to the distinguished guests as well. All our seasoned fund managers. Nobody needs any introduction. First question will be an open question to all three of you. Anybody can answer, or all three can answer. From last Diwali to this Diwali, Nifty is flat. The returns have been quite muted. Did you all expect that India will be a rank underperformer in the last 1 year? And what was the key reasons for this underperformance? I'll start with Anish first.
So, well, two reasons for the underperformance, right? One is that earnings growth slowed down and multiples were high to start with. And more importantly, there was a lot of supply of paper, right? So a lot of the argument last year, the people who were extremely bullish were making was that there's a lot of demand for paper. But what hadn't been anticipated was that there was a lot of supply for paper. So while the retail investors might be disappointed, the promoters, the private equity, the investment banking world has done quite well last year because they've managed to put out a lot of paper in the markets.
Vishnu, what's your take?
Right. I think part of the reason, as Anish also pointed out, is expectations were very high, right? But we had also started getting into a zone where economic activity had kind of cooled off again. If you go back, say, about 12-15 months back, the Reserve Bank of India had kind of clamped down on lending into, subprime, MSME, etc. So that was one source of funding issues. And then you also had fiscally very little stimulus and support coming to consumption. Over the course of the last 9 months, I think a lot of those have kind of got addressed, right? But the relentless supply of paper and, of course, the curveballs of Mr. Trump and what he tweets on X, keeps us on our toes. So I think a combination of both of these is where the markets are where they are.
All right, Pankaj, I want you to come in it. Over the last 1 year, we have interacted numerous times, and you normally look at the brighter side of things. So could it be that sort of a pitch the last 1 year, which was bouncing around, it was turning, and yet we managed to hold our wicket at least? Do you think it's that sort of year? Because look at the challenges we've had on the global front, on the valuation front, on the supply of paper front as well. So do you think India as a batsman has done pretty okay, given the kind of challenges in the last 12 months?
So apart from what Anish and Harish said, they spoke about domestic side. But we should not ignore that we have seen about almost $20 billion of FI selling.
Yes.
And that's because India was seen as an AI loser. And a lot of money from India flowed out to Taiwan, Korea, China. And there's an AI frenzy for the last 12-15 months, which is happening in the globe right now.
Yes.
In the midst of that, we had domestic challenges, as they said. And last, if you look at indices, they are not portraying the right picture. Indices may be down by 5-6% from their all-time highs. But when you look at the median constituents and the drawdown of those median constituents, it ranges between 15 to 25%. And when you speak to HNI retail, their portfolios from an all-time high perspective are any which ways down by 20-25, which is the correct portray of the things. So I think along with time, I think you have seen price correction in the broader market space also. And from those challenges perspective, I think a lot is getting priced in now. And I think it is healthy. For a large part of the year, if you remember, Nigel, we were very cautious, saying that valuations are not making sense to us. From March, April onwards, we started to get constructive. And I think a large part of those concerns are priced in. Incrementally, I think we should front load our equity investments as you move ahead in the next 1 to 2 quarters, is my thought process.
Pankaj, you spoke about AI not being the big theme. In fact, India has been seen as an anti-AI. In that context, if globally there is an AI bubble, you think this year could be in a way a blessing in disguise for India that we are not in that AI bubble so far?
I think so. And all the data points are flashing absolutely red. We don't know the timing because markets always test you. It's 6 months, 12 months, 18 months. But look at the data points, just 4 of them. The concentration is the highest ever. If you plot the S&P 500, equal weighted index versus market cap weighted index, it's at its lowest point today. That means 490 stocks on one side, 10 stocks on the other side. It's always a risky part. The second is Nvidia is now 15% of US GDP.
Yeah.
Remember 2000, internet was invented. People said Cisco is the only company which will provide hardware. It became 5% of US GDP. And from there, how many years that Microsoft took to come back to the original price. I'm not saying AI will not be there. It will be there for the next 15, 20, 25 years. But the financial market, I think, is pricing far more things. $10 million company getting a valuation of 20 billion. Last 4 years since ChatGPT was announced, you saw 80% earnings growth, 90% capex coming from AI companies. And there's just a frenzy going on. I don't know when the party will stop, but you need to be at the last door to get it out. I think in that respect, India could be a beneficiary where it's a diversified market. Look at Taiwan, TSMC is 55% of MSCI Taiwan, one stock index. Samsung, 30% of MSCI Korea, one stock index. So when this party will stop, I think a large part of that money will come into diversified markets, which are much more sustainable and structural in nature, which I think is India.
All right, Harish, let me come across to you. The other problem has been the FI selling, right? I mean, we talk about them selling $20, $23 billion just in the last 12 months or so. But if you look at the primary market, actually, they're put in close to $5 billion approximately. What about this IPO frenzy? Everyone talks about it, it's sucking some liquidity as well. But is most of that now a known devil? We had a couple of big IPOs that people were worried about, which have gradually got digested. And thankfully, getting into Diwali, at least those that got LG will be a little bit happy, because at least it's giving some kind of positive rub-off, you know. Your take on this IPO frenzy as well.
Right, so India is one of the unique markets which globally is seeing a lot of new listings coming through. Most of the rest of the world, the IPO market is pretty much dead, right? So that is one unique aspect. The second unique aspect, especially in the IPOs that we are currently seeing, is that there are a lot of scale companies which are very, very differentiated, which was not there, even 6 months or 9 months back. So while yes, the number of issuances, etc., are large, the type of businesses that we are kind of encountering now are very, very new and do not have, in many cases, a parallel to what is already present in the market, right? Now, of course, valuations is in many cases nosebleed level, okay? But given the fact that there is something unique and differentiated that these businesses bring at scale, I would imagine that, you know, a lot of the legacy holdings of many FIIs, you know, which have been traditionally in the banking or the IT services, or maybe in the last 5 years, a lot of money has gone into the industrials theme, which has done very well. I think those will be the areas that, you know, people may want to kind of reallocate and move into this. So that is one key aspect that's coming through. The second key aspect is in terms of sheer number, just to put it in numbers, currently we are kind of selling, supply of paper is roughly about 2% of market cap if we were to quarterly annualize this number. This number, the last time we saw such huge numbers was in 2017, okay? And we all know how 2018-19, you know, we had to digest all of this along with expectations running very high in 2016-17. So I suspect that, you know, it's not that, you know, we are at the tail end of the IPO digestion problem. I think it will continue to be coming through in the course of the next 6-7 months, and which means, in my opinion, even though the fundamentals are stacking out much better, it does appear that it's going to be a grinding market. The sheer supply of paper is going to keep a lid on any kind of a very big kind of a move up, but we think that, you know, there are markets when, you know, consolidation is a good thing, because especially when the fundamentals are improving, and that therefore is a great place to allocate and to accumulate very good quality equities at this point of time.
Anish, you know, my first question was on what went wrong and, you know, why India underperformed. You highlighted some of these concerns. Let me just ask you on the 4 big concerns, and you give your view. Are they behind? Is the worst over? What is it in terms of earnings, in terms of valuations, in terms of global headwinds, or whichever the key headwinds were for last year? Your take on all the 4-5 concerns, and are they now behind us? And what is the take now?
See, of these, the most important for me is earnings. Right?
Is the earnings?
Earnings, right? I think earnings should pick up momentum. What had happened was that, one, the economy slowed down a little bit, and two, what we had seen, right, was that 2 years prior or 3 years prior, what had happened was earnings growth had outpaced revenue growth, which happens when capacity utilization is improving, you're getting operating leverage, and that obviously tapers off. So that tapering off also happened, and demand was weak.
So net on earnings, you are comfortable that now there is going to be a pickup?
I'm reasonably comfortable on earnings. I'm expecting the economy to...
FY27 going to be a good year for earnings?
I think FY27 for large cap stocks should be a good year for earnings. Sure. Now, I would caveat that. Actually, what I worry about is that there's, in the small and mid cap space, there's a lot of paper that has come on the market, not just primary, but secondary also, which has come on the market with very poor quality of earnings. Right? Okay. If you look at the balance sheets of those companies, they've been, I feel, very flattered. Those earnings will disappoint, right? So I would not say that there's a uniform improvement in earnings, because the poor quality of earnings will I say there's hardware, there's software, there's vaporware. The vaporware will vaporize. So that part you have to be careful of, but the economy should regain momentum and earnings should pick up.
Point taken. On earnings, which are the other concerns which you feel now it's turning around?
No, I think for me the most important concern is earnings. I don't think like tariffs are a big issue. Our current account deficit is in good shape, and as long as the current account deficit is in good shape, a few specific sectors which are not very big, like textiles experiencing some problem, doesn't change the shape of the overall market. And I'm not worried about tariffs being put on the bigger sectors like pharmaceuticals or IT. I don't think the US economy can absorb putting a tariff on those.
All right. So I think we have consensus that the last 1 year was challenging, but now we're gradually getting more constructive that the next year or so will be fairly positive. talking about these tariffs issues, Pankaj, let me come across to you. Because economically it may not be having a big impact. However, those animal spirits to come back, for people to get more excited about the markets, you'll want to have a deal with Mr. Trump. How important is that? And do you think now we have faced bulk of that music? He'll have to come up with something new now to scare us. 25% became 50%. On the tariff front, do you expect some kind of a breakthrough to come through, given the time that we have seen, and also given the kind of commentary, which, to be fair, is a little bit heartening, a little bit more positive?
So, to be honest with you, any speculation is above our pay grade, right? We all thought that in April we are first in the queue. And suddenly what happened that we are last, and with a 50% tariff, which is one of the highest, right?
Yeah.
What will change also, we will not know.
But hopefully the worst is behind.
Worst is behind. That's what the sense we are getting, right? And the sound bites which are coming are quite positive.
Hopefully.
We are building in that the penal tariff will be out. Reciprocal tariff remains. But there are certain section of market which has started to believe that final tariff could settle between 18 to 20%.
Yeah.
If that happens, I think market is still not pricing in that. Sure. And that will be a very, very positive outcome. But let me give you a real ground situation. You speak to textile guys in pain. Yeah. You speak to gems and jewelry guy in pain. So there are certain sector pockets of economy which are really, really badly hit. And they are employment generators.
Right.
So I think we need to solve this issue sooner than later, so that the animal spirits are back both in economy and markets. Today, when you speak to exporters, they don't know what is happening. Right. And the consumer confidence, the CEO confidence index which we track, it is at the lowest point ever been in the last many, many years. So I think it's for the global economy, local economy, that tariffs issues get resolved. And I think it will. Don't forget, next year is midterm election. Yeah. And he wants a good image for himself as well.
Got it. Harish, help me get you in. I recall when the markets were far more brittle. Now we're in a better space, and we had met at our office in our studio, and you were sounding very optimistic. You said, things may not be working out according to plan, but on the fiscal, work is being done. On the monetary side as well, work is being done. We have fired quite a few bullets now. GST 2.0 is here. Rate cuts have come about as well. And both the government as well as the RBI are pro-growth. Do you think bulk of the action on that side is done, both on the fisc as well as on the monetary front? Or do you expect more action? Because the economy, we need to admit it, it's still softish. Hopefully it's going to recover in the second half of the year.
No, so I think the heavy lifting that the government and the RBI has done has been quite significant in the last 12 months. And, incrementally, of course, there could be support to the exporters, maybe some kind of a credit guarantee scheme. Our current line of defense is in the form of rupee depreciation, which is the dollar itself is weakened against all major countries in this year. Yeah. We weakened further against the dollar. So that's been our primary line of defense for now. Yeah. But clearly there needs to be more sector-specific packages that need to come through. The second is, of course, optically, the announcement on investment, because there's been a kind of a pivot to move from investment that the government was doing significantly in the last 4-5 years to something which is more consumption focused. So it shouldn't be that, this shift is coming at the expense of investment. So that is something, again, I think, in the budget, etc., when they clarify, which I think they will, I think that should put a lid on that worry. But from a market point of view, we do think that, consumption is an area which is still significantly under-owned. Expectations are still running reasonably low compared to the investment side, where in the last 5 years, a lot of good things have happened, but expectations are possibly running far, far more elevated. Ownership levels are running far, far more over there. So that's the other key aspect over there. So I would think that, bulk of the work they have done, it is now up to the private sector to reciprocate. And for that, more than anything else, I think some of these uncertain environment that is there, if it were to kind of reduce a bit, it is for the benefit of everyone. The last point I want to make is, private capex has been, a bit patchy. Yes. There have been some groups which have been on the front foot, but many others have been waiting for demand to come back. The sense that we get is that, over the course of the next 12-18 months, as the domestic economic activity kind of improves, you're going to see actually the demand also coming through, which was the single largest concern for private capex to come through. So I think that is the other key leg that is likely to move on. So it is the making of, a very virtuous kind of a cycle that is going to come through is our sense over the course of the next 2-3 years. The only spoiler is our own expectations. As long as we have got low expectations, I think the economy, the government, all of that will fall into place.
Just to take your point forward, Krishnan, I had seen, Pankaj, your tweet as well. And that's been the experience in the market, right? When the first 4 years, the government focus was on capex, all the capex-related stocks did phenomenally well. First year in this budget, there was a shift towards consumption. And I guess there was a bit of discussion as well. Should be a time for now to move from capex to consumption as a theme, from an investor point of view. Pankaj, you can guide us. Is this a time now to move from capex to consumption? And within consumption, what would be your top bets?
So let me give you a data point. Yeah. Last 5 years, you look at the BSE Industrial Index, it's 5x almost.
It's 5x, yeah.
Look at the consumption index, it's about 1.5 times.
Correct.
So obviously, industrials have outperformed massively, because of the government-led capex, which grew at 30% CAGR for the last 4-5 years. Our sense is that that number will be in single digit, and a part of that will be diverted towards new areas. I don't know, it got unnoticed by the markets or by the media also. The total R&D spend in India is 0.6% of GDP, 1.5 lakh crores. Out of that, 1,10,000 is by government, which is DRDO, ISRO and others, and only 40,000 crores is by private sector. In that 45,000 crores, 25,000 is by pharma companies, and the rest only $2 billion is non-pharma. Government has devised a body which will fund 1 lakh crores of R&D expenditure across battery chemicals, semiconductor, EV, you talk about it. And that's headed by a person, very eminent person from Bay Area, and who was the ex of IBM as well. So I think the entire thought is that road, railways, we have done enough. I think we need to now shift our gears from a expenditure on government side to other areas, which is defense, which is R&D, which can have multiplier effect, which could be far, far more. So government expenditure, we have to think very differently from an industrial perspective. And I'm very positive on consumption. I think auto, QSR, retailing, and on footwear. I think these 4-5 things are looking very good on discretionary consumption, not so much on staples. I don't think by GST cut, you will start using more shampoos or soaps or things like that. So I think more discretionary in nature rather than staples in nature.
All right. Anish, your take on consumption versus capex argument?
See, I've always been of the view that, look, the economy will do well if house building does well.
Yes.
Right? It's my one-line view, and if economy will do poorly if house building does poorly. I would tend to hold that view. And I think house building is a big driver. A large part of the private sector capex is actually house building. And I also feel that this distinction between consumption spending by the government and investment spending is a bit overstated. The idea of spurring consumption is that it increases demand in the economy, spare capacity is then used up, and that then triggers investment spending. I mean, as Harish was saying, that investment spending by the private sector will happen after their capacities are fully utilized. They will not spend if they've got spare capacities. So my view is that, like any other cycle, right? If the economy regains momentum, if demand starts picking up, investment spending will come back. I mean, you can't consume if you don't produce. So you have to set up, and to produce, you need to invest. So that it's not either or. I mean, eventually both will grow. It's not as if our consumption to GDP ratio keeps rising and investment to GDP keeps falling, then longer term growth will slow down, right? So you can't be bullish on consumption alone. The stimulus might have been directed there, but it doesn't end there. It's supposed to set up a virtuous cycle.
So Anish, if you were to give us a theme then, if a theme that you would be relatively more bullish on.
So I've been, if you look at our business cycle fund where we express our sector preferences, right? We have been bullish on cement, auto, industrials and capital goods, and segments of financials. Auto and cement have already done well. I do think that industrial and capital goods should regain momentum. They lost a lot of momentum over the last.
Okay. All right. Harish, coming to you as well for your big theme, but I think let's get another guest.
Let's invite our last guest as well, Vikas.
Vikas, welcome.
Thanks for coming.
Welcome.
And happy Diwali. Please.
Happy Diwali.
Vikas, if I can start with you. You've been very bullish on India, infrastructure. And I guess it was infrastructure which because of which you are late. Your take. Largely on infrastructure, I mean.
There are two ways to look at it. One is the opportunity in that space itself, like there are two things, infrastructure owners and infrastructure builders or enablers. Both are different. But more importantly, I think the second order effect of that is far, far higher, and you'll have efficiency getting built, and a lot of enabling cost of logistics comes down. So those things have far more multiplier impact. And it's one way to think about it, very much like in US when they had railroad in 1800s, where big investment happened, and that had a huge multiplier impact on the GDP growth for decades to come. So you'll see similar kind of things happening in India.
All right, and on the market on the whole, you're being a bull. You believe that bad news is throw it at us, and you look to get in. So you're quite constructive that the next year is going to be much better.
Absolutely, I'm quite positive. I think the markets, given the fact that think about it, our economic growth is reasonably good. Your RBI, very big, if you see across in last 1.5 years, all policies are supporting the growth in terms of interest rate cutting down. Last week's policy was boosting the credit growth, and the government is trying to do, in terms of tax rate cut, direct tax with indirect tax, infrastructure spending is happening. So all those things are boosting, towards the growth. So I personally feel that, we will see a very good growth coming in the earnings in second half of this year. And once the tariff uncertainty, which is supposedly a big thing, which I don't think is a very big thing, but markets are worried about it, that once settles down, I think, markets will do very well. And more importantly, a lot of people are positioned negative, sitting on a lot of cash, there's shorts in the markets. So I think as markets see growth panning out, you will see markets doing well. And that's what is happening in the last couple of, days or so. I think that you will see more of that in next 6 to 8 months.
All right. Well, gentlemen, I think we're bracing for better times on earnings, on growth as well. And hopefully Mr. Trump is on board as well. And with those FIs underweight, hopefully they come back. I'll tell you what, we'll slip into a short break. Come back. We've got lots more to ask our guests.
In fact, after the break, we are going to grill all 4 of them on the key themes and where to make money next year. So we'll ask you about the key themes and stocks to focus on.
Special partner, Novama. Let's do it right. Special partner, Nuvama. Let's do it right.
Welcome back to this Diwali special. Well, we have our guest with us. We've been focusing more on the markets, the year that went past and the year ahead as well. Let's focus on a couple of themes then. And Anish, I want to come to you, because if I look at the portfolio, I think private banks is something that you like. Credit growth is expected to pick up from year on. And also there is talk of consolidation in the sector, which normally bodes well. Tell us, how are you focusing on the financial space and private banks in particular?
We do expect credit growth to pick up. See, partly the equity markets have been so, generous in giving capital that corporates have not had to tap the banks. Yeah. But I think as markets have now, moderated a little bit and people are becoming more realistic about equity markets, credit growth within the banking system should pick up. I think while volumes will clearly pick up, I wouldn't be too optimistic on the net interest margins because the banks have a lot of capital and they will compete aggressively for this. So my thesis on banks would be around volume growth, which means more lending with moderate NIMs. I would still remain, and within the banks and NBFC space, I would still remain very careful in the unsecured lending space. I think that is still very, very overheated and I don't think the risks are being appreciated there.
Okay, all right, that's about the banking space. Harish, I want to come across to you with regard to the tech pack. We speak to a lot of fund managers as well as analysts, and everyone's actually sitting either on the extreme left or the right of it. Some very, very bullish arguments. Where do you get balance sheets like this? Good quality companies, not done anything, valuations have come down. But on the other side, you'll say, what are you buying these companies? They're not going to grow that much. Where is the growth? They haven't focused enough on AI. Which side of the argument are you on with regard to tech?
So I'm on the first side of the argument, which is that I think that a lot of it is in the price.
Okay.
Yes, we're not saying that they are going to magically grow into strong double digits, etc. So that's not going to happen for sure. But today there seems to be a wave of pessimism, which we have seen in the past also. Okay. So how do we gauge whether a lot is in the price? So this is the third instance in the last 25 years where the collective profit pool of Indian IT services is, as a share of the total profits, is more than the market cap share of the IT services companies. This last time happened in 2008 when GFC happened and the banks were going belly up. And because IT services, the largest clients were the banks in US, you didn't know whether they would have a tomorrow. Or in 2017, when there was this entire digital wave that came and then there was this feeling that Indian IT will not be able to adopt. So we've been there, and this is again a similar kind of a setup. Like I said, it has happened once, 3 times in the last 25 years, and each of these over a 2-3 year horizon have been great opportunities to get alpha out of the space.
So it's time to focus on tech then.
Yeah, so that is one. The second aspect within tech itself is that today, while a lot of focus is on getting the models right and the infrastructure and the plumbing, the next wave is going to happen on the application layer. Okay. Now think of it that you had the Visas and the MasterCard in US, which had a particular kind of infrastructure layout and a small amount of application layout. Okay. And then think of how it has been adopted in India, where UPI as an application layer has kind of dominated everything else, right? So application layers are going to be very different from the infrastructure layers that is very capex intensive, that is significantly R&D intensive, etc. Whereas application layer is more specific to business needs, and which is where I think that people are being a bit too obsessed about believing that Indian IT has lost their plot. Yes, again, I'll be the first to concede that we are not expecting significant fireworks from this space in the form of revenue growth, but a lot of it is being priced in for all the reasons that you said. Very good cash flow yields, great balance sheets, decent and very good executors, margin profiles, which have traditionally been very well supported, currently are lower than what it was in pre-COVID, despite higher offshoring. A lot of tech that these companies themselves will use. So I think that, from an expectation point of view, I just go back to what Warren Buffett said. the secret to a great marriage is low expectations. And today I would think that expectations are very low for the Indian IT services. So from a 3-year perspective, I think one can make a lot of money in Indian IT.
Okay. Because you heard arguments for IT, for banking, but one sector that's stands out for me that you're very bullish on is pharma and API. Run us through the thought process, and I'll ask a bit more about pharma as well, because looking at the top holdings, it's very interesting. One of the pharma companies that you hold has done very well, and one has not done well. So I'll ask you that, but generally for the pharma and API, what's your thought process and why you're bullish?
I think, see, more than pharma and API, pharma in general, domestic pharma is doing well for quite some time, and we've been very bullish on pharma for last 3 years, or 2.5 years, specifically after the pricing pressure. US FD regulator visited India, and that was a very big sign of that the pricing pressure will start going down on international markets. And secondly, domestic market was doing very well. So that segment we've been quite positive, and I think should do well. But more than API, I think we've been very bullish on CDMO as a
CDMO players, yeah.
That I think is a very big trend. Probably pretty much like what, in some sense minor, but what IT was, in the 90s and all, whatever. Because a lot of outsourcing is going to happen on that front. Move from that. That's where the China Plus One is there, and Biosecure Act got passed recently as well. But even if that was not happening, we were positive that it will move away. And right now the companies are very small. I won't be surprised in fullness of time if we see companies with 5, 6, 7, 8 lakh crore market cap in this segment coming about. That kind of potential it has. So you have to see the very long-term trend, and that is how we are seeing. And companies will do well in periods of time. So company which we own, Laurus, has done very well in last 1 year, and we've just bought another one which we think will do very well. So that's how you kind of look at it, but there will be cycles intermittently in this.
The other space which you are very bullish on is BFSI, both credited and non-credited. I think that constitutes nearly 30% of your portfolio. Quickly, if you can run through what's the logic there, what's the thesis there, and why you're bullish?
Again, same thing. I think if economic growth picks up, credit growth picks up, which I was saying that because I think when your regulator is trying to say
and
that
you're trying to play those themes via different companies than what the large private bank seems to be. Because in your portfolio, it's more about AB Capital, more about those kind of.
So yeah, how do you play that is
individual scale.
Yeah, I mean we've been playing more through large weight is through ICICI Bank and Aditya Birla Capital, because we think that's where Aditya Birla Capital is going at 25% for last 3 years, right? So that's a more company-specific issue, but the tailwind is there. When your regulator is saying that I want to see the credit growth happening, that itself tells you that there's a tailwind, right? And of course, all ingredients of economy are in place. So that's a segment. So eventually, as economy grows, your channelization of savings into users of the capital is going to happen, and it essentially happens through the BFSI, players, right? So I mean, companies have grown over the last 20 years, and I'm sure these companies will grow over the next 10, 15, 20 years as economy grows. So it is not possible that, economy does well, but BFSI does not do well, generally speaking, right? So that's our call.
You've been a bottom-up approach guy. You try to bet a lot of entrepreneurs and owners, so to speak. Within the new basket of companies that have come in the last 1 year in terms of IPOs or either ways, what's been your take? Are you seeing a lot of companies and a lot of promoters with a lot of hunger and fire to deliver over the next few years? What are your top bets within that?
Yes, absolutely. I think I believe that the earlier set of promoters,
give us some examples.
Earlier set of promoters who created wealth in the last 30, 40 years, built India. I think the next set of promoters could be very, very different, right? Because they are retiring and the new gen is coming in. And I always talked about one of the thumb rules which has worked for me is promoters between 40 to 60.
I was to ask you, yes.
60 years of age.
That's right.
By 38, 40, you see the cycles,
and
you understand, you mature, but you have the fire in the belly to prove something. By 60, 65, you go into a genre, kiske liye kar raha hu, kyo kar raha hu, and all those kind of things. Outliers are obviously there, but I think that set of promoters, I see about 30, 40 of them, which are creating the next India for us, right? So from that, I am extremely bullish that the entrepreneurship in India is fantastic. Every day we meet somebody who's full of charge, looking to disrupt things, looking to build India. Only the IP layer is missing right now. We are all processing right now. Somebody has to create that IP where we go into a next league. Coming to sectors, I think it's very, very exciting. I think 4, 5 sectors where I think I am personally bullish on. I think chemicals is clearly one of them. The last 3 years we have seen the worst. I think the next 3, 4, 5 years as geopolitical starts to take off, I think chemicals is one place where we have a right to win. The second space I believe is a complete contra call for last 5, 6 months is metals. I think last 5, 6 years we have not seen any new supply of either a oil and gas or a metal mine or anything. And demand slowly is catching up. What we saw in gold and silver, suddenly some large guy coming in, started buying it, which is central banks, and you create a demand-supply mismatch. I think same can happen in many other hard metals as we speak. The third part is, I think manufacturing as a whole. But I think many new profit pools will be created which we have not seen. Let me give you a small example. Aerospace, right? It's both for civil as well as defense. There are 2 major players, Boeing, Airbus. Both of them have 14 to 18,000 global vendors across the globe. But in India, only 200, 250 on an average. And a lot of auto guys who are very good on precision engineering are pivoting themselves to aerospace, semiconductor and others. I think as a profit pool, I think many sectors in manufacturing can create profit pools which India has not seen for the last decade or so. Look at EMS, for example. There was zero profit pool 5, 6 years back. The profit pool is getting created now. So be on lookout for such creation of profit pools which will happen over the next 5, 10 years. Because what took us to $5 trillion market cap, from 5 to 10, the set of winners on sectoral and bottom-up both could be very, very different.
Absolutely.
So I think these are few of the areas where we are positive. But let me give you a caveat also. Along with good quality companies, I think investors need to be extremely careful on many companies where the quality of balance sheet and cash flows are very, very inferior. We are seeing companies between 20, 25, 30,000 crore market cap, EPS going like this, but last 5 years, they have not generated operating cash of even 50 crores. So I think finally cash is king. If you can't convert your accounting profits into cash flows, you will have a trouble today or tomorrow. So markets today are getting excited by earnings growth, but finally if doesn't convert into cash, I think you will see many of them becoming penny stocks also.
All right, though that caution taken on board, Pankaj, and very, very rightly so as well. But since you briefly spoke about metals and gold, and since Harish gave us some advice on marriage, I want to ask you about gold. What about gold, Harish? I mean, what do you think about it? All the housewives are saying, you know, what's going on, guys?
I mean,
what's happening?
All housewives believe that they are the best fund managers.
No, I think the last Sampath has clearly proven that.
They have reason to even prove that. I mean, if you just look at India household savings, I mean, in gold, it's gone from what? 190 lakh crore to 290 lakh crore in a matter of a year. That said, at current reckoning, what is your view on gold? And between the two assets, what do you think?
Okay. So I think it is, maybe it might be a bit arrogant to say that, you know, this time, maybe it is better not to listen to the wife.
and to put money in equities. And let me give you why I think so.
You're on your own on that. Huh? Continue.
So if you were to look at, say, Indian equities, let's take the case of Nifty.
Yes.
And we all look at the value of Nifty in rupees terms. Okay. Now that is just one way of expressing our wealth. If I were to look at Nifty in gold terms,
yes,
right, what you will see actually is that today, at today's closing, okay, we are about 11% higher than what it was at March 2020. Remember March 2020, when there was panic all around whether we are going to survive or not the pandemic, nothing was clear, whether businesses are going to remain there, whether we are going to see a vaccine, none of them was there, right? And we are just about 10% away from that level. Now, if I were to tell you that, let's say that we were to time travel and we were to get a price point of Nifty which is at April 2020 levels, okay, I'm sure that all of us would jump over and say that pura paisa dal. Okay, I'm saying that we are seeing the similar kind of a thing today, but yes, viewed from the lens of gold. Now, the good thing is in India, given the fact that we have got such huge gold ownership, now to kind of flock into that kind of a trade just because it is done very well, I think might be a bit too foolhardy to kind of go through. So therefore, my sense is that both these trades or both these asset classes, be it gold or equities, essentially bulk of their growth has come from rupee depreciation. Even our earnings growth has come because of rupee depreciation. It's just that one of them benefits from the fear factor, which is gold, and other works on the hope factor, which is equities. At this point of time, it appears that fear is overriding hope. But we should remember that in 5 years, at least 3 or 4 years will be hope, and maybe 1 year is that of fear. So I would say that, I would be believing that, we would have a far better expectations from equities rather than gold at this point.
We thank our audience as well for joining in, and thank you, gentlemen. Wishing you all a very, very happy Diwali to you, your family, and hopefully we have a very, very prosperous year ahead. Thanks a lot, Vikas, Anish, Harish, as well as Pankaj.
Thank you.
And let's hope next year, same time, same place when we meet up, well, things will be looking
But we'll keep on tracking in between also.
Absolutely. Absolutely. Well, on that note, we'll wrap up on this special edition. Hope you enjoyed it.
Special partner, Novama. Let's do it right.
and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. In today's edition, we spotlight the circular economy and sustainability, explore how technology is empowering women to take charge of their money, and feature a company turning waste plastics into sunglasses. Here's wishing all our viewers a very happy birthday. Now let's move to the top headlines from the startup world. AWS says cloud services restored after a major outage at Amazon Web Services takes down several online services, including Amazon, Alexa, Snapchat, Roblox, Fortnite, Perplexity, and others. The cause of the outage is currently unclear. The Ahmedabad bench of the National Company Law Tribunal admits insolvency plea against Blue Smart Mobility Tech, a subsidiary of Blue Smart Mobility. Lepton Software filed the case over a 5.84 crore rupee default for Google Maps based geospatial and API services used in the EV ride, hailing platforms, mapping and routing system. A 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has been filed naming CEO Bhavish Agarwal after a complaint from the family. Ola Electric has moved the Karnataka High Court, challenging the basis of the FIR. Relief for WeWork. India's proxy advisory firm InGovern claims Bengaluru-based workspace operator has addressed governance concerns. It adds that promoter equity infusions reflected confidence in the business. The shares continue to trade below the debut price. E-commerce platform Meesho files updated draft papers with SEBI for IPO, featuring 4,250 crore rupees of fresh issue and OFS by major investors such as Elevation Capital, Peak 15 Partners, Y Combinator and others, along with Meesho co-founders Vidit Atre and Sanjeev Kumar. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's clean energy push just got a major boost this Diwali. iOS GPS Renewables Private Limited, a joint venture between Indian Oil Corporation and GPS Renewables, has raised $95 million in debt financing from Indian Bank, the largest single bank debt raise ever in India's compressed biogas sector. The funds will help build 9 CBG plants across 4 states using paddy straw as feedstock to produce renewable natural gas, and using paddy and straw as feedstock to produce renewable natural gas and cut down on stubble burning. What makes this deal even more significant is that it's the first fully non-recourse loan in this sector, reflecting strong confidence in India's circular economy and biofuel potential. Now, joining me now to discuss this further is Parag Parekh, the CEO of GPSR Arya and Group CFO GPS Renewables. Parag, here's wishing you a very, very happy Diwali. Thank you so much for joining us on the show today. So let's get to the first question that we have for you today. As we head into this festive season, a time that's all about light and renewable, how do you see IGRPL's work in the biofuels and circular economy space contributing to a cleaner, more sustainable Diwali for India?
So thank you. Firstly, thank you, Arundhati. Thank you, CNBC-TV18. As well as wishing all of you, your families and the viewers a very, very happy Diwali, a great Samvat and a new year. Coming back, I think, on to the important milestone of this financing. Let me first give you a background of, what GPS and what IGRPL is. GPS is a full stack biofuels entity, primarily focused on compressed biogas. And it has actually done one of the largest municipal solid waste biogas projects in the city of Indore. Further, it has done in other technologies, and as we speak today of paddy straw. So this is GPS Renewables. GPS Renewables also has an asset platform called Arya, GPSR Arya, taking advantage of the continuing growing momentum, the thrust that the government has been giving on initiating and encouraging more and more biogas projects. So that's where Arya is. Now, Arya and IOC have actually formed a joint venture in developing multiple CBG projects. The first of these kind are 9 such compressed biogas projects, 4 of them located in Haryana, 3 of them in UP, and one each in Chhattisgarh and AP. And all these 9 projects put together are being initiated in a joint venture of 50-50 between IOC and Arya, the asset platform of GPSR. When we ventured into this, we certainly, then looked at tying up and having a financial closure for these 9 projects. And we got very, very encouraging interest. This encouraging interest allowed us to, look at tying up close to 95 million, about 836 crore in Indian rupees. And it is one of the first such large financial tie-up as far as the compressed biogas sector is concerned.
Absolutely. And each plant is going to use paddy straw as feedstock, right? So how does your technology ensure efficiency and scalability in converting agri-waste into biogas?
Sure. So out here, as I said, paddy straw is the feedstock that is being used, and the lignicide component of the paddy straw is being used with a technology of an anaerobic digestion. And through this anaerobic digestion, the compressed biogas is being produced. All the 9 projects put together, each one is going to be looking at doing 15 tons per day. So that's the capacity of each of these plants, and all 9 put together, it will amount to close to about 135 TPD. So that's the size and scale as far as this is concerned. And this technology of GPSR, along with, the strength of IOC, which I don't need to really touch upon much, but theirs, along with GPS's technology out here, has really enabled, the financing sector to get comfort, and which is why we've got it on a non-recourse basis.
Absolutely. And what kind of revenue potential do these 9 new CBG projects unlock for IGRPL? And over the next few years, how do you see biofuels contributing to Indian Oil and GPS Renewables' overall clean energy portfolio?
Right. So the good part of this is, Arundhati, that this is a sector which has a very, very small implementation period. So we should see all of these projects getting implemented in FY 2027. So all these projects will get commissioned across by the end of this FY 27 financial year. And this, allows us to establish a lot more projects as far as CBG is concerned. So when we are talking about IOC, whilst there are being tied up as 9 projects for now, we are in conversation to actually build this platform much larger. So hopefully, we would be tying up, another close 10 to 11 projects soon, and that would mean 20. And the intention is to go further. Why the intention is to go further? I think that there's a very strong government thrust on encouraging compressed biogas projects. And to that extent, some of the larger oil marketing companies are looking at setting up these compressed biogas projects. For somebody like GPSR and ARIA, as both, providing, the technology for the EPC becomes very, very important. And that's where, as I said, it is tying up with these OMCs. As far as the revenues are concerned, from a purely a GPSR basis, it's an EPC entity, and it will look to, doing the EPC works for each of these entities. Besides that, as an ARIA, as a developer platform, will actually generate revenues from sale of this compressed biogas. All the 9 projects put together approximately are close to 1,200 crore in terms of the total project cost.
Sure. And you mentioned plans to build a nationwide network of CBG plants. What's the roadmap? How many more projects are in the pipeline, and by when, if you could quickly tell us?
So as I said, there are multiple plans, and many of the OMCs organizations are wanting to set up this. And to that extent, as I said, immediately in terms of IGRPL pipeline itself, we are looking at adding another 10 to 11 and a lot more further than that. There are other OMCs also who are expressing interest onto building compressed biogas projects. And the good part as far as GPSR and ARIA is concerned, that GPSR actually provides the technology and is an EPC contractor. At the same hand, at ARIA, which is the developer asset platform, it actually contributes in putting a 50% equity as a partner into these projects.
Sure, absolutely. All right, Parag, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best with this new venture.
Thank you once again, and wishing all of you a very happy renewable natural gas Diwali.
Absolutely.
As well as stay safe, each one of you and your families. Thank you.
Thank you so much. All right, moving on, a 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has been filed naming CEO Bhavish Agarwal after a complaint from the family. Ola Electric has moved the Karnataka High Court challenging the basis of this FIR. Rachna Dhanrajani is here with all of those details. Rachna?
Ola Electric's chief executive, Bhavish Agrawal, has been named in an FIR after a 38-year-old engineer allegedly died by suicide. He has been named along with one more official of the company, Subrat Kumar Das, who, according to his LinkedIn, heads vehicle homologations and regulations at Ola Electric. Now, K. Arvind, who had been employed with Ola Electric since 2022, was found dead at his Bengaluru residence on the 28th of September. Investigators say a 28-page note was recovered from the spot. It refers to mental stress and blames company executives, including the CEO. The document is now part of the police evidence and its contents are being verified. The complaint filed by his brother and father alleges that Arvind had faced sustained workplace pressure and humiliation while working at Ola Electric's head office in Koramangala, Bengaluru. Now, the FIR also records that just 2 days after Arvind's death, that is on the 30th of September, a payment of about 17.5 lakh rupees was made through NEFT from an Ola Electric account to his bank account. That transaction, and whether it was routine or an attempt to settle dues posthumously, is under investigation. The case has been registered under Section 108 of the Bharatiya Nyaya Sanhita, which deals with abetment of suicide. Police say the investigation will also focus on establishing causation, verifying the handwritten note and electronic communication, and tracing financial and managerial responsibility. Ola Electric says it is cooperating with authorities and has questioned the basis of the FIR, maintaining that there were no prior complaints against the executives named. But this is the second death by suicide linked to an Ola Group company in about 6 months. In May, a 25-year-old machine learning engineer at Ola Krutrim, that's the company's AI arm, was also found dead in Bengaluru, with family members and former colleagues alleging work-related stress.
Well, moving on, it's Diwali, the festival of lights, wealth and goddess Lakshmi, and a platform inspired by that very name. Lakshmi is helping women take charge of their money. Financial platform for women, Lakshmi has launched Lakshmi Pay, India's first UPI just for women, turning everyday spends into wealth-building opportunities. Lakshmi Pay rewards users not with cashbacks, but with digital gold. Joining me now to tell us how Lakshmi Pay is helping women spend smart, save better and grow their wealth is Preeti Rathi Gupta, the founder of Lakshmi Pay. Preeti, welcome back to Startup Street and wishing you a very happy Diwali. Also, many congratulations on the launch. Let's start with the big idea. Why a women-only UPI in such a crowded payment space? And how did you shape Lakshmi Pay around the unique financial habits and needs of women? Take us through what Lakshmi Pay offers.
Great. Thank you, Shruti. And you're right. What better day than Diwali, the festival of Goddess Lakshmi, to launch something that helps every woman become better at creating her own Lakshmi or becoming a Lakshmi herself, right? So, UPI has now become ubiquitous, right? It's a fabulous payment infrastructure, which can actually become a catalyst for different use cases, different cohorts. And today, frankly, if one solution worked for everybody, ideally we would have seen an uptake across, age, gender, socio demographic, classes as well as geographical locations, right? So there is enough space to use UPI as a catalyst to service different sorts of people, right? And for us, Lakshmi is solving for women. I think the uptake of their financial products and their wealth creation. Simple, women engage with money differently. They are cautious, thoughtful, and value-driven. And I think we build Lakshmi Pay to reflect exactly that, the relationship with her money. So the way women spend, save, invest, borrow, all of that is very different than it is for men.
Yeah.
Now, we always say, we've said that Lakshmi Pay is not just UPI, it is UPI for her, right? It's a digital platform that rewards her for every transaction.
Preeti, that brings me to my next question. What really stands out is that Lakshmi Pay rewards users in digital gold, not cashback. How does that work, and how do you see it changing the way women think about money management?
Absolutely. So I think women, like I said, are very cautious. Even when she's spending, the top of her mind thought is actually saving. Can I save more money when I'm spending, right? And that's what that insight is what helped us craft this solution in a way that even when she's spending, right? We are taking that onus. Lakshmi Pay takes that responsibility of saying, we will help you spend smarter, which means that firstly, we will get you savings in places that you spend. Second, every time you spend, you also, in terms of, if you get a 2 rupee, 5 rupee, 10 rupee cashback, that typically goes in your cash, and you don't really, it's not something that you're genuinely saving, right?
Yeah.
So here we are saying, okay, we'll give you small amounts of digital gold. Now that gold collects on the app. They can redeem it if they want, but we also encourage that let it grow in value as well, right? And the third thing that we do, Shruti, is actually, as women, we love budgeting, we love hisab kitab.
Yeah, yeah.
But we find it extremely dreary. Right? How do you do this? I can't do it every day. We're short. The one thing that we are short of is time. So what we've done is embedded a budgeting tool so that when she's spending, we're helping her save more. We are helping her, create some amount of wealth, but we are also giving her literally like a nudge, or create a sort of idea for her to understand where she's spending more. She can put in filters. She can say, I want, this amount of spending. She can put in limits, all of that to actually help even save for the future.
Preeti, when it comes to payments, security and trust are non-negotiable. What safeguards have you built into Lakshmi Pay to make sure that users feel confident transacting?
Because it is, literally built on the UPI rails. So it's completely compliant with India's most secure and used payment infrastructure, right? But over and above, we've actually, because you're right, we're building for women. I think one of the things that they really worry about is that what if my money gets lost, right? What if there's a fraud? So we've actually built a multi-layer authentication, a real-time fraud detection, and literally like a bank-grade encryption on the app, right? But we also go beyond tech, right? Which is, a lot of literacy there's an in-app education. Digital literacy actually is one piece that there's a huge gap, right?
Yeah, yeah.
So getting that to them, sharing, doing sessions on that, scam alerts, safety nudges, all of this, right? So it's not just digital security, it's also about the emotional assurance that your money is in good hands.
Absolutely. And like you mentioned earlier, Lakshmi already offers savings, investments, and a thriving community for women. With Lakshmi Pay, Preeti, what kind of partnerships are you looking at with banks, fintechs, or women-led brands to expand rewards and reach? What's next on the roadmap for Lakshmi Pay?
Actually, what really happened after we, once we had gone through all the certifications and then we started talking to partners, we actually realized that because of that huge gap that exists in servicing women, right? One is financial services, whether it is banks, whether it is, lending, all of these looking for partners. I think now we've become the go-to because we already have, close to 15 lakh women on the platform. But the other very interesting piece that actually, which was an aha moment for us, was we realized that even on offers, for example, where women spend money, whether it's food, fashion, beauty, we actually realized that itself, a lot of platforms did not have gender aggregated data. And we realized that today we have the ability, if we can get in the best offers for our women, to actually create value for our partners. In terms of really channelizing that traffic towards a platform which gives them offers, as well as bring that huge value proposition to our women as well. So I think we've right now partnered, even on the e-commerce piece, we partnered with 5 large players to get, our women the best offers. But obviously that line has now suddenly become very long because we've had, it's a very mutual beneficial relationship with a lot of partners out there.
Well, my final question, Preeti, on this Diwali of wealth and empowerment, how do you see Lakshmi Pay transforming women's financial independence in the years to come? If you could share with us some of the growth targets that you've set for yourself.
There are easily about 400 million women that can be financially included. And when I say financial inclusion, it really doesn't, it goes beyond credit, right? We're not just talking about credit. True financial inclusion is when a woman can access all financial tools that a man can access, whether it is to save, it is to grow her wealth, or to, invest. All of these she should be able to access. And I think that's what Lakshmi as a platform aims to do, right? And Lakshmi Pay becomes a big catalyst. I think for us, the first milestone is to get 2 to 3 million transacting women on the platform, and we have, of course, a target of reaching 200 million women who, over the years, will use Lakshmi as a platform to do all things money, and which is why even our tagline, which is "Money Made for Her," should stand true, where everything that she thinks of when it comes to money, she has a solution. It's an integrated platform that she can go to.
Well, with that, it's time for me to wrap up our conversation. But many thanks, Preeti, for joining us today on Startup Street, and wish you the very best with Lakshmi Pay. And once again, wishing you a very happy Diwali.
Thank you. Thank you, Shruti.
Well, on that note, it's time for us to head into a short break, but don't go anywhere, as there is lots coming up on the other side.
Welcome back. You're still with us on Startup Street. Pune-based deep tech material science startup Without recently raised $1.9 million and announced a first-of-its-kind demonstration plant that can process up to 5 tons of unrecyclable plastic waste per month. Rashna Dhanrajani speaks with founder Anish Malpani and investor Dia Mirza to know Without's growth plans and more. Take a look.
Can it be made without? That's the question this Pune-based startup is answering by creating innovative products like these sunglasses that are made using chips packets. Joining me now is the founder and an investor in this company. Thank you so much, Anish. Thank you so much, Dia, for joining us. Anish, first start by telling us, how do we get here? How did we make sunglasses using chips packets?
So when I was researching the impact space, I came across the waste problem. And I found that waste is not only do poor people collect waste, but waste collects the poor. And I realized that all waste is not the same. Certain types of waste are way worse. Turns out that your chips packets, your chocolate wrappers, while it's very tasty and all, is really hard to recycle because it has multiple layers associated with it. So we decided that we want to work on real problems. And so we created technology that can separate the layers and extract materials. And then we're like, okay, what do we do with these materials? And we're like, okay, let's make sunglasses, because we didn't want to make like boards and furniture. Everyone's doing that. We wanted to show that there's actually high quality applications of this material possible. And then the second part, which is really important, is that there are close to 25 million urban poor in India, out of which about 5 million work on waste picking. And if we're trying to solve the waste problem, you can't leave anybody behind. So how do you formalize and incorporate these former waste workers and bring them into the equation? And that's also what we do. So we're probably the only idiots in the world doing deep chemistry and deep social inclusion. And we're lucky to have investors.
The world needs many more idiots like you and like Without.
No, but we're very lucky to have investors like Dia and like our other impact investors who truly believe in what we do and are patient about it. Because we're not starting a nonprofit, because I think nonprofits are hard to scale. We want this to be financially viable, but we just need some time and patience because this is hard. We're breaking systems and we're reimagining them.
So first, let's start by talking about the technology that goes behind it. Chips packets are supposed to be the hardest to recycle because of the metal that comes into it. What is the tech that goes behind it? And when you separate it, if you can quickly take us through the process of.
So it's a chemomechanical process. So it's a water-based reaction that the chips packet go through. First it gets shredded and washed, and then it gets delaminated, demetallized. Some of the PET, which is a polymer, gets depolymerized into its monomer. It gets partially decolorized, and it also goes through a hot caustic wash. All this happens simultaneously, and all of this is what we've patented. Once that's done, we get building blocks and raw materials, which we then take those building blocks and raw materials and convert them into high quality materials. And all this happens using chemistry and physics, and a combination of those, keeping unit economics in mind.
And then there's maths that now you take us through of being an entrepreneur.
Yeah, for sure.
Take us through your funding journey. We saw you on Shark Tank. Now you have Dia as an investor. Tell us more about your cap table and the funding round.
So it's been difficult, to be honest, to find the right impact investors in the space. And you know, over the last, this round has kind of closed now, but it's been, as Dia will say, like 2 years in the process of lots of ups and downs. And we're finally closed around, but what we've not compromised on are the values. We've not wanted to sell ourselves out. So yeah, I mean, it's a big round. I feel very lucky. And I feel like the ball is in our court now to be able to execute on this.
What's the plan forward?
So this is the first demonstration plant that we built that proves that this technology can scale. The next step is to build our first commercial plant, which is slated for next year. And this handles like 5 tons a month. We need to be doing 5 tons a day. So that's when you're really solving the problem. But you can't get to that until you do this painful step.
Right. Dia, I'd like to come to you to understand how did you become a part of Without. We've seen you growing up in movies. We're still watching you everywhere. Still growing. Still growing, but on social media as well. Tell us about this side which we haven't seen yet, which is to be an investor, to be a part of a cause, which is also a business.
So as a sustainable development goals advocate, one of the things that I've really been trying to steer people's direction towards is to recognize that the goals are personal. And I feel that Without is a perfect example of how the sustainable development goals are personal. And if you actually look at practically every aspect of the solution and the components that come together to form the enterprise that it is, every goal fits in so perfectly and so beautifully. And so as an SDGs advocate, I believe that because the goals are personal, it's so important then to empower those who've made the goals personal. And for me, investing in companies has always been about putting my money behind what I believe in.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side.
Good evening, everyone, and a very, very warm welcome to CNBC-TV18's Leadership Collective, the Chennai chapter. We are today at the heart of Tamil Nadu's industrial ambition and one of India's fastest growing tech hubs. You know, what better way to begin this evening with a story, I think, that defines India's transformation, where steel meets silicon. And to lead this conversation, we have with us the managing editor of CNBC-TV18, Shriram Finance. So let me welcome her on stage. And joining her will be the Honorable Minister of Industries, Mr. TRB Raja. May I please request both of you to come joining in. He is the driving force behind the state's industrial resurgence and global investment momentum. Let's give them a huge round of applause and get the evening started with this conversation.
Ladies and gentlemen, here's a little bit of a backstory. I've been doing an annual interview with Mr. Raja in Davos, where he talks to me about the number of MOUs that the state of Tamil Nadu has inked there with global investors. He's always been very proud of the fact that they have, amongst other states in the country, the highest conversion rate. What's that number looking like today, Mr. Raja?
It all starts from just being straight with the public. We just sign MOUs which actually will transfer into investments and then to jobs. We just don't sign every MOU that comes our way. So it all stems from the fact that the Honorable Chief Minister through M.K. Stalin Aurgal has given us the freedom, given us, as in the Department of Industries, the freedom to choose which MOU to sign and which one not to. Right? So all of these are facilitation MOU. Most of them are facilitation MOU. So it's not much of a binding thingy for both sides. But then the ones that we sign, ones that Tamil Nadu signs, we ensure that the conversion rate will be high, and the possibility of the conversion rate will be high. This is the only state in India which you will see such distributed growth in. And then you have the intervention from the government, where the Honorable Chief Minister has given us the powers to have one team, just one team across the table. I, myself, as the Minister for Industries and the Chief Secretary, and 8 other top secretaries sit across in one table and go through all of these MOUs meticulously and make sure that we get all these clearances done. And when in Tamil Nadu, single window system is actually single window system. So all of this comes together.
Lots of veiled references there in your opening comment. So let's pick up on one of the single window clearances. But on GCCs specifically, with this single window clearance policy that you're now putting in place, what's the hope? What's the aspiration?
GCC 1 is something which we're working on at Guidance Tamil Nadu. It's going to be a single window, proper single window system, a separate desk only for GCCs. We have a dedicated team working on GCC right there. And you do know, all of you understand that given the situation today, especially with agentic AI stepping in a big way, I think GCCs need to reinvent themselves. And what better place to reinvent themselves than in Chennai, the original GCC hub of India. This is the talent capital of India, so we can do whatever we choose to do.
There have been many sectors that you've tried to go after. Auto, of course, is the most well-known. And so your plans to develop the semiconductor side, are you still focused on getting a fab, or are you now looking more at development?
No, fabs, I mean, I'll tell you why we are still working on fabs, even though I know that fabs don't give me jobs, not the number of jobs that I really would want to have. Fabs don't give us, they do give us high-end jobs, but then fabs I want it for India, because I think India needs fabs for the north of India, and then purely for national security matters, we'll need fabs in the south also. I'm sure all the national security experts will understand this part. But that said, till then, we're working on a school of excellence. We're working on a school of excellence, because all these fabs coming not just in India, but across the world, they need talent. And where do you go for talent? Better than Tamil Nadu. So we get 150,000 engineers every single year, and we're training them with our Skill Development Corporation, which is the non-Mudalvan scheme, which sits under our Deputy Chief Minister through Udayanidhi Stalin Aurgal. So all of this is happening in Tamil Nadu. So we're working on our strengths. So if you want to take your fabs, take it. But what will you do for talent? So let's supply the talent.
What next now, as far as the state of Tamil Nadu is concerned? You know, you've done a bunch of reforms to try and draw in investment, to draw in industry, to do more. What are you now prioritizing, especially as it comes at a very crucial juncture? We're getting closer and closer to the big match, the elections next year. So what should we be prepared for?
Oh, we're busy loading 2.0. We're busy loading Dravidian Model 2.0.
Okay, so is there a priority to-do list as you load 2.0?
Yeah, I mean, 2.0 will be about R&D. It'll be about Product Nation TN. I'll just finish with that. I'll just tell you what, I think we have 30 seconds. But 2.0 is all about, we've conquered manufacturing, we've conquered services, we've done everything. We have the experience to manufacture anything under the sun. So I think for India, Tamil Nadu is going to become Product Nation Tamil Nadu, and we're going to make our own products for the world, and that's going to be what 2.0 is about. It's all going to be driven by knowledge and R&D.
Knowledge, R&D, and Tamil Nadu will establish itself as the product capital. An absolute pleasure. Thank you very, very much for joining us here this evening.
All this talk about Tamil Nadu becoming the talent capital or being the talent capital of India sets us up for a very fascinating conversation which is going to come up right next, and that is on skills. So in fact, to dive into this discussion, let me welcome Shireen back up on the stage. And joining her is Ms. Tanuj Kapilashrami, Chief Strategy and Talent Officer at Standard Chartered.
So let's talk a little bit about this center that you're opening in Chennai, which is going to be your biggest GCC in India yet. But I also want to talk about this from the prism of where things started for Standard Chartered in India, going back to 2001 as far as the GCC story was concerned specifically, and where you are today and the evolution.
No, look, you're right, Shireen. We opened our first GCC in India, in Chennai, in 2001. And for those of you who were around at that point in time, it was called Scope. Scope International is where our origins come from. Chennai is, we've got now centers in other parts of India. We employ 22,000 people. We employ 28,000 people in Standard Chartered in India, 22,000 in our GCCs. And Chennai continues to be our biggest center. The first step in our journey was centralizing operations significantly, but then has been moving up the value chain. And so it's been transformational. I mean, if I look at the 25-year journey and across all parts of our operation, the real move up to capability centers. And I think that's the name of the game. So to me, it's going to be about significantly higher capability. It's going to be about leveraging technology very differently. Human AI collaboration is something I talk about quite a bit. And I think these centers will become the heart of that human AI collaboration.
Tanuj, I want to understand from your lens, since you manage strategy as well as talent, and what we're seeing today, specifically in the context of AI, is this big talent war out there. What's the specific challenge that you believe banks like yours, companies in general, who are not tech, traditionally seen as tech, are going to face, but as you try and draw in the kind of talent that you just talked about?
I mean, the first thing I will say, it's very controversial for the technologists in this room, but I think adoption of AI at scale is not a tech challenge. It's actually a skills, leadership, and a culture challenge, right? So, don't get me wrong, technology is very important, but without having the skills to be able to adopt technology at scale, and the culture and leadership, you will make limited progress, right? I mean, the one thing is the rebranding of banks to become tech magnets for tech talent has been going on for a long time, right? We employ more technologists than mid-sized tech companies. So, and that's something that we have focused a lot on. So the kind of institutes we go to, the way we brand our employment proposition, our benefits. I mean, we took a very progressive stand as a bank on our flexible working policies. But I think companies are going to have to really think about how do they build skills and talent from within, and how do they get the right model where you're augmenting the deep specialist skills with the many other things that are needed, risk management, ethics, you're looking at product development, but actually building those skills from within. And the borrow piece is looking at strategic partnerships from vendors, from your customers. There are many partners in the room today. So I think it's going to be those days of, I've got the money, I'm just going to throw it and get the best talent. Yeah, you hear eye-watering numbers coming out of Silicon Valley, but that's not the reality of most businesses. I think it's a much more nuanced approach in terms of what you build internally and where do you make those big strategic investments.
Tanuj, thank you so much for a fabulous conversation, but we wish you the very best of luck with this new center and look forward to seeing much more of you here in India. Ladies and gentlemen, a big round of applause. Thank you very, very much for joining us here today.
We now turn our attention back to a sector that is the heart and the backbone of India's growth story. So to take this discussion forward, I think we've got the perfect guest joining in. Let me welcome Mr. Brajendra Navneet, the Principal Secretary, Information Technology and Digital Services Department from the Government of Tamil Nadu, Ms. Sailaja Josula, Global Head, GCC, Service Line, Cognizant, Shreyasa George, Managing Director, Partner, Bengaluru, BCG, and Mr. Rohan Lobo, Partner, GCC Industry Leader, Deloitte, South Asia. NASSCOM is projecting $100 billion in terms of a value the GCCs can contribute by 2030. I want you to reflect on that and what role or what value will Tamil Nadu command of that?
Tamil Nadu is working on what I can say end-to-end model where we are in true sense, we are democratizing innovation. When I say we are democratizing innovation, it means that we are not only incubating startups and providing them necessary infrastructure in Chennai, but we are promising that any young innovator who is aspiring to be an innovator would be having the infrastructure, let us say, within 1 to 2 hours of drive from his home or her home, and reach there and get the same quality of infrastructure which he or she can aspire to have it anywhere.
But if I may just get some numbers about GCC, if you would have them, what percentage of GCCs today in terms of revenue, number, or even headcount comes from Tamil Nadu? And since we're asking everyone the to-do list by 2030, where would you like that number to be?
Presently, if you look at different publications, because unfortunately there is no data capturing in that sense, but when you refer to publications, it puts that number anything between 15 to 20%. I can tell you whatever has happened in last 6 months. This $100 billion can easily become $200 billion by 2030.
Sailaja, you want to come in? The trend, since we're talking about it, the trend earlier was about cost saving, back offices, call centers. Now it's all about innovation, becoming strategic hubs to global enterprises. What has brought us here and what will take us to say $200 billion by 2030?
No, absolutely. I think Tanuj touched quite a bit of that, right? The entire value chain that we have seen in probably Standard Chartered. How can we get this talent to start to work on cutting edge technology? I know we all, there's no conversation today without agentic AI, but how can we actually start to get this talent to start giving those solutions which are futuristic, which will help towards the business models of tomorrow, not the current business models. So I actually have many conversations with clients where they say, I want this GCC to be the tip of the spear for driving innovation, for enterprise-wide transformation. No more are they looking at it as cost arbitrage or labor arbitrage. I think those conversations have completely gone away. And they're definitely looking at how can you transform my business. So that's a big shift.
Would either of you have any number of, say today, what percentage of the work done by GCCs in India is high-end, the deep tech, the niche services, high value? Do we have a number?
If you look at the Forbes or the Forbes 2000 or the Fortune 500 list of companies, 70% of them don't have a GCC yet in India. If you look at the mid-market companies, there are 215,000 mid-market companies in the world anyway, 114,000 of them from countries like US, Germany, Japan, which are subject to outsourcing. Just the mid-market is basically $500 million to $1 billion revenue. Even if 2% of them come, that's 2,000 additional. So I think the growth rates considered are very conservative. Of these 2,800 GCCs, what is expected, we believe that it's going to be approximately 5,000. And almost all of them are doing advanced tech work. Almost all of them, but 47% of GCCs are dedicated ER&D centers where obviously the advanced work happens.
Maybe just to add to that, I completely agree. I mean, ER&D is where we are seeing the highest growth. 18% on the ER&D side in the last few years.
So you're saying only 8% of the GCCs today are driving innovation and real differentiation. That's what your study throws out.
Yeah, I think if you think about it as maturity of these centers, and I think Tanuj called out Standard Chartered was here in 2001. We've seen this evolution, over 3 decades now. The last 5 years has been an incredible growth story. But if we look at the overall market, and there's 1,800 GCCs in the market, and I'm sure that count changes because today in India there's 2 opening a week. That's the metric, right? And
True.
hopefully Chennai is getting a lot of it, and Hyderabad and Bangalore and so on. But only about 8% brings together many of these capabilities together to say that we are truly mature.
Okay, just a quick final, 1 second answer. If wave 1 of GCCs was about cost, wave 2 about innovation, what would wave 3 look like? Shresha?
It is definitely AI.
AI.
I think generative, right? Generate value, generative AI. It's the generative business services going forward.
Do you want to give us one word and also one final line to end this conversation about Tamil Nadu's vision, for by 2030?
On the magic word, it's not a word. Innovate to commercialize.
Innovate to commercialize.
And what Tamil Nadu will provide, or for that matter, country will provide for this sector is AAA rating. We have Standard Chartered is the main organizer and sponsor of this thing. So for any financial sector company, will not be happy with a single A rating, and we should aspire for AAA rating, and that is India provides what I say always in any field you take: affordability, accessibility, and availability. So we should not stop at any of the single A's. We should aspire for all 3 A's.
Okay, well said. Thank you very much, Brijendra, Sailaja, Shresha, and Rohan for joining us in this discussion. It was fabulous, very insightful. Thank you once again. So next up, we're going to talk about the new face of Indian manufacturing. We've spoken about GCCs. Now let's talk about manufacturing, one that is powered by data and design as much by machinery. To lead this conversation, if I may request Shireen to come back here on the stage, and to join her, Mr. Anand Bhushan, Global Competency Center Leader for Saint-Gobain Group, Mr. Kirti Prakash, Managing Director, Chennai Plant at the Renault Group.
And let me start by asking you, the experience that you've had so far in the state, and in the context of this intelligent automation that we're talking about. Smart factories have been around for a while now. GCCs are, of course, the big theme and the big idea. How do you marry the two?
We have world's largest plant in Chennai, in Shriram, and also the second largest is coming in Chennai. I would say the biggest strength of the state is the possibility of creation of the cluster, that is the intelligent cluster, because we have largest R&D also in Chennai. So it's R&D, it's institutions, it's manufacturing, and all of these three together is a talent. This is what is giving us the biggest advantage for all of us together.
Let me borrow from you. The aspiration is to ensure that there is Saint-Gobain in every, or Saint-Gobain from India in every home in the world. Kirti, the aspiration of putting a Renault in every home in India, but also taking Renault from India for the world. Where do you find yourself on both those journeys?
From Renault point of view, let me talk about the car industry first as a Indian. As we are growing, the car industry is expected to get doubled in next 5 years. So that's where actually what we are talking about, AI or technologies, which are going to facilitate this growth. I strongly believe the Indian manufacturing industry, we have to adopt the AI and technologies. Let me brief you with the example. Like our global parent group, Renault Group, we are having we started the re-industry 2023. We started with the goal to reach in 2027 with the complete digitalization and AI assisted devices, which we call as a metaverse. Which that metaverse basically, it's almost like its aim is to optimize the cost reduction, manufacturing cost, energy, and development lead time optimization, and production hours reduction. This way, I think we're having a massive opportunity to use the AI-assisted the devices or AI-assisted technology to maximize our productivity and make it cars affordable to every customer so that everyone can buy our cars.
You know, you've got a large supply chain that you also work with. You've got a vendor ecosystem that you also work with. And Tamil Nadu, fortunately, does have clusters that cater to that. How adept are they in moving to this smart industrial age as well?
Yeah, supply chain point of view, like, of course, like India point of view, we have to evolve through the smart manufacturing. Of course, one interesting point is nowadays everybody talks about smart manufacturing. At the same time, everybody is interested to adopt AI or digitalization. This is a good thing. Especially supply chain point of view, first we need to understand, like, especially in the COVID time example, let me take example from COVID time. The COVID time, we realized that importance of supply chain. Because we usually, like OEMs like us, we used to control up to tier 1. So but we never used to look into tier N, the semiconductor issue, which is classical issue, which makes actually like every one of us to think until tier N.
Yeah, you want to come in on
Yes,
that, Anand? Yeah.
let me add a few points. Because I'm coming from something very closer to everybody's heart is home, sustainable construction solution company. See, at this point in time, one aspect that we forget that if we need to scale, without digitization, we can't scale.
So has Renault India been able to put an India star as far as your own plans are concerned, as far as your own indigenization aspirations are concerned?
Yeah, of course, we are doing a lot. Maybe today not the time to explain, but we are doing a lot, and you can see our products, and you can see the innovations which we are bringing globally and as well as India. So we are bringing value to the customers with a lot of innovation and uniqueness.
Well, big plans for India. Anand, what about you?
We are very positive, and we would get doubled in size, numbers in 5 and 10 years. And we are very positive about it, how the India is unfolding for us.
Well, we hope that you continue to drive in the fast lane, each of your businesses, and we look forward to hearing much more from both of you, both on the India opportunity as well as what you intend to do for exports. But thank you very much for joining us here on the Leadership Collective. Appreciate your time and enjoyed speaking with you. Ladies and gentlemen, a big round of applause. Thank you very, very much for joining us here this evening.
Hello and welcome to this Diwali special Market Cafe Sambat 2082. I'm Nigel D'Souza, and with me, my co-anchor today, Nimesh as well. Well, Nimesh, it's been a difficult year for the markets.
Absolutely.
But we have an elite panel with us today.
Oh yeah. So happy, festive greetings to you, to your family, to all the viewers, and to the distinguished guests as well. All our seasoned fund managers. Nobody needs an introduction. First question will be an open question to all three of you. Anybody can answer, or all three can answer. From last Diwali to this Diwali, Nifty is flat. The returns have been quite muted. Did you all expect that India will be a rank underperformer in the last 1 year? And what was the key reasons for this underperformance? I'll start with Anish first.
So, well, two reasons for the underperformance, right? One is that earnings growth slowed down and multiples were high to start with. And more importantly, there was a lot of supply of paper, right? So a lot of the argument last year, the people who were extremely bullish were making was that there's a lot of demand for paper. But what hadn't been anticipated was that there was a lot of supply for paper. So while the retail investors might be disappointed, the promoters, the private equity, the investment banking world has done quite well last year because they've managed to put out a lot of paper in the markets.
Vishnu, what's your take?
Right. So I think part of the reason, as Anish also pointed out, is expectations were very high, right? But we had also started getting into a zone where economic activity had kind of cooled off again, if you go back, say, about 12-15 months back, the Reserve Bank of India had kind of clamped down on lending into, subprime, MSME, etc. So that was one source of funding issues. And then you also had fiscally very little stimulus and support coming to consumption. Over the course of the last 9 months, I think a lot of those have kind of got addressed, right? But the relentless supply of paper and, of course, the curveballs of Mr. Trump and what he tweets on X, keeps us on our toes. So I think a combination of both of these is where the markets are where they are.
All right. Pankaj, I want you to come in it. Over the last 1 year, we have interacted numerous times. And you normally look at the brighter side of things. So could it be that sort of a pitch the last 1 year, which was bouncing around, it was turning, and yet we managed to hold our wicket at least? Do you think it's that sort of year? Because look at the challenges we've had on the global front, on the valuation front, on the supply of paper front as well. So do you think India as a batsman has done pretty okay, given the kind of challenges in the last 12 months?
So